Talk about the impact on pharma, on trucks, what is going to be happening in the chip space. All of that needs to be factored in. The early read is we're going to see a positive picture emerging. How nuanced will that be? Let's find out. FTSE 100, nothing to see here yet. Let's move on and talk about what else we're going to see in the other markets. How is AstraZeneca going to be trading in London? How is Roche, Novartis, how are they going to be trading on the SMI in Zurich this morning? The Stock 600 broadly positive. We're expecting around, let's call it circa 0.5% out of Europe this morning, but it's going to be interesting to see what the breakdown looks like in terms of the single sector stories. What's Germany going to be doing this morning? You've got the defense narrative you need to fold in there as well. Plus, you've also got the industrial story when it comes to the truck story. What is going to be happening with Daimler Trucks, etc., all these kind of big businesses, which could be affected by what Trump is doing at the moment. The CAC is up by 0.3%, a little bit of outperformance coming through there. The IBEX is up by 0.2%. It's had an interesting week, hasn't it? With names like Henderson Moritz impacting what is happening with Inditex. Let's talk about some of the single names. Val, what have you got in terms of the sector story?
Look, in terms of the sector story, it is a clear picture. We have most in the green, except for technology, except for healthcare. The healthcare industry, or the healthcare sector, shall I say, is down 0.5%. We're still waiting for some of those healthcare names to open, but Novo Nordisk down 2% at the moment. We also have technology at the bottom of the basket. Remember, there was some reporting about semiconductor tariffs coming out of the Trump administration. So it does seem to be that these warnings on tariffs are hitting specific sectors when it comes to Europe. But as a whole, European stocks are higher this morning. We have 435 in the green, only 120 in the red at the moment.
Yeah, Novartis not hit as badly as Novo. So Novartis only down 0.5%, Novo down 1.9%. We're still waiting for Daimler Truck when we look to the impact of the tariff story there. And as you say, when you look across the chip sector, all in the red really. ASML 0.7%, Infineon the most 1.4%, but it's tech hit again by that.
It's interesting, Volvo's up. So Volvo, one of the biggest manufacturers of trucks in the world, is actually rallying this morning. It's up by nearly 2% on the back of this tariff narrative. We don't understand the nuance, the detail around some of this tariff story that we've had overnight. The White House still not providing it for us, but it does seem as if Volvo is tacking higher this morning. But the biggest losses clearly are coming through into some of these pharmaceuticals names. That's where we're seeing the real weight being added to the downside. Novo is off by nearly 2%. What is interesting is that Astra, a company that has made big investments into the United States, that only just recently announced even more investments into the United States, is also being marked down. That's a big weight on the FTSE 100. Bayer is down. GSK is also tracking lower as well. Some of the mining names are softer, but the story really is in what is happening with this pharmaceutical story, which has been so interesting to watch over the kind of the last few weeks and months in terms of the way that investors are positioned around that space. But again, just a spanner being thrown in the works by the Trump administration, and just having a huge impact and a really fast one. And it feels indiscriminate this morning, and that's the problem. We don't know the details of what is happening here.
Yeah, a lot of details still to be worked out, but the thing is that these tariffs that were floated by President Trump are due to be implemented next Wednesday. So there's not a lot of time to get that clarity, but we do have Daimler Trucks continuing to fall in the red, now down over 4%. But as you mentioned, Volvo, who also makes those heavy cars that will be under those tariffs, is in the green. So a bit of a different picture, at least when it comes to the trucking industry, but a clear picture when it comes to pharma and technology this morning. Joining us around the table to discuss these tariffs and more is Jerry Fowler, the UBS head of European Equity and Global Derivative Strategy. Jerry, thank you for joining us this morning. Does the U.S. economy need the rate cuts that are currently priced in?
Well, we don't know yet. I mean, the data looks like, especially the upward revisions to Q2, that there was some pull forward. In Q3, it looks like some of the activity might be slower. Our economists are certainly tracking current activity as weaker, not stronger. But then equally within the surveys, the new orders seem to be picking up again for the future. What is definitely clear is that the jobs growth has slowed to probably below a neutral rate of jobs growth despite the immigration changes. But there's a really big question as to whether that's cyclical, as in, the economy is actually slowing, or maybe part of the productivity story that companies are actually able to generate more revenue without needing to hire people.
If the U.S. economy is re-accelerating and looking strong into the end of the year, does that change your view on any European stocks that you follow or any sectors?
It probably helps the story that the euro will be less of a headwind for European equities, because to the extent that the US economy is weak, the Fed is cutting rates, the dollar declines, there's more diversification away from that US trade into other markets. You would end up seeing the euro strengthen perhaps a little bit more than we would have thought. Now, we've had a lot already, which is why Europe has been lackluster. Half of the market have been heavily impacted by this 15% move in the currency. Our expectation is it only goes, say, another 5% further over the next 6 to 12 months. But it may not go any further if the US economy is actually resilient. You'll have a pretty nice, healthy global growth environment, and you won't have that strong headwind of the euro rising if the US economy is still attracting plenty of capital.
Why is volatility so low? And if it remains as low as it is, do stocks continue to move higher?
It's a good question. So it depends where you look, because actually single stock volatility, particularly during earnings season, is actually alarmingly high. Lots of really big stocks moving 10, 20%. I think something like 15% of the S&P 500 moves 10% or more on their earnings day in the last season. But they're going in different directions, some up, some down. So the index looks like it's not very volatile. What that does also is just brings in more sellers of volatility at the index level. But as volatility gets compressed, that brings in more buyers of the market, the CTA and risk targeting strategies. So everything's kind of feeding on itself at the moment, that because these policies are driving divergences in stocks, you get actually a less risky overall market that attracts more leverage into it. So it's a bit of a compounding effect at the moment.
How quickly could that reverse?
Well, I mean, it depends on the catalyst. So if you have minor changes to that dynamic, maybe the correlation is a little bit higher, and you start getting a little bit of an increase in volatility that disrupts some of these flows, then, it could reverse steadily through time. Of course, if there's a really big catalyst that we just can't foresee, then it'll be a much bigger, correlation one move. But in comparison to things like COVID or the housing crisis in 2007, it's not easy to foresee one of those things that could really blow things up anytime soon.
We've been debating all week whether this is a bubble or the new normal, whether the bigger risk is staying in or staying out. I mean, does the pause that we've seen slightly this week in the rally give you pause?
Not a great deal. So, first of all, are we in a bubble? The answer is not yet, because valuations can be justified by the scale of earnings and the earnings revisions, the constant revisions that we're seeing. Like, it's an expensive market, but it's not outrageously expensive for earnings that continue to both grow and get revised up. The bubble will be when earnings are no longer either growing or being revised up, and yet the valuation is still going higher, late 1999 style. And, that may come, but we're not there yet. Andrew Garthwaite, our global equity strategist, thinks that all of the conditions are now in place that we will end up in a bubble, but we're not there yet. It's hard to sort of determine, what exactly to do here. In the very short term, the market feels a little bit like it's run a little bit far. Lots of the companies that have been supporting the market through their buybacks are on pause because we're waiting for that second quarter earnings season. The earnings upgrades have slowed because you tend to get the upgrades post-results, and we've had those a month or two ago, and we're awaiting the next results. So we're just in that usual quarter-end window where buybacks stop, the upgrades stop, and there's a little bit of confusion as we wait for results.
And in the meantime, do you see it broadening out? Do you like the small caps?
So we do, pretty much in every market, particularly Europe, because they're obviously more domestically oriented. That's a pretty well-known story. But even in the US, I think there's plenty of arguments for a broadening out. The main one is that it is possible that AI diffusion may support US small caps before it supports global companies, because they're much closer to that AI nexus. What I'm looking at is sales per employee. Sales per employee for large companies, especially tech companies, has been constantly rising because they just continue to be more productive, but it's been flat for small caps. There's just a hint that US small caps in particular might be becoming more productive, generating more sales per employee.
Doesn't that lie a problem, though? Because, yes, maybe these AI companies are getting more productive, but they're not needing more workers off the back of that. How do you picture that?
Well, so basically it gives you a sharp split between the benefits to capital providers versus labour providers, which is usually very good for the capital providers for a while, but the reality is the economy is only what people can consume. And if you don't have enough people with enough money to consume, you end up with a problem. But there's a window there before, we get the dystopian, the AI dystopia.
Doesn't the stock market solve that problem, in as much as the upper echelons are spending lots of money because they believe that their assets will continue to inflate and therefore they can continue to spend money?
Correct. There is a bit of a problem in how narrow the US economy has gone. Aaron Captain, our chief economist, was highlighting to me yesterday that part of what makes the US look more productive is actually just a narrowing of the activity into only the AI data center capex. Nothing else is apparently improving, and a narrowing of consumption into very wealthy people. Nobody else is seeing consumption improve. So you've got this huge narrowing to, a few very rich companies and a few very rich people that is, reasonably unhealthy in the long term, but for the moment makes the equity market look pretty compelling.
In terms of
a conundrum.
I'm wondering how this ultimately gets resolved and what we need to see. We are at very elevated multiples at the moment. There is an awful lot of money going into the AI trade. It seems that if you are a company that announces big investment plans, you get a big bump in terms of your stock price performance. Is this... When do we need to see results, I guess is the question, on the AI trade in order to give us confidence that it is going to actually pay for itself, that the revenue is going to be there? David Einhorn's out this morning, one of the top read stories on the Bloomberg terminal. Everybody's talking about it. It's echoing similar sentiments we've seen from people over the last few days and weeks. Show me the money. Where is the revenue? You have to make the revenue, and it's unclear at this point. So this is a very speculative bet at this point.
So it feels a lot like 2022, really, when you went through a downgrade cycle for NASDAQ company earnings. They actually were revising lower their growth and profit estimates because they had let costs get out of control. At the time, it was their labor costs and post-COVID, too much hiring without the revenue to back it up post-COVID after that surge. So you got some weakness. Now, it wasn't significant and it wasn't all that long, but a year or two of consolidation. So that could definitely happen because the scale of spending we're seeing in AI does seem very large compared to the short-term revenue opportunity for quite a few of those companies. But it's just going to be interesting to see whether that's a slow grind adjustment and calibration and perhaps impacts those large companies a little bit, and whether that is partnered with... Is
that what history tells us? Because history doesn't tell us that generally, actually, these kind of big investment booms kind of consolidate.
Well, it is true. It depends on how quickly that capacity is being utilized. I suspect with AI being much easier to diffuse than the last tech bubble in 1999, it may well get the infrastructure may get utilized very quickly.
But it does seem to be that at least looking at past infrastructure build-outs, someone is going to get over-leveraged in this
a lot
AI
of this is coming from
supply
debt, isn't
chain. And who is that going to be? Where is it going to sit? I mean, when I think about the risks, at least Europe is kind of shielded from any AI bubble bursting because the AI trade isn't really in Europe right now.
It's about to get going.
Is that your opinion?
Well, absolutely, because one of the key tenets of the Draghi report and the general European resilience and security agenda is to create its own technology center. And Europe is going to need its own data centers that are managed by European companies because they don't want to rely on, cables that can be cut or foreign companies that, can have variable politics.
It's been a year since the Draghi report.
Well, but it's getting there. It's getting there. Actually, there was a report recently that 12% of the recommendations have been implemented, another 25 are partially implemented, etc. But the sector that might actually benefit most, which no one's really watching, is telecoms, because for a lot of this digitalization, and when you think about data center creation, the telecoms may end up being quite a sort of hidden beneficiary of a lot of this stimulus in the security space.
It's fascinating. The key difference to my mind in what is happening with this AI build-out versus what happened in 2000, up to 2000, when we had this big cable build-out. Once you put a cable in the ground, you might use it next week, next year, even in 5 years' time, but it's there. with a data center, you build a chip, you put a chip in. That chip's got a life cycle of 3 years, 5 years, and then it's kind of
Replacement.
you need a replacement for it. So the fiber build out had longevity. We're still using the fibers that we put in sort of 97, 98, 99.
Yeah, and speaking to the telecom trade, one of the main reasons to buy telecoms in Europe is that actually they spent so much money building 5G and fiber over the last 20 years, huge amounts of capex, that they weren't generating a huge amount of free cash flow or growth. So they've been an absolute dog. No one's wanted to buy them for 20 years. Now they're actually investing less. They need to invest less in 5G, less in broadband, because they're basically done, which means they're expanding their free cash flow. They've got lots of money, and actually that makes them very compelling because finally they are not a capex-intensive sector at the moment, or reduction in capex.
Just like what Winnie Wee was saying about Chinese power.
Yeah, they've already got the power. They don't need the electrons, they just need the chips, which is interesting. Jerry, great to see you as always. Thank you very much indeed. Jerry Fowler, UBS, Head of European Equity and Global Derivative Strategy. Call 6 looks like this morning. There's some interesting trades out there. There's some real divergence in some of the trades that we're watching, both in the pharmaceutical space and also in the heavy truck space this morning, which is absolutely fascinating. Novo is, though, soft off the back of the news we've had out from Donald Trump overnight. The chip space is also a little softer as well. Keep an eye on a journal piece that is floating around this morning relating to what happens next on the chip front. It is down. But elsewhere, you're seeing maybe some of the more defensive names. Nestle hasn't been that defensive of late, but it is popping higher this morning by around 0.5%. What else are we watching? Let's take you back to the pharma space and Chloe Melly.
Good morning, guys. So yeah, as expected, a lot of weakness in that pharmaceutical space on the back of that 100% tariff rate on branded pharmaceuticals that Trump has announced overnight. So we can see a lot of weakness, particularly for Novo Nordisk, that makes its main ingredient for Ozempic in Denmark. We also see, interestingly, some weakness for AstraZeneca, even though it is one of the companies that is building manufacturing facilities in the US, which Trump said would make those companies exempt from those tariffs. So we see quite a lot of weakness, although quite modest moves so far. Moving on to the chip sector, and there we also see a little bit of weakness across those names: Infineon, ASM, STMicro, and ASML, on the back of a report from the Wall Street Journal that the US is looking to dramatically decrease its over-reliance on semiconductors made abroad in order to boost that production domestically. So that is driving down those shares across that semiconductor, that chip-making sector this morning. Moving on to another Trump-related story, and we have got a little bit of a divergence here in terms of stories with the truck making space. So Trump announced a 25% tariff on big trucks, and that is dragging down Daimler Truck and Stratton. But Volvo is actually up. It actually owns a company in the US, a US truck manufacturer called Mack Truck. So it might be why it is also up. It might be the reason why it is there. But we also await more details on those policies, which are supposed to be in place from next week. So as the market digests this, that might explain the divergence in that performance. And finally, let's end with IHG, the hotel operator, and it's up this morning on the back of that double upgrade by JP Morgan that mentioned good earnings visibility and good free cash flow, and that is really driving the stock. It is up 2.5% this morning for IHG.
Okay, Chloe Melly from our equities team, we thank you so much with those movers. 16 minutes into the open, and next up we're going to dive into those pharma tariffs. 100% tariffs announced by Donald Trump. We'll have more next. This is Bloomberg.
The most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Onen in Bangkok. This is Bloomberg.
So, President Donald Trump's announced a fresh round of tariffs targeting a broad range of sectors. It includes a 100% duty on branded or patented pharmaceuticals. That starts October the 1st. And he's also announced plans to impose levies on heavy trucks, kitchen cabinets and upholstered furniture. But as you can see, the mixed reaction in heavy truck stocks this morning. Volvo up, Daimler down nearly 2.9%. Well, let's get some more detail, shall we, with Bloomberg's Jill Desis. Jill, we need detail here. What more do we know about these tariffs?
Well, Lizzie, unfortunately, when it comes to where we stand with these right now, we know about as much as Trump put out in that social media post, which is, of course, just, the value of these tariffs. I mean, you mentioned the ones on heavy trucks for 25%. We've also got some kitchen and, sort of kitchenware, furnishings, that kind of thing. So this is all what he's announced, as well as, obviously, those drug tariffs, 100% levies he's talking about that are due to go into effect next Wednesday. I think, though, the really important thing to note with this is that a lot of this seems to come out of these ongoing commerce investigations. So the Commerce Department, under the Trump administration, they've been spending months trying to slap these levies under the Section 232 rule. I think this is a bit different and actually might be more difficult to legally challenge than, say, those country-by-country tariffs that Trump also announced as part of his big Liberation Day plan. So what we've seen under these latest tariffs, this is the same type of sectoral process that he's used to advance levies on aluminum, steel, automobiles, auto parts, that kind of thing. So, we stand right there now, but I think we're waiting for the U.S. to wake up so that we can get a few more details on what exactly this is going to look like.
Yeah, with these tariffs set to come into force next Wednesday, I think probably the clarity on the pharma sector is most important. I saw Bloomberg News writing that if you take all of pharma included in this 100% tariff, it would move up the average tariff rate by 3.3 percentage points. Do we know how these tariffs are going to be implemented?
Yeah, I mean, that's a huge question, right? Because the big caveat with that pharma tariff, I think, is the fact that Trump said that as long as you're breaking ground or, putting under construction some kind of massive U.S. manufacturing plant to manufacture drugs in the United States, then maybe you wouldn't be affected. I mean, I look at the big drug makers like AstraZeneca, Johnson & Johnson, Merck. I mean, these are all companies that have been kind of, expecting something to come on the pharma sector this year, right? I mean, the Commerce Department has been investigating this particular sector for quite a few months now. And so a lot of these guys have made, pledges worth potentially, billions of U.S. dollars in the type of manufacturing. But, I mean, it kind of comes up to Trump and how exactly this is worded as to whether or not that's enough to satisfy satisfy the requirement to be exempted from this. The other thing, too, is how this plays into existing tariff agreements, right? I mean, the U.S. and the EU reached an agreement earlier this summer to impose only 15% tariffs on pharmaceuticals. Is that overridden by this? I think that's the other open question here, too. So a lot still unanswered, and the deadline really, as we've mentioned, is coming up next Wednesday.
Jill, great stuff. Thank you very much indeed. Jill Desis joining us on this story. Let's get another view on what is happening in here. Let's bring in Sam Fazeli, Senior Pharmaceuticals Analyst for Bloomberg Intelligence. Sam, Jill raises loads of questions that we don't have answers to this morning. We don't know what manufacturing in the States and the impact that that will have, what actually counts, what happens to existing trade agreements, what goes on there with Europe in particular. What is your early read of what we're looking at here?
Yeah, Guy, nice to see you again. You helped me. I mean, we got 6 lines of truth, right? So how am I going to be able to get anything out of that? There's so many questions that the commentators just before me raised, which are critical here. As long as you have a shovel in the ground, you're okay. But does that shovel have to be for a manufacturing facility that's related to a specific drug? What if they are building a facility, which most pharma companies are doing, and of course, they already have facilities there. And they've all started a variety of pledges. What if they're building a facility for drug X, but drug Y is still coming from, say, I don't know, Ireland or Switzerland or Denmark? Well, how does this relate? If I've got one manufacturing facility being built, am I exempt? And also, 100% clearly, it's just impractical. You can't do that overnight because that immediately raises prices in the US, which of course you can't do. It just doesn't make any sense. So as a method to try and get pharmaceuticals to continue to see through with their pledges, this probably is the best thing that the president, or the key thing the president's after.
So while we wait for detail from the White House, Sam, what do we know about the companies who have got shovels in the ground? Because I'm looking at the stock reaction this morning. You've got Astra down, but Chloe Melly telling us earlier that they're already building. Have you a sense of who's going to be more impacted than other companies?
Yeah, no, I mean, it's very hard to tell. Of course, the Novo Nordisk was mentioned there because the volume of drug required for obesity is so massive that, and a lot of these obesity companies, the 2 obesity companies, were caught a little bit unprepared with this supply, with the demand level that came in. So they're all trying to catch up. Of course, they've caught up a little bit. But I mean, AstraZeneca, I think pretty much they've said over and over again that the vast majority of drug that they sell in the US is manufactured in the US. Most pharma companies have done that. The ones who haven't are building. And I'm pretty sure Novo Nordisk is in the process of putting manufacturing together there too. The question is, what is enough to satisfy the president so that these tariffs don't come in? I fully expect that on the 1st of October, nothing will happen. Most of these companies will highlight to the administration what they're doing, and the president can get the deserved win that he's got. He is forcing these companies to move manufacturing.
Okay. Maybe not as much of a reaction as we're seeing in Novo shares this morning then. Bloomberg Intelligence, Sam Fazeli, we thank you so much for that analysis. Coming up on the programme, hedge fund manager David Einhorn is sounding the alarm on AI spending. We're going to discuss that with a bull-bear panel coming up next. This is Bloomberg.
When we looked at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is the opening trade. We're 30 minutes into today's session here in Europe, and is looking fairly positive across the board. European equities are continuing their outperformance versus U.S. equities this week. The U.S. equity market is actually having its worst week in 2 months, but European equities are keeping their shine, especially today. Euro Stoxx 600 up 0.4%. Some outperformance in France. Those shares up 0.8%, and some underperformance in the FTSE 100, just up 0.2%. Guy, how's it looking under the hood?
Let's take a look at what we're seeing. As you say, front foot, 434 stocks up, 151 down. Volume's a little light. It's going to get lighter as the Ryder Cup kicks off a little bit later on this afternoon. Are we taking the afternoon off? Let's go park that one for the moment. 52-week highs, Babcock, Repsol, ING on my list this morning. It's interesting to see Repsol on that list once again. It's up by another 0.9%. I want to turn our attention, though, to what is happening with the 52-week lows. There's a story here that really stands out. There's 3 that I've highlighted, but there's one that really stands out, and that's Cucinelli. We'll come back to that in a moment. Teleperformance is down. Diageo is trading down by 0.7%. But here's Bruno Cucinelli. Morpheus, which is a recently formed short seller, announcing yesterday that is taking a position here. Let me just show you the 2-day chart, because the news came out yesterday afternoon, and you can see that the drop we saw yesterday, back end of the session yesterday, was really big on the back of this news. It has continued today. I think there might almost be I think there's a volatility halt right now. Was last time I checked as I walked away from my desk. The stock has been absolutely smashed on a 2-day basis and is now down by nearly 25%, a quarter of the value of Bruno Cucinelli being wiped out in the last 24 hours, and we are only just getting the second session underway. So that's the narrative we're watching this morning. Not so much quiet luxury this morning when it comes to the luxury space. What are we watching, Lizzie, when it comes to the other things we need to know this morning?
Well, if you're just joining us, we've got plenty of news when it comes to the tariff front. US President Donald Trump announcing a 100% duty on branded or patented pharmaceuticals, as well as new levies targeting heavy trucks, kitchen cabinets and bathroom vanities as well. The new tariffs are set to start on Wednesday, and other duties on critical imports, including semiconductors and critical minerals, are expected in the coming weeks. Elsewhere, Bloomberg has learned that European diplomats have warned the Kremlin that they will shoot down Russian jets. This, as the head of NATO tells Bloomberg the alliance can't afford to down drones with expensive missiles. Russian Ambassador Alexei Meshkov says that, quote, if NATO shoots down a Russian plane under the pretext of an alleged violation of its airspace, this will be war. And finally, former French President Nicolas Sarkozy has been handed a 5-year jail term in a corruption trial. Sarkozy was found guilty of criminal conspiracy over allegations that aides and political allies covertly sought funding from the Gaddafi regime before his election in 2007. So, Guy, it feels a little bit naughty, is the news on that. We've got ID cards back in the UK and Sarkozy on the front of the papers.
Absolutely. That ID card announcement is going to be fascinating a little bit later on. Big step forward for the UK, you could argue, or a big step for the UK. Just want to come back to this Cuccinelli story and just say that Bloomberg is out to Cuccinelli for comment. I just want to make that point clear. Anything that involves one of these big research reports, short-selling research reports, we need to just make sure that we're covering all of our bases on that front. So we'll come back when we get news on that front as well. Let's talk a little bit about what is happening in the tech space, because that is fairly interesting as well. The hedge fund manager, the famous hedge fund manager David Einhorn, is sounding the alarm on AI spending, warning that it may destroy vast amounts of capital, even if the technology itself ultimately proves transformative. The Greenlight Capital founder says the $1 trillion build-out by companies is so extreme that investors may not see the payoffs they are anticipating. He adds that, quote, "I am sure it's not zero, but there's a reasonable chance that a tremendous amount of capital destruction is going to come through this cycle." That sounds eerily familiar for some of the other comments that we've been having from fairly well-known names in the tech space. Where do we go from here then? Are we in a bubble? Is it going to burst? Are we going to see vast quantities of capital being incinerated here? How do you trade it? Do you get on board? Where in this bubble could ultimately be? And do you view China and the US differently? Let's try and answer some of these questions. Maria Weitmana, equity research head at State Street Global Markets, longtime tech bull, joins us, as does Robert Lee, senior analyst at Bloomberg Intelligence. Robert, I'm going to start with you. We have had a number of very large announcements over the last few days from companies talking about investing trillions of dollars over the foreseeable future in data centers, in AI. It does seem we're at the position now where the more you announce in terms of your spending plans, the higher your stock goes. What do you make of this? Where are we in this narrative?
Okay, well, absolutely in a China context, that's completely true. Stocks here are trading at premium multiples. We're seeing stocks going up 10, 20, 30% a day based on headlines, based on hype and based on hope. But it's not really underpinned by the fundamentals. So just to quote a quick number at you, Alibaba, which has been one of the top performing tech stocks here in the China context, their capex more or close to trebled over the last 4 quarters, yet their cloud intelligence profit increased by only 86 million. So, sorry, what I didn't quote at you there is their capex went up to 5.4 billion. So I would say that's a pretty poor return on investment.
Let's bring in Maria Weitmana. Maria, I assume you're still positive on tech. If that's not the case, please let me know. But if there's anything that will change your view, I'm sure you test your thesis on the tech, on the AI trade every morning when you walk in. Is there a red flag that you're maybe watching for in this market?
Yeah, hello. I'm absolutely still very, very bullish on tech sector. I mean, to me, tech sector is pretty much at the moment, a lot of optimism about tech is that there is really no alternative. So tech sector is a sector with the strongest cash flows, strongest earnings growth, highest margins. Yes, it is trading at high multiples. Yes, investors cheer everything. But I think mostly because there is so much cash in the economy, so much liquidity, and there is no other place for it to go. There is no other sector, no other kind of region where we see such a strong earnings growth, such strong cash flow. So investors funneling money in. And I hate to say it, and similar to previous panelists, is that we see very little alternative. Where else money would go? And fundamentals matter less and less. So investors putting this liquidity into sectors that grows, and it's tech, and they keep investing.
But Maria, does the quote-unquote vendor financing that we've been seeing between NVIDIA and OpenAI, Intel asking Apple for funding, not worry you that this is them propping up the market, that this resembles bubbles previously?
Yeah, I mean, it's hard to kind of argue with that. Vendor financing is a red flag, but they do have cash. They have a lot of cash. So they're investing, and what they're doing is that they're building moats around their business. They're making it really, really hard for anyone to enter the space and compete it away. And I think this tech kind of enthusiasm will continue until we get somewhere else to put the money in. And so far, there is nowhere.
But Rob, we look at many of these businesses. Yes, they've got cash. Not all of them do. It's interesting to look at Oracle's debt load and what it is saying to us at the moment about where we go here. But Rob, if you look at what is being talked about now, we had Bruce Richards from Marathon earlier on this week just talking about the amount of debt that is going to be required. So yes, some of this is going to be funded by the balance sheet, but a lot of it is going to be funded by debt. And once you start to get into go down a road where debt is so high and the leverage is massive, isn't even the slightest miss going to produce risks?
Well, yeah, that's true. But conversely, a lot of the large tech platforms, particularly in the US and China, are really awash with cash at the moment. They're highly cash generative. So even though they're investing, substantial, humongous amounts of capex, in the near term, they can afford it. But I mean, if this thing really is truly a bubble, and I think there are a number of incredibly worrying parallels with the dot-com boom, which is a period of my career I did work through, because the monetization is not coming through. So if ultimately that leads to a substantial level of value destruction, then not only is that potentially going to hit the equities, but as you've just lined out, that's going to also impact on the debt side. But can I very quickly come back to something that Maria mentioned? I mean, I have every sympathy and understanding for active fund managers. As she said, if you're not investing in tech, paraphrasing her, what else do you invest in? I completely understand that. But in a China context, there is a huge disparity between the performance of these techs and what's happening on the fundamentals, because the earnings, the monetization is not coming through. In fact, in cash terms, they're heavily loss-making. So, this ultimately, in my view, it's fundamentals that drive stocks in the long term. Liquidity, short-term trading, that's one thing. That's what's driving markets in the moment. But this detachment between the stock price performance and the fundamentals on the ground should really worry people, I think.
Maria, I want to bring this to you because I think that's a good point. How long can this market wait until we see a boom in productivity gains? How are you viewing that? And is that something that's really informing your thesis on how far to take this tech trade?
Yeah, no. I mean, I very much agree with Robert in general that fundamentals matter. And for now, it's tech that's growing fastest, and it's tech sector that's kind of generating most profits. So it's, it's not completely irrational that institutional investors, particularly in the US, are putting their money into the sector. But in terms of productivity gains, actually, it's interesting. So the most productivity gains, I think, from AI are still attributed to tech sector. So they're the ones who are kind of managing to get some return on that investment within the technology sector. So they getting more efficient, and I guess that's one of the use cases, and they're benefiting from it. But the whole world is very intrigued. We still see capex in the sector. We still see transfer of money from non-tech into tech. So that is happening. Investment is happening. Similar to investors, I guess CEOs are kind of, there is fear of missing out is still there, so they feel like they need to be part of this technology build-out. We're uncertain. Nobody knows where this technology is going to be, but people wary of missing on it. As cost of inference is coming down, kind of spread of this kind of investment into AI continues. And that helps support profits in large tech companies. Competition is very little, so the margins are still very, very healthy there, and that supports their performance again.
Rob, how much can we attribute this rally to the president himself? He's Intel's pitch man. I wonder who's going to be next after NVIDIA and Apple, if Apple comes through as well.
Absolutely.
Sentiment.
Sorry, Rob.
Yeah. Okay. Sorry about that.
And then we'll come to you, Maria.
Yeah. He's the best friend of a short-term momentum trader, isn't he? But again, as I mentioned a moment ago, it's fundamentals that ultimately drive tech stocks. So, for example, if you just take a step back, who's benefiting at the moment? Because clearly, some companies in the ecosystem are. This is NVIDIA and anybody involved on the infrastructure side. But ultimately, their end customers, the users of these services, need to be developing tools and so-called killer apps that are ultimately going to turn a profit and justify these very large amounts that they're spending on cloud. And I think across the board, globally, not just in China, but the US as well, we're not really seeing these killer AI apps. So at the moment, we're in a phase where if you're an infrastructure provider, these are boom times. But ultimately, if your end customers who you're supplying those services through are not making a profit or have got no prospect of making a profit, then, again, that is something that I think people should be focused on. And just don't forget, very briefly, the MIT survey we saw a month ago. I think on the back of that, 5% of companies they surveyed were making a headway financially on AI, 95% were not. So the evidence is there.
Maria, let me just pick up on that last point. The MIT survey was interesting. There are other surveys out there as well. How long should the market wait for the revenue that ultimately AI needs to produce? We need to pay for this service. And I'm not talking about the revenue that NVIDIA is generating at the moment, the kind of the end user revenue. How long do we have to wait for that to be there? How long do you think the market is going to have patience with this trade? Because the revenue at some point does need to be there, but we're miles away from it now.
Yeah, I mean, new technology is developing, so it's kind of uncertain. But I think I want to pick up on this MIT survey. And obviously, 95% not making profit is like very catchy headlines. But actually, if you read closely through the survey, I mean, what survey said is that the technologies that was AI technologies that was implemented properly for what it's intended for, solving specific problems, is very, very productivity enhancing and doing what it should be doing. And surveys with like smaller firms that kind of focus on it do really, really well using AI, and technology is transformative. It's not very clear how the broader use cases are not that found, but solving specific problems is doing a fantastic job in increasing productivity. And I think we need to, as an industry, we need to spend more time developing those kind of focused applications, what AI is very good at. It's not generative AI, it's not going to replace us, it's not going to all of a sudden, produce TV anchors and strategists, I hope. But if you have specific problem, particularly like data classification, finding information, kind of connecting the databases, that does a fantastic job and enhances productivity very well. So I think we have to have reasonable expectations, set correct tasks, and AI is very useful in those in those applications. And that's what market needs to focus on.
Yeah. Maria, when it comes to where you're most bullish, where you're most positive on the AI supply chain, where is it? Is it more in the infrastructure build-out names, or is it more in those who have specific use cases for AI, like Palantir, for example?
I think you're exactly right. Market is very excited about infrastructure. I mean, the tech infrastructure. I mean, those stocks trade at huge premium, but they seem to have kind of insatiable demand that massively outstrip supply. So for them, the profitability looks very clear for a few years forward. That's really exciting for investors. They need certainty of earnings, so that's where a lot of money going for. But next step is absolutely what you said: the specific use cases where we can see the benefits of AI. So those two, I mean, they're kind of tried and tested, and they continue to receive inflow. I think market is a little bit more hesitant on kind of pie in the sky applications, but where there are specific cases, like, I mean, first of all, infrastructure, and secondly, like solving specific problems, those companies are very much rewarded.
All right, the bull versus the bear, the hopeful versus the cynical. Maria, thank you so much. Maria Vaitmana, Equity Research Head at State Street Global Markets, and Robert Lee, Senior Analyst at Bloomberg Intelligence. Great to have you both with us. Now, staying with tech, and stepping back a little, Apple has long led Silicon Valley in tech, but in the world of AI, it's falling way behind, and continued missteps could threaten the iPhone's dominance. Bloomberg Originals has been looking at what went wrong and if Apple can catch up.
Siri, what's the name of the guy I had a meeting with a couple of months ago at Cafe Grinnell?
You met Zach Wingate at Cafe Grinnell.
Zach!
Actor Bella Ramsey was bailed out by a new version of Apple's Siri that was meant to be available for all.
That feature still has not been released. It's originally supposed to come out April, May of 2025, but now it's on track for spring 2026.
Apple took down the ad and is facing a lawsuit over the delay. But the disconnect exposed a deeper issue. The company was losing ground in the AI race.
They totally missed the boat. There was indecision. There was lack of concern that this could become a real thing.
This is a story about how hard it can be to stay on top.
AI is something that wasn't in their DNA.
Continued failure doesn't just hurt Siri. It could threaten the iPhone's dominance. The product line accounts for more than half of Apple's revenue. So missteps with what's become its most noticeable missing features could be devastating.
We saw this for many decades. Nokia was at the very top of the phone industry. Apple came out with a much better mousetrap. BlackBerry was at the top of the industry. Apple came out with a better mousetrap. They are going to be in danger of the next Apple being created if they don't get their act together soon with some serious acquisitions, changes, and partnerships.
Subscribers could watch that documentary right now on the terminal and at Bloomberg.com, as well as on the Bloomberg Originals YouTube channel tomorrow.
I really miss my BlackBerry. It was amazing.
Keys.
One of the best pieces of kit I've ever had. Distant memories. Coming up, UK Prime Minister Keir Starmer announces plans to launch a digital ID scheme. We're going to explain what it is and what it's going to mean. That's next. This is Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Things to watch out for the rest of the day. The UK Prime Minister, Keir Starmer, is going to try and relaunch his administration with a speech a little later today. This, of course, comes ahead of the Labour Party conference, which is taking place in Liverpool this weekend. He is going to announce a plan for compulsory digital ID cards to help combat illegal migration. Just give us some data on what is happening as well. in the UK. That would be a useful, maybe, derivative of this. Joining us now for more on this announcement and the flurry of press stories that we're seeing in the UK at the moment, circling at the Prime Minister ahead of the Liverpool conference, is Bloomberg's Alex Wickham. Good morning. Good morning. How significant a step is this for the UK to go down an ID card route?
It's really interesting. It's something that Britain hasn't wanted to do for decades. 3 decades ago, Tony Blair was talking about doing this as Prime Minister. He never managed to get it to happen. He wanted physical ID cards back in the day. Now Keir Starmer has sort of reprised this idea in the new context that Britain has an illegal immigration crisis. And one way of helping to combat that is to try to keep track of who's in the country and ultimately, when people go to employers and say, I want a job.
How quickly does this happen?
Very good question. The government won't tell us, which opens a lot of doubt into it immediately. Which government IT programs are hardly known for their sort of speed and competence
and security.
Indeed. So there are loads of issues, and that is why the Conservatives, Reform, the Liberal Democrats are all coming out this morning and saying we don't like this. So it is a rare thing, relatively rare thing sometimes in British politics, where there is a clear dividing lines. And Starmer has really got to make the case here. He's saying, come on, this is my sort of progressive but also tough way of dealing with this problem of illegal immigration. I think he's got a lot of convincing to do to get people to back it.
So that's Starmer's latest thing on how he's going to try and save himself. He's languishing in the polls. 2 of his opponents, you've got Nigel Farage talking about the Bank of England needing to lower rates, meeting with the BOE governor. Then you've got Andy Burnham saying that the government shouldn't be, what was his quote, in hock to the bond markets. I've heard that before from someone else. How seriously should the market be taking the threat from those 2 men to the Prime Minister?
I would say, and I think markets are being sort of calm about this. There are several years until a general election. Andy Burnham, for example, as a potential Labour rival to Keir Starmer, he's not even an MP yet. That's a requirement of being Prime Minister. So there are several steps before Andy Burnham could become Prime Minister. Political journalists obviously love the gossip and intrigue and potential of political infighting in a government or a Labour Party. But markets obviously know that there are several steps that are going to need to happen before that is even a remotely realistic possibility. Farage, again, it is a credible threat. Of course he is to Keir Starmer at the next general election. Absolutely, he is challenging. There is a major poll out this morning that puts Farage on course for a majority, which is extraordinary.
Wow.
But we are still several years out, so in terms of immediate risk, it's relatively limited.
Yeah, look, because when I drive around the country, I go home to Manchester, I see the flags everywhere, and I wonder whether we're underestimating the threat of Farage, like the UK media did.
But we're
Brexit.
miles away from an election.
Sure, but I wonder what the mechanism is. Is it that you see a coalition with the Conservatives and that Farage gets the infrastructure of the Conservative Party that they don't already have?
I think for Farage, he wants a majority, and it's an extraordinary even to be talking about that, but it's not completely implausible. And, I think that the reality is the Conservatives, after 14 years, ultimately failed in their project and were resoundingly rejected by voters at the last election. It's going to take a long time for voters to want to vote for Tory again and trust the Tories again. The problem, I think, for the mainstream parties is if Labour, who have been given their turn by the public, also fail to do the things that the public wants, whether it's fix the cost of living, NHS, immigration, all of these things, what are voters going to do other than look to Nigel Farage? He is the obvious person to look to next. And that is the kind of extraordinary thing that is happening in British politics at the moment, and that is really why you see things like flags go up and down the country. As Farage always likes to say, something is happening out there. We will see, but there is something happening.
All right. Bloomberg's UK political editor, Alex Wickham. Great to have you on the desk.
Busy weekend coming up for Alex and Lizzie. They're both heading up to Liverpool, I assume. Looking forward to the coverage of that. We cast our eyes to the other side of the Atlantic, the Ryder Cup. 12:10, I think John Rahm, Spain's John Rahm is going to tee off.
And the U.S. president will be in attendance. Nassau County, Bethpage Black. It's going to be a good battle.
Oasis, is it the final one tonight? No, tomorrow night.
I don't know.
In London. Women's Rugby World Cup final. There's lots of great sport coming up this weekend. Have a fantastic weekend, everybody. All eyes on Liverpool. This is Bloomberg.
right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
President Trump says he will impose a 100% tariff on branded drugs next month. But companies building plants in the US will be exempt. He's also announced new levies targeting heavy trucks and kitchen cabinets. European stocks rebound, though, from 3-week lows, shrugging off broader tariff worries. Asia sinks. And Bloomberg learns that European officials are privately warning Moscow that they are ready to shoot down Russian jets. So that's the geopolitics. Let's get to the markets then. Front and center, of course, is how investors are digesting these renewed tariff threats from President Trump at a time as well when traders are moderating their views in terms of how far and how fast the Federal Reserve can go. We have inflation data late today, 1:30 p.m. UK time, that we know the Fed scrutinizes. The PCE data in focus for us. S&P futures then, after 3 days of losses, looking to modest gains right now, up 0.1%. The handoff from Europe looks like it will be more positive. The 10-year right now at 4.17. Relative stability across the Treasury curve as we await the inflation data out of the US. Eurodollar at 116. Modest strength coming through for the single currency, but in fact in the last few days the dollar has been higher. Brent at $69 a barrel, closing in on a strong week for oil. Oil prices up on Trump's pressure around Russian oil, up around 0.1%. Let's have a look at the map then. In a session that is on some levels counterintuitive in terms of the relative strength coming through for European equities after 3 straight days of losses, brushing off the concerns, it seems, largely about the tariff risks. You're looking at the pharmaceutical sector and chips, and some of the tech names are under pressure in the session today. But it's things like insurance, travel and leisure that are performing relatively strongly in the session today, along with energy. Here in the UK, the FTSE 100 is up 0.3%. The DAX over in Germany up 0.5%. And France up 0.7% on the CAC 40. Let's get the analysis and get to the guests and the interviews. Break down these stories for you. The poll starts right now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. Happy Friday, everyone. President Trump then announcing a fresh round of tariffs targeting a broad range of sectors, including, as I mentioned, a 100% duty on branded or patented pharmaceuticals starting October the 1st. For any company not building, and this is important, not building a manufacturing plant in America. Let's bring in Sam Fazeli then, Senior Pharma Analyst at Bloomberg Intelligence. Sam, given that many of the most imported drugs to the US are made in countries with existing trade agreements, trade deals with the US, what is the likely impact of these measures, again, set to kick in on October the 1st?
Hi, Tom. So I think if you read through the short comment that the president made on Truth Social, all it seems that companies need to do to avoid this, whether it's the 100% or within the existing tariff structure, which of course there's so little information on that front that we can't really know what the actual reality will be. But as long as they're in the process of transferring some manufacturing or about to be building a manufacturing site, and they've had about 3 months to get going, a lot of pharma companies have got going in some new manufacturing facilities, whether they were expected or not, whether they were related to tariffs or not. So I think many farmers will not be impacted by this. And actually, you can see that in the share price moves now. Pre-market, they looked a bit ugly, but I think most people have kind of sat back and thought, wait a minute. This is, and also you cannot suddenly double the price of a drug in the US, which was already complaining about high prices of drugs.
Okay, so maybe the nuance is slightly less concerning for those companies than the headline suggests, and we've seen that before, haven't we, Sam? So you're giving us the context on that front. When it comes, Sam, to what this does, though, to supply chains, you know this better than most. They are complicated. They're interwoven when it comes to the pharmaceutical industry. Is there at least a risk around just adding complexity, adding cost, adding time around those supply chains?
Yeah, I think, Tom, there is a possibility that there is a risk there, which is why I think you might see some share prices looking a little bit weak. Again, the market hates uncertainty here, and it does add an element of that. But the reality is that I think the administration has been quite pragmatic on some of these things, where if you're at least finishing the product, doing a major amount of the manufacturing in the US, whether you get your culture media or sodium chloride that you need to add. I'm just making up some points here. And from, I don't know, Canada or Mexico, I don't think that is going to be the issue. I think the key thing here is that the president is trying to push investment in the US, not just a small amount of income on some cheap ingredient that goes into a basic manufacturing facility. And I think this is the objective of this effort. And there has been some positive response to it. And some companies have started doing that.
Okay, there is that rationale then. Sam Fazeli from Bloomberg Intelligence, really important context and framing of what we've been hearing in terms of these latest measures and tariff threats targeting the pharmaceutical industry. Now, to the broader macro story, revisions to US data show that second quarter GDP was higher than previously reported, with consumer spending particularly strong. The adjustments suggest that the balance of risks to the Fed's dual mandate could be shifting back towards inflation from the labour market, of course. Speaking just before the revision was published, Fed Governor Stephen Myron repeated his call for more rate cuts.
My view is not one of enormous economic pessimism. You know, I don't think the economy is about to crater. I don't think the labor market's about to fall off a cliff. However, the neutral rate is drifting down. And as a result of that, it's incumbent upon policy to adjust in response. And the longer that policy stays excessively restrictive, the greater the risks to the downside for the economy.
Okay, let's bring in at this point Natalia Libikina, head of EMEA Equity Strategy at JP Morgan Private Bank. Natalia, great to see you. Thanks for coming in this Friday morning. So given where we stand in terms of the uncertainty that many investors are now starting to think about when it comes to the Fed's path ahead, and there is clearly that debate amongst FOMC officials when it comes to labour and inflation risks, and then the tariff news over the last 24 hours, do you maintain your constructive view on the US equity markets?
Good morning. Thank you, Tom, for having me. We actually do maintain the positive view because when we look into the tariffs, we've been living with tariffs since the beginning of the year. And most likely the uncertainty actually peaked in April period of time. We saw a very big downgrade cycle to earnings since April time. Now, what is really interesting, when the companies have been reported in the first quarter, in the second quarter, we're seeing really strong revisions. Especially after the second quarter. Second quarter earnings, the market was expecting 5%. companies came up with 12%. So clearly we're seeing that the corporate environment still remains quite constructive. And we think that probably this earnings growth will continue into 2026.
Okay, so the earnings growth continues. How much of that is premised on a dovish Federal Reserve? What are your expectations as to how far this Fed can go, given the challenges on both sides of their mandate?
Absolutely, and we think that the Fed cutting cycle is actually supporting for the risk assets at this point, because we are still in a solid macro environment, we're not seeing a recession, and usually when the Fed is cutting and the macroeconomic environment is still solid, that is usually good for the risk on assets, equities. We're constructive on the US market, and we're also constructive on ex-US market. When you combine that with a solid earnings growth, that gives you and us a very constructive picture.
Okay, so the markets and earnings have kind of, you're suggesting we can look through the tariffs to some extent. I just wonder on the inflation story, though, is there at least a risk that investors need to be thinking about when it comes to 2026 and a possible resurgence of inflation that in the US is still well above the target of 2%? We're around 3% on inflation. We have additional tariffs. Is there a second wave inflation risk?
There are a couple of ways to think about this. Absolutely, this is potential risk, but we're not seeing a massive resurgence in inflation. Can there be some bumps because of the tariffs? Absolutely, there can be. The question is, when we talk to investors, how we'll think about the portfolio construction. Can they add some other parts of the market that are more protective of inflation? So think about gold, infrastructure, private markets. When you put that resilient portfolio, then your portfolio is very much against the potential resurgence in inflation.
How much is the earnings upside that we've seen and that you forecast going forward in the upcoming earnings season is underpinned by spending on AI?
Great question. I think it's a combination of two things. One is absolutely we're seeing a very strong, capex cycle that is happening since the first quarter of this year, even earlier than that. That is absolutely impacting the market. AI is leading the charge at this point. But then also the Fed cutting cycle should potentially impact the rest, 493 companies in the United States of America. If we think about, for example, financials, they should do well when the Fed is cutting. That should give potential loan growth. That should be good for the M&A IPO activity. So yes, we're seeing a very good picture on the AI side, but let's not forget that the Fed cutting cycle should be also good for more cyclical parts of the market.
And financials are amongst your favourite sectors right now for the rationale that you just unpacked for us. But as are utilities, and that ties back to the AI story, when does the AI infrastructure spend really start to accelerate the earnings story for utilities?
We're already seeing that, right? If we're looking in the last 10, 15 years, we really didn't see that big earnings growth in the utility sector. But now we're this completely new era where the AI infrastructure is probably increasing the earnings growth for utility sector because we just need more power. And with all the news that we've seen in the last, call it 1 month, that definitely underpins very positive picture for the US utility sector.
You focused a fair bit on the earnings story in the US, and the divergence in terms of the US earnings story versus European is pretty stark. When do European earnings start to turn around? You're pretty constructive on Europe as well. When does the earnings story of Europe start to catch up? When do we start to see real positive momentum in the European earnings story?
We think that's probably the question for the 2026, because this year the earnings in Europe have been impacted by FX, but also tariffs. What we need to see now is the German fiscal stimulus actually impacting the more cyclical parts of the market.
Do you want a position for that now?
Absolutely, yes. Because we think that we're probably at the very last stage of the negative earnings revisions in Europe. And interesting, when you look into the valuation, Europe still trades at 15 times PE. So the market really tries to position themselves for a potential resurgence in earnings revisions in Europe next year.
Which part of the European equity space are you leaning into, or do you want to be leaning into at this point?
We have been very constructive on industrials for a very long time, and we do continue to have this conviction despite a very strong performance, because there are multiple global secular themes that industrials are part of. AI is definitely one of those stories, but also the German stimulus should be positively impacting the sector.
And you mentioned euro strength as one headwind that is factored into slightly softer European earnings. Do you assume that euro strength continues as a 2026 theme on softer dollar, or are we starting to see a more equilibrium in terms of that currency pair?
I think equilibrium is a nice word to say. We think that the pace of the move is probably behind us. We don't think that the impact will be as large as we've already seen in 2025. And that's an important point because a lot of multinational companies have been punished and the earnings have been impacted by FX move. If the FX move become less pronounced next year, that should be positive for that part of the market.
Okay, Natalia, thank you very much indeed. Really smart insights and factoring in, of course, news of the day in terms of how to think about these markets. Still constructive on US equities and the earnings story as well in that segment of the market, and possibly more to come in terms of the European equity story when that stimulus from Germany really kicks into gear. Natalia Libikina, head of EMEA Equity Strategy at JP Morgan Private Bank. Coming up, securing the skies. NATO Secretary General Mark Rutte tells Bloomberg the alliance is ready to protect the airspace of members. We bring you that interview shortly. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Tehran, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It is not sustainable that you would take down $1,000 or $2,000 costing drones with missiles which cost you maybe $500,000 or $1 million. So this is why our Supreme Allied Commander in Europe, together with the colleague working on transformation, all of us in NATO are rapidly developing the technologies, learning from the Ukrainians.
NATO Secretary General Mark Rutte, of course, on deploying new technology to counter Russian drones. Now, we're told the British, French and German diplomats have held a tense meeting with Russian officials in Moscow about incursions into NATO members' airspace. Russian officials deny their planes crossed into Estonian skies last week and said that a separate incident when drones crossed into Poland was the result of what they've described as an error. It comes as Denmark's Prime Minister warns the nation to brace for more hybrid attacks, pointing to Russia as Europe's main security threat. Hybrid warfare is a mix, of course, of unconventional and conventional tactics. This came just before a suspected drone sighting disrupted air traffic in Denmark for the third time in a week. Let's get more from Russian economy and government editor Greg Sullivan right now. Greg, what have we learned about these private talks then in Moscow?
Well, from what we know, the Europeans are really trying to put forward a tough line.
They said that they're willing to respond to these attacks more forcefully, including potentially by shooting down these jets. Now, for NATO, this is a huge challenge for them on many fronts. We don't really know why the Kremlin is doing this, but it could be a number of things, including testing NATO resolve or even testing NATO air defenses, seeing what and when NATO and how NATO would respond and when to certain incursions. You mentioned the hybrid tactics. These are frequently employed by Moscow as it looks to test Europe, but also to try to undermine the resolve for Kyiv's European allies. We know that Putin has no intention of stopping his war in Ukraine, and this could be a signal from the Kremlin that those that support Kyiv should be ready to face a more respondent Russia on that front.
Greg, we've got the elections in Moldova this weekend. How is what Russia is doing playing into that election? There have all been concerns about and risks about interference, and clearly Russia has a track record of interfering in elections. Is that what the key risk is this weekend? How significant could this event be?
Well, for the Kremlin, they certainly don't want to see Moldova go down the path of the European Union. They would prefer to see Moldova stay in their orbit. Of course, the current president, Maia Sandu, is very pro-European. Last October, there was a referendum in the country about joining the EU, and it passed narrowly. Russia has taken efforts to try to influence the outcome of these elections and referendums. Obviously, they do want them to stay in their orbit. So, that even prompted Ukrainian President Zelensky to say that the world needs to make sure that Russian influence doesn't prevail in Moldova. It is a divided country. Part of the country, it does look towards Europe. While there is a sizable Russian-speaking minority there, it's also facing high inflation and cost of living. So it's a pivotal election for Moldova as it looks to inch closer to the European Union, and that's something that the Kremlin obviously does not want to see.
Okay, an event we will continue to monitor and watch over this weekend. Russia economy and government editor Greg Sullivan with that update. Greg, thank you. Let's stay with Russia then and take a look at the economy there and the global economic risks tied, of course, to the events in Russia. And bring in Sergei Guriev, Dean and Professor of Economics at London Business School, joining me around the desk this morning. Sergei, thank you for your time. I want to start with your top-line view on the current health of this Russian economy as it continues to pursue the conflict in Ukraine.
Right. The overall view is Russian economy is stagnating. It's on the verge of recession, but not really in recession. The growth driven by military spending is over. In 2023 and 2024, Russian economy was growing at 4% a year. This year, it will be probably 1%. The first quarter was actually negative, second quarter near zero, but positive. And we can see how Russian fiscal resources are being depleted. Russian government just announced it's going to raise taxes, moving, for example, VAT rate from 20 to 22%, and drastically increasing taxes on small businesses as well. So there is a fiscal pressure, but it's not catastrophic. Russian government still has sovereign wealth fund. It's depleted. It only has 2% of GDP in it, in its liquid part. But there are alternative opportunities to finance the war. And I think as long as Putin continues to advance on the battlefield, it shows us that he has enough resources, human resources, military resources, economic resources to continue this war.
I want to go further in terms of the linkages between the economic health of Russia and its ability to pursue that conflict. But in terms of your medium-term outlook, because we've seen Russian officials downgrade their medium-term outlook growth for next year, for 2026. What is your view in terms of how the growth story evolves next year for Russia?
It's going to be a slow growth, and Russian economy is actually very complex, being essentially two economies, a military economy and a civilian economy. Military economy will continue to grow, albeit much slower, at a much slower rate than before. Civilian economy is stagnating, suffering from high wage growth, driven by demographic challenges, 1 million people killed or wounded, 1 million people emigrating. Also suffering from high interest rates. Russian central bank is lowering interest rates, but they're still staying at 17%. And Russian central bank said it's unlikely that it will come down further because inflationary pressures remain.
So interest rates at 17%, and you talked about the financial system. You say it's not facing necessarily a crisis. Is that my understanding? How much pressure is the financial system of Russia under right now?
So it's very hard to evaluate the health of Russian banking system. Russian banking system is dominated by the government banks. About 80% of banking assets are within the state banking system. So these banks take direction from the state. Formally, they are independent, but in reality, they take direction from the state. And if Russian government says, we need to borrow domestically, please buy our bonds, they do. And in that sense, there is some liquidity in the banking sector that can help finance the war still.
How vulnerable is this Russian economy to any further reduction in international purchases of oil? President Trump is clearly putting pressure. We can debate how much pressure and whether it's enough pressure on countries like Hungary, Turkey to some extent, India, to try and reduce their input or at least their purchases of Russian oil. How vulnerable is the economy to any changes on that front?
So the story about Hungary and about India are two different stories.
Okay.
So Hungary is buying very little of Russian oil. It will continue to buy Russian oil. European sanctions did not introduce embargo on countries like Hungary simply because Hungary said otherwise we'll block this sanctions package and further sanctions packages. Well, India has become a major buyer of Russian oil, and the previous US administration told India you can buy Russian oil as long as you comply with the oil price cap. So the idea was Russian oil stays in the market, so global oil market is well supplied, but we take away petrodollars from Putin and give them essentially to Indian fiscal coffers. Now, this administration says you don't need to buy Russian oil at all. We don't like that. And Indian government is lost whether it should actually follow the previous government's, US government's policy, which was part of the whole sanctioning coalition strategy, or the new policy, which is actually not supported by European allies.
Given all the incursions that we've seen in recent weeks, we have to start to think about the possibility, as unpleasant as it is, of a potential conflict between NATO and Russia. Is Russia's economy resilient enough to pursue a conflict with NATO?
Well, we don't know, and this is what Putin is testing now. He wants to understand, is NATO actually prepared? Is NATO actually united? Will US support European allies in deterring Putin? And Putin wants to understand how costly this war may be. And the other goal he's probably pursuing is to make sure that Europeans understand that they need their own air defense and should not send military support to Ukraine. So he's creating this distraction for the European NATO allies, sending the message, you need your own air defense at home. Don't send weapons to Ukraine.
China has been a crucial economic partner to Russia. Is Russia the junior partner in that relationship? How dependent is Russia on China, and is that a vulnerability longer term?
It is absolutely dependent. It is a junior partner, if you can still use the word partner, because it's some people would already say vassal. So in the sense that Russia is totally dependent on China. China is the only supplier of technology to Russia after sanctions introduced as early as 2022.
Okay, and briefly, before you let you go, you are the Dean of the London Business School, an esteemed establishment here in the UK, and you've recently launched a Corporate 100 Alliance. What is it? Why now?
Yes, that's been a good week for London Business School. London Business School is a global institution, which is especially important in those days of fragmented and polarized global environment, as we just discussed. And this week was very good. We just announced a landmark historic gift of £25 million to establish a endowed research institute on longer lives and careers. And we also launched Corporate 100 Community, which is one of a kind partnership with global corporations coming together to study and learn from our esteemed faculty, but also from each other. We just announced that the first founding partners include Rolls-Royce, Nestle, Deutsche Bank, Vion, and we will continue bringing this community together. This is a unique initiative where we build a corporate community with unique access to LBS resources for all layers of those global organizations.
Professor, thank you very much for your time.
Very much.
Professor and Dean at the London Business School, of course, Sergei Guriev, with that analysis as well in terms of the health of the Russian economy. Coming up, President Trump and his Turkish counterpart Erdogan meet at the White House. Part of their conversation was indeed about Turkish oil purchases. More on what Trump is pushing the Turkish president to do and the deals they have struck. That is next. This is Bloomberg.
you've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Welcome to the Pulse. I'm Tom McKenzie in London. Happy Friday. These are your stories. President Trump says he will impose a 100% tariff on branded drugs next month, but companies building plants in the U.S. will be exempt. He's also announced new levies targeting heavy trucks and kitchen cabinets. European stocks rebound from three-week lows, shrugging off broader tariff worries, while Asia sinks. And Bloomberg learns that European officials are privately warning Moscow that they are ready to shoot down Russian jets. Let's check in on Intel pre-market. We're seeing a pop on the back of reports that the Trump administration is looking to curb the import of chips into the U.S. market. They are looking at a one-on-one structure where you get one import for one chip produced in the U.S. market. We're waiting for more details, but clearly Intel, with its changing fortunes, particularly around its liquidity and recent investment from the U.S. government alongside NVIDIA, SoftBank, and conversations with Apple, getting a lift this morning, up 4.8% on that chip story that is being reported. And that is something we'll keep across for you, of course. So watch that stock at the open state time. Of course, up 4.7%. Now, President Trump has signed an executive order which advances plans for American investors to buy TikTok's U.S. operations to another part of the tech space right now. The spin-off cuts ByteDance's stake to less than 20%, as required by the national security law. Vice President J.D. Vance said the deal will value the new U.S. company at around $14 billion, much lower than previous projections of up to $40 billion. Beijing says the U.S. still needs to, quote, provide a fair environment for Chinese investors, though Donald Trump says President Xi Jinping has given the deal the thumbs up.
This is interesting because I had a very good talk with President Xi, a lot of respect for him. Hopefully he has a lot of respect for me too. And we talked about TikTok and other things, but we talked about TikTok, and he gave us the go-ahead. You know, it's run by American investors and American companies.
Meanwhile, former FBI Director James Comey has been charged with lying to Congress and obstruction related to testimony he gave in 2020. If convicted, he could face up to 5 years in prison, the Justice Department has said in a statement. Comey has, of course, clashed with President Donald Trump for years, and this move accelerates Trump's push for legal action against his perceived political enemies. Comey has denied the charges.
My heart is broken for the Department of Justice, but I have great confidence in the federal judicial system, and I'm innocent. So let's have a trial.
Now, US President Donald Trump has urged Turkish President Recep Tayyip Erdogan to halt Russian oil purchases. He also left the door open to Turkey obtaining F-35 fighter jets as the leaders met at the White House. Let's now bring in Bloomberg's Ona Ant, who's been watching this for us with the context and the details. Ona, what is it that President Trump is seeking to get then from Erdogan? This, I believe, is the first visit by the Turkish leader in, what, 6 years?
That's right. This was the first White House visit by President Erdogan since 2019. And as you said, the key demand from the Turkish president by Trump was that Turkey curb energy imports from Russia and specifically hold all crude oil imports from Moscow. Now, that is a big ask, considering the fact that Russia accounted for about 2/3 of all oil imports that Turkey had in 2024. Having said that, on the other hand, Turkey does have other alternatives, including crude oil from neighboring Iraq. And over the weekend, we are likely to see the resumption of Kurdish oil flows from that region. In return for this demand from Turkey, Trump kept the door open for a possible resumption of F-35 sales to Turkey and possibly bringing Turkey back into the F-35 development program. It's been a problem that's going on years between the two countries, since at least 2019, which is when Turkey was ejected from that program. And it's critical for policymakers in Ankara to have access to, again, basically high cutting-edge aviation technology because of the fact that Turkey now feels that its air force is aging and it's kind of behind regional rivals such as Greece and Israel. So it was a very transactional meeting between Trump and Erdogan. Trump, on the one hand, asked Turkey to cut down oil imports from Russia. We don't know yet what exactly Erdogan has agreed to, but President Trump said he believes that Erdogan will do the right thing, and in return, he's offering Turkey various things, various deals, including possible purchase of F-35s and F-16 fighter jets from the U.S.
Okay, so those are the military components of the talks. What about the civilian part when it comes to deal making and the stage that Boeing takes whenever President Trump is meeting these leaders? It seems to be an emphasis, or at least a priority of the president to try and notch some numbers on the board for Boeing.
That's true, and yesterday's meeting was no exception in that sense, Tom. We knew that Turkish Airlines and Boeing were on the cusp of a deal. This is something that we reported on about a week ago. And yesterday, after the meeting, it was clear that Trump and Erdogan had agreed on something. They indicated that, but they didn't quite say what it was. So this morning, Turkish Airlines itself said that it was going to buy as many as 225 airplanes from Boeing. Now, some of that orders are firm, some of that are conditional on deals with some engine makers, but it's clear that Turkish Airlines is going to buy a huge number of airplanes from Boeing, and the deal is probably going to be worth something more than somewhere close to $20 billion or more, and it just shows, again, underlines the same thing. Yesterday's meeting was very transactional, and Turkish Airlines is definitely one big diplomacy tool for Turkey. It's something that Turkey actually used way back 20 years ago to jumpstart talks with the European Union by ordering a huge amount of airplanes from Airbus. And this time around, it looks like Erdogan used this as a leverage to get at least some of the things that he wanted from Trump during his White House meeting on Thursday, Tom.
Okay. An important update, Bloomberg's Ona Ant. Thank you very much indeed on that meeting between the two presidents, of course, in the Oval Office, and the deals that have transpired on the back of that. To macro policy now and the banking space in Europe, because the ECB, in its push, of course, to simplify bank rules, German proposals to radically streamline capital structures have become the most contentious issues. There are concerns that the suggested changes could lead to new capital demands for some lenders and reduced harmonization across the Eurozone. The debate is live. Banks worry about being disadvantaged by the wave of deregulation sweeping through the US and to a lesser extent here in the UK as well. Joining us now is Andreas Dombrecht, former ECB Supervisory Board member and currently at Permira as well. Deep experience, of course, across the European banking space. Thank you very much for your time. I actually want to start on the rates environment because we're at a moment where there appears, Andreas, to be quite significant divergence between the Fed and the ECB. The Fed appears to be set to cut in an environment where they are not reaching their inflation target. Inflation around 3%, the target around 2%, whereas the ECB is on hold at a time when there are some suggestions that we're entering a deflationary environment. At least inflation is looking far more benign in Europe. How do you explain that divergence? Is one of those central banks setting itself up for a policy mistake?
We haven't seen these divergences in the past, so it's quite new, and many people in the market have been talking about this. It never really happened. Now we're seeing it. If you look back to summer of last year, we've had 8 declines in the European policy rate, and now 2 pauses. The US has done just the opposite. They have been pausing, and now they're declining. So they're no longer 100% in sync, to say the least. Now, in Europe, I can only tell you in the Eurozone that we have quite good economic stimulus and a situation. Whether you look at the Purchasing Manager Index, whether you look at the indicators at MI, you look at how lively the lending of the banks is happening, I think that we're going to grow by 1.4% of GDP this year, maybe 2% next year. The economic situation, as you rightly say, isn't that bad at all, which could mean that my forecast would be that we're going to see in the next 2 monetary policy meetings on October 30 and on December 18, we're going to see another pause. There is a very small likelihood of an increase, which I don't see, but it's more likely than lowering further.
Okay, so they pause at the next 2 meetings, the ECB, and that's important, of course, coming from your background on the supervisory board and at the Bundesbank. And you're projecting growth of 2% in 2026, potentially for the Eurozone. Does that put rate hikes on the table for the ECB?
Let's see when we get there. You have to decide data dependent, but it is tilted towards that rather than the other way around. So I don't think that this makes sense now. That to hold rates steady for the rest of this year makes most sense, and that's what the data, I think, says. But let's see where we get next year and how strong the economic situation is. But we're seeing better data coming in now than we saw for a long time. So it could be that at some point we're going to have to change course in terms of interest rates.
What proportion of that 2% growth that you forecast next year is coming from German fiscal stimulus?
No. That is hard to say. Germany is, of course, lagging, but it's stabilizing. I personally believe that we're going to have a growth rate in Germany of 1% plus, which is roundabout trend growth, which has come down. So Germany, which has had 3 years of sideward movements or a technical recession, however you want to call it, is catching up again, and the stimulus is playing a big role.
I want to talk about banking consolidation. We've seen some moves, whether it comes to UniCredit and its attempts and building out of stake in Commerzbank, of course. Over in Spain, there's a lot of activity, in Italy as well. Are we finally at a point, Andreas, where banking consolidation is happening in Europe?
Obviously, in Italy, the 2 deals are basically done. In Spain, they're coming to an end now, and probably the Sabadell shareholders are well advised. I'm not advising them, but well advised to accept that offer. So there is a higher likelihood of BBVA, winning this transaction than the other way around. And in Germany, we have a very determined UniCredit with regard to Commerzbank. The share price of Commerzbank, I feel difficult to interpret because there's so much derivative music in it, if you want to call it that way. It's very, very difficult to see. So the long-only investors, I think, they sold out or they're selling out because they see that this is maxing out. The hedge funds, they say, with all this derivative music, if I can use this term again, hard to interpret, but clearly there's more downside on the share price than on the upside as we stand now. It's going to trade in a range because the market will say that at some point, if the share price drops too much, of course, UniCredit will buy. Plus, since yesterday, Commerzbank is exercising its €1 billion a share buyback. So it's going to run until February. There are going to be some buyers in the market. By the way, at 1.4 times book and not at 0.4 times book as in the past. So the accretion is very different. So I am not quite sure how this will play out. The price of Commerzbank is not low at all. It's a full price, and I don't know, and I don't have any indications what this will mean. But there is the share price is not necessarily an indicator of what the market wants with regard to Commerzbank.
Is it also a reminder that national bank consolidation is easier in this environment than cross-border consolidation? And to what extent does that need to change?
That is all. These are all national borders. Maybe if, you know, the UniCredit approach is an approach which looks like a cross-border approach, but of course the idea is to merge Hypovereinsbank and Commerzbank in whichever way or form. I'm not informed. So the same is true in Italy, the same is true of course in Spain. So we are seeing domestic mergers, but that's, and we saw a domestic merger in Switzerland, if you want to call it a merger. That is not in the Eurozone or in Europe, but it's still very close.
I need to ask about your role at the most valuable fintech in Germany. You've taken the board at N26. They face some regulatory scrutiny as well. You've come on board with your deep experience, presumably to try and set that company on the right footing. Are you expecting to make any additional changes to the management? Are you comfortable in terms of how things are progressing? What's your first priority at N26?
I have not taken the role yet. I'm only the designated chairman, so I'm going to stay away from answering this. But I can tell you, the market is an interesting market. You know, if you walk around in the market and speak to market participants, all they're going to talk about right now is Revolut and their plans. So this is an interesting market, but let me first arrive and land before I make any statements.
Okay, fair enough. Well, we'll come back to you then once you've landed N26. We really appreciate your time, of course, and your thoughts on banking consolidation and the rates environment as well. Andreas Dombrecht, of course, former ECB Supervisory Board member, with those insights. Now, hedge fund manager David Einhorn is sounding the alarm on AI spending, warning that it may destroy vast amounts of capital, even if the technology itself proves transformative. The Greenlight Capital founder says the $1 trillion build-out by companies is so extreme that investors may not see the payoffs they anticipate. He spoke during a panel discussion hosted by Simplify Asset Management at the New York Stock Exchange last night.
The numbers that are being thrown around are so extreme that it's really, really hard to understand them. I'm sure a lot of the stuff is going to get built. Whether it gets built at the amounts, I don't know. And whether there's a return on this, like what the revenue stream is of actually people using the output and paying for it, I also don't know. This seems highly uncertain. I'm sure it's not zero, but there's a reasonable chance that there's a tremendous amount of capital destruction that is going to, you know, come through this cycle.
Coming up, a crucial moment for the UK Prime Minister Keir Starmer as we look ahead to the Labour Party conference. Details are next. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
welcome back. Now, there will be a lot of focus, of course, on the UK Prime Minister Keir Starmer on Sunday when the Labour Party conference kicks off in Liverpool. Aside from fiscal constraints, of course, and rumbles of division amongst the governing Labour Party, the party is facing some tough political decisions, of course. Could it be a challenge for the Prime Minister? I think the answer to that one is certainly yes, and the fiscal constraints up front and centre. We felt some of that this week in terms of the challenges around some of the bond auctions by the debt organisation, or the debt office, I should say, here in the UK, and question marks about how much demand there is right now for UK debt, and a reminder, of course, that investors are concerned as we lead up to the budget in November. Before we get there, of course, the Prime Minister's speech on Sunday. Let's bring in then, at this point, Bloomberg opinion economist Rosa Prince, alongside Bloomberg's Joe Mays, author as well of the new book, Can You Run the Economy? That you can see there on your screens. And the timing of this is fantastic and well worth, of course, your time. Let's bring in Rosa first, though, before we get to Joe and the book. There is, of course, let's start with the politics and the potential challenges for Starmer politically with the fiscal backdrop. What are you going to be watching for in terms of how he frames that speech on Sunday?
Yeah, well, as you say, it's terrible timing for Keir Starmer to have to address his conference this weekend. He's had an awful few weeks. He lost his Deputy Prime Minister to a scandal. He lost the US Ambassador to a scandal. And now that's all led to Labour MPs being very unhappy and talking up the prospect of a challenge to his leadership, which seems incredible given he was only elected just over a year ago. So the Mayor of Manchester, Andy Burnham, is their guy. He's not in Parliament, so it's kind of difficult for him to take over, but it's certainly on everyone's minds going into conference.
And Joe, it's interesting to hear from the Prime Minister in reference when he was being asked about the challenge by Andy Burnham, talking about a Liz Truss moment, because Andy Burnham has made proposals that would involve a lot of spending. The fiscal challenges, before even Andy Burnham is factored in, for Rachel Reeves and the Chancellor, something, of course, you've been thinking deeply about with the book, they are pronounced. Where are we on that challenge, and how you think this government could try and address that challenge in the lead up to the budget?
Well, we know that Rachel Reeves has this very big black hole in the public finances, largely because we know the OBR is going to downgrade estimates for productivity of the UK economy, and every time 0.1 percentage point goes down, billions more get added to her black hole. So that's why we're talking about the need for tax rises across the piece to try and fill that gap. Now, Rachel Reeves wants to keep a positive message. So that's why I think we can expect lots of announcements around growth in the build-up to her budget to try and maintain some of the optimism. But then she'll have to hit us all with those higher taxes to fix the public finances.
OK, so that's on the tax piece, and that seems almost inevitable at this point to the kind of the emphasis that you're putting on that question as we lead up to November. And we'll see if they nod to that in these speeches over the next couple of days. Rosa, when it comes to the domestic political environment, you've talked about the challenges and the divisions amongst the governing Labour Party. There are some policy proposals and some that are quite eye-catching. They're being reheated, which is IDs, for example, digital IDs. What do we know about that, and whether or not that is a real prospect and the timeframes around when that gets implemented?
Yeah, well, the other big challenge for Keir Starmer, alongside his leadership, alongside the budget that's coming down the track, is the threat from Reform UK. That's the kind of upstart, quite right-wing party led by Nigel Farage that take a lot of inspiration from Donald Trump and the MAGA world. Now, obviously, their big kind of campaign issue is immigration. Keir Starmer thinks he has something to help him tackle that. Those questions of immigration, questions about the small boat arrivals that are very unpopular with the public. And he thinks the answer is a digital ID card. And that would mean that you would have to have your ID checked by an employer before you could work here. He thinks that means that people would be put off coming to the UK, no longer see it as a kind of soft touch where it's easy to work. Unlike other European countries, most European countries do have ID cards of some form, and so the idea is that migrants are leaving those countries, coming to the UK, and Keir Starmer wants to stop that.
OK, so we'll watch to see if we get more detail on that in terms of how it's implemented as well. Joe, look, your book is to some extent a framework in terms of how to manage the budget, how to win an election. Maybe Nigel Farage and maybe even Andy Burnham should be reaching for a copy of said book. Joe, talk us through kind of what went into it and how you're thinking about what is in the book now and how it translates into the current situation for this government.
Yes, here it is. And asking the question, can you run the economy? I wanted to have a fun, engaging, interactive way to bring this topic to life and really make you feel the pressure of how difficult it is to have to manage the finances, have to say no to the Prime Minister, have to say no to your MPs, because you have to keep the finances in good order. And if you don't, you risk the consequences of a Liz Truss-style moment, the bond market's moving against you. Now, these are very real threats and prospects that Chancellor faces. And I wanted to try and bring that to life the best I could.
Maybe some of the backbenchers could do with reading it as well.
I think Rich might recommend it to them. I would suggest that.
Yeah, I mean, but it is interesting when you interact when you go out and about and you talk to friends and family, and when you frame it around the necessity of thinking about the bond markets and how some voters are not factoring that in, and clearly that is part of the book in terms of how, in terms of the fiscal constraints that most governments are facing. And of course, this is a situation for France as well. But you're very much focused, of course, here in the UK. Joe, thank you. That is the book. Can you run the economy? It's your turn to be Chancellor. Of course, originally based on the game that you built out for Bloomberg, right?
Bloomberg had a game along these lines, and then luckily a publisher saw it and said, can you make it into a book? And so I have.
Okay, fantastic. Joe, thank you very much indeed. Well worth your time, whether you're Nigel Farage, Andy Burnham, or anyone else who has concerns and wants to be thinking more deeply about how to run the economy, the finances of the UK government. Rosa Prince, of course, from Bloomberg Opinion, thank you for your insights in the lead up to that speech on Sunday by the UK Prime Minister. Back to our top story right now. President Donald Trump has announced a fresh round of tariffs targeting a broad range of sectors. That includes a 100% duty on branded or patented pharmaceuticals starting October the 1st for any company not building a manufacturing plant in America. He also plans to impose levies on heavy trucks, kitchen cabinets and upholstered furniture. Let's unpack all of this. I like that, with Bloomberg's Katia Dimitrieva. Katia, what more do we know about these tariffs?
Well, we're going off of Trump's social media because, of course, we don't have anything officially from the White House yet. But what we do know is that, like you said, 100% tariffs on pharmaceuticals, but specifically patented pharmaceuticals and those without operations in the U.S. yet, of course, so that carve-out is helpful. And we also had a 50% tariff on household goods, things that go into apartments and houses across America, like bathroom vanities and kitchen cabinets. There was 25% tariffs on heavy-duty trucks and imports. So we know that these are going to be coming into force pretty quickly, so not a lot of negotiating room for countries or companies. We're expecting them to come in next Wednesday in the U.S., and it'll probably be implemented much in the same way that we've had in prior cases. So you'll see this being charged at the border. Now, the other thing, I mean, there's still a lot of questions, as we've had with previous tariff announcements. So one of the things that we're wondering is, do these tariffs stack on top of already existing tariffs with a country? So we had those reciprocal day levies. Are they being stacked on top of those, or is that the level? So the EU, for example, had negotiated a trade deal with the US with 15% pharmaceutical levies. So is that the level we're looking at, or are we now looking at 100%? So these are things that hopefully will be answered in coming days.
Okay, we await more detail. Sam Fazeli, Bloomberg Intelligence, saying that maybe the pharmaceutical tariffs and the 100% maybe not as concerning as maybe the headline suggests, given how much manufacturing and production is being done in the US already. Bloomberg's Katia Dimitrieva with the context, of course, on these additional tariffs being announced by US President Donald Trump and their implementation, how that is likely to impact supply chains and various different sectors, of course. Now, we will be speaking with Richmond Fed President, by the way, Tom Barkin, later today. That conversation starting at 12:30 p.m. London time, on a day, of course, when we get fresh inflation data out of the US. And as traders start to pair their bets in terms of Fed rate cuts through the end of this year, the FOMC is divided. We'll hear from Tom Barkin. Let's get back to the markets right now before we wrap the show. European stocks up 0.3%. Looking through the tariff risks, though, US futures, S&P E-mini is currently flat after 3 straight days of losses. We'll see if turn and sentiment turns around on the inflation data. That comes out at 1:30 p.m. UK time. Up next, Bloomberg Brief. This is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
A cidade estava sitiada.
Nisso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida. Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A fresh round of tariffs. President Trump slaps new levies on heavy trucks, upholstered furniture, kitchen cabinets, and a 100% duty on patented drugs. A $4 billion price tag. POTUS signs an executive order to advance plans for investors to buy TikTok's U.S. operations. And stocks potentially setting up for their first weekly decline of the month as markets await an update on the Fed's preferred inflation gauge and, of course, personal income and spending. So let's take a look at that setup. Right now, we're flat on S&P futures. NASDAQ 100 futures pointed lower. But bear in mind, 3 days of declines and 3 trading days left in September. It could all add up to something very interesting. We are, however, even with yesterday's 0.5% drop on the S&P, still up 2.25% for the month on that index. The Max 7 index is up 7.6% in September. The NASDAQ 100 up 4.2%. So you can see these declines today really don't amount to that much in the overall scheme of the month. An interesting one from Goldman today. John Marshall and his team talking about how October sees increased volatility. You're talking about 20% swings potentially on the S&P 500, more than other months. They've identified 450 catalysts between now and the end of the year where it could be a chance to buy some vol, including the Victoria's Secret's fashion show and the Tesla Investor Day. So lots to look forward to in the fourth quarter. Let's take a quick look at yields as we bring it back to today. We have seen just a little bit of repricing, but that 30-year yield is firmly stuck to 4.75. As you can see, the 2-year has come up. We're now almost at 3.66, and the 10-year all the way up to 4.17.5. So we'll be asking ourselves what that all means for the future of the Fed's rate path in just a few moments. Let's get over to London now, though, and some individual stocks to watch. Here's Valerie Teitel. Valerie.
Good morning, Bonnie. Happy Friday. Let's start with a check on Intel. These shares are rising in the pre-market just over 3%, and this comes after a Wall Street Journal report that the Trump administration is looking to limit chip imports. Now, they would do this via a one-in, one-out system. For every domestically produced chip that you sell, you're allowed to import one from abroad. So we're seeing those makers of U.S. chips rally quite decently this morning. Intel and Global Foundries, 2 of those names. Let's stay with tariffs and move over to the pharma sector. Eli Lilly doing very well this morning off the back of Trump threatening a 100% tariff on patented drugs. Eli Lilly in the green, up 2.3%. On the flip side, Novo Nordisk in the red, down 1%. Now, while both of these companies do produce their GLP-1s abroad, Eli Lilly obviously will get that exemption because they have their own manufacturing plants for other drugs in the U.S. Novo Nordisk does not have a lot of manufacturing in the U.S. and is seen maybe not to get this exemption. Lastly, let's move over to heavy trucks. As you mentioned, Trump also announcing a 25% levy on heavy trucks. We're seeing domestic makers of heavy trucks like Packer move higher this morning, up nearly 6% in pre-market trade. Funny?
Valerie, thank you so much. Valerie Titel there in London. And later this hour, don't miss our conversation with Laura Cooper of Nuveen on the Fed's rate cut path. Back to that top story, though. President Trump announcing a 100% tariff on any patented drugs coming into the U.S. effective October 1st. He's left room for exemptions if the company producing the drug is building a plant in the U.S. For more, I'm joined by Bloomberg's Brendan Murray, who tracks global trade. Brendan, what more details will we be looking for out of these tariffs? The president also announcing duties, of course, on heavy trucks and kitchen cabinets. What is the thinking behind all of this?
Yeah, exactly. I think we have a lot more questions than answers at this stage based off of the president's social media post late yesterday. For the pharmaceuticals, he described the tariffs as applying to companies' exports that they don't have anything under construction at the moment. What exactly does that mean? There are about $1 trillion worth of investments pledged by pharmaceutical companies in the U.S., but depending on what stage those are in the development, whether they're actually under construction or they're just investment pledges, at this stage, it's hard to define that. As far as the other issues, heavy trucks are also under these so-called 232 investigations. So, this would be part of these sectoral tariffs that the president is rolling out. We now have something like 12 to 15 of these investigations going on. And what these do is provide a plan B in case the administration's across-the-board, country-by-country tariffs get struck down by the Supreme Court, which is hearing that case in early November. So the administration here is reminding, and President Trump is reminding the world loudly that he has these industrial tariffs at his disposal to create the tariff wall he wants to erect around key U.S. industries.
Brendan, just on the heavy trucks, presumably Europe is a big player here, and didn't we just finalize a 15% tariff on vehicles coming out of Europe and into the United States?
Yeah, exactly. So Europe is saying, look, we just agreed to this framework deal in the past couple of weeks, and everything is capped at 15%. I think the trucks issue is going to really focus on Mexico, but there you have the USMCA arrangement, which lowers tariffs between Canada, the U.S., and Mexico. So there's going to be a lot of carve-outs here, a lot of exemptions, and those are the main questions right now is how much of these imports are really going to be hit with these tariffs, given all of the loopholes and the exemptions that many of these products would have.
Brendan, I just want to bring our audience some comments from a European Commission spokesperson who just said in the last few minutes that U.S. tariffs on EU pharma remain capped at 15%. Now, where the spokesperson is getting that information, I don't know, and whether that is going to remain the case when President Trump has a response, I'm not sure about that either. But once again, the European Commission spokesperson Olaf Gill commenting in a statement that U.S. tariffs on EU pharma remain capped at 15%. Just briefly on Malaysia, we're also looking at Malaysia tariffs potentially, or a potential deal. Brendan, what's the latest there?
Yeah, so the U.S. Trade Representative Jameson Greer is in Asia for the ASEAN meetings this week, and he's going around country by country and trying to hammer out some sort of agreements. There are already deals with Japan and South Korea, and these other countries, Indonesia, Malaysia, Thailand, are next in line, and they want to get some sort of preferential tariff rate for themselves.
All right, Brendan, thank you so much. Bloomberg's Brendan Murray there. Meanwhile, President Trump has signed an executive order which advances plans for American investors to buy TikTok's U.S. operations. Vice President J.D. Vance said the deal will value the new U.S. company at around $14 billion. For more, I'm joined by Bloomberg Tech Europe anchor Tom McKenzie. Tom, Vance has a stated value here. It comes in way below previous estimates. Is he trying to maybe lowball ByteDance or negotiate somehow?
Well, it's certainly a bit of a kick in the teeth for existing investors in ByteDance. and of course the TikTok business, which is the US business. It has been valued at $40 billion US. Now the Vice President is suggesting the valuation is 14 billion, which is well below what you would expect with a social media company the size of this, with 170 million active users in the United States. Certainly when you compare it to some of its competitors, whether that's Meta, whether it's YouTube, this is kind of way off in terms of valuations that existing investors would expect. Probably licking their lips will be Oracle and Silver Lake, because they're lined up, of course, to buy the business, to buy TikTok. Let's see whether that 14 billion holds. And JD Vance, to be fair to the Vice President, did suggest that, look, part of this will come down to what the buyers are prepared to pay. They have 120 days now on the current time frame to get this deal properly across the line. We still don't know who's going to be operating TikTok in its new form, even if we know who the potential buyers are. So there's still some unanswered questions. But let's see on the valuation. From 40 billion to 14, it's quite a drop.
It's a bit of a markdown. Even if markdowns are happening all over the place, it's still quite a lot. Now, what do we know about the process from here to actually complete the deal? You mentioned 120 days. How much will be public information?
So President Trump signing the executive order with that flourish, of course. He says he's had the backing from Xi Jinping for this deal to go ahead, the Chinese leader, of course. We haven't actually heard from the Chinese side. We haven't actually had confirmation from China that they are, in fact, prepared for this deal to go ahead. Obviously, a crucial part of the deal in this agreement is that ByteDance, the parent company headquartered in Beijing, will have a less than 20% stake in TikTok US. That was part of the original legislation, of course, that was signed off and ended up being on President Biden's desk. That bipartisan piece of legislation that, of course, has led to these negotiations and this restructuring of TikTok. So ByteDance, the parent company, will have less than 20%. We know that. It seems that they'll also be licensing out their algorithm, which really is the secret sauce for TikTok, to TikTok US. So they'll be licensing it out from their headquarters in Beijing. How that exactly works remains a question mark. And then still, who operates it? As I mentioned, we still need some answers on that front. They have 120 days to organize all of this and lock it down. And we'll see if China actually comes out and says, yes, we have given the green light to this deal.
Tom, so much more to learn about all of this. Thank you so much. That is Bloomberg Tech Europe anchor Tom McKenzie. On to the Fed, and Dallas Fed President Lori Logan has proposed shifting away from the central bank's benchmark Fed funds rate, writing in an essay, quote, "The time has come for the FOMC to prepare to target a different short-term interest rate. Overnight repo markets are the center of gravity." Bloomberg's Jill Desus joins now for more. So this has been talked about from time to time, Jill. It seems like Lori Logan is putting it more on the table now, but the Fed sort of has its hands full at the moment, no?
Yeah, I mean, Bonnie, this is a really interesting one. As you mentioned, this isn't necessarily a new argument. It's really been over the past 15 years that if you're looking at the most relevant markets here, the federal funds market has been pretty much supplanted by that market for repurchase agreements. So if you're looking to move something to a more relevant benchmark, I mean, this is something that market participants have been asking about for years. The fact that you've got Logan really kind of, picking up the ball here and rolling it, I'm sure that's going to win a lot of praise with some of those market participants. But yeah, I think the question is when exactly is the best time to kind of flip over that, that benchmark rate. I think the best argument you could possibly make is, do it when markets are stable. But yeah, I mean, really interesting that we're seeing this debate pick back up again. A little bit unexpected from Logan here, but we'll have to see whether or not maybe this is the time that the Fed actually picks this up again and does something like this.
Yeah, I mean, it's giving me reminders of when LIBOR became a problem and eventually we got SOFR, right? But that took years and years and years. The overnight money markets are fragile, she said, and could break suddenly. Is there something that we should be worried about beyond the fact that the Fed is looking at the Fed funds rate?
I mean, I think that, at this point, as you mentioned, the Fed really has its hands full with, a lot of other issues at the moment. Like, if I'm the Fed right now, I'm obviously looking at sort of, how exactly you're handling the dual mandate of jobs versus inflation through the end of the year. I mean, these are comments that, Powell himself was making just a couple of days ago, really kind of monitoring some of those key gauges that we're ultimately looking for. I mean, if I'm the Fed, the biggest thing I worry about right now is what that PCE gauge is going to show you, coming up, because that is really their preferred measure here as we're trying to get more data heading into their next FOMC meeting.
Well, we'll get it in just 3¼ hours. Jill, thank you so much for joining. That is Jill Desus. Now to other top stories trending on the terminal this morning. Hedge fund manager David Einhorn sounds the alarm on the AI infrastructure splurge. Speaking at a panel in New York, he said many projects will be built, but investors may not see the payoffs they anticipate. OpenAI's Sam Altman has said he wants to spend, quote, trillions on infrastructure. Meta's Mark Zuckerberg has talked about spending hundreds of billions of dollars on data centers. Boeing lands one of its biggest deals this year. Turkish Airlines agreed to buy as many as 225 jets following a White House meeting between President Trump and Turkey's President Erdogan. Deliveries are scheduled between 2029 and 2034. South Korea's DB Insurance agreed to buy U.S. specialty insurer Fortegra Group for $1.65 billion. The acquisition marks the first ever purchase of a U.S. insurer by a Korean non-life company. Coming up, European diplomats warning Russia that they're ready to shoot down Kremlin's jets. More on that next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. NATO countries have faced a series of airspace violations by purportedly Russian jets and drones in recent days, incidents that posed an unprecedented test of the alliance's credibility. NATO Secretary-General Mark Rutte joined Bloomberg's editor-in-chief John Micklethwaite to discuss how it's preparing to defend its airspace.
Let's face it, we have trained and prepared for these situations, and our fighter jet pilots know exactly what to do for 50 years now, from the Soviet days to now with Russia. We have had these incursions before. They will assess the danger, and if the danger is such that they feel they really have to take down the plane, then they can. But they can also decide that there is no imminent threat, and then they will escort them outside of the airspace.
I think the message has got through to the extent that you don't expect the Russians to do it again.
But again, there is a bit of a risk that we're all getting now thinking, hey, we need new rules or whatever. Yeah. The rules are there. We have our military people, our military commanders have all the rules at their hand, have all the authorities they need to deal with these situations. And this is not new. We are doing this for tens of years, decades. And we have seen this from the Russians. It is reckless, it's unacceptable. We're still assessing whether the drones in Poland and the fighter jets in Estonia, whether it was intentional. We don't know yet. Yeah. Still being assessed, of course, with Copenhagen, with Denmark. I spoke with the Prime Minister this morning. There we are also still assessing who was behind this. Also very worrying what happened there, obviously, and we're all working on that. But when it comes to these fighter jets, that's not new. It's bad. It should stop. But our pilots know what to do, and if necessary, they can do the ultimate.
Is there a difference, though, isn't the Russian with the fighter jets?
there seems to be quite a clear policy, as you've said, that's been for years. Russian jets should not come into NATO airspace. The drones is much more complicated because there tend to be lots of them. They're hard to defend against it. And there you seem to have a kind of, there's the intentionality problem that you pointed out. You know, is this on purpose? Isn't it? But another big one is just having the kit to deal with it.
Exactly.
Because, as I understand it, what would happen at the moment is you might have to use a very expensive missile to shoot down a very cheap drone. Is there a kind of kit problem with this as well?
In the short term, yes. And by the way, I was very proud of the Dutch fighter pilot last week who took down, or 2 weeks ago now, who took down these drones in Poland, F-35 pilot. And it's exactly what we need to do, because first of all, we have to prioritize the safety of our people. Yes. But you're right, it is not sustainable that you would take down $1,000 or $2,000 costing drones with missiles which cost you maybe $500,000 or $1 million. So this is why our Supreme Allied Commander in Europe, together with the colleague working on transformation, all of us in NATO are rapidly developing the technologies, learning from the Ukrainians, and we will start to apply that new technology over the coming weeks and months to make sure that next to the more traditional way to deal with this, we also have this drone interceptor technology at our hands.
That was NATO Secretary General Mark Rutte speaking to Bloomberg. Joining us now for more is Bloomberg's Richard Bravo. So, Richard, what's your reaction to what the Secretary General had to say? I mean, he said the rules are there, but at what point does it become a NATO decision to down a jet? At what point does a country escalate it? What's that process?
Well, I found it to be very, very interesting. I mean, we've had 3 incursions into NATO airspace in the past month, and nobody expects this to slow down or to stop. And what the Secretary General was saying was they are ready to use military force to stop Russian jets from doing this. But perhaps the most interesting thing that I think Mark Rutte admitted here was that NATO hasn't really stepped up to the task that confronts it right now. And if you're scrambling F-35s to shoot down drones from Russia, the drones which cost a couple $1,000 and these missiles cost $500,000, $1 million, that just doesn't make any sense. So if this was an example of Russia testing NATO's capabilities to stop these types of incursions, NATO didn't really carry itself in too much glory.
No, and then in a Bloomberg scoop, we had that European diplomats had privately told Russia in Moscow that they're ready to shoot down jets, and yet in public you have people like Emmanuel Macron really walking that back. So what is the story? Are European leaders ready to take that next step, even under the banner of NATO?
Well, it seems like behind closed doors, they definitely want to send the message to Moscow that they are prepared to shoot down a Russian jet. But you do see leaders, as you mentioned, Macron, and we also had the German defense minister say, look, we don't want to play this game with Moscow. We don't want to escalate the situation or fall into Putin's trap. But there's also the element of strategic ambiguity. You don't really want Putin to know exactly what your limit is before you start firing those missiles. So I think there are a lot of different strategies here, and not everybody seems to be on exactly the same page, but they're trying to figure it out and step up their game.
Richard, thank you so much for joining. That is Bloomberg's Richard Bravo there. This is Bloomberg Brief.
climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are gonna kill everybody. So we gotta figure this out. And we're not gonna do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Time now for your front page news. First up on the New York Times, the indictment of former FBI Director James Comey. He was indicted on one count of making a false statement and one count of obstruction of a congressional proceeding. He posted a video responding to the charges.
My heart is broken for the Department of Justice, but I have great confidence in the federal judicial system, and I'm innocent. So let's have a trial.
Next up on the Wall Street Journal, the Trump administration weighing a new plan to dramatically reduce U.S. reliance on semiconductors made overseas. The administration wants domestic chip manufacturing to match imports. The plan looks to impose tariffs on companies that don't step up production. And the FT reports that UniCredit may offer to permanently increase the number of German nationals on its board of directors. This is part of takeover negotiations with Commerzbank to reflect the country's contribution to the group. Coming up, we're going to push ahead to PCE and the rest of the data with Laura Cooper of Nuveen, so do stay tuned. This is Bloomberg.
cidade estava sitiada.
Nisso eu começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A fresh round of tariffs. President Trump slaps new levies on heavy trucks, upholstered furniture, kitchen cabinets, and a 100% duty on patented drugs. A $14 billion price tag. POTUS signs an executive order to advance plans for investors to buy TikTok's U.S. operations. And stocks could be setting up for their first weekly decline of the month as markets await an update on the Fed's preferred inflation gauge and personal income and spending in just 3 hours. Let's take a look at how those futures look. We're unchanged on the S&P. Don't forget, month to date, we're still up 2.25% on that index. The NASDAQ 100 is pointing lower, but we are up on that index too for the month. In fact, the Mag 7 up more than 7.5% in the month of September. We have Goldman Sachs warning of potential volatility in October, though, and identifying 450 catalysts between now and the end of the year where vol buying could be a good strategy. Let's move to yields. We are seeing a little bit of repricing, more at the front end than the long end, with the 2-year yield at 3.65 now, and that 10-year yield closing in on 4.17. Again, that 30-year yield staying below 4.75, but we have lots of data later on. In the meantime, let's get to some individual stocks to watch with Valerie Teitel in London. Valerie.
Good morning, Bonnie. Happy Friday. Let's start with a check on Intel. It's up in pre-market nearly 4%, and this comes after a Wall Street Journal report that the Trump administration is looking to limit chip imports. Now, it's a complicated system, still a lot of details to be worked out, but essentially for every domestically produced chip that you sell in the U.S., you're allowed to import one more. So that is benefiting the U.S. foundries. So Intel shares up 3.7%. Separately, there also was another Wall Street Journal report about Intel having approached TSMC for a partnership, very similar to what we heard yesterday. Bloomberg reported they had approached Apple. Let's move over to the tariff story. Eli Lilly doing very well in the pre-market trade at the expense of Novo Nordisk. So Eli Lilly obviously is a domestic U.S. manufacturer of drugs. Novo Nordisk, on the flip side, their GLP-1s are produced mostly in Denmark. So I know there's a lot of still unknowns about these pharma tariffs that Trump announced yesterday, but it does seem like domestic manufacturers are benefiting this morning. Lastly, let's end on the furniture space. The online retail platform Wayfair down sharply in pre-market, down over 5% after Trump announced a 30% tariff on upholstered furniture. Bonnie?
Valerie, thank you so much. Valerie Teitel there in London. So as I said, we're just 3 hours away from PCE data. Also, personal income and spending will be very important for more. Let's bring in Bloomberg's Michael McKee in Washington. Michael, we know a little bit about what we're going to see inflation-wise. What will be new this morning?
Well, what will be new is the income and spending numbers, and so there'll be a lot of focus on that, especially on the spending side. We do know that going into it, we've pretty much calculated, the Fed's calculated what the PCE inflation numbers are going to be, and they'll show just very little change, slight tick up in the year-over-year headline number, but no change in core, no change in headline on a month-to-month basis, which is a problem for the Fed because they're still very close to 3%, not 2%, their target. The question then is, what do Americans do about it? So far, very little. They've continued to spend, and personal spending is expected to rise another 0.5% in the month of August as back-to-school season got people to the stores. If that's the case, a little bit less concern about what's happening to the economy overall, Vonnie.
Mike, I have to ask you about Lori Logan's comments because, as if the Fed didn't have enough to deal with, she's proposing that the FOMC should replace its benchmark federal funds rate. Now, I know this is not a new concept, but she seems to have brought some urgency to the idea. Can you explain more for us?
Yeah, it's not clear why this comes up now, especially since they just finished their framework review, but it is something that's been kicking around for a while because the Fed funds market is very low volume. It is just the Federal Home Loan Bank boards and out-of-the-country banks who use it pretty much right now. She's suggesting a switch to Treasury General collateral rates, repo rates, that reflect more market activity and perhaps the real costs of what it takes to borrow money these days in the markets. As you could see on that chart there, there's really not much difference in those rates except for the fact that one gives you a little bit better view. Wouldn't really affect lending at all, and certainly wouldn't affect Fed policy. It would be just a change in the measurement idea that they use.
Michael, thank you so much for all of the context. Michael McKee in Washington. And I do want to point out that Michael is interviewing Richmond Fed President Tom Barkin. You don't want to miss that. That's at 7:30 a.m. Eastern. Well, with second quarter growth revised up by 0.5 percentage point, markets are beginning to reprice the Fed's cutting cycle. Nuvine's Laura Cooper weighs in, writing, quote, "We pencil in another 75 basis points of cuts through 2026, while markets are leaning towards consecutive cuts by year-end. Sticky inflation makes that path far from assured." Laura joins us now. She's Global Investment Strategist and Head of Macro Credit at Nuveen. Laura, anything in the last couple of days, including the GDP revisions, change your base case for the U.S. economy and how strong it is?
It doesn't change our base case, but I think it does add conviction to the view that perhaps the Fed won't cut at consecutive meetings so long as this economic resilience persists. You know, we do still have inflationary pressures that we think are going to build even more over the coming months. We have a core PCE peak this year of 3.2%. And so while the Fed has acknowledged that that's likely going to be a one-time price shift, it will take time to move through supply chains and to feed through it to the data. So the Fed, yes, they've acknowledged the balance of risks has shifted, but if we start to see that labor market, still remain, fairly stable, I think that would prompt markets to a little bit of pause on the policy path ahead.
If we're only now starting to see the very beginnings of impacts of tariffs, and there's new tariffs coming apparently, then what's to say that the Fed won't have to change its mind completely and just focus on inflation as we go forward?
Well, I think we really need to see the labor market show signs of stronger stabilization. But I think at this point, we do still think there is going to be pressure in the labor market. We have the unemployment rate ticking higher this year in our forecast of 4.5%. And I think we would need to see on the inflation side signs of broadening price pressures really being driven by the services side. Right now, we do expect core goods to continue to grind higher because of that tariff effect. But if we start to see that broadening, I think that's really going to curtail the Fed's calculus in thinking that we could actually have those 2 rate cuts by the end of this year.
Laura, let's talk about the curve, because obviously we continue to see repricing more at the front end at the moment, and we've sort of done our repricing at the back end, it would seem. What are your thoughts on what the curve is signaling to us right now?
Well, it's been interesting that we have seen kind of the long end being bid over the past number of sessions on the back of what we're hearing from some of the Fed speakers. But I think to our mind, this is still going to be a structurally higher interest rate backdrop, particularly for the long end, because of some of the forces, most notably in terms of inflation, that fiscal impulse. So this does warrant a higher term premium, certainly than we've seen in the recent past. And the front end, we have seen some more repricing given the mix of Fed speakers' comments that have come out this week. But to our mind, we're really positioning in short duration exposures here. It is still an attractive income opportunity, and you're not getting that vulnerability and potential volatility at the long end of the curve as markets kind of have to contend with the mix of inflationary pressures and perhaps signs of economic resilience coming through.
Laura, we've been pretty myopically focused on the Fed and FOMC speakers and so on this week and the debates that are coming up around the economy, Stephen Myron and so on. But is the market ignoring the fact that the government could shut down next week? What would happen to the bond market in that case?
I think that is certainly a risk that markets are increasingly paying attention to. But if we look at previous government shutdowns, the market reaction tends to be fairly short-lived. We would need to see a prolonged period really for it to have a much more material impact. But this is coming at a time when markets have so much to contend with. We have the inflationary risks. We have the potential growth pressures with that key payrolls print that's really going to potentially be a pivot point for the Fed. And then markets are trying to contend with this mix of Fed speakers and around what that all means for the policy path. So there's so much uncertainty still to be had. And I think it's one of the reasons why we expect greater volatility going forward after September has shown that it really didn't have that traditional seasonal drawdown. Maybe that is still yet to come.
Yeah, I mean, the MOVE index has been really subdued in the last several months, even though we have seen movement, repricing and so on. Laura, I'm curious if at Nuveen you're considering what Laurie Logan is proposing, that the Fed's funds rate be scrapped as the thing that the Fed concentrates on. Do you have thoughts on that? Is now the time to be thinking about it?
I think the timing is certainly interesting. I mean, if we take a step back, there has been this connection between the Fed funds rate and money markets rate has been more tenuous. And so given they really want to improve that monetary transmission mechanism, perhaps this is an important need going forward for them to make this change. But I think the challenge is it's all about the communication, how they emphasize why they're doing this change, and that it won't actually be disruptive to markets. And given just what markets have to contend with around the uncertainty coming from Fed speakers, really just this range of views around what the policy path could be, I think the timing around this just adds this additional complexity for markets to have to grapple with.
She said something just a little chilling. She said overnight money markets are fragile and could break suddenly. Is there any catalyst that you see that we're not maybe seeing?
I don't think at this juncture. I mean, I think so far we're seeing, financial markets are actually quite stable. I think there's a degree of kind of this excess reserves that is always kind of a key challenge that markets have to navigate. But I think at this point we're not seeing necessarily that catalyst. But of course, there's always these tail risks that market participants do have to contend with. And I think really the key focus in the near term will be around what that core PCE inflation print tells us today. I think market expectations really do expect that flat year-on-year rate, about 2.9%. But if we start to see signs of those services prices building, perhaps then we could see greater volatility. And I think that's really where market attention is going to focus on.
Laura, thank you so much. Pleasure having you this morning. Laura Cooper of Nuveen. Now, two other top stories trending on the terminal this morning. Hedge fund manager David Einhorn sounds the alarm on the AI infrastructure splurge. Speaking at a panel in New York, he said many projects will be built, but investors may not see the payoffs they anticipate. OpenAI's Sam Altman has said he wants to spend, quote, trillions on infrastructure. Meta's Mark Zuckerberg has talked about spending hundreds of billions of dollars on data centers. Boeing lands one of its biggest deals this year. Turkish Airlines agreed to buy as many as 225 jets following a White House meeting between President Trump and Turkey's President Erdogan. Deliveries are scheduled between 2029 and 2034. Bloomberg sources say European diplomats warned the Kremlin this week that NATO is ready to respond to further violations of its airspace. This includes shooting down Russian planes. Russian officials have denied their planes crossed into Estonian airspace and have insisted that they are not trying to test NATO. Coming up, President Trump slapping fresh tariffs on pharma, trucks and furniture. More on that next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Willow Bay. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. We're keeping an eye on pharma stocks after President Trump took to Truth Social to announce a 100% tariff on any patented drugs coming into the country, unless the company producing it is building a plant in the United States. Now, Mizuho healthcare equity strategist Jared Holtz calls the comment direct, but says the impact may be negligible, writing, quote, "It is unclear from the statement what active manufacturing actually means in the context of global pharma operations. All major players have some production presence domestically, and almost all have announced increased investments directly tied towards local manufacturing." For more, let's bring in Sam Fazeli, Senior Pharmaceuticals Analyst for Bloomberg Intelligence. So, Sam, what could the president possibly want out of this? Does he want, a 15% cut?
Oh, I mean, look, we've got 5 lines of text to work with here, where Jared Holtz, somebody I respect very much, clearly said that, look, if you just read the words that are written, most companies have significant manufacturing in the US, and they've also committed to breaking ground. Some have broken ground, some are about to break ground on new manufacturing. Whether it's to do with tariffs or not, or whether it was part of their business plan anyway, is kind of irrelevant here. And the other problem is, we've just heard the European Commission say that actually the tariffs stay at 15% based on everything else that has been done. So what's the point here? We were supposed to get some decisions by the White House on most favored nation pricing, which would have been much more draconian, for want of a better phrase, that by the 29th of September. So we're coming up against that date. I suspect the president has thought that it's necessary to start making comments about this issue. So you could even turn around and say this is positive, because there's no mention of MFN. And that would have been a very difficult day for pharma.
Yeah, it's fascinating. There is usually some kind of a geopolitical strategy behind what the president does with tariffs. So perhaps you're getting at something there. 100% is a huge amount. Assuming that it goes through, which, is a huge assumption, what kind of impact would it have on people who need to buy drugs, patented drugs, that aren't off patent yet?
Yeah, the cost for medications in the US goes through the roof. At the end of the day, there's no pharma company that can absorb 100% increase in their in the transfer price, I suppose. I don't know how the whole thing will be calculated. Anyway, as I said, there's only 5 lines of text for us to deal with. If it's on the transfer price that's coming into the US, if there is any drug that in fact is being used in the US that's coming from elsewhere, then that would eat into the pharma companies' cost of goods. What do they do with that? Do they pass it on? If they pass it on, you're getting a significant increase in the cost of drugs for the end consumer. I doubt any of this will come to fruition. I think this might stimulate pharma companies adding up their numbers, going back to the president, to the White House, saying, look, this is what we're doing. This is evidence of us doing what you're asking for. And I'm hoping on the 1st of October, actually nothing happens.
Yeah, and it's so strange as well because it would seem like it might give more of a level playing field to India, which is already dealing with tariffs. But if it's on patented drugs, wouldn't India have a leg up on those companies? We'll see. We'll see what happens. Yeah. Sam Fazeli, thank you so much. That is Sam Fazeli of Bloomberg Intelligence. Staying on tariffs, President Trump also announced that the U.S. will be imposing duties on heavy trucks, kitchen cabinets, bathroom vanities, and upholstered furniture. Bloomberg's White House correspondent Tyler Kendall joins us now. So, Tyler, this other raft of levies, they're weirdly specific. What do we know about them?
Yeah, exactly. They are really specific, but we actually knew that these were coming because the administration had launched a Section 232 investigation over national security concerns into these industries. And it's clear that this White House is trying to focus in on domestic manufacturing and really spread this as wide as possible, because we spoke about this yesterday on the program, Bonnie, but Section 232 tariffs are considered to be the ones that are planted in a more durable legal basis, as his broad-based tariffs enacted under IEEPA are facing legal challenges. So this is a 25% tariff on heavy trucks, 30% on upholstered furniture, 50% import fee on kitchen cabinets and bathroom vanities. But what is important to keep in mind here, particularly on those heavy truck tariffs, is that this is an industry that has been squeezed by other tariffs, right? Steel and aluminum have really impacted these truck makers, and we're already seeing those widespread impacts. I pulled one of the statistics, about 245,000 medium and heavy duty trucks were imported last year. That is worth more than $20 billion in trade flow.
Oof. Let's move to tech, because we also had Vice President J.D. Vance saying that TikTok could be valued now at around $14 billion. That's 1-4. That seems to be a lowball offer compared to what TikTok's U.S. operations had been valued at.
Right, had been valued at close to $40 billion. So, definitely a cut there. We heard this from the Vice President J.D. Vance, who said that ultimately this is going to be determined by the amount paid. And while the U.S. buyers will likely welcome this, our story points out that a lowball valuation, ByteDance and its existing investors may, quote, find it amusing, if not insulting. There's a lot to dig in here, though. This deal is far from done. We did see President Trump yesterday sign this executive order declaring his support for it, saying that the deal would satisfy those national security concerns and that divest or ban law that Congress had ultimately passed last year. But really importantly, we're still waiting on a lot of key details here, including what the actual makeup of the investors is going to look like. We have been reporting, of course, that Oracle is going to take a lead stake here, including when it comes to managing that algorithm. But Vonnie, as you well know, that the structure of this deal is supposed to be new outside U.S. investors, the existing investors, and then leaving ByteDance with a less than 20% equity stake.
Tyler, it's been so fun to have you in New York all week. Tyler is usually in Washington. She's Bloomberg's White House correspondent, Tyler Kendall. Coming up, Fed Speak and fresh PCE data. We'll get you set up for your trading day. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Versace in Vienna, and this is Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now let's take a look at what's ahead today. It is Friday, of course, and we have a raft of data. The Fed's preferred inflation gauge, PCE, coming out, plus all-important personal income and spending data. That's at 8:30 a.m. Eastern. Fed speak as well, coming from Barkin and Bowman throughout the day. And don't miss Michael McKee's conversation with Tom Barkin. That's at 7:30 a.m. Eastern. And the United Nations General Assembly on its fourth day. Speeches scheduled today from Israel, China, and the United Kingdom. Plus, the Ryder Cup kicks off. President Trump is scheduled to attend at Bethpage in New York at noon. Let's take a look at some of the movers pre-market. Intel up another 4% or so pre-market. That U.S. plan to cut reliance on chips abroad, giving it another day of momentum. Now, this 25% tariff on heavy truck imports starting October 1st, which is basically next Wednesday, is having an impact on some domestic truck companies like PACCAR, which is up 5.5%, as you can see. Remains to be seen if that tariff does go into effect, but it's out there. Wayfair is another tariff story. It is lower by 5.25%. Of course, it imports a lot of its furniture, and we have news of a 30% tariff on upholstered furniture imports from the president as well. So Wayfair just taking a little ding off the back of that. But let's take a look at the macro picture, because we have just 3 trading days left in September. We've been down for 3 days. The S&P looks to be pointed higher. NASDAQ 100 futures coming back to flat. They were much lower earlier. And don't forget, the Mag 7 in September is up 7.6%, up 7.6% in September. So 3 more days to see if we can turn that around and make it a typical September. Russell 2000 again pointed lower. Yields picture, very important. We have the front end coming up a tiny bit and the back end staying roughly where it is. That 10-year yield at 4.17 practically. That's it for Bloomberg Brief.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook: take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We think inflation is going to continue to move lower once we get past this little bump related to tariffs.
The pass-through of the tariffs into inflation has just been a lot slower than what I'd expected.
Tariffs are going to increase prices.
I don't think that we should be pulling our hair out that inflation is about to take off again.
If inflation starts accelerating, I mean, you can't rule out that they skip December.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning and welcome back to Bloomberg Surveillance. President Trump slapping another round of tariffs on specific sectors on goods overnight. Europeans privately warning Russia of plans to shoot down jets intruding on their territory. Big investors from David Einhorn to Ken Griffin are worried about a tech bubble. And markets, Anne-Marie, are largely ignoring it all.
Largely ignoring it, even though there is now fresh uncertainty in this market from a number of issues, whether or not the AI spend is actually going to be tangible. And then, of course, policy, once again, out of Washington. The markets have become almost numbed when it comes to trade and tariffs out of this administration. Trump comes out, shock and awe, on a number of issues, most notably for financial markets is pharmaceuticals. But then you start to really read into the story and you realize that there's going to be exemptions, there's going to be carve-outs. So at the moment, carry on and keep going.
Well, right now I hear but yelling at my ear, in my ear, saying this was the first week potentially. 3 straight days of losses. First time that we've seen that in September, going back to August 21st. We have not seen that type of trend. We could see a down week for the first time and potentially the most going back to middle of August. There was this fear percolating in markets, and I feel like it took on a new life this week, Anne-Marie, this idea that maybe the tech investments were getting a little ahead of their skis, and we saw a real pile-on with that type of concern, albeit not necessarily expressed in any kind of prolonged sell-off.
No, because guess what? We're still, just short of record highs on this stock market. But you are starting to hear, and I think this week it has been a change of tone and rhetoric. People are starting to take pause. They have a fear of missing out, but at the same time, you know, history doesn't always repeat itself, but it rhymes. And everyone's thinking about what happened in the dot-com bubble. You look at what David Einhorn said yesterday, famed hedge fund manager. The numbers that are being thrown around are so extreme that it's really, really, really hard to understand them.
Which is the reason why we saw just a little bit of a dip, but this morning we're trying to push forward a real question here also heading into 8:30 a.m. Eastern time when we do get core PCE, that is the metric of inflation the Fed is watching, along with personal income, personal spending, a fear percolating into markets that maybe the Fed wouldn't move quite as quickly as people had expected.
Well, Neil Dutta, one of those individuals who's been calling for the Fed to be cutting rates well before they started this month, saying that, yeah, if you get hot inflation prints, potentially you have a pause, say in December when it comes to the Federal Reserve. And yesterday's jobless claims, they were so good, those numbers, that potentially now the market is going to focus a little bit more maybe on CPI and that concern, because there are still members of the FOMC that are concerned about tariffs and their impact on inflation.
Yeah, right now we are seeing markets that essentially aren't doing much, but they're not going down. And that's giving people a really positive signal, at least apart from the NASDAQ. We're looking at S&P, just basically the futures up about 0.1% across the board. The euro claiming back some ground after losing against the dollar weakening, the most going back to July 31st on 2 days of upside surprises in economic data in the U.S. And this feeling that maybe the Fed isn't going to go quite as far as fast as people expected. How important is going to be that inflation read at 8:30 a.m. Eastern? Coming up this hour, we're going to be speaking with Cameron Dawson of New Edge Wealth. His stocks look to snap their longest losing streak in a month. Alex Hassel of Redburn on why he has the street's lone sell on Oracle. And Mike Darda of Roth Capital looking ahead to the latest read on inflation. We begin this hour with stocks little changed as investors await PCE inflation data. Cameron Dawson of New Edge Wealth writing this: equities have been in melt-up mode, which helps to explain the recent 3-day breather we have seen in shares, but we are still very much in an uptrend and continued positive weekly momentum. Definitely an understatement, Cameron. We look at some of the valuations. Cameron joins us now, which is a wonderful thing. Cameron, I just want to start with the question that we were kind of bantering about, this idea why the market isn't responding more to the new bazooka of tariffs announced overnight.
Well, because earnings estimates continue to go up, and you use the word numb, and it's sort of an uncomfortably numb kind of scenario where we have not seen tariffs impact earnings estimates. Look at the second quarter earnings season. Big surprises to the upside because people were expecting tariffs to hit earnings immediately, and they didn't. And so companies raised guidance and gave good outlooks. I think the question is, as we go into the third quarter, do we start to see some of those tariff impacts start to hit earnings where investors will look at the layout of tariffs and say, maybe this is more of an earnings negative thing than what we experienced just in the second quarter?
Well, this to me is really interesting because a lot of people are saying that this market momentum hinges on earnings. And if there is one bad earnings report, that could potentially torpedo a lot of...
I've been saying that the key reason why the market continues to make new highs is because 12-month forward earnings estimates continue to make new highs. But it must be noted that the majority of those earnings upside is coming from just a small handful of names. Michael Simplus put out a stat earlier this week that said over the last 3 years, 80% of the earnings growth in the S&P 500 has come from the AI-related names. 80%, which means that we are relying on such a small cohort of names to drive this kind of upside.
Well, yesterday there was this report in the Financial Times about how Sam Altman, Mark Zuckerberg are getting close to the president, and an insider said, well, we really need that AI investment. This is a marriage of convenience because the economy wouldn't be doing so well without that AI investment. What would this market look like with actually out those trillions of dollars being put towards AI?
It would look like the equal weight index, which might be near new all-time highs, but on a relative basis, it has significantly underperformed the cap-weighted index, which just is a reflection of the fact that equal weight earnings are still getting cut. You're still seeing earnings revisions lower. The cap weighted is going up because you have this benefit from the large AI-related CapEx names. And so as long as that continues, we would expect this market to remain narrow because earnings growth is narrow.
What do you make of the likes of David Einhorn being a little bit nervous, saying it's really, really hard to understand these types of numbers?
Completely agree. We've been writing for the last couple of months that it's fascinating that these businesses, which were very capital light and near monopolies, are now transforming into capital intensive businesses that are much more competitive. That says to us that return on invested capital will go down for these businesses if they continue to spend the way that they have. The question is, when does the market care? The market hasn't cared because the Mag 7 has grown earnings at a 40% annualized rate for the last 5 years. So if that earnings start to level off, if top line growth starts to level off, that would tell us that the market will start to care about return on invested capital degradation.
There also is this idea that they're using free cash flow to make these huge investments. And suddenly overnight, we're talking more about the debt side of things. Yeah. And the fact that tech debt issuance is running at a pretty fast clip and seems to be accelerating into the end of the year. How do you view the idea of leverage being introduced to the tech story?
It certainly adds a layer of risk. It's one thing when you spend your own money, a different thing when you spend other people's money. And I think it's fascinating, though, is that there's still a ravenous appetite for this debt. You are seeing these deals be oversubscribed. You're seeing the spread of that debt be very, very tight for the given risk. The fact that Oracle is able to come out with 40-year bonds that are so well in demand just tells you that there is still so much liquidity in this market, and there's still so much optimism related to the AI trade.
There are a lot of worries out there. There always have been. And I think 2008 conditioned everybody to look for the bubbles and the potential pitfalls ahead. I do wonder, though, how much this is just turbocharged by a Fed that has shown its cards and that essentially it's going to have some sort of easing bias. Is there a real kind of catalyst in this 8:30 a.m. core PCE? Should it come in a lot hotter than expected simply because it stymies the hopes and dreams of the Fed dove watchers?
I think that we have to think of the Fed in two very different camps. Old Fed cares about inflation. New Fed, which we'll get sometime next year, probably doesn't care as much and is going to go to 3% almost in every single economic scenario, which means that you would have to see a very large, meaningful uptick in inflation in order for the new Fed to not cut rates aggressively. So in the near term, it means that you likely, if you get higher inflation, you won't get the rate cuts as soon because old Fed cares about the dual mandate.
Well, can we have new Fed policy with a head of the Fed that's part of the old Fed?
Yeah, it's a great question of do we actually get that kind of shadow Fed, and does the bond market price it in? It's no surprise. The bond market is pricing in the Fed effectively gets to 3% by this time next year. Then comes the debate, which we heard from Stephen Myron yesterday, which was where is neutral? If you have a large cohort of the Fed arguing that neutral is far lower, we could be talking about a Fed funds rate that's below 3%. And then the question is, what's the consequence of that? What's the consequence of that on the long end of the yield curve? And then how would they potentially respond to the long end of the yield curve backing up? And do we see this Fed starting to talk about things like yield curve control?
Do you think this idea of a new Fed could actually basically be instituted before Powell leaves? Like in terms of FOMC members actually lining up for what, say, Stephen Myron envisions?
I think right now you're seeing members line up because there's sort of an audition. We think it's kind of like a chorus line where they say, God, I hope I get it. And so you have this audition where they're all talking very dovish things in order to potentially get the nod for Fed chair. But it is an important point that there are many voting members on the Fed. It's not just one person. Myron was a lone dot when we got the 2025 dot. So it's not a given, but we think that the true outcome is still once we get into 2026, this time next year, that you're likely looking at much lower rates.
You sound concerned. You sound bearish. Are you investing in a bearish way?
Look, what keeps us optimistic is 12-month forward estimates keep going up and that we're still in an uptrend. And we very much respect the uptrend and we respect the momentum. And we've been noting that positioning is still fairly not stretched. You have the Deutsche Bank Consolidated Positioning Report that's still just in the 69th percentile. And if you look at the discretionary investors, they're only in the 40th percentile. So there's still money that can be dragged kicking and screaming into this market, which is why we think we continue to remain in an uptrend.
You can hate the theme, but you can love the returns. Cameron Dawson, you're sticking with us. Thank you so much. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. President Trump announcing a fresh round of tariffs. The administration is imposing a 100% tariff on name brand pharmaceuticals effective October 1st, unless the companies build manufacturing plants in the U.S. New duties will also hit cabinets and vanities, furniture, and heavy trucks at the rate you can see there. Meanwhile, President Trump also signing an executive order finalizing a deal to spin out TikTok's U.S. business, with officials setting its potential value at $14 billion and shrinking ByteDance's stake to less than 20%. But the valuation is well below previous projections, closer to $40 billion. So far, buyers include Oracle, Silver Lake, and MGX. And lawyers for Fed Governor Lisa Cook asked the Supreme Court not to allow President Trump to immediately remove her, saying the move risks chaos and disruption in markets and would, quote, sound the death knell for central bank independence. The administration has asked the court to permit the president to remove Cook while litigation over the legality of her firing continues. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahaira. Up next, increasing the risk of a government shutdown.
This is all caused by the Democrats. They asked us to do something that's totally unreasonable. They never change. They want to give money away to illegals illegally. This is what Schumer wants. This is what the Democrats want.
Tyler Kendall of Bloomberg joining us next. This is Bloomberg Surveillance.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Welcome back to Bloomberg Surveillance. John is on a well-deserved day off. It is me and Anne-Marie holding down the fort. We woke up overnight. There was a slew of information from President Trump having to do with all of the tariffs. This morning we come into relative calm in markets, but I want to take a look at three specific stocks that are being affected: Wayfair, Restoration Hardware, and Williams-Sonoma. Three furniture-related home goods types of shares. And you can see in pre-market trading, they're taking a hit, led by Restoration Hardware, which had the CEO dropping F-bombs on a recent call, talking about being able to, or not being able to, pass along price increases to consumers. Those shares lower as a futures down by 4.2%. But Anne-Marie, it really raises this question of why the broader market isn't responding more. You are seeing small pockets that are seeing a little bit, perhaps, of skepticism.
I'd love to hear what the Restoration Hardware CEO has to say this morning when he sees his share price down after Trump announced these tariffs. So it's a 30% tariff on upholstered furniture and a 50% levy on kitchen cabinets and bathroom vanities. The market is definitely selling this off at the moment, but I still think we need more details from the Trump administration. They're doing this through 232 section tariffs. We need more details on exactly, potentially, are there going to be exemptions? Potentially, do the tariffs come down if you're building more of these products, or at least percentage of these products in the United States?
Yeah, and how much, as you said earlier this morning, how much of this is a hedge against if the Supreme Court does overrule some of the tariffs put on by IEEPA? But to that idea that you were talking about earlier this morning, Anne-Marie, about a numb market, if you look at the broader price action, you can't see it. Essentially, you're looking at an uptrend, fading a little bit from earlier this morning, but the S&P futures basically flat. You're looking at a 10-year yield, also almost flat, unchanged, 4.17%. And then you're looking at a dollar that's weakening just a touch after two significant days of strengthening on the heels of some better than expected U.S. economic data. Under surveillance this morning, take into account this one: increasing risk of a government shutdown.
This is all caused by the Democrats. They asked us to do something that's totally unreasonable. They never change. They want to give money away to illegals illegally. people that entered our country illegally. They want to give them massive federal money. And we don't want to do that. This is what Schumer wants. This is what the Democrats want. They want to have, and they want to take our money.
Here's the latest. The risk of a government shutdown rising with funding set to lapse on October 1st. Bloomberg's Tyler Kendall joins us now. Tyler, it seems like almost a certainty at this point, given the schedule of Congress.
Right, exactly, Lisa. We are now 4 working days away from a potential government shutdown unless lawmakers are able to strike a deal. We have to keep in mind here, in order for the bill to pass, Republicans in the Senate need at least 7 Democrats to get on board. And we saw a previous measure already fail. Republicans had wanted to keep the government open through a stopgap measure through November 21st, but now Democrats are trying to use their leverage to negotiate on some other provisions. In fact, I spoke to one senior aide to Democratic leader Chuck Schumer, who told me that they are dug in on this and they feel that they're actually well positioned here because after what we saw happened last time around and the sort of scrutiny that Chuck Schumer was under, it appears that they're going to stay on this path. Now, when it comes to what they're asking for, Democrats have a few different provisions that they're looking to get through when it comes to this spending plan, this government spending plan, but they all have to do with health care. One is extending or making permanent some of the expiring Obamacare tax subsidies. This one might be the one where we actually see the most potential compromise. Senate Majority Leader John Thune has signaled an openness to negotiate on this, but these other provisions that Democrats are looking to negotiate on, including making it more difficult for the administration to claw back previously allocated funding related to healthcare, as well as rolling back some of those changes that we saw to Medicaid under the One Big Beautiful Bill. Those seem a lot harder to get around since they really do go hand in hand with some of the administration's policies that they've been promoting. But Lisa, at this point, as you said, it does feel like we are careening closer to it and the stakes are just getting higher. President Trump derailed a planned meeting that we had been reporting on that was set to take place yesterday with Democratic leaders. And now there's this threat that there could be these permanent layoffs for federal workers if a deal isn't done.
Tyler, aren't we basically just accepting there's going to be a shutdown because Speaker Johnson told lawmakers, told Republicans, don't bother coming back from your recess until after the clock would strike for it to be a shutdown? So at some point, are they to blame because they didn't even show up for a vote?
Well, that's a good point here. But of course, we know that the administration is working closely between the House and the Senate. All of the moves under the Trump administration have been coordinated when it comes to both chambers of Congress. It's going to be something that we're going to have to wait and see. Of course, Anne-Marie, you know better than anyone. Washington loves anything more. It's a deadline. They love to be fueled by a deadline. But at this point, it's been really interesting to see Democrats really dig in on this, including those lawmakers that represent those areas, those districts that take in the most federal workers. Even with the threat that there could be permanent layoffs down the road, they do appear to be pretty dug in. One point that was pointed out to me is that many Democrats have been expected this already plan to decrease the workforce when it comes to federal workers already. So the threat from the administration and the OMB memo that we got yesterday didn't really come as a surprise.
Bloomberg's Tyler Kendall, thank you so much for being with us. Cameron Dawson of New Edge Wealth still with us. Cameron, adding this to the list of things that sound like they could be a problem, but markets don't seem to think will be a problem. Can you reconcile the idea that potential layoffs could cause some serious economic damage at a time when most people are shrugging this off as just simply theatrics?
Yeah, I think it's probably the most important point is that we're not talking about furloughs where people go home and get back pay, but actually talking about firings. So this seems like maybe more of like a shut doge instead of just a shut down. And so if we have that, though, it's likely that you'll start to see that show up in some of the data. And an important point, you might not get the data when you think you do if we are in the midst of the shutdown, which just means that this uncertainty, as well as the impact, could be a source of volatility.
This is a really important point, given the fact that there's been such a huge emphasis on the labor market and any kind of trend that we might see with respect to firing and hiring. If we don't get the non-farm payrolls report on October 3rd, and that's becoming an increasing likelihood, how does the market read that?
Yeah, dancing in the dark, right? In the absence of information, we think it would probably just increase demand for hedges, increase the uncertainty, which just means that this very calm, placid market that we have been in could see an increase in volatility.
Unless they declare someone as essential to push the number, we could maybe not have a jobs report. What does that mean for the Federal Reserve?
Yeah, again, it's something that we really haven't had to deal with, and so the Fed will probably then lean towards other kinds of data potentially to give them guidance, but it probably means that the path that they set forward in the latest dot plot, where we do have the expectation of another rate cut, likely gets delivered, and they'll say, look, if people are actually getting laid off, the jobs data is likely going to be bad, even if we don't have it.
Yeah, but how are you data dependent when you don't have the data?
That's a great question.
You can't be, right?
You can't be.
Besides this economic impact with maybe not having the data you need to make investment decisions or to understand what the Federal Reserve is thinking, does the shutdown actually matter to financial markets?
It typically doesn't. It typically doesn't because we're also usually typically talking about furloughs, so everything is temporary. If there is a permanence to this, where we see a shrinking of the labor force in the government, I think it's important to note is that so many of the jobs that have been added, even with the revisions lower that we've seen over the last couple of months, have come from the government sector, which just causes you to question where will the uptick in jobs come from to make way or to make up for the fact that you're losing jobs in this all-important area.
You know, I'm struggling with this, and I was thinking about this last night. The headlines were coming out fast and furious. 100% tariffs in pharmaceuticals, 25% on kitchen and bathroom vanities, which, you know, rang true to me because I'm in the middle of a renovation. Like all of these types of things that come through and you think, wow, the world's going to be on fire tomorrow. And you come in the next day and it's nothing. It's just completely calm. Everyone kind of moving forward. There is this feeling of policy immunity. Do you think that that can last, that companies can adapt and adjust to such a degree that a lot of the noise is just that, and they can keep doing what they always do, which is making products, providing services, and making money?
The golden rule is that whatever happens in DC or geopolitically, if it does not impact earnings, it's likely temporary and something to fade in markets. And because we continue to see this march higher in earnings estimates, which, as we talked earlier, is really dependent on just a handful of names that probably don't care too much about tariffs, meaning the AI-related names, that as you see that uplift in earnings estimates, the markets can shrug this off. The big challenge will be is that at the end of the day, these AI names still breathe the same economic air as we do. So if all of these things cause the economy to do in fact slow down, then that's where this becomes a bigger equity market issue.
Building on Lisa's point, though, the fact that you see all these headlines and the market just pretty much shrugs it all off, besides some specific sectors. Does the Trump put still exist?
The Trump put exists, but it's with a strike price that's far lower than we are today. And I think that, remember, if we go back to April, when the Trump put happened, it was when markets were already gapping down nearly 20%, and you were seeing some spicy price action within the bond market. So to think that, given the fact that we're just a couple percentage points off of all-time highs, that the Trump put is here, most absolutely not. You would need to see a much bigger uptick in not just volatility in equity markets, but you'd have to see volatility in bond markets as well to get the Trump put back in action.
All I can say is, Cameron Dawson of New Edge Wealth, you're one of the best, and you are the only person I know who thinks in song lyrics and who actually speaks in song lyrics as well. And I had to listen to I'm Out With You last night because of your latest note. So thank you. Thank you for that. The soundtrack of Cameron Dawson. Right now in markets, you're not seeing a ton of action, just basically flat after 3 straight days of losses. Coming up, Oracle in talks for a board seat on the U.S. version of TikTok, with a price tag that's raising a lot of eyebrows, not for how high it is, but for how low it is. Alex Hassel of Redburn on why he has a sell rating on that stock. Plus, Denny Berger with your morning movers, Intel and GFS jumping on a new White House chip rule. This is Bloomberg Surveillance.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Good morning, welcome back. We are looking at a market that's trying to claw out some gains after 3 straight days of losses, although not really going anywhere. In a world awash with news, but unclear how it's going to shake out in the corporate earnings, basically flat on the S&P futures. NASDAQ a little bit lower, and Russell 2000 down by about 0.3%. In the bond space, concern heading into that 8:30 a.m. print. Do we see resurgent inflation that could stymie the Fed's plans to cut yet again in October and then again in December? You're seeing that move, particularly in the 10-year space, but nothing significant, less than a basis point up. And then in the currency space, we had seen 2 straight days of dollar strengthening, the greatest amount going back to July 31st against the euro. We're breaking that with a bit of gains in the euro, 116.72, 3 hours away from the cash open. Here is your morning mover segment with Danny Berger. Danny.
Hey, Lisa, what a month it's been for Intel, already up 40%. And we had weight to that this morning, with Wall Street Journal reporting that the Trump administration has a plan to encourage the use of homegrown U.S. chips. That plan has been sending shares of Intel higher by 3% this morning, and Global Foundries, that moves higher by 10%. We also have a lot of new tariffs, sectoral tariffs to work through, be it pharma, be it kitchen cabinets, be it trucks. Let's start with trucks, though. The heavy truck tariff that Trump has announced, it's hitting a lot of the European players really, really hard this morning. Daimler Trucks, for example, but PACCAR, a U.S. domestic truck manufacturer that makes 25% of heavy trucks in the U.S., those shares move higher by 5.5%, I should say. Volvo Trucks also moving higher in the European trade because it also makes a lot of its trucks for here in this market. Finally, I mentioned some of the things like kitchen cabinets, which gets a 50% tariff, and upholstered furniture that gets a 30% tariff. You can see what a lot of these retail names are doing this morning, getting hit so hard. RH down 4%. Wayfair, that sinks by 4% as well. Williams-Sonoma, those shares down, Lisa, by 2.5%.
Thank you so much, Danny. We're watching that to see why it is so specific and whether it will fade with everything else this morning. On our radar this morning, President Donald Trump imposing a 100% tariff on patent and pharmaceuticals effective October 1st, unless producers manufacture in the United States. Trump's latest levies also impact imported trucks, furniture, and cabinetry, as Danny was just talking about. Meanwhile, European diplomats warning the Kremlin that NATO is ready to use full force, including shooting down planes to respond to airspace violations. That message follows a recent incursion by Russian jets over Estonia, Russian denying the violation, but a real question here, a lot of questions, Anne-Marie, about how quickly they're willing to coalesce around more affirmative responses to Russia and what their capabilities are to do so.
I think the big question is whether or not the Europeans want to act with deterrence or they're concerned about escalation, which we've heard from, say, the German foreign minister saying this could be Europe sleepwalking into a trap set by the Russians. And I think we need to remember back in 2015 when a Russian jet came into Syria, Turkish airspace, was on the border with Syria, and a Turkish jet shot the Russian jet down, and it became this huge flashpoint where the Russians were incredibly upset with Turkey, but NATO then came on the side of Turkey, even though all they kept trying to do was escalate. And that is the fine line and flashpoint that all these European countries and NATO writ large is trying to understand. They want to make sure that they set a deterrence, but they don't want to escalate when it comes to the face-off with Putin.
What's fascinating is just the technical aspects of this. And Mark Rutte, the NATO General Secretary, Secretary General, sat down with Editor-in-Chief John Micklethwaite yesterday and was talking about how they have the wrong equipment to shoot down some of these drones. It could potentially be $500,000 worth of equipment to shoot them down, whereas these drones cost very little. And they're trying to use technology from the Ukrainians that were developed to try to shoot them down. That just highlights the different nature of warfare and how far Europe is trying to go in order to be prepared to counter.
Yeah, they definitely probably need some more F-16s if they're going to be doing this. I also think it's interesting, we have reporting that there was talks in Moscow with all these envoys, and the Russians said the reason why they had these incursions was a response to Ukrainian attacks on Crimea, and they said Ukraine would not have been able to carry out these attacks without the help of NATO. So we're going into this potential tit for tat between NATO and Russia, and that is why there is this fine line and serious concern about not wanting to escalate, but also making sure you do set a deterrence the way Syria did in 2015.
Yeah, more on that throughout the morning. Meanwhile, back in the United States, attorneys for Fed Governor Lisa Cook are asking the Supreme Court to block President Trump from firing her. Cook's lawyers warning that removing her would cause, quote, chaos in markets and compromise the Fed's independence. We're talking about that extensively, especially as people try to understand exactly what the composition is of the Fed heading into 2026. In the tech space, Oracle, Silver Lake, and Emirati firm MGX are in talks for a 45% stake in the U.S. version of TikTok. Sources telling us here at Bloomberg that the companies are also aiming for board seats. Alex Hassel of Redbird, who covers Oracle and has the only sell rating on the street, joins us now. Alex, thank you so much for being with us. Before we get to your call on Oracle and some of your methodology behind that sell rating, I do want to get your thoughts on TikTok. This $14 billion price tag, given what some people expected would have been a $40 or $50 billion company, was it surprising to you to see that?
Yeah, I mean, it would imply that, first of all, thanks for having me on the show. It would imply there's like a meaningful gain from an Oracle perspective. If the previous expectations was around, let's say, 40 billion, now it comes in at 40 billion if approved. There will be a windfall. However, from an Oracle, share price impact, it's still insignificant. So we estimate that this windfall is less than 1%. So overall, no big implication. It doesn't really move the needle.
You have a sell rating on Oracle, and a growing number of investors are coalescing around, if not the sell, the concern that you raised in your note, this fear that Oracle has expanded too quickly, that people's hopes and dreams for their expansion of their earnings have gotten a little over their skis, and that they're now using debt to finance their build-out, not just free cash flow, after kind of running out of that in order to keep spending. What's your take on why there still is so much more downside?
I mean, first of all, with regards to our target price of $175, that's not a bear case, that's our base case. I just wanted to clarify. I mean, what we have seen is we've seen like really big figures in terms of like, contract wins and also like revenue guide. But our methodology shows that actually the value is relatively small for all of these deals. And so we put out this 60 billion value for the next 5 years of like revenue guide, which is significantly less than what the market is currently pricing in.
You said
with regards to the debt, sorry.
Oh, no, continue.
With regards to the debt, our view is that the market is also, very likely to underestimate how much capex is required, and we are still in the very early innings of this investment cycle. So the further we go in the ramp, there will be much more capital requirements because operating cash flows are not covering any of this capex to the extent needed.
When you look at these capex headlines, do you just see them and think there's no way this is going to become tangible in terms of earnings per share?
What we say is that the market is underestimating the associated costs with this capex, because obviously you have like depreciation, you have like leases, etc. So we really advise investors to look beyond the headline figures in terms of the real economics. So we see downside risk to consensus expectations on a profit level.
When you say in your note that you think not just the downside risk, you think there's going to be a shift to underlying economics. What about the underlying economics of Oracle don't you like?
I mean, the underlying economics is basically it's not the business that we know from the cloud business, because traditional cloud 1.0, you know, the hyperscalers have built the infrastructure, have extended server lifetime, and over time they've layered software on top, which was a great, fantastic business because it provided operating leverage, software-like margins. These kinds of transactions are much more like a financing spread, where the price and the costs are fixed. Very different economics. It's a different business model.
Alex, this is a reason why a number of people are agreeing with you and are looking at Oracle as something different than, say, Amazon or Microsoft, and trying to distinguish the winners from the losers. We've been talking about the David Einhorn quote, so I'll read it to you. The numbers that are being thrown around are so extreme that it's really, really hard to understand them. He's talking about the investment in technology and sort of the infrastructure around it. Ken Griffin yesterday of Citadel on AI saying there are obviously echoes of .com. A question over how much money will be lost and who the losers are going to be. How many of the big tech giants are you pinpointing as potential losers in this race that is garnering so much cash?
I mean, that's, you know, exactly the reason why we launched on Oracle with accelerating, because we see their role much more of like financing all of this CapEx. That's a very, very different business model. You know, the Microsoft, Amazon, and Google that built the data center, built the infrastructure, and layering software on top. These are very different economics, and this is where the moat is created. We just don't see Oracle in the same ballpark here.
But the others can keep on gaining. Is that what you're saying? That Oracle can kind of be in its own world of hurt, can fall out of bed, but everyone else can keep winning and keep getting the valuations that they're currently trading at?
Yeah, so we have buy ratings on Amazon and Microsoft. And I think, you know, CapEx is like one part where you buy the hardware, put it in place. But what the traditional hyperscalers do is they spend like tens of billions in R&D to build the software layer. And this is where the economics are very, very different. So if Oracle really wants to, you know, catch up, then not only CapEx goes up, but also R&D has to accelerate meaningfully. And we haven't seen this at this point in time.
What would it take for you to reverse your sell rating?
With the stock being at $175.
So you wanted to hit your price target, and then you're good to go for a buy.
And no, also I think the other point is we would need to see like a real progress towards like how they can capture, you know, the upper part of the stack. So we'd need to see like R&D investments going up. We'd also see like progress in terms of like cloud migration, where Oracle is lagging SAP, for example. So they have to put in place the prerequisites to actually capture the higher value part of the stack, and we just don't see that at this point.
Alex Heisel of Rothschild & Company. Redburn, thank you so much for being with us. This is really the question, and Emery, this is really the point that David Einhorn and Ken Griffin are making, and so many other people. There will be big winners, but there also will be big losers, as there have been in every industrial build-out that attracts just the same type of flood of cash.
And that's why everyone is so concerned, because just as Dan Ives would say, what, the first, second inning? When do you actually start to see who really are going to be the losers in this race, when they're coming out with headlines of billions and even trillions of dollars that are going towards this industry?
And at the same time, there is this idea of creative destruction, right? And that you need to kind of flood the zone in order to get the technology up. So how much is this a feature and not necessarily a bug? Yeah. Let's get to an update on stories elsewhere this morning. Here's a Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Former FBI Director James Comey is facing a criminal indictment. He's been charged with lying to Congress and obstruction. The case stems from his 2020 testimony on the investigation into whether Trump or anyone part of his presidential campaign conspired with Russia to interfere in the 2016 election. If convicted, Comey could face up to 5 years in prison. Meanwhile, Meta is reportedly in early talks to use Google's Gemini AI models to improve ad targeting. According to the information, the move highlights Meta's struggles and with its own AI and pressure to boost ad performance. Those setbacks have pushed the company to consider outside technology, at least as a stopgap, while its new AI team work to strengthen their own models. And Xiaomi has unveiled a new smartphone designed to take on Apple's iPhone 17. The new device, called Xiaomi 17, will be offered in Pro and Pro Max models, just like Apple's, and will be $100 cheaper than the base iPhone 17. It signals Xiaomi going after Apple in the most direct fashion, shifting its branding and timing to measure its products against Apple. That's your Bloomberg Brief, Lisa.
Thank you so much. I believe it's called iXiaomi. Is that what it's called, the iXiaomi 17?
Well, I just want to know what I'm looking up now, what the colors are. Because people are actually interested in the Apple phone. No, I'm not going to buy the iPhone, not for the colors. People are excited about the orange, the blue. Powell going to check out the Xiaomi colors.
The new innovations as we talk about AI. Up next, weighing inflation risks.
I would want to understand why there was an upsurge in inflation and what was driving it, and then sort of think about whether that shock is likely to be persistent or whether the shock is likely to be transitory. Monetary policy shouldn't respond necessarily to fiscally mandated price changes.
Michael Darda of Roth Capital joins us next with a slightly different take. This is Bloomberg Surveillance.
In case you missed it, on the close. Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We were trying to break a 3-day losing streak. It doesn't look like we're doing a very good job of it. Futures turning negative in the S&P, in the NASDAQ this morning, across the board, really, as a lot of investors just take a breather. This would be the 4th straight day of losses. We haven't seen anything like that since the beginning part of August, which highlights just what a tear we've been on. It is unusual to see red on the screen. This really is coming ahead of the inflation data that we get at 8:30 a.m. Eastern Time. Core PCE, the key metric for the Fed, under surveillance this morning, weighing those inflation risks.
My view is not one of enormous economic pessimism. You know, I don't think the economy is about to crater. I would want to understand why there was an upsurge in inflation and what was driving it, and then sort of think about whether that shock is likely to be persistent or whether the shock is likely to be transitory. Monetary policy shouldn't respond necessarily to fiscally mandated price changes because that's not indicative of changes to the underlying supply-demand balance in the economy.
Here's the latest. Investors awaiting that PCE inflation data due out this morning for a read on the Fed's Fed's next move. Michael Darda of Roth Capital writing this. The Fed appears to be placing an undue amount of weight on highly volatile payroll figures while downplaying forward-looking credit market and financial indicators. Michael joins us now. And Michael, thank you so much for being with us. Why do you think it is important, so important, to look at the fact that we have been above 2% for more than 4 years and seem to still be there, even if on a somewhat downward trajectory?
Thanks for having me on. Well, today is likely to mark the 54th month in which PCE inflation has exceeded the Fed's 2% target. And if you look at the last round of projections, the so-called SEP that the Fed put out this past week, they don't envision a return to 2% inflation until calendar year 2028. So that would be a 7-year period of overshooting the inflation target. And at some point, we have to ask, what is the point of a target if you actually don't hit the target?
Well, this is a reason why a number of people have said maybe the Fed should pause, including some of the Fed members who've been speaking recently, saying they don't want to front load those rate cuts. I'm thinking of Austin Goolsbee in particular from the Chicago Fed. Have you heard anything from the other side of the argument that gives you pause? This idea that over the past 6 weeks or so, there has been a material shift downward in the labor market, that you have heard commentary from consumers saying it's significantly harder to get a job?
Look, it's certainly possible. I mean, the Fed's putting a lot of weight on these weakening payroll figures and the big downward revisions that have come with that. But we did see a similar slowdown, less severe, less pronounced for sure, but a similar slowdown in job growth going into last summer, and then the labor market started to reaccelerate. And I think if you take a step back and you look at forward-looking financial indicators, they're really not giving us the message that the economy's headed off a cliff here, right? Just the opposite. Small cap stocks were up 40% from the April lows until this recent pullback, which is minor considering how much risk assets have gone up. Credit markets in great shape, and we're really not seeing a lot of pressure on some of the high frequency labor market indicators that you would typically see if the labor market were falling apart. Jobless claims usually rise 20% plus on a 4-week moving average year over year going into a downturn. That's not unfolding. We saw the claims figures yesterday actually pulled back pretty sharply. I think we'd have to see a change up in the disposition of some of the higher frequency and financial data that we're just not seeing now to make the case for a much more aggressive Fed path from here. Even just, the Fed following through on the expectations that are priced in for more than 100 basis points of rate cuts over the next year. That seems pretty steep unless the economy really is in big trouble.
If we do have a government shutdown and it's longer than some expect and we don't get the data, what's the Fed going to do? Are they going to have to rely on other sources of data like the high frequency you're talking about?
I think so. I mean, then it'll be more important to rely on financial market indicators. They're not always right, but they are forward-looking in real time. We'll have to rely on, private sector data. We still have tracking estimates that are coming through. And what's kind of interesting is if you look at the Atlanta Fed data, it'll be updated again today after the PCE report. But right now, third quarter real GDP is tracking above 3%. Even if you look at real final sales to the private sector, tracking around 2.7. If the GDP deflator is going to run at 3, you have almost a 6% handle on nominal GDP. And if the nominal economy is growing at close to a 6% rate, I don't know how that in any earthly way accords with a tight monetary policy or the Fed being hundreds of basis points above neutral, as Fed Governor Marin argued yesterday.
And when it comes to inflation, as we wait for the PCE number at 8:30, Powell's words were a one-time increase does not mean all at once. Is he basically giving individuals an excuse to look through hot inflation prints?
Yeah, I mean, this is a tricky situation for the Fed in the sense that, we did come into the year with, the tariff news that was much more aggressive than expected. That is having an influence. You can see it in goods price inflation, which is accelerated. And with sticky services inflation, overall inflation has accelerated at least on a 3-month annualized basis pretty meaningfully from where we were a year ago. I think it makes sense to look through some of that, but I do think also the Fed has to be mindful about not slow walking into an accommodative monetary stance. If the economy hasn't fallen into recession, and financial conditions are quite growth supportive, inflation expectations are 40 to 60 basis points above year-ago levels, that's really not an environment where the Fed should be easing in a forceful and drastic way. That could end up creating a situation where temporary upward pressure on inflation morphs into something more sinister. And this happened back in the 1960s. In 1967, the Fed responded to a growth scare and a big drop in the stock market, eased monetary policy by several hundred basis points, and then catalyzed an inflationary reacceleration that was just a complete mess to clean up down the road. So better to avoid that kind of an eventuality.
Mike, why do you think that the break-even rates and other metrics of forward-looking inflation in markets don't seem to be reflecting this type of reality?
Yeah, it's a great question. I mean, the TIPS market inflation expectations are above where they were a year ago, but they're still at levels consistent with price stability. So the Fed still seems to have quite a bit of credibility and should not take that for granted. It comes back to this idea, if the Fed's going to overshoot the inflation target for 7 years and take risks of overheating the economy now with the political pressure on the Fed and the change up in personnel, do we really want to take a risk that those expectations reset 50, 100 basis points higher? If the administration wants low long-term interest rates, you don't do that by taking a risk that inflation expectations jump by 100 basis points. That has not unfolded, so that's very good news. But the Fed really should not take those expectations for granted.
Mike, we just have about a minute. I'm wondering if you've ever seen such a complicated economy where there's so many different themes laid over each other, making it difficult to decipher what's signal, what's noise, what's long-lasting, what potentially is temporary.
Never. Not in, my 25 years plus of doing this. This is a completely unique environment, from the tariffs to the Federal Reserve to geopolitical issues. I mean, this is interesting. So you have to go to the history books, but, you have to sort of ad-lib it at the same time. And hopefully we can, watch an array of indicators that give us a heads up. And look, if the data starts to shift, then we're happy to change the view. If we do start to see layoffs pick up meaningfully, if financial conditions, credit markets start to tighten, by all means, the Fed should then be in a more aggressive posture. But if that's not unfolded, I do think they need to be careful about overdoing it.
Mike Darda of Roth Capital, great to catch up with you. Thank you so much for being with us. And this is what we were talking about yesterday, Anne-Marie, with Scott Cronert, talking about how there are almost two halves in the stock market and the economy, where you have the tech sector and tech exposed, and then you have everyone else.
Peter Thiel talked about this, not a K-shaped economy. He talks about an I, a lowercase I, where you have all that concentration of wealth just at the dot. That could be said for the economy as well as the stock market.
Coming up next, we'll continue talking about this with Mona Mahajan of Edward Jones, Kellyanne Shaw, former senior White House trade advisor, Richmond Fed President Tom Barkin, and Winnie Caesar of Credit Sites. This is Bloomberg Surveillance.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This market is priced for perfection in a far from perfect world.
There are some consumer-driven parts of the market that may not be in the best shape.
This doesn't mean you have to run to the sidelines.
We need the market to broaden back out because we need the economy to broaden back out.
You have to figure out who are the winners, who are the imposters.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Markets taking a breather after a runaway melt-up for several months. New tariff headlines hitting the tape. Markets shrugging it off, although kind of going nowhere. And key inflation data 90 minutes away. John is off this morning on a well-deserved day off. Anne-Marie and myself holding down the fort as we look to a stacked day. The idea of core PCE, that key inflation metric the Fed does look at, coming out at 8:30 a.m. Eastern, followed by University of Michigan sentiment survey. Maybe John took off because of that. Earlier next week, we see Governor Waller, Bostic, as well as other Fed speakers coming out. And then, of course, Anne-Marie, the government is probably going to shut down. You put this all together, it seems as though this market is immune to Washington, D.C., even as chaos still reigns. Uncomfortably numb. That's how Cameron Dawson put it this morning. And I really think that's how the market is reacting, at least overnight, from the latest tariffs coming out of the Trump administration, and also still just looking for more details. A lot of shock and awe with the Trump administration with pronouncements. Then you look at some of the details like pharmaceuticals. Well, if you invest in America or have any sort of investment, you plan on maybe building some of your factories out in the United States, moving some supply chains at home, then you get an exemption. So then when you look to the fine details and some of the text, you're thinking, oh, potentially this isn't going to be as bad. Maybe for some others, like furniture, it could be bad. And I think that's why, though, overall, though, the market is just keep calm, carry on until we get actually the finer points. Well, and the finer points are going to come with earnings. And this is what everyone keeps talking about, that right now in this blank zone, before we get some more details about how the tariffs are getting absorbed by companies, you just have to look at the promise, the hopes and dreams, the profitability, and this idea that we might be coming out of something of a downturn from earlier this year. I'm struck by the fact that, yes, we have seen 3 down days consecutively in the market for the first time since August. We might see a 4th if some of the losses hold up today. There is a feeling, though, this is just a pause, and that there is so much bullishness and no reason to get bearish, and it's pretty much universal. Well, this is what Cameron Dawson was talking about, a melt-up. The fact that when you look at forward-month EPS estimates, they're making new highs. When you look at those 12-month estimates, and that is why the market just continues to almost have FOMO, and we don't want to lose out on this race. But doesn't it give you pause, a little bit of agita this morning when David Einhorn is coming out and saying these are really, really big numbers. This is a ton of money. And I'm not quite sure it makes sense.
Everyone's saying the same thing. Sam Altman of OpenAI is saying the same thing and saying, look, this is what happens.
He's behind some of the spending.
He's behind some of the spending, and he's saying that we should keep doing it because guess what? This is how we build things. At the same time, they're going to be big losers. Right now, there are not really that many big losers, although there is a softness to the market. Futures lower pretty much across the board, but just tepidly so after 3 straight days of losses, which has been the greatest streak going back to August 21st. S&P futures basically flat here. You are seeing a little bit of dollar strength emerge over the past couple of days and continuing that today. The past 2 days have been the greatest strengthening we've seen in the dollar versus the euro going back to July, just showing how much of a weakening trend the dollar has been. And we do see yields just marginally higher ahead of that core PCE data. The key question of how much the Fed is going to be limited by inflation that just is stubbornly above that 2% target. Coming up this hour, we've got Mona Mahajan of Edward Jones as Wall Street looks to snap a 3-day losing streak. Former White House trade advisor Kellyanne Shaw on Trump's latest tariff threat, and Richmond Fed President Tom Barkin as a central bank shows signs of division among some confusing economic data. We begin this hour with stocks finding a bit of firmer footing as investors eye a fresh inflation print. Mona Mahajan of Edward Jones writing this: markets are likely to be volatile around major growth, labor market, and inflation releases in coming months as they look to understand if the data flow is supporting the case for further cuts. Mona joins us for more. Mona, great to see you. Thank you so much for being with us. I want to start with that. Is the market much more focused on Fed policy than it is anything else coming out of Washington, D.C.?
Yeah, thanks, Lisa. And look, I think there is a focus on the Fed. The old adage goes, we don't fight the Fed, and this market has taken that to heart. We are up nearly 33% since the April 8th lows, almost in a straight line higher. From our perspective, we are in this period. We're heading towards a seasonally weaker October. There is a bit of void in the data. And by the way, yes, we have headlines looming around a government shutdown next week. All that being said, we kind of take it back to the fundamentals. And, we saw just yesterday a 3.8% GDP print for the second quarter. Atlanta Fed GDP now is pointing to 3.3%. And really what's underlying that or underpinning that is a solid consumer. Now, as we head to the back half of the year, we're going to be watching that labor market closely. Is there further signs of deterioration, or have we seen the worst already? But as we head to 2026, we are in an environment where we will probably be seeing lower interest rates from the Fed. A tax bill is kicking in that could provide some fiscal stimulus. And by the way, we have this secular story in AI and technology that continues to deliver. So we don't yet see this equity market completely rolling over. Could we pause, stall, digest some of these gains? Absolutely. But could that provide some opportunities? Yes, as well.
Can this market, can these investors have their cake and eat it too? I'm thinking about what Michael Dardo was talking about just moments ago from Roth Capital, and this idea that the Fed is cutting, given that you see stocks at all-time highs, you see credit spreads at really narrow levels, you don't see a lot of stress, and potentially you see a lot of acceleration on the heels of some of the spending. At what point do further Fed cuts support market valuations, but also support inflation?
Yeah, it's a fair point. And look, I think Jerome Powell was very clear to tell us in the last meeting that this is an insurance cut. He's doing some risk management. And historically, when you think about insurance cuts, they tend to be 3 or 4 cuts in the cycle. Clearly, Powell and team perhaps want to get to a more neutral rate. And if you think about the history as well, the Fed likes to be about 1 percentage point above inflation rate. So if inflation, we think, lands in this 2.5% range, perhaps a Fed funds rate at 3.5% neutral does make sense here. And if they get there in a gradual way, that gives them some flexibility as well in case the economy moves higher or lower from there. So I do think that Jerome Powell wants to take out this insurance rate cutting cycle. He doesn't want to be overly aggressive, and he's very mindful of the inflation picture as well.
Well, what if we get more prints like we did yesterday with jobless claims falling to the lowest level since mid-July? Can they continue to take these insurance cuts?
Yeah, look, I think they're watching the labor market closely. They understand the dynamic that's going on. It's a lower supply and a lower demand of labor overall, so we will probably see lower job gains going forward. All that being said, they are mindful that labor market can be the last indicator, and it can move rapidly lower. And so I think that's why Jerome Powell is on alert that this labor market should not move into a weaker state that could actually risk this economic growth that we're seeing. So I do think jobless claims are supportive of labor market, but we'll have to really watch that unemployment rate. We'll have to really watch what's going on underneath the surface in terms of job openings, layoffs in particular, and that unemployment figure moving higher. So a set of data ahead of us. Jobless claims, though, I think do point to the picture of, well, perhaps we can go at a more gradual pace.
Mona, I'd love to just also get your thoughts on the tariff-induced potential for inflation. Given the fact that overnight we had more tariff announcements from this administration, the market seems to be shrugging it off. Are latest tariff announcements going to be a cause of concern for this Fed?
Yeah, I think certainly earlier this year, the market was very concerned that tariffs would cause inflation to perhaps even spike back to some of the levels we saw post-COVID, where we were close to 8-9%. There were definitely projections of getting back to 4 to 5%. We have seen none of that come through. In fact, inflation, while it is elevated above the Fed's 2% target, has remained in that 2.5 to 3.5 type range. And part of that is because we know the inflation basket is, of course, especially on CPI, about 2/3 of it is services, 1/3 is goods. And yes, we are starting to see goods inflation rise, but we also know a lot of corporations have absorbed the costs, put those pressures back on their supply chain or diversified their supply chain, and some has been passed to the consumer. But overall, the inflation picture, we think, has remained contained. And I think the market is taking that as a positive sign. Even as they're hearing more tariff news, they are projecting perhaps, yes, 1/3 of the goods basket may be slightly at risk, but the 2/3 that is services has been a little bit more contained and has actually started to show signs of actually cooling a bit. And so if that story plays out over the next 3 to 6 months, you could actually see the inflation picture moderate. And we know over time, tariffs hopefully are a one-time price increase, and then we'll see a stabilization, especially as that year-over-year projection comes into play.
Which is the reason why the Fed is possibly going to look through any near-term bumps. Mona, before we let you get on with your day, what will you do if we don't get a labor market report next Friday because of a government shutdown?
Yeah, it is a real risk, and I think we will have to use the data that we're seeing in real time. We talked about weekly jobless claims figures. We'll also be having to look at the other data holistically. We have an Atlanta Fed GDP now out there, and hopefully this government shutdown will not be a prolonged one. I am hopeful that both sides can come to a resolution, but the data risk is a real one, but not one that can meaningfully derail the broader story that we're seeing in the economy and the market.
Mona Mahajan of Edward Jones, thank you so much. Have a wonderful weekend as we parse through all of these details and headlines. It's just sort of amazing how we are dealing with so many different issues in Washington, D.C., a lack of clarity, trying to understand. It could increase prices here or there. CFOs are getting big headaches. People in the market have confidence they can figure it out and they don't have to care about it.
The only certainty is that there'll be continuous uncertainty out of Washington. And I think it's going to be fascinating if we do have an extended shutdown. As we did in 2019, it was some 35 days, the longest in history under the Trump administration. What happens to the economic data? They need to decide that someone is deemed essential at the Bureau of Labor Statistics to literally put out the release. Because if not, we're not going to have the economic data. The market's not. And then, of course, the Federal Reserve.
Yeah, and if we're relying on jobless claims that we got yesterday, it's not exactly indicating a drastic need for accommodation. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Google is asking the U.S. Supreme Court to pause a ruling that would force it to overhaul its App Store policies. Google warned in a filing that without a delay, the company and its Android ecosystem will suffer irreparable harm. The move stems from its long-running antitrust fight with Fortnite maker Epic Games. Meanwhile, the Trump administration is weighing a plan to reduce reliance on foreign-made semiconductors. The Wall Street Journal reporting that the plan would require companies to eventually match imported chip volume with domestic production or face tariffs. Commerce Secretary Howard Lutnick has reportedly discussed the idea with industry executives. And as you and Anne-Marie have been discussing all morning, hedge fund manager David Einhorn is issuing caution on the massive waves of recent AI spending from big tech. The Greenlight Capital founder said the trillion-dollar build-out by companies like Apple, Meta, and OpenAI is so extreme that the eventual returns are highly uncertain, going as far to say that the high spending may destroy vast amounts of capital. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Up next, President Trump's tariff agenda.
We're doing well. Because of tariffs, we're doing unbelievable. We're making more money than we ever have made. We're going to take some of that tariff money that we made, we're going to give it to our farmers.
Former White House senior trade advisor Kellyanne Shaw joins us next. This is Bloomberg Surveillance. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Coming into a busy day of headlines from Washington, D.C., a relatively quiet day, except for in markets, we are all focused on what we get from core PCE out at 8:30 a.m. Eastern, about an hour and 15 minutes. Futures are going nowhere right now, 6663 on S&P, basically flat. NASDAQ futures lower just a touch. Russell 2000 down 0.2% ahead of that key inflation print. Under surveillance this morning, President Trump's tariff agenda.
We're doing well. Because of tariffs, we're doing unbelievable. We're making more money than we ever have made. We're going to take some of that tariff money that we made, we're going to give it to our farmers, who are, for a little while, going to be hurt until it kicks in. The tariffs kick into their benefit.
Here's the latest. President Donald Trump announcing new industry-specific tariffs targeting pharmaceuticals, kitchen cabinets, and bathroom vanities, upholstered furniture, and heavy trucks. Bloomberg's Tyler Kendall joins us now. Tyler, what details do we know about these tariffs?
Yeah, hey, Lisa. Well, it's hard to know where to start. When it comes to pharmaceuticals, it does appear that investors, at least, are betting that any sort of exemptions are going to soften the blow. And that's because President Trump said that if you are manufacturing in the U.S. or have plans to break ground in the U.S., there will be an exemption. And we know that many of these drug makers already have manufacturing plants here. Also, probably worth mentioning that the EU had confirmed earlier this morning that the U.S.-EU trade deal will ultimately shield it from this higher 100% tariff, and we're going to see that 15% cap remain in place. Still, our analyst estimates that this could hit about $220 billion worth of U.S. pharmaceutical imports. When it comes to the other tariffs, these were, of course, also widely expected. The one trend line that we can pull from all of this is that they're all going to go into effect on October 1st. It's also going to be worth mentioning here that these were widely expected. We knew that these Section 232 investigations had already been implemented, that the administration was looking into what they think are these key industries, particularly when it comes to national security concerns. I will quickly add that when it comes to those heavy truck tariffs, this is an industry that's already been squeezed by the steel and aluminum tariffs, so we're going to be looking for any sort of carve out there as well. But Lisa and Anne-Marie, you both were talking about this morning. Perhaps we're getting a little bit of a glimpse into the timeline here, because these Section 232 tariffs are considered to be a more durable legal basis, and the administration is currently gearing up for oral arguments in front of the Supreme Court on November 5th. We're getting closer to that date when it comes to the court challenge against the more broad-based tariffs enacted under IEEPA.
Tyler Kendall, thank you so much for that update. This person is the person I've been waiting to hear from all morning, former White House senior trade advisor Kellyanne Shaw, who joins us now. Kellyanne, thank you so much for being here. So what just happened?
Right. So a lot is the high-level point. Right. So we have had 12 ongoing Section 232 investigations, and the president announced 2 more earlier this week into robotics and med devices. So the 3 that he seems to have announced last night, so on lumber, on pharmaceutical products, and the other one are really just like clearing the queue. So right now, he was under a deadline to get the lumber and timber 232 out. He has a 90-day clock from when that report went from Commerce to the White House. And we had been hearing that that report had gone to the White House technically either at the end of June or the beginning of July. So my assumption is that when they sat down to decide on the final measures, and he announced those for furniture products and upholstered furniture, that they also considered these other ones on top of that. So we saw the trucks and the pharmaceutical ones get announced as well. So a lot coming out at once, but these are things that are really about clearing the queue.
How much is this also about the administration preparing for IEEPA to potentially be struck down in the court so that they have a backup to make sure that they still have tariffs in place for a number of sectors?
So I think that's a good question, but I really question the merits of using a 232 strategy to make up for a potential loss of IEEPA tariffs, in part because they're product by product and sector by sector, whereas the president's current tariffs are really country by country. And so I think it creates this very messy patchwork. So we obviously don't know what the administration's backup plan is, other than they have one if they do lose. But I would suspect that it looks something more like a 301 strategy rather than a 232 strategy, but it could be part of that as well.
When you look at the tariffs that were announced last night, pharmaceuticals pretty much give this nod of like, if you're still investing in America or put something in the United States, you're going to get an exemption. Is that how you read it? So pretty much, is anyone going to be tariffed in terms of pharmaceutical space?
So this is really the big surprise for me. I was not expecting to see the pharma announcement today, in part because I did not get the sense that the administration had quite figured out this investment credit model. So this is the model that he's talked about, both in terms of pharma as well as for semiconductors.
Yeah.
So trucks, again, were ready for some time. I think that the furniture one was obviously ready for some time. But there's a real question as to how this pharmaceutical one is going to operate in practice. And what about producers who are already manufacturing in the United States but import some of their supply? Do they get a tariff credit as well? It doesn't seem like it from that tweet.
Which is interesting because the market's viewing this as a positive. It actually is not the worst case scenario for the pharmaceuticals. They're almost trading as though this is a relief. Do you think that that is validated by the actual framework?
Well, it does seem like generics are going to be carved out. So for some pharmaceutical producers, this is a real windfall. This is a boon. I think when it comes to the branded pharmaceutical products, the devil's going to be in the details, and we're not really going to know until we see that final measure, that proclamation. But we could also see this extended a bit further, meaning we've got this announcement of 100% tariff unless you're building in America. What does it mean to build? Commerce may have to issue regulations, so that might take a few more months before we actually see the final result.
There's so many details, and there's so many processes that have to go into a place, not to even mention just collecting these tariffs and coming up with a way to do so and what the parameters are. To get this all done by October 1st seems like a tall task. Do you think it's feasible to get this all done and put into effect in such a short turnaround?
Well, deadlines can move mountains when it comes to Washington, so there's certainly a chance. But what I would say is for trucks, you've got this 25% across the board tariff for finished trucks. We'll see what they do with parts, which the president didn't announce. For lumber, timber, furniture, it seems pretty clear what they're going to do. I think the pharmaceutical one is going to take a bit longer for them to really figure out how to find the way forward on that.
Are there any other 232s we should be looking out for, or is he done?
The president is never done when it comes to tariffs. Certainly the semiconductor one is one that's been on the books for a while. The president has announced it's going to be 2 weeks, 2 weeks, 2 weeks. So that actually could be 2 weeks from now. I also think critical minerals is one that is coming up. We've heard that they've made significant progress on the drone one as well. So there's a few more, and then a bunch in the hopper.
And how are you thinking about IEEPA?
So we'll have to see what the court does. I think that everyone's waiting for this final decision from the Supreme Court. But what's clear is the president's still relying on IEEPA for his tariff policy, like the tariffs on Brazil, and potentially others, like Russian oil tariffs we could continue to see. So I don't think the administration's done using IEEPA.
There's a bit of a contradiction here. A lot of the executives and the investors who we have on the show talk about how there's a greater degree of certainty, that we've seen peak uncertainty, and companies have a greater sense of what the framework of tariffs actually is. Do you think that that's appropriate, given that the president, in your words, is never done, and that we are seeing new proposals added on top of the ones that already have been announced?
Well, I think it's a matter of degree and comparison. So we have a lot more certainty than we did, say, back in April and May, where we really didn't know what the tariff rates were going to be on basically any product from any country, right? This was this mass negotiation. I told you to grab a beer.
And certainty, yes.
Exactly. So now we're starting to see this clearing of, we have at least a 10 to 15% baseline for all countries. For some countries with elevated tariffs, those rates could come down. And then you've got sectoral tariffs where those rates are going to go up. So again, depending on the line of business you're in, the products you're importing, there could be big variations and big swings, but overall, the landscape does look much more clear.
I'm guessing you don't sleep much and that you get a lot of calls from a lot of clients saying, what is going on? What's their biggest concern right now? How high is their concern level about the uncertainty of what's to come and how to manage around it?
I think there's some uncertainty with the court case and what that might mean, and whether that means that there would be other types of tariff measures, what those would look like, the legal authority. I think there's some uncertainty in terms of the U.S.-China relationship, which is the big elephant in the room. We don't totally know how that's going to go and unfold. And then for countries where we have these huge tariffs like Brazil and India, we could see big swings there. But I think for companies that are largely transatlantic and some of these other more stable trading relationships, they're feeling less of that.
Let's end on China, because you're at the table for the phase 1 trade deal. What does the administration want to get out of this right now?
So right now we're in a tariff truce. It's not clear how far negotiations are going to go. I don't think there's an expectation of a broad phase 2 agreement. So it's really about managing the relationship, figuring out where we can trade, taking independent measures where we're not going to trade, which is largely going to be sensitive supply chains. And I think you heard from Besant earlier this week, it's about identifying mutual vulnerabilities. China clearly has a chokehold on the U.S. when it comes to rare earths and rare earth magnets. The U.S. is identifying aircraft engines and chemicals as potential chokeholds on China. So this is a dynamic relationship. I think it's more about maintaining the truce than making progress, but we'll have to see where this goes.
Former White House Senior Trade Advisor Kellyanne Shaw, thank you so much. We could spend an hour with you trying to figure out what's going on, and it's very helpful to understand what the moving parts are. It's a process, as you've said many times before.
It feels like treading water, though, when it comes to the U.S.-China relationship. This basically figuring out who has what leverage and where, and not wanting to poke too far.
Yeah, and it's going to be a tit for tat that will go on for longer rather than resume in short order. Coming up next, Richmond Fed President Tom Barkin, as the central bank shows signs of division. Plus, Danny Berger with your Morning Movers.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
To end the week on a high note, not necessarily just with mood, but also with futures. Futures trying to climb into the positive area, at least for the S&P. For the Russell and NASDAQ, futures are lower, but back from some of the earlier losses. Russell 2000 lower 0.2% because of the story in the bond space. Do we see a surprise to the upside in inflation that ties the Fed's hands when it comes to how much they can cut rates? 2 hours away from the cash open, here are your morning movers with Danny Berger. Danny.
Hey, Lisa. The winners in today's trade are the domestic chip manufacturers, with the Wall Street Journal story saying that the Trump administration plans to press companies and unveil a plan that would force them, or at least encourage them, to buy more chips from Intel, Global Foundries, those made in the U.S. You can see the rally underway for both those, up 4.3% for Intel. Global Foundries goes up 10.5%. A similar story unfolding in pharma. You were talking about this just moments ago, this idea that you would get 100% tariffs from the Trump administration unless, on patented drugs, unless you are building factories in the U.S. So we've seen plans from Eli Lilly, for example, and Merck to build those factories in the U.S. So Eli Lilly, Merck, AbbVie, all of those shares moving higher by around 1% this morning. Meanwhile, Costco, they reported earnings after the bell yesterday. You're looking at a 2-day chart of Costco for some reason. In the morning trade, it is slightly higher. They beat on basically all the metrics. There's some nerves around Costco when it comes to things like tariffs. They did say they were going to take steps to try to mitigate that. They would consolidate some of their purchases and try to look for locally sourced inventory. But they did say that they're going to concentrate their holiday season on more value and essential-oriented products, just giving you a taste of where the consumer stands, Lisa.
The choiceful consumer, as we keep hearing about. Danny, thank you so much for that. On our radar this morning, President Trump announcing new tariffs on pharmaceuticals, heavy trucks, and furniture imports effective October 1st. Companies would see 100% levies on patented drugs unless, and there's a pretty big unless, they are building a manufacturing plant in the U.S. Meanwhile, President Trump signing an executive order declaring the plan for American investors to buy TikTok's U.S. operations complies with national security requirements. Officials setting up a potential value for the social media app at $14 billion. Emery, it seems like the president's really busy right now between brokering a deal with TikTok and potentially putting new tariffs on. What I'm struck by is that all of these things are working at the same time that the Supreme Court is potentially going to overrule the IEEPA tariffs. What do you think the market's reaction would be to that?
Well, this is a good question, because this also could be why Trump is coming out with more of these sectoral tariffs. And then to Kellyanne's point, he might have to do 301s as well, not just 232s. Because what if the court does say that using IEEPA is illegal? What happens to all these billions of dollars the administration is touting that's coming in to potentially bring the deficit down? I think the market then is going to question the credibility of all the policies. If this policy that all these negotiations with all these countries are surrounding upon is illegal, then what else potentially is illegal and might never actually come to fruition?
And from a market perspective, the idea of not getting the $4 trillion of revenue over 10 years would really change the backdrop for long end of the yield curve. The idea that yields have rallied on the heels of that potential income. What happens if that gets removed or has to get paid back?
Well, this is the Treasury Secretary's entire point as well. This is impacting even current negotiations as well, and it's going to impact this money that's being brought into the United States, to your point, what it's doing to the bond market. And then I think the market just takes a step back and just looks at saying, now I have real policy uncertainty, because every single policy that comes out, do I just feel numb and look through it? Is it even going to happen, or do I need to actually take it as a tangible risk?
Adding to policy uncertainty, Dallas Fed President Lori Logan saying the central bank should replace its benchmark federal funds rate. Logan arguing the Fed funds target is outdated and suggested the TGCR, a more widely used market bellwether that she says could offer the most benefits. A fascinating story that a lot of market participants have been arguing for a long time, the idea of a tri-party collateral system, that being something that is more accurate and has a much higher degree of volume on any given day. Sticking with the Fed, we are just under an hour away from fresh inflation data. Bloomberg's Michael McKee joins us from Washington with a very special guest. Mike, I'll throw it to you.
Well, thank you very much. Joining us this morning, Richmond Fed President Tom Barkin here on Bloomberg Television and Radio Worldwide. And on radio, they can't see it, but on television, people can see you have a bit of a bandage on your head. You just had one of those older people's kind of operations.
Yeah, there's no truth that it was what happened in the last meeting.
All right. Speaking of the last meeting, we came out of that believing that, or at least Wall Street, that you're going to cut rates again in October and maybe in December. But since then, we've gotten some numbers that show GDP is hotter, inflation is still running hot, and the jobless claims numbers suggest companies aren't laying anybody off. So should we have less confidence in the path going forward?
Well, I don't think you can mark to market the next meeting every week, even though that's what the markets do. I mean, let's see what happens on the unemployment side. We'll get some important data in a couple minutes here on the inflation side, and I think we'll get there when we get there.
Well, the majority seem to believe, at least according to what the chairman tells us, that inflation's going to be a one-time rise in the price level. Then overnight, we got a bunch of new tariffs, as you just saw, on a lot of different things from the president. How much confidence do you have in any kind of inflation forecast at this point?
Not much. I mean, what I definitely see happening is there are cost increases that suppliers want to pass on. There's no question about that, and tariffs are a big part of it, but you could put health insurance and other places, other costs in there too. But those costs are going to attempt to get passed on to a consumer who's frankly exhausted of price increases. And so, we're seeing a lot of trading down, branded to private label kind of choices, but we're also seeing people trade off. And it wouldn't surprise me at all if people who are forced to accept certain price increases, therefore don't buy something else on the other side. And that's your classic relative price trade-off. And that may mean that you won't see as much broad-based inflationary impact as you'd see, price increases on particular items. We'll see.
And yet you get PCE in an hour, and basically you've already calculated the numbers. Inflation's not moving in the right direction. So can you still justify, or how long can you justify cutting rates in that environment?
Well, we have inflation moving in the wrong direction. Unfortunately, we also have unemployment moving in the wrong direction. And that was the backdrop of the last meeting. You have to ask yourself, how are the risks still the same as you saw them 2, 3, 4 months earlier when you had unemployment in the right direction and inflation in the wrong direction? My overall thesis, though, is that while it's not, ticking in the right place, the downside's relatively limited. I see the inflation downside is limited by this customer pushback that I just talked about. Also productivity, which I think is, we're seeing that at real scale. And so that means there's less pressure to pass costs on. And then on the unemployment side, obviously labor supply is dropping at the same time as labor demand, and that's keeping the unemployment rate relatively balanced. And that's the combination of immigration and revocation of temporary status. Also, our generation, Mike, which is leaving the workforce. I mean, you're seeing 1.3 million more people over 65 out of the workforce every year. And so you've got less labor demand, low hiring, low firing environment, but you've also got less labor supply. And that probably means that the unemployment rate increases are going to be relatively limited.
Well, at least you and I are still employed as of today.
Well, we'll see how this interview goes.
You suggested that companies in your district are beginning to feel a little bit better, or at least some of the uncertainty has come off of their planning and their thinking. Are these kind of big new tariffs that we got today just going to change that mind? Has the idea that ongoing tariffs and ongoing disruption are going to be part of this administration and economy, is that in their planning?
Well, I've been describing it as a fog that's created uncertainty. And I definitely think in the context of the last couple of months, the fog has started to lift. Businesses don't know exactly what the tariff will be on their sector necessarily, but they kind of have a sense of the range. People aren't really following the news every day, the same way they were back in April. And a lot of businesses I talk to say, look, I've just got to do something. I've got to take action. I can't be on the sidelines forever. So I am seeing people more in the game. Now, if you're in a particular sector where you see a new announcement, of course, that's going to set you back. And so, what I say about businesses in general is not true of businesses in every sector. And so there's sectors with a lot more clarity and sectors with a lot less clarity. And that's, I think, just going to be part of the game here.
This morning we had an investor on who basically said markets are rising because of the idea that a year from now rates will be substantially lower. Is that the right way to look at it, the wrong way to look at it?
Oh, I wouldn't know how to think about, how markets ought to rise or not rise. I mean, we're very much focused on trying to land the plane here and balancing inflation and unemployment. As I said, I think both of them have ticked in the wrong direction, but on the other hand, the downside is limited, and we're just going to have to, adjust our stance as we learn more.
Well, where's your dot? What are you thinking in terms of the next couple of meetings and then for 2026?
Well, I really like the dot process for me because it forces real integration of your thinking in terms of where you think the economy is going, where you think policy is going. But I don't have it as a forecast prediction. It's not something I like to talk about publicly because it adjusts. We do mark that dot to market as things go. So, every meeting for me is one where I want to stop and look at the balance between how we're doing on the inflation side, the unemployment side, and make the right decision.
Well, the story around the Fed this week has been, shall we say, the debate over where the neutral rate is. Where do you think it is, and how fast would you want to get there?
Well, I've seen a lot of the stuff that's been in the press, and we're studying that. And, I always try to understand all arguments and figure out how to integrate them into my thinking. I'd point you to the Richmond Fed neutral rate, the Lubric-Mathis model. It takes a lot of signal from what you see in the real economy. And in the real economy, over the last couple of years, what you've seen is interest rates go up and the economy stay relatively healthy. And so that model has a relatively high neutral rate because it takes a lot of signal from the current environment. Now things can change, but that's where the Richmond Fed model is right now, and I'd point you to that.
What number do they have? Where are you?
It moves around based on what's happening in the economy.
Well, that gets to the next question. Is Chairman Powell saying that you really don't want to target the neutral rate because it moves around? Also saying that for any voter to really move things around, you have to be incredibly persuasive. Do you find Stephen Myron's arguments persuasive?
Well, I'm looking forward to digging into them with my team, and I like every voice in the room and every argument in the room. That's what we do as a discipline, is we sit down and try to take those arguments apart and figure out which parts of them really resonate with the way we think about things and which parts don't. We're looking forward to doing that.
Is it
on the neutral rate? In general, I just want to agree, it's not that useful as a operational tool. The models out there, even the one that I talked about, have a confidence interval of about 200 basis points. And so you could say it's 3, which is around the SEP median. You could say it's 3.5 or 2.5. But if you add a 200 basis point range to it, you say that's not that helpful for making operational decisions on monetary policy. What is more helpful, and the reason I favor the model we've got in Richmond, is how are you seeing the economy react real time to the level of rates you've got in the market? And if you see it weakening, that's a signal that maybe you've got it too high. If you see it relatively strong, that's a signal the other way.
Lori Logan went to Richmond to announce her idea of changing the operational rate for the Fed. What do you think of that?
Well, I appreciate Lori making the trip. We had a balance sheet conference yesterday that was very well attended, and I thought lots of thoughtful papers, including hers. And I thought she made an extremely articulate, well-reasoned argument, and I'm looking forward to digging into it further.
You anticipate the Fed making a change?
Oh, I don't know.
The Supreme Court, if it allows the president to fire Lisa Cook, what does that mean for the Fed?
Well, the judicial processes and political processes will operate however they operate. What I do every day is show up and try to argue for the best monetary policy we can and make the case, as you said, in a persuasive way to my colleagues, and that's what I'm going to continue to do.
Well, let's leave it with this. What is the best monetary policy right now? Continued rate cuts, or do you not know at this point?
I think you have to be very adaptive to what's playing out here. The world I've described is one where the labor market is weakening. It's a low hiring environment, but the labor supply is also short. And you have to be very attentive to that balance because it could get out of balance, right? Similarly, on the inflation side, you do have these cost pressures and 4.5 years of inflation over target. On the other hand, you're not seeing that show up in spikes in inflation in the real-time numbers. We are seeing what seems to be a productivity boom. And so I think you have to be very attentive to how little we know about how each of our mandate variables is going to play out. And so, you know, I feel like very adaptive is the way to think about it, as opposed, and that's part of why I'm not being prescriptive into, oh, it's this many cuts over this period of time, because I think we're going to see and learn a lot as we go here.
Tom Barkin, thank you very much for coming up to Washington and joining us this morning here on Bloomberg. We're going to send it back to you.
Bloomberg's Michael McKee, thank you so much. Wonderful interview with Tom Barkin, the head of the Richmond Fed, with a very adaptive posture. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. European diplomats warned the Kremlin that NATO is ready to shoot down any Russian fighter jets that violate their airspace. Sources telling us here at Bloomberg that British, French, and German envoys issued the warning in a closed-door meeting in Moscow. The move comes after 3 Russian fighter jets entered Estonian airspace last week, a claim Russia denies. Meanwhile, Boeing shares are slightly higher in the pre-market, up 0.75% after the plane maker landed one of its biggest deals of the year. Turkish Airlines has agreed to buy as many as 225 Boeing jets in a deal that could exceed $22 billion. The accord followed the bilateral meeting between Turkish President Recep Tayyip Erdogan and President Donald Trump. And a Chicago court has ruled in favor of United Airlines over valuable gate space at the city's O'Hare International Airport. United's rival American Airlines had requested to block United from expanding at the airport, which is the only dual hub facility in the country. The judge ruled that American failed to show it would suffer harm from the reallocation of gates. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. But are they going to upgrade O'Hare? I'm sorry. I actually feel very strongly about this, having spent a lot of time in Chicago.
This is personal.
It always ends up being a little bit personal. Up next, weighing risks to the economy.
My view is not one of enormous economic pessimism. You know, I don't think the economy is about to crater. I don't think the labor market's about to fall off a cliff. However, the neutral rate is drifting down.
Winnie Caesar of Credit Sites joining us next. This is Bloomberg Surveillance.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are gonna kill everybody. So we gotta figure this out. And we're not gonna do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Feeling a little more positive as we get closer to the open. Right now, we are looking at a bit of gains across the board, except for the Russell 2000, still pegged to this potential inflation print that we get in about 45 minutes time. Elsewhere, just seeing some of the session highs, even with some of the concerns out there from tariffs to economic sluggishness. Under surveillance this morning, weighing risks to the economy.
My view is not one of enormous economic pessimism. You know, I don't think the economy is about to crater. I don't think the labor market's about to fall off a cliff. However, the neutral rate is drifting down. And as a result of that, it's incumbent upon policy to adjust in response. And the longer that policy stays excessively restrictive, the greater the risks to the downside for the economy.
Here's the latest. Fed Governor Myron highlighting risks to the economy if the Fed doesn't move quickly to cut rates. With less than an hour until that core PCE print is released, Winnie Caesar of Credit Sites writes the following. If payrolls continue to come in around recent levels, we see the U.S. unemployment rate rising to 4.5% by year end, which would mark the highest level ex-pandemic since 2017. Winnie joins us now. Winnie, great to see you. Thank you for being with us. There are these 2 risks to the economy right now, a potential reacceleration that could prompt inflation to run hot, or some sort of deterioration, which has a lot of people concerned as they look at the labor market and some of the recent payrolls reports. You're on the more cautious side about the economy. Why?
Good morning, Lisa. We are on the more cautious side, and I think that a lot of it comes down to seeing that the consumer feels like they are running out of steam, while at the same time, corporations, small businesses are facing a wide mix of pressures that are going to make margin expansion gains much harder to come by and probably put incremental pressure on margins. And when we put those things together, it likely will lead to continued softness in the labor market and continued softness in consumer spending and expectations. And that's where you get into a really challenging cycle overall.
Well, this is a challenging cycle because some people are spending and some people aren't. And the people who can spend are the ones propping up the spending reports that we're probably going to get in about 40 minutes' time. At the same time that you get CarMax reporting earnings and highlighting a deteriorating credit backdrop for lower income individuals and people looking to buy cars. Why are you more focused on the CarMaxes of the world and less on the high flyers, the luxury flyers that say United?
Yeah, that's a great point. And that bifurcation in terms of the type of consumer spending has really been something that we've been focused on for many, many years. But I think the big takeaway is if we are continuing to get contraction in some of the lower income, middle tier consumers, there is the risk that that continues to kind of leak up the income spectrum. And And at the same time, as we're thinking about how companies are going to be managing margins, we do have some concerns about some of those higher income jobs being at risk. And then when you factor in also some of the relative softness that we've seen in the housing market as of late, those mix of factors make us a little bit more cautious on the consumer as a whole relative to those segments of consumer that have been weaker or stronger.
But Winnie, looking at the unemployment rate, 4.5%, how difficult might it actually get to ticking up to that, given the fact that there is also a supply issue when it comes to the labor market, the fact that it's dwindling?
Yeah, this is a great point. And when you run the math, if we had a labor participation rate that currently was the same as the beginning of the year, it's fallen over the course of the year, we'd actually be around a 5% unemployment rate already. So that supply side labor dynamic has been really impactful in terms of unemployment overall. You know, Feds of years past would have seen 4.5% on the unemployment rate and been celebrating or cheering, whereas you have to think about, okay, we have an aging economy, we have some demographic headwinds relative to people retiring and dropping out of the workforce, we have immigration policies that are changing quite significantly, and as we think about the unemployment rates, you know, that's just one factor. If we have fewer people in the labor market who are, you know, kind of productively contributing to the economy, that also has some impact and a domino effect on things like spending and consumption. So all of these things are very related, and it's important to not just put too much stock in that one, you know, 4.5% is not a terrible level in a long-term historic perspective.
You need the context around it in order to really understand why that 4.5% is actually worrying. So what do you expect the Fed to do with all of this?
Now, the Fed is in a sticky spot, right? And I think as it relates to markets, markets want policy stability and they want policy clarity. What we've seen over the past couple of years is as the Fed is kind of preparing to cut rates, markets are really strong, right? They like that stability of policy, the relative low volatility environment for rates and also equities is very supportive overall to markets. So I think if the Fed just kind of continues to sit on their hands and message a expectation that, you know, we're ready to continue to ease policy if the data are within that realm of it is appropriate to ease policy, markets are going to react favorably to that, mostly because of the technical. Now, where we get worried is the longer you wait and the longer you wait, that increases the risk that the economy is going to break one way or another, because the aggregated data do tend to mask some very specific trends that are lingering below the surface that could be more detrimental or more positive as well.
Winnie Caesar of Credit Sites, thank you so much. It is a complicated moment and one that we will continue to analyze. Look forward to speaking to you again. Right now in markets, you can see people analyzing it saying, well, maybe this is a buyable dip, because ultimately it seems as though the AI cycle is one unto itself. Coming up next as we head to that core CPE print, Victoria Fernandez of Crossmark, Greek Prime Minister Kyriakos Mitsotakis, former St. Louis Fed President Jim Bullard, and Ryan Wang of HSBC. This is Bloomberg Surveillance.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azar. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
We think inflation is going to continue to move lower once we get past this little bump related to tariffs.
The pass-through of the tariffs into inflation has just been a lot slower than what I'd expected.
Tariffs are going to increase prices.
I don't think that we should be pulling our hair out that inflation is about to take off again.
If inflation starts accelerating, I mean, you can't rule out that they skip December.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. 30 minutes away from key inflation data. We get core PCE income and spending coming out in about 29 minutes time. The market may be shrugging off what's going on in Washington, D.C. with more tariffs being announced and a potential shutdown. But traders are hinging on every hint of what a cutting cycle could look like from the Federal Reserve, with really inflation front and center in terms of how much, Anne-Marie, is going to tie the hands of Fed officials.
But I still come back to what Powell said at Jackson Hole and reiterated again this week, the fact that we might have one-time price adjustments, but they might not be all at once. Basically, is he giving everyone the green light just to look through, even if today we get a hotter PCE print?
So the way it's going to go today is we get that core PCE print as well as spending, personal spending. How much does that continue running hot, especially given what we saw yesterday in terms of personal consumption with the GDP and how much that drove an upgrade to what we saw in recent months. We're also going to be getting University of Michigan sentiment survey, which will be interesting. And I know you can say it's got some hair on it, but it speaks to this question of how much are consumers starting to increase their inflation expectations. And then we're also going to hear from Mickey Bowman on the Federal Reserve. I think you're right, Anne-Marie, to bring up this idea. What's the reaction function from the Fed? We don't know. We don't know how far they're willing to look through this. But right now, after seeing a heavy one-way trade of yields downward, we have seen them creep a little bit higher ahead of what could be just a little bit more of a hot print.
But we just heard from Richmond Fed President Barkin. Tom Barkin talking about really only limited risk of further deterioration on both fronts, and that they're just now trying to basically land this plane. He didn't seem that concerned. And when Mike McKee kept asking about, are you concerned about the tariffs? He said, broadly, the tariff fog has lifted and companies have more direction. At the same time, just hours ago, the President of the United States unleashed a slew of new 232 tariffs when it comes to a number of different sectors in the United States. So it is really difficult to see how actually the fog has lifted. Maybe writ large, we have the direction of travel and there's an understanding from companies in the markets, but as Kellyanne Shaw said, the president's never going to be done with tariffs.
Well, the fog has lifted, at least for stock traders, as you see, heading into the open. A little bit more of a positive tilt across the board. S&P futures have been flat all morning, clawing back from some earlier losses. NASDAQ also has been clawing back near session highs now on both fronts. S&P futures up about 0.1%. Meanwhile, what we are seeing is dollar strength, at least yesterday and the day before. Today, a bit of euro strength as it really toggles around this 116 level. A question of how much the sort of one-way weak dollar trade will get reversed if we do get ongoing strong data that questions just how far the Fed can cut. And yields just marginally lower with the 10-year 4.16%. Again, not a lot of concern about the Fed losing enough credibility that could lead to some sort of runaway inflation. Coming up this hour, Victoria Fernandez of cross-market stocks look to get back on track. The Prime Minister of Greece, don't miss this, Kyriakos Mitsotakis, as the UN General Assembly is winding down, and former Fed President Jim Bullard as we break down the latest inflation data. We begin this hour with stocks looking to snap a three-day losing streak. Victoria Fernandez of Crossmark writing, sentiment is leaning toward an extreme level, but we aren't there yet and anticipate markets moving higher in the near term. Victoria joins us now. Victoria, we had 3 straight days of losses. Keller, is this a buy the dip moment?
It seems like every pullback has been a buy the dip moment this year. And I think this is probably a good opportunity as well, but not across the board because we've lost some of that underlying momentum in the equity market. So I don't think you can just go in and say, let me buy everything. But I do think there's sectors that where you can be opportunistic, where you're seeing some of those really strong trends. Those are tech, it's financials, you're seeing it in industrials. You're just starting to see a trend. Strength in energy. I wouldn't say go in and buy yet, but watch that. That could be a place where you could add. But the defensive part of the market, the staples, the healthcare, they just continue to do poorly. So I'm not sure I would add there, but there are some opportunities.
Victoria, how much do you lean into this idea of a K-shaped recovery, or as Peter Scheer called it, an I-shaped recovery with the dot on top and everything else on the bottom? This idea that personal spending is hanging in there, but largely because of the upper 10% of income earners, and that they keep spending even as you see spending power in the lower income brackets really deteriorate. How much can you just sort of concentrate your investments, putting aside social implications, et cetera, on areas that benefit from that while fading into some of the areas more leveraged to everything else?
Yeah, Lisa, I don't think you can look at it exclusively from the consumer. Yes, the consumer drives the economy, but there's a lot of nuances. You were talking with the previous guest about the bifurcation between the higher income earner and the lower income earner. What's interesting is, yes, higher income earners right now are still spending because the stock market's high, because housing prices are high. But remember, come spring of next year, we have about $150 billion of additional stimulus coming from tax credits, child tax credit, the SALT deduction will be adjusted. The standard deduction is being adjusted. That's a lot of stimulus coming in that's going to benefit the lower income consumer. And they are more willing to spend their additional dollar than the high income consumer, who actually saves a lot of those additional dollars that comes in. So I think what it does is it stretches out this timeline where we're going to see consumption continue to do well in the near term, because high-income consumers are doing well, because corporations are not firing as much as a lot of people anticipated. It's the holiday season. Then we've got the stimulus coming in next year. So I think there's a lot of elements here that can serve as tailwinds to the consumer. But once all that evaporates, we have to wonder where we'll be. And that's the part that makes us a little nervous.
Well, Victoria, also the president overnight announced more tariff rates. At the same time, we just heard from the Fed's Barkin, who says that the consumers are exhausted by price increases. Do corporations have the power to continuously pass on price increases to the U.S. consumer?
Yeah, you know, Anne-Marie, it's interesting because we haven't seen those prices flow through to consumers as much as we anticipated we would, but yet you're not seeing margins compress for these corporations. Look at margins expectations for the next quarter, this earnings season, 14%. So if margins are holding up, then I think corporations are okay to hold prices somewhat level. Will they increase a little bit? Probably. But I think a lot of that has to do with the fact also that we haven't seen a lot of the more expensive inventory come in yet. So maybe that cost of goods sold goes up over the next couple of quarters, and then we start to see the adjustment on the corporate side. And I don't think they're going to be able to push all of that pricing through the consumer. That's when the consumer says, we're done, we're pulling back.
There's also this question about whether policy is legal or not. The court is still going to decide on whether or not the president can use IEEPA to enact the broad-based tariffs when it comes to countries. Lisa was asking a great point earlier. How is the market going to react if the Supreme Court says using IEEPA is illegal?
I was reading an article yesterday, and they had a great line that said the Supreme Court is not deciding if tariffs are going to be put in place, but how they're going to be put in place, because the administration already has backup plans lined up in order to put tariffs back in place. Section 232, those are legal. That's what we saw last night with some of those elements coming in. And some of the other ways that the administration could put tariffs in gives you a 10-15% limit on tariffs, which is kind of where we ended up for a lot of countries anyway. And I think that might have been part of the plan for this administration, knowing that they could get a negative reaction from the Supreme Court on this. So there could be some volatility in the markets around it, but I think looking out, tariffs will probably remain, but there might be some volatility in regards to how they get implemented. I don't think we're going to have to see a large amount of refunds go out. I think the Supreme Court realizes that would be quite detrimental to the economy.
Before we let you go, Victoria, this used to be a really data-dependent market that hinged on every potential move from the Fed, as much as fretting about what happened in Washington and D.C. and then deciding to ignore it. I'm just wondering, about 20 minutes away from that core PCE print, where do you think the bias is in terms of markets right now? How offsides could it be if there is an upside or downside surprise?
I think it really depends on the magnitude of the offside. If it's just a little bit, a tenth or so, I don't think the market frets too much. They believe the Fed's going to continue to lower rates, and that's what they're moving forward with. If it's a larger upside surprise, then I think the markets start to worry and say, wait a minute, maybe we don't get 2 more cuts, which I don't think we get this year anyway, but maybe it also affects what we're looking at for 2026 and where that neutral rate's going to be. So I think it would have to be a pretty large difference for the market to really have a strong reaction.
Victoria Fernandez of Crossmark, thank you so much for that. Have a wonderful weekend. Right now, I do want to bring to you some news. Boeing is supposedly getting the FAA okay to do final safety checks on the 737 MAX. This being reported, Anne-Marie, by the Wall Street Journal.
Yeah, and then that would mean lifting the cap on Boeing 737 MAX production, easing those restrictions from the FAA. And we saw immediate move in Boeing. This is a huge sign of relief for the company, for management. Of course, the stock now up more than 3% this morning.
Yeah, we'll be following that with a vote of confidence from a lot of the airlines as well in terms of getting their production back online. Right now, let's get you an update on stories elsewhere this morning with your Bloomberg brief. President Trump announcing a fresh round of tariffs. The administration is imposing a 100% tariff on name brand pharmaceuticals. That is effective October 1st, unless producers build manufacturing plants in the United States. New duties will also hit imported heavy trucks and furniture. President Trump promising not to allow Israel to annex the West Bank. When asked about Israeli leaders suggesting seizing control of parts of the territory, Trump saying, quote, "It's not going to happen." This comes ahead of Prime Minister Benjamin Netanyahu's visit to the United States next week. And lawyers for Fed Governor Lisa Cook asked the Supreme Court not to allow President Trump to immediately remove her, saying the move would, quote, sound the death knell for the central bank independence. The administration has asked the court to permit the president to remove Cook while litigation continues over the legality of her firing. That is your Bloomberg Brief. Up next, the Prime Minister of Greece, Kyriakos Mitsotakis, as the UN General Assembly is winding down. Do not miss that conversation. This is Bloomberg Surveillance.
Day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Good morning. Welcome back to Bloomberg Surveillance. Right now, markets trying to claw back after 3 straight days of losses, a bit of a lift in the S&P and the NASDAQ. A really important conversation. Let's get right to it. Bloomberg News editor-in-chief John Micklethwaite is standing by with a very special guest. John, I'll send it to you.
Lisa, thank you very much. We have Kyriakos Mitsotakis, Prime Minister of Greece, here with us. We'll jump straight in. A lot of movement on Ukraine this week. You've had Trump saying stuff about it. You have various NATO allies getting cross about the fighter jets incursioning into their territory and warning Russia about it. You even had Germany coming forward and saying, let's use the 140 billion euro frozen assets to help Ukraine. Now, you have always been a kind of champion of this idea of having a common European fund for defense. And you've always had pushback from the Germans on that. Do you think now it stands a chance of going through?
Well, thanks for having me, John. I've been advocating for quite some time about the need to create some joint European borrowing facility to cover what I consider the quintessential European public good, which is common European defense. And I do sense that there is much more momentum now amongst my colleagues. Some of the countries that were inherently against the idea of additional further joint borrowing have changed their mind. And I'm pretty sure that Germany will eventually also agree to this necessity. And we need to make sure that this facility finances projects of common interest. And I would put missile defense, drone defense, right up there in terms of our collective European priorities. So I would expect some movement soon. We have 2 European councils, and hopefully we can make progress towards that direction.
Just looking at the economy at the moment, the Greek economy has been doing very well, as no doubt you will tell me, but in 2024, you forecast a deficit, and then you ended up with a surplus. And this year, you're again forecasting a deficit, but it's quite close to the end of the year. I wondered if now you're close enough to say this year you'll end up with a surplus again for the government.
We've been producing significant primary surpluses, and I think it's quite possible that we may have a real surplus again this year. This is a foundation of our economic policy. We've suffered a lot from not being fiscally disciplined. This is not going to happen again. But I think the big success of our policy is to ensure that the economy is growing at the same time, that to create jobs. We've created 500,000 jobs since I became Prime Minister. And the real goal is to ensure that this collective wealth is spread equally. So my focus now is to use whatever fiscal space I can create through growth and tackling tax evasion to cut taxes for the middle class. It's important for me that this discussion is not just limited to the economists saying good things about the economy. I want the average Greek to really feel a tangible benefit from this growth story. And starting January 1st, when these tax cuts will kick in, they will see a real increase in their paychecks. And this is very, very important to me.
Just come back to the average Greek in a second. You just mentioned fiscal discipline. I mean, you look at the core of Europe. I sat down with Prime Minister Sanchez of Spain the other day as well. Something dramatic has changed. You know, Greece, Spain, you're the countries growing really fast. In the middle, you've got countries in much greater trouble. You look at France, you're growing at over 2%. They're struggling to get to 0.5% of growth. Their debt is ballooning. Are we now in a situation where you would worry about financial contagion from France?
This seemed inconceivable a few years ago. What I can tell you is that eventually no one can beat the markets. We know this very, very well. And I do think that at some point governments have to take difficult decisions to put their fiscal house in order. We've done that. Once you do it, then you can enter into this virtuous cycle where you can actually grow the economy, you can cut taxes, you can support income through targeted measures. We're there, but we also went through very, very difficult periods and very painful reforms. So I do hope that the political situation in France somehow stabilizes. It is important that the core of Europe, France, Germany, that these economies are doing well. Look at, I mean, we will receive 36 million tourists this year. Our tourism industry is booming, but if our core markets don't do well, we will also at some point indirectly be affected.
You're a famously polite man, and I know that Schadenfreude is not a Greek word, it's a German one, but there must be some element in Greece of looking at these people who nearly pushed Greece out and thinking, well, things have changed.
Well, things have changed, but at the end of the day, this is not about pointing fingers or about saying that you were wrong and we were right. It's about ensuring that Europe collectively grows. I'm disappointed by the fact that when I look at the Draghi report, we have not made significant progress. And I think it's time that in Europe we usually wear two hats at the Council. We wear our European hat and we wear our national hat. And it seems to me that for some countries the European hat seems to be shrinking. So we have to look at the big picture. Some of the decisions that we need to take require more funding. It's pretty clear. And we need to put our European interest not necessarily ahead of our national interest, but to realize that some difficult decisions need to be taken at the European level.
One of the areas where Europe has been pretty useless at doing these things is banking, the banking union and things like that. Italy's UniCredit has built up a stake in Alpha Bank, which you were famously much more relaxed about than the Germans were when they built up one in Commerzbank. Would you be prepared if they were to take over Alpha Bank? Would you be relaxed about that?
If we really mean what we say about creating scale in banking union, we should be open to these types of transactions. I see value when an important foreign bank wants to acquire a stake in a Greek bank. It means they believe in the potential of the Greek economy. And it means that the bank could possibly do better. I'm pushing my banks to extend more credit to mortgages, to small, medium-sized enterprises. The stronger their balance sheet is, the more likely it is that they will do. So yes, in principle, we are in favor of these transactions. And I'm happy that UniCredit has decided to look at one of our Greek banks and take a significant stake.
Isn't that, but as you said earlier, that's the kind of problem with Europe at the moment. Most people are taking these decisions on, I suppose, purely nationalist or that kind of level. You look around Europe at the moment, the ability to create common things like a banking union, that's the real problem at the moment. Yeah. Do you think that is something coming from Brussels or from the national capitals?
I think most of the important, if you want to understand what's happening in Brussels, look at the national capitals. I think the Council has become more complicated in terms of taking decisions, but on the other hand, in the past, I mean, we took a momentous decision when we had to address COVID. Is Ukraine a geopolitical COVID moment? I would argue, to a certain extent, yes. And I remember the COVID fund negotiations. There were a lot of countries, including Germany, that said no until they said yes. So when it comes to defense, which, as I said, is the ultimate European public good, I do expect that we will be able to take important decisions to target specific European projects, which would then again require European collaboration.
You talked a bit earlier about the average Greek. I was looking at the numbers. Greek GDP has come soaring back, but it's still roughly the same level in nominal terms as it was before the crisis, a bit lower in real terms. Is that still, do you think Greece has now been through that phase and it's now the terms of looking forward to a different form of Greece?
We have clearly turned the page, but as I said, if we want to converge with Europe, we need to grow faster than Europe. We've been doing this, but this growth needs to be qualitatively different. It needs to focus on investment, on innovation, on exports, on creating really valuable jobs. And my main goal is to ensure that wages increase, that we have wage convergence with Europe, and that we support disposable income at a time when all European economies are faced with a cost of living crisis. I mean, and the only way to address this is to ensure that we support disposable income, but we have to do it in a fiscally sustainable way. That's what we have done so far. We will continue doing it. I do expect that next year we will again, perform very well. So I tell my fellow Greek citizens that I think the best days are ahead of us and that this is a policy that will deliver long-term benefits to them.
You have elections coming up in 2027. The polls at the moment say you might have to go into coalition with people. You've won 2 terms. I think you'd be the first person to get a third term if you did. Would you be prepared to go into coalition if
well, look,
it reached that?
Elections are 18 months ahead, 18 months out. We are way ahead in the polls. Our goal is to win an absolute majority. We've done it twice. There were people doubting that we would succeed before the previous elections. I think that if we deliver on our commitments, and if the economy continues growing, if we work hard to improve the National Health Service, these are the priorities I set out in 2023, we have a reasonable chance to win an absolute majority. But if the Greek people decide otherwise, it's eventually we have to respect their decision.
We will look forward to following you through that. Kyriakos Mitsotakis, thank you very much for talking to Bloomberg.
Thank you. Thank you, John, for having me.
Bloomberg News Editor-in-Chief John Micklethwaite, thank you so much for that terrific interview with the Greek Prime Minister, Kyriakos Mitsotakis, talking, and really to me this stood out, Anne-Marie, the idea that for several real years running, the Greek government has said that they are going to end the year with a deficit, and each year they were sandbagging, and they ended with a budget surplus. And what the Prime Minister just said there is it's highly likely that they will once again this year.
Isn't it so interesting, too, also how the tables have turned a lot in Europe since the debt crisis, and it was the periphery that was really on the back and struggling. But actually what we've seen is there's been a tremendous amount of investment, tourism, actually going to the periphery, and really the big issue right now in Europe is China coming in and hollowing out the industrial base, and most notably, that is happening in Germany.
Yeah, and that is a story that we will continue to follow. We are just minutes away from the latest round of PCE data, which is set to cross core PCE plus personal income and spending. A real question here about whether that will hamper some of the Fed's ability to cut rates more aggressively. We'll also be speaking with former Fed President Jim Bullard to discuss what we just saw. That's coming up next. Right now, markets getting a bit of a bid after 3 straight days of declines. Trying to break that. Do you get a sense of some sort of push? This idea that inflation is coming in just enough to give the Fed the green light to go ahead 2 more times this year. This is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Less than 30 seconds away from a core PCE reading. We are expecting an increase of 0.2%, which is below where we were the previous month of 0.3%. We're also going to be getting personal income, personal spending heading into that. Stocks up across the board, building as we get closer to the opening bell. S&P futures up 0.2%. Expectation the Fed will be green-lighted to cut rates. The latest inflation data about to cross with Michael McKee in Washington, D.C. We are still waiting on some of those numbers. It does seem like the market expects the Fed to look through, Mike, any potential bump up in inflation, even if we do see that.
Well, the markets are basically not expecting a huge change, and we don't really get a huge change, although the PCE price index for the month of August is up at 0.3, which is, as forecast, a little higher than it was last month, puts the year-over-year rate at 2.7%, just as forecast, and the core rate comes in at 0.2, same as forecast, a little lower than last month, and that leaves us at 2.9%. So no real change in the inflation picture, although, as we talked about with Tom Barkin earlier today, it's not getting any better, it's just not getting any worse in the month of August. Personal income up 0.4%. What we need to do here is see what the wage and salary component of that is, and I'll check that out. But personal spending comes in stronger than anticipated, up 0.6%. The forecast was for 0.5. It was 0.5 last month. So far, no revision. Let's see what we get in the next few minutes. But basically, it shows the American consumer hanging in there, and it looks like they have the incomes to do that. And maybe the economy is a little stronger than expected, which takes us back to Mr. Barkin and what he said about the downside risks maybe are a little bit less prominent than they were before we got the revisions yesterday to GDP and before we get these numbers today.
Mike, I'll give you a second to go through all of the line items just to give you a sense of what the market reaction is. We aren't seeing much of one, maybe just a little bit of an increase in yields, but now lower on the front end of the yield curve. Essentially, people looking through any kind of strength saying in line is a beat almost in a good way. The idea that we could potentially see a Fed that justifies cutting rates. We didn't see that upside surprise in any kind of dramatic fashion, and I think that was what people were most concerned about. You could see it across the board down by about a basis point, 2s, 10s, and 30s. When you take a look at what that means for the equity picture, well, it's not a disruption, and that's a good thing. And so you are seeing gains continue to build. That was clearly the fear in markets, that maybe we would get an upside surprise that could hamper the Fed's cutting plans. Russell 2000 up 0.3%, a market shift from earlier this morning, up about 0.5% from some of the lows in futures earlier in the session. You could see NASDAQ up about the same, as well as S&P. And then when you bleed it through the currency market, dollar weakness, I guess cutting a back on means the dollar can rally versus the dollar can weaken versus the euro. The euro can continue its rally after two straight days of dollar strengthening. Mike, you've had a couple of seconds to look through all of the information. Does anything stand out to you?
Well, one thing that stands out, Lisa, is that personal income wages and salaries were up 0.3 in August. That's a climb down from what we saw in July, a 0.5% gain. Does that mean that we're going to suddenly turn cold? Hard to know. It'll depend on the continuation of all this, whether people still feel they have the money. And of course, we did get all these additional tariffs overnight, so that's going to be a question of how people react to that. I'm not sure that tariffs on some big trucks are going to cause people to cut back on spending, but it might affect business spending. But if we do see tariffs continue to be put on goods, especially on prescription drugs, that could have an impact on confidence, which is a little tease ahead to 10 o'clock this morning Eastern time when we get the Michigan confidence figures.
Michael McKee, thank you so much for breaking that all down. If you're just joining us right now, we did get that core PCE figure, which came in bang in line, 0.2% increase following a 0.3% the prior month. It was revised downward for the prior month, 0.2%. Personal income and personal spending, that's where it gets pretty interesting to me, the idea that you could get an upside surprise on both, particularly personal spending, 0.6% increase versus a 0.5% increase expected, and real personal spending increasing 0.4% versus a 0.2% expected. And it was actually revised upward in the prior reading as well, Anne-Marie. It seems like people keep spending, and that has been the engine that keeps on giving to the American economy.
People keep spending. Jobless claims yesterday, very strong number. And now when it comes to PCE, bang in line. So what is there actually, to look at the data like this, what is there actually to worry about? When I do see spending, though, increasing, I do wonder how many people are like members of my family who went out concerned about the tariffs and are continuing to spend now. And they are concerned about the holidays coming up, and they don't want the prices to go up. So they're willing to go out and spend a ton now. I guess it remains to be seen.
Yeah, that's one reason why people are listening to earnings. Former St. Louis Fed President Jim Bullard joins us now, and I'm so excited to speak with you, Jim, because right now I'm looking at all of this data that suggests a really strong U.S. market, a really strong U.S. economy, people continuing to be able to spend and their incomes rising. What about this picture makes you think that the Fed needs to be cutting rates more aggressively?
Yeah, thanks for having me. So these numbers look to me like they're consistent with what markets were expecting. I think markets have a reacceleration hypothesis, and I'm sympathetic with that. So I do think the economy will be in pretty good shape for the rest of this year and into 2026 as some of the new administration policies come online. On the inflation side, there's no surprise here. So that seems to be very consistent with the committee's story that they'll be able to look through inflation and then expect it to fall in 2026. So I think this leaves everything on track to have further rate cuts during the next two meetings of the FOMC.
Just to put this into perspective, this is what the market was expecting. And so there is this rally across the board as people say, okay, the Fed can keep cutting, even though you are seeing this strength and potentially reacceleration, Jim, as you were putting. Yet year over year, core PCE, that key metric that the Fed looks at, is at 2.9%. It's not climbing. It might even be going down to 2.8%, but it's still almost a full percentage point above 2%. Is there a feeling that it just isn't really important to get it down to 2% that quickly, and so you can look through that?
No, they do want to get it down to 2% over the next 2 years. So you want to asymptote into 2%, I would say, not go very quickly to 2% or go under and overshoot. So I think, usually the way this is thought about is that you want to gradually bring it down. I think the committee's on track to do that. And so that part looks pretty good.
So is the committee almost looking through inflation? Have they been given the green light by the Fed chair to look through if there's going to be any hot prints upcoming when it comes to inflation?
Yeah, I do think that the chair at Jackson Hole very much signed on to the idea that any inflationary effects coming through the tariff channel would be smaller than previously anticipated, and they're coming later than previously anticipated. And so because of that, this is basically a look through. So even though you say, like President Barkin said, well, it's not getting any better, For those that thought there was an important tariff component to inflation, that part should go away since that's a one-time effect. And so that's giving the committee confidence that they can go ahead and get to closer to neutral. They'll still have still be a restrictive policy, still putting downward pressure on inflation, but not as intensely as what they're doing right now.
Well, when it comes to inflation, we heard from Governor Myron almost insinuate, not right now, but maybe in the future, the Fed should actually have more of a range in terms of their target. Could you see the Fed moving towards that, maybe targeting 2 to 3% instead of just 2% across the board?
Yes, a classic issue in inflation targeting. The U.S. has come down on the side of just having a target. It's simpler communication. It doesn't leave ambiguity around having a range. One of the problems for countries that have had ranges is that, the top of the range then becomes okay as opposed to the midpoint of the range. So it can be interpreted as slippage in your commitment to keep inflation low and stable. And households do not like the inflation. So I think it's incumbent on the Federal Reserve to make sure inflation stays low and stable.
Jim, I'm trying to get a sense of how a data-dependent Fed deals with the potential of not getting data. Next week, we're supposed to get the non-farm payrolls report on Friday, October 3rd. Ostensibly, that could be after the government shutdown, where we do not get that data print. How problematic would that be for the Federal Reserve, given how balanced right now a lot of people feel the risks are?
Yeah, well, it's disturbing to not get as much data as you can on the state of the economy, and so that would be a concern. But the Fed has managed through that in previous episodes around government shutdown. So I think it's manageable, but it's not an ideal situation.
It feels like a really messy moment because not only are there questions about the integrity of the data, when we get the data, which data to look at, what the data is measuring, but there are these sort of sea changes that are overlaid on top of it, whether it's different areas, different income earners that are earning a lot and able to spend, lower income workers that are feeling the pinch of inflation and not seeing the same types of labor gains. I just wonder if the Fed should think of a new paradigm, a new benchmark to understand exactly what the optimal employment level is and how they should weigh these two risks.
Yeah, I do think it's a good time to review our models and think about how are we going to do this over the next decade? Could we do better than where we've been? I think we've been more or less preoccupied with the pandemic and the reaction to the aftermath of the pandemic, but that's pretty much behind us now. So now would be a good moment to really do a thoroughgoing review of how the Fed operates and how the models work. I guess one thing I'd like to do is have I'd like to do what other central banks sometimes do is have a parallel process where you have a new model getting ready and run that in parallel and then have a cutover point at some point in the future where you actually switch to the new model. So I think we could do things like that, and that's maybe something to consider at this point.
Governor Lisa Cook is warning, her attorneys are warning that the removal of her could cause chaos and disruption in financial markets. What do you think the reaction will be in financial markets if she is removed?
I think that the court will insist that she gets due process for whatever charges have been made against her, so that that would prevent political partisans from just making charges against members of the committee without having to prove those charges, and then calling that cause and allowing people to be dismissed from the FOMC on that basis. So I think that the people on the Supreme Court will make, the justices will probably come down in some way to protect that due process clause.
Former Fed President Jim Bullard, thank you so much from the St. Louis Fed, now currently at Purdue. Thank you so much for being with us, and of course, a potential candidate to be the next Fed chair. A real question here about how to weigh the risks, given the fact that what you are seeing is strength. You're seeing strength in the consumer in particular, which just keeps on spending.
Strength in the consumer, PCE is coming bang in line, and also the jobless claims yesterday pointing to like maybe actually labor market is holding up. I love your question, though, about the data. What if the data-dependent Fed doesn't have the data next Friday?
You look at other data, and that seems to be the answer.
How do you cut, though, out the data?
But it creates a very complicated moment. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahira. Yahira.
Hi, Lisa. I want to start with the recap of the latest economic data you just broke a few minutes ago. Core PCE rose 0.2% from a month ago, in line with estimates, as did the broader PCE, up 0.3%, while U.S. personal spending rose more than forecast as the consumer remained resilient. Meanwhile, Amazon is paying up to settle a lawsuit from the FTC. The company will pay $1 billion in civil penalties and refund $1.5 billion to customers to resolve allegations it misled millions into signing up for Prime and then making it intentionally difficult to cancel. Amazon customers will receive refunds of as much as $51. And the 45th Ryder Cup is officially underway, teeing off this morning at Bethpage Black in New York. The opening match features the American duo of Bryson DeChambeau and Justin Thomas taking on Europe's Jon Rahm and Tyrrell Hatton. The world's #1 player, Scottie Scheffler, partners with Russell Henley for Team USA's second pairing today, and President Trump is set to arrive around midday. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Ryder Cup, John off. Coincidence?
I know, right?
That, I don't know.
I don't think it's a coincidence.
Up next, Ryan Wong of HSBC as we break down the latest inflation data. Plus, Danny Berger with your morning movers, easing restrictions, lifting Boeing and Spirit Aerosystems. This is Bloomberg Surveillance.
Crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
These numbers look to me like they're consistent with what markets were expecting. I think markets have a reacceleration hypothesis, and I'm sympathetic with that. So I do think the economy will be in pretty good shape for the rest of this year and into 2026 as some of the new administration policies come online.
That was former St. Louis Fed President Jim Bullard talking after we got that core PCE data, as well as personal income and spending exceeding expectations. Core PCE coming in pretty much in line, which was a beat for markets. Markets are rallying on the heels of that. You could take a look at 2-year yields, 10-year yields, and 30-year yields, all lower on the heels of data that shows no surprise. And that was really the story. 10-year yields have been pretty stable around that 416, 2-year yields at 365. If you take a look at what that means for equities, well, it means what it does mean these days, which is equities up. Not necessarily the torpedo for the Russell 2000 that people were worried about 2 hours ago. Right now, up almost 0.3%. Similar moves across the other indices. And if you bleed it through the foreign exchange, you could see a bit of dollar weakness, euro strength, under 45 minutes away from the cash open. Let's get to your morning movers with Danny Berger. Danny.
Hey, Lisa, some news from the Journal in the past hour, and that is sending Boeing shares higher by about 4%, and one of its suppliers, Spirit Aerosystems, up 3%. The FAA looking at easing some of the restrictions on Boeing that would allow employees to have more of a say in the final safety sign-offs and less involvement from the FAA itself, easing of those regulations, sending shares higher this morning. In other D.C. news, also from the Journal, moving shares this morning, is a plan for the Trump administration to get more chip companies to use homegrown manufacturers. So that's benefiting Intel this morning. Shares are up 4%. Global Foundries, another domestic chip manufacturing business, up 8.4%. Finally, pharmaceuticals on the move this morning after Trump said that there would be an 100% tariff on patented drugs if they do not have manufacturing facilities in the U.S. So the U.S. companies that have been working on building in the U.S., those shares are moving higher. Eli Lilly, Merck, AbbVie, all of them up by more than 1% this morning, Lisa.
Thank you so much. And thank you so much for this morning, Danny. Right now, let's turn back to today's core PCE results. We did see that in-line reading of 0.2% as expected. Ryan Wang of HSBC joins us now. Ryan, thank you so much for being here. It's great to have you on a Friday. What was your takeaway from the data?
Yeah, thanks so much for having me. Well, the data was pretty close to expectations. I do think still it's important that the year-on-year rate of core inflation is getting ever so closer to that 3% level. It actually doesn't matter what measure of inflation you look at, headline CPI, core CPI, either of the PCE measures, they're all running close to 3%. That's not as high as it was a couple years ago, but it's still, of course, significantly higher than the Fed's 2% target.
So are we being gaslit when people say it's just going to keep its downward trajectory? Is this the real reality that we're at a 3% inflation level, and that's probably where it's going to continue, even as we talk about some sort of asymptotic progression to 2% over the next 100 years?
Yeah, well, I mean, that's a very good point. And actually, our own projections do have us staying closer to 3% than getting down to 2%, even in the next 12, 18 months. I think that's very much the case. We've heard clearly from Fed Chair Jerome Powell that, okay, you can call tariffs a one-time effect, but that's a one-time effect that can last several quarters, well into next year, maybe even beyond, as the full effect of those tariffs comes through. And, at that point, we have to say, well, what is that going to do to inflation expectations along the way?
So has the Fed basically just accepted 3% inflation without coming out and saying that's our new target, to Lisa's point?
Well,
have they moved the goalpost on us?
I think this is why you see the divide on the Fed, because clearly inflation is running slower than it was a few years ago, yet it never reached that 2% level. So you're never going to hear any of the Fed policymakers say that, okay, they just reaffirmed the 2% target. They're not going to say that 3% is acceptable. But simply put, I do think it's more likely that we'll be closer to that higher number through the end of next year.
What do you make of the tariff impact right now? And I say this on the heels of last night, us still trying to digest exactly what is going to be tariffed in terms of kitchen cabinets, bathroom vanities, furniture, upholstery furniture, all these new sectoral tariffs the Trump administration announced.
Yeah, well, we're entering Act 2 of tariffs, right? I mean, all the focus up until this point has mostly been on these reciprocal tariffs, but those have had significant sectoral exemptions, and now those exemptions are being filled in as we get these proposed tariffs on these products. So that's just another reason why, you know, the full story of the effect on consumer prices has yet to be felt. And yeah, we're going to be watching really in the rest of the year. It's going to be those sectoral tariffs that I think take most of the airplay.
Just to wrap up a week where we've gotten a lot of commentary, a lot of bullishness on the economy, on the idea of a Fed that was going to be cutting rates even into strength. I'm struck by what Scott Cronert of Citigroup had to say when he was talking about how it feels like there are two different markets. It feels like there are those that are touched by AI and the investment cycle that we've seen, and it feels like there's everything else, which hasn't necessarily been as leveraged to the gains that we've seen in markets, to the gains that we've seen from AI, and the other types of rising tides. And I just wonder how, when you look at this aggregate data, you can parse that out and understand why some people might be feeling really rotten about the pace of inflation and the state of the labor market, while other people feel pretty good and are flying around the world.
Yeah, well, you know, I would say the macroeconomic data do actually bear out some of this characterization that you just said, because really since the start of this year, economic growth, we just got new GDP numbers, will probably be below 2% when this year is done, but we won't necessarily be below 1%. Right? So despite all the focus on the weaker employment growth numbers that we've seen come through in recent months, actually the expenditure data, the GDP data, the output data have held up reasonably well. And I think that speaks to this split where, of course, those that are seeing that hiring activity is slower, those trying to get a job are really being impacted by that softer job market. Prices aren't any lower regardless of how you're faring in the labor market, right? So again, it speaks to that inflation. But at the same time, company sales haven't necessarily weakened in the way that the most pessimistic views would have thought a few months ago.
This is a confusing moment and a fascinating one. Ryan Wang, this has been wonderful. Hopefully we can do it again soon. Ryan Wang. Really fascinating to see the data come in stronger than expected when it comes to personal income and spending. You saw inflation come in line around almost 3% core PCE, yes, below some of the 5 and 6% levels that we had seen a couple of years ago. But it just points to this idea that the market and the Fed seem to have accepted a 3% inflation rate where it is, and don't seem to be in a rush to really get it down.
Mohamed Al-Erian's been talking about this way before Steve Myron was highlighting that potentially we might have to target a band because they failed in getting inflation back 2%. That's what it is. And it's going to be years until they get it there. And if you're going to cut rates because you're concerned about the labor market, you tactically already decided we are accepting 3% inflation. You're just not saying it out loud.
Maybe it's just a journey. It's not necessarily the destination. Coming up Monday, Tony DeSpirito of BlackRock, PIMCO CEO Manny Roman, Henrietta Trays of Veda Partners, and Jonathan Gullub of Seaport Global. Do not miss that. This was Bloomberg Surveillance. Have a wonderful weekend.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Estava sitiada.
Nisso eu começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
In case you missed it, on the close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
All right, we're looking at some gains on futures after 3 days of losses, the first triple daily loss in 6 months. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, steady inflation, PCE data meeting expectations, giving the Fed some breathing room to address labor market cooling.
And another tariff push. President Trump announces a fresh round of levies on pharma, heavy trucks, and furniture.
Plus, sounding the alarm, David Einhorn warns the trillion-dollar AI spending spree may lead to tremendous capital destruction.
Well, Matt, when it comes to the movers this morning, kind of everything is moving on some sort of Washington policy that we got overnight. One of them being pharma stocks. They're moving higher this morning. Eli Lilly, Merck, Pfizer, all up more than 1% and 1.5% in some case of Merck after President Trump's 100% tariff on patented drug exports, imports rather. The reason these are moving higher, though, Matt, is that he will have exemptions for companies that have U.S. manufacturing, and all of these have been in the process of trying to do just that.
Right. I know Novo Nordisk as well,
yeah.
Building U.S. manufacturing. U.S.-based chip makers are climbing after the Wall Street Journal reported that the Trump administration is weighing a new plan to reduce U.S. reliance on chips made overseas. So you can see we have gains in Intel again, another 4% here, but Global Foundries as well as Texas Instruments, Danny.
Well, the reason all stocks are moving higher this morning, as you pointed to, Matt, capping those 3 days of losses, was U.S. consumer spending rising in August as core inflation remains steady. Bloomberg's Michael McKee spoke with Richmond Fed President Tom Barkin ahead of that data.
We have inflation moving in the wrong direction. Unfortunately, we also have unemployment moving in the wrong direction. We're very much focused on trying to land the plane here and balancing inflation, unemployment. You have to be very adaptive to what's playing out here.
Michael McKee, Bloomberg's international economics and policy correspondent, joins us now from Washington after that conversation and after the data. Mike, heading into the data was a market that was fearful it would be hotter than expected. That's not exactly what we got.
Well, it's interesting, Danny, because the market economists and the Fed have gotten very good at forecasting what PCE inflation is going to be. And it came bang on as expected with a 0.3 rise in August for the headline, 0.2 for core. Didn't really move the needle much on a year-over-year basis, a little bit higher for the headline. But the Fed knows that it's not where it should be, and that's one of the concerns that Tom Barkin had when we were talking about it. But at the same time, he noted that while they've been worried about unemployment as a sort of signal of what's going on with the economy, the consumer is hanging in there, and they're spending like they don't have concerns. Consumer spending came in strong, up 0.6. Personal income up 0.4 as wages and salaries rose. So people still have the money to spend, and they're still doing it. That's kind of what's keeping them going at the moment, Danny.
All right, Mike, we're going to continue to watch the fallout, the reverberations of these numbers on stocks. As I kicked off the show, I said 6 months.
Yeah.
The first time we've seen triple losses in 6 months. Actually, you're right. It's 1 month.
Okay.
Because we had 5 trading sessions of losses.
Okay, but doesn't it feel like it's been 6 months, or does it feel like
August.
it's been like we've never had 3 days of losses? Honestly, that's what it feels like.
It really does feel like that, but it was like a month ago and change. So it's only been about four weeks, but it was a notable string of wins for the market. President Trump announced new industry-specific tariffs targeting pharmaceuticals, heavy trucks, kitchen cabinets, bathroom vanities, and upholstered furniture. Let's get into that with Bloomberg's Brendan Murray, who leads our global trade coverage at Bloomberg. So, Brendan, we did get a laundry list of things, of industry groups that President Trump wants to tariff yesterday, as opposed to countries. Is this his new tactic?
Yeah, it seems to be these industry by industry tariff authorities that he's using. We saw it earlier this week with robotics and medical equipment. So this looks like he's laying the groundwork for tariffs that he has a sound legal basis to impose. The country by country tariffs, those so-called reciprocal tariffs, are using a different authority that's being challenged at the Supreme Court. The Supreme Court could strike those down near the end of the year or early next year. So what the president's trade team is doing is using these 232 authorities to protect industries that they think are vital to national security. Now, you could argue, why is my sofa a matter of national security? But there are issues, that those are issues that these investigations are going to have to address, and the industry is going to respond to them. You could imagine the users of all of these products, robotics, pharmaceuticals, are going to be in opposition to a lot of these tariffs. So we'll see what happens, but a lot of them have carve-outs. As was indicated earlier, European companies are only going to pay a 15% tariff, which is what they negotiated in their trade agreement with the U.S., and there are dozens of pharmaceutical companies, foreign pharmaceutical companies, that are expanding their manufacturing in the U.S. The tally that the White House has is something like $325 billion worth of investments pledged. So President Trump's social media post last night was kind of a wake-up call to those companies and their projects, that if you don't have a shovel in the ground already, you better get it by October 1st, or otherwise you're going to face these sky-high tariffs.
I got to say, even calling them like sectoral tariffs or industry tariffs doesn't feel right, Brendan, when some of this is so focused. Okay, pharma, heavy trucks, fine, but upholstered furniture, kitchen vanities, what do we make of the fact it is so specific, Brendan?
Those could fall under the timber or lumber 232 investigation that's already underway. They can use the derivative products of those raw materials. So a semiconductor tariff could apply to your cell phone or your washing machine or anything that's got a chip in it, really. So they can apply these pretty broadly on products that are derivatives of the original subject of the investigation.
All right, Brendan, thank you very much for that. That's Bloomberg's Brendan Murray. Also moving this morning, the U.S. chip makers, Intel, Global Foundries, and Texas Instruments, all of them rising pre-market at least more than 2%. That pop comes on the heels of a report that the Trump administration is weighing a new plan to reduce U.S. reliance on foreign-made chips. Joining us now is Bloomberg Tech co-host Caroline Hyde. Caroline, maybe this move isn't surprising, but what method is the White House actually looking at to get companies to use more homegrown chips?
Well, I suppose the forcing and the prescription that for every chip that you have made in the US, you're going to have to it has to be equal and opposite to one that you're going to be importing. This is big news for the likes of Apple, for the likes of computer makers here, and more broadly, everything that has a chip in it, because you're going to have this 1-for-1 ratio. Who's counting? How are you going to be orchestrating that, who's going to be saying that they're in compliance. But as you say, the people that it benefits are those that are manufacturing here in the United States. Intel, Global Foundries, maybe some of the analog ones, as I say, Texas Instruments. Who does it hurt? Well, I mean, Asia chip makers more broadly, and those companies that are currently dependent on those Asia chip makers. Remember, this is what we've been discussing time and time again, and why Intel seems to be getting this influx of interest, money going into it potentially to fabricate here in the United States, but because everyone relies on TSMC. The question, though, is, of course, TSMC already has poured money into the United States, so too has Samsung. Have they put enough in America, manufacturing enough in America, that actually the overheads of this, it's more signal rather than actually what it is having in terms of an impact, in terms of noise?
I have to ask about the TikTok deal, because the valuation that J.D. Vance gave us yesterday, $14 billion, is far less than Facebook paid for WhatsApp in 2014, right? That was a $19 billion deal. And we're looking at a price to sales ratio of like 1.4, as opposed to other big tech firms where it's 8 or 10. So how unrealistic is this valuation?
It's like Exxon rather than Meta. I mean, more broadly, this is a lot of a pleasant surprise, perhaps, to the likes of Oracle and Silver Lake, who we understand, along with MGX, a Middle Eastern-based investment fund, coming in to own what we understand to be about maybe 35% of overall TikTok, as the reports go. What of the rest of the company? We understand less than 20% is going to be owned by ByteDance going forward. But there are so many more questions than answers here. Who are the other players? Now, is Susquehanna, General Atlantic, all the people who have currently owned parts of ByteDance, are they still going to remain current investors? We understand they're going to have 35%, so maybe it's about 45% that are owned by these names that have been put to the forefront. $14 billion, where have they got that number? Is it because that's basically equivalent to what their advertising sales are going to be in 2025? And as you say, a much less valuation than had been thought by Bloomberg Intelligence. He says, look, if you compare it to some of the other key social media companies out there, it's far more valuable. But actually, is it valuable? If you're no longer going to have ownership of the algorithm, you're going to license it. How often are we updating it? Is Oracle any good at algorithms? I mean, it's a cloud company and it's an infrastructure company. Yes, maybe it can monitor it for safety. Many people are saying, look, this is actually rather like Project Texas that was already in existence. Is this going to settle the national security issues? And more to the point, is China going to agree it? Because I read out more broadly what China has been saying, and they're currently really talking about the fact that they're responding, the US side needs to provide an open, fair, and non-discriminatory environment for Chinese investors. They haven't said yes. We understand Trump thinks he's got sign-off from Xi Jinping, but there's no formal statement coming from China thus far. Is ByteDance really going to swallow a $14 billion market cap for its prized possession? Maybe actually is only worth that if they don't get the algorithm on repeat. And are we all going to suddenly segue out of global TikTok to become just a US TikTok? And what if other countries want to be using it too? There are so many questions. I don't feel much got answered at the White House yesterday.
Yeah, I've heard it described as daylight robbery. Someone said it's like they have a gun to ByteDance's head. Someone said it's the most undervalued tech deal in over a decade. So yeah, a lot of fun at the expense of J.D. Vance and that TikTok deal. Carolyn Hyde will be talking about that on Bloomberg Tech, a show she co-anchors with Ed Ludlow at 11 a.m. Let's quickly check on what's going on in futures, because after 3 days of losses, it does look like we're going to see a little bit of a bounce back here. S&P futures up 0.25%, NASDAQ futures and Russell futures both gaining more than 1/10.
And how's this for a bullish outlook? BMO just out with a note from Brian Belsky, who's already really optimistic usually, saying that his price target of 7,000 for year end might not be enough, and says, yes, let's chase this bull market. In fact, 7,000 might end up being too low. So the sell side's still incredibly bullish on where we go from here.
Yeah, we're going to actually talk to a more bullish guest throughout the show. We need to enlist some bears, I feel like.
Good luck finding them, yeah, I guess is the thing.
They're few and far between, and that may be a bearish sign in itself. Coming up, Boeing is surging on a report that the FAA is easing restrictions for 737 MAX deliveries. That's the problem plane for them. That's next. This is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Let's get now to high interest. Look at what's making headlines around the world. Former FBI Director James Comey has been indicted on charges of lying to Congress and obstruction related to testimony that he gave in 2020. The case comes as President Trump pressures the Justice Department to pursue his political rivals. Comey says he's not afraid, and his lawyer vows to fight the charges. If convicted, Comey could face up to 5 years in prison, and no matter what, he's heartbroken. The Ryder Cup tees off today at New York's Bethpage Black, with President Trump set to attend midday. His past sports appearances have drawn both boos and ovations, and organizers have added new security for the crowd with record ticket prices, packed trains, and a roaring New York fan base. The event is primed to be as much a test of politics as it is of golf. And remember, there are a lot of Europeans, obviously, that are going to be there. That's the point. It's U.S. versus Europe. Boeing is reportedly set to get more leeway from U.S. regulators. The FAA plans to let the company handle more final safety checks on its 737 MAX jets. That's according to the Wall Street Journal. The move could be announced today alongside approval for Boeing to lift monthly output above the current 38 planes, a key step in its financial comeback. Danny?
And you can see the surge in shares there. Let's talk more about it with Bloomberg Chief Global Aviation Correspondent Sid Phillip. Sid, what do we understand from this report as to what exactly might be changing for Boeing in some of the regulation around them?
So for Boeing, this is an important step because before the crisis that the MAX had, Boeing was certifying its own aircraft, and that sort of helps them speed up the process, really, because with FAA inspectors looking at every single aircraft that needs to be delivered, it sort of bogs down the process. So the expectation is that once Boeing is allowed to certify its own aircraft and deliver those aircraft quicker, it'll sort of bring more cash in the door, and that's a crucial step in Boeing's comeback. Essentially, the 737 MAX is Boeing's cash cow, and the more 737 MAXes it can get out the door, the more cash it can bring in to its balance sheet. And so for Boeing, this is a crucial step, and it's been one that they've been trying to get since they've sort of reassured regulators and the public that they've sort of got a handle on quality, they've got a handle on their production processes, and they are building safe planes again.
We talk often, Sid, you and me, about Boeing's incredible underperformance when you look at it compared to its European ally, almost like a Davis Cup of, a Ryder's Cup, I should say, of airlines.
Nice.
What does Boeing have to do to get back on top here versus Airbus?
So Boeing needs to actually start delivering on the backlog. They have over 5,000 aircraft on their backlog, and the 737 MAX is sold out until the end of this decade. So what Boeing really needs to do is to try and get those aircraft out the door and into customer hands and actually get them flying. That's how they get paid. And so for Boeing, it's a crucial step of unlocking cash by being able to actually ramp up deliveries and being able to Airbus has out-delivered Boeing since the pandemic. And essentially, this is a crucial step for Boeing to actually start building those planes and getting them out so that they can actually start generating cash and competing better with Airbus.
So how much does this change things for them, Sid? How much does it speed up the process of them trying to get 737s out there to market?
It's still unclear what authority the FAA is actually going to give them, and also it's unclear how much leeway the FAA will give them, but it is a step in getting their planes out of the door. So it's not quite, this is sort of all hands off and Boeing can actually start delivering as many planes as they want, but it is a crucial step in Boeing's recovery and in Boeing's ability to deliver more aircraft.
All right, Sid, thanks very much. Sid Phillip covers global aviation for us. Coming up, David Einhorn says investors may not see a return on the capital spent to build AI infrastructure. We'll talk about that with Anastasia Amoroso, because obviously that's a big part of what's been driving this market to record highs. This is Bloomberg Open Interest.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Hedge fund manager David Einhorn is sounding the alarm on AI spending. Einhorn says the unprecedented amount of spending on AI infrastructure is hard to understand and may ultimately destroy vast amounts of capital. He drew a sharp line between the long-term importance of AI and the immediate economics of funding it, saying stakeholders may not see a payoff for many of the investment. Joining us now is Partners Group Chief Investment Strategist of Private Wealth. It is Anastasia Amorosa. Anastasia, great to see you this morning.
Good to see you, Danny.
And look, this is a topic you obviously know so well. Just analyzing it, and of course the work that Partners Group has been doing. With the vast amounts of money being put in, this isn't a new warning by any stretch of the imagination. Is there any merit to it?
Well, I think the warning is pretty interesting that it's happening this week because we did get sort of a torrent of headlines, from globally about data center investing or just investing in AI infrastructure.
Alibaba said more than $4 trillion by 2030.
It's Alibaba, it's sovereign wealth funds, it's private equity firms. So it's been really a torrent of news. So I think it's right to scrutinize some of that. But if you take a step back and if you think about the demand for data center capacity, I'll just pick on data centers for a minute. It's really going to grow in the U.S. alone from something like 30 gigawatts now to 90 gigawatts in a future that's not too distant from now. So in order to get there, in order to satisfy that demand, clearly we do need to invest into that infrastructure. I think as investors, we do, however, need to be mindful of at what point you build enough capacity that is maybe we do reach that overbuilt moment. I don't think we're there yet, given the data center vacancy is something like 2.5%, but it is a concern. The other thing I would say, as investors, we have to think carefully about how we structure the contracts. And for example, for a lot of the data centers, these are long-term, 10, 15-year contracts with further runway for renewals, and there are commitments that hyperscalers make, for example, to certain capacity, and some of them are take or pay. So there is a level of protection, I would say, for investors investing in the AI infrastructure. But certainly deals do need to be scrutinized.
Is there any concern about the circular nature of some of these investments? I mean, NVIDIA, for example, why would they invest $100 billion in OpenAI? Aren't they exposed enough to OpenAI that they don't need to be putting more money into one of their customers?
Well, look, currently it is a concentrated industry when it comes to building out the ecosystem, and it is a few players who have the competitive advantage in terms of technology, who also have the competitive advantage in terms of just having the finances to be able to do that. So there is certainly a degree of circularity, but at the same time, there's not that many other options. I will say, though, Matt, that more and more options are emerging in private markets, for example, and whether it's data centers, whether it's independent power producers, there are a lot of players that are also building out that capacity, and we're investing in private markets.
Isn't there a timing mismatch? Because you have, for example, Oracle committing that they're going to build all of this stuff and getting a lot of funding and going to the bond market to do it. That's going to take some time to build out, and by the way, is going to need the power of like 2.5 Hoover dams to actually operate.
Yeah, for sure. And there's a race that's certainly on, which is how can we build these data centers and how can we power them as soon as possible? I do believe that the hyperscalers are doing the build out in conjunction with the demand that they're expecting to see. So I hope there's not a mismatch there. But absolutely, that's why for example, you don't really have a whole lot of price elasticity, and some of the tariff increases the data centers, for example, are able to pass through their customers because we need that capacity as soon as possible, and we need it now.
All right, we're going to keep you with us. We have a lot more to talk about besides just AI data center investment. It's obviously a huge part of this market. But there are more things. We got PCI this morning. We're all counting on Fed rate cuts. So we're going to talk about that with Anastasia Amoroso, as well as the private market piece that she mentioned. Check on futures ahead of the opening bell. We're looking at a 0.25% gain in S&P futures after 3 days of drops. This is Bloomberg.
understand what are the technologies that are part of our portfolio for the future, and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at gains on futures after 3 days of losses in the cash trade. S&P futures up 0.2%. NASDAQ futures and Russell futures gaining about 0.1%. PCE came in today without raising any red flags that might slow the Fed down in its rate cutting cycle, expected to commence with cuts at, well, it already had a cut last meeting, next meeting, and the final meeting of the year. Pearson ringing the bell at the New York Stock Exchange, I guess, in from London. The stock is up, it's more than doubled in the last 5 years for this publisher, 25 years listed on the New York Stock Exchange. And then Global Citizen ringing the bell down at the NASDAQ marketplace. They will be hosting a concert in Central Park. I'll be attending.
Very cool.
Tomorrow, because I'm a big fan of Cardi B and Shakira.
Yeah, if there's one thing people say about Matt Miller, it's that he's Cardi B and Shakira's #1 fan.
Die hard, die hard.
Absolutely checks out. Yeah. All right, Matt, away from that, I'm looking at pharmaceutical stocks at the open this morning. They are all climbing. Pfizer a little bit less, 0.5%. Eli Lilly, Merck, those are up 1.5% and 1.2% respectively. It goes to who is building more in the U.S. because President Trump's 100% tariff on patented drug imports is weighing on things here. He will, though, allow for exemptions for companies that manufacture in the U.S. And again, Eli Lilly and Merck have been opening up plants and trying to do just that, Matt.
Yeah, so it looks like they've got a head start, and as a result, investors aren't terribly concerned. U.S.-based chip makers also climbing after the Wall Street Journal reported the Trump administration is weighing a new plan to reduce U.S. reliance on chips made overseas. It looks like the U.S. is going to require 1-to-1 chip content in manufacturers' products without triggering any big tariffs. So that could be a problem for Apple and others that get most of their chips from TSMC. We're back with Partners Group's Chief Investment Strategist of Private Wealth, Anastasia Amoroso, and this could be an issue, right? Although it looks like companies are finding a way to either be super nice and flattering to the president in order to get carve-outs, or I mean, what will companies that get almost all of their chips from Taiwan do when they're required to get some from the U.S.?
Right. I think what they'll do is future commitments. That's probably the quickest way to sort of alleviate the administration's concerns about the being reliant on foreign supply.
So over the next 5 years, we promise to spend $400 billion in the U.S.
I think that's the quickest way. But I will say, bigger picture, I think the companies are getting the memo from this administration, which is we do need to onshore certain capacity, which is considered to be mission critical for a lot of the industries. And certainly onshoring semiconductor capacity fits squarely into that. So whether it's current commitments, whether it's commitments to start, building out the factories in 2026 and beyond, I think that's the way you get around some of those most egregious tariff threats.
I know Matt promised we'd speak beyond AI in the amount of spending that they do. It is hard to do. But just one thing there that I can't get out of my head, and our Bloomberg News reporters had an excellent story about this, just the amount of times that these tech titans are tapping the bond market. Companies have raised about $157 billion so far in public bond markets. That's up 70% from what they issued in the same period last year. Should we be worried that tech as a sector is becoming increasingly more leveraged?
I mean, I think there's a distinction between larger cap companies and smaller cap companies. And for example, when you look at high grade, investment grade corporate, both debt ratios and sort of interest coverage ratios, they look very, very strong. If you look at the high yield market, you do see some weakening in the high yield market. So I think it depends on where the tech fits into that spectrum. But I will say for some of the larger cap tech companies, if they have cash on the balance sheet anyway, but they're able to take advantage of now lower interest rates and really near record tight spreads, I think that's exactly what they're doing.
I want to talk about whether we can hit new highs here, and everyone seems bullish. We have obviously been hitting record after record after record. I think the S&P has hit 28 new records this year, and President Trump says it's hit 48 new records this year, although that's not true. I wonder if we're not all already holding as many equities as we can. I mean, U.S. households are the most overweight that they've ever been by many measures. Foreign investors own 30% of this market. They're also the most overweight that they've been in data going back to 1945. Like, who else is left to buy?
All right. Well, I think there's the technical side of it, and there's also the fundamentals, which is, can the earnings continue? Can we be comfortable with the multiple that we pay? And so let me kind of answer that question, near term versus longer term. And near term, I do think we're bound for some sort of a bump in the road, for some sort of consolidation, because we've come a long way in a short period of time. If you do look at some of the technical factors, we certainly overbought, and maybe it's the weaker or stronger than expected payrolls report next week. Maybe it's the start of the earnings season where the bar has actually been reset higher relative to other quarters where the bar is reset lower. Maybe something like that does cause a near-term consolidation. But having said that, we do look for another 2 rate cuts into the end of the year. So that's 75 basis points of monetary stimulus that will start to accrue. Danny, to your point, to some of the corporates that do have a lot of floating rate exposure, it'll start to accrue to the real estate market. And so I do suspect that will add stimulus into the economy going into 2026. By the way, on top of the tax cut stimulus that is still yet to come in 2026. So for those reasons, Matt, I do think the fundamentals into 2026 look strong. And, maybe you don't have this, huge momentum of buying, but if you have momentum of holding, that's solid as well.
It's a good way to describe it, but does the bond market play along? Because since the Fed's decision to cut rates last week, 10-year yields are up 14%. When that happened last year, everyone was decrying, okay, financial conditions are actually tightening as they're trying to cut. Are we headed for that again?
Look, I don't think so. I mean, the bond market, I think, reacted to economic data in the first half of the year that maybe was a little bit stronger than expected. But if you think about that, that is backwards-looking data. I think the most important thing right now to pay attention to is the labor market weakness that is clearly upon us. So I would assume that whether it's next week's labor market data, whether it's the actual rate cuts that materialize in November and December, I would assume that does cap yields in the bond market.
All right, Anastasia, thank you so much for joining us this morning.
So
Always
much.
a pleasure
Good
to see you. That is Partners Group's Anastasia Amoroso. All right, let's get a check on what your equity market is doing. About 7 minutes into your trading day, we are moving higher this morning, up by about 0.7%, not undoing the 3 days of losses, as Matt pointed out, the first time you've seen that in 3 years. We are looking at European equities, so we're just going to quickly change that to U.S., so maybe the change is going to look different. There we go. We still are up. We're up 0.5%. You see Microsoft, Tesla, Alphabet's, a lot of the Mag 7 moving us higher. I actually want to go to what's moving us lower because the second one on here is interesting. It is Costco. Wow. Costco is moving down 3.5%, despite the fact that they basically beat on all metrics. They also said that they're going to shift more towards value-oriented and more essentials. In the pre-market, it was slightly higher, but that's turned a leg lower. Maybe expectations were high. I don't really know how so, since shares have gained, I think, only like 3% so far this year. Yeah, Matt, you can fact check me on that if that is correct.
Well, you were pointing that out this morning.
Yeah.
They've done well over the last 5 years, but if you look over the last year, before the bell, they were only up 3%. So with this with this loss, Costco is actually negative for the year. They're still up with reinvested dividends, though, 190% over the past 5 years.
Well, at least they have that. But, Matt, it is maybe a head scratcher. If it's a more value-oriented consumer, why wouldn't Costco do better? And they also talked about tariff mitigation. Let's also look at the sectors, because most sectors are in the green this morning. Actually, all of them, save for one. It is staples at the bottom. I mean, is that just Costco? Very possibly so, down 0.5%. At the top of the pile, it goes utilities, industries, energy. So it's very cyclical things that are leading us higher. And infotech also near the bottom of the pile. But again, Matt, most sectors in the green as we head higher by about 0.5%.
By the way, if we have maybe value-oriented investors, which normally we don't, right? Maybe that's why they're shunning Costco.
Yeah, do value investors exist anymore?
It's still trading at 46 times next year's earnings, and NVIDIA trades at less than 40 times.
Yeah, that's punchy.
All right, coming up, investors are mostly shrugging off a 100% tariff on patented drugs. We'll discuss that with Bloomberg Intelligence senior analyst Sam Fazeli. This is Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Snapping 3 days of losses thanks to PCE data that did not come in hotter, which was the fear for this market. So yields moved down. equities move higher by 0.5% for the S&P, NASDAQ 0.33%, and the Russell 2000 also around 0.33%. Let's look at some of the top calls, though. Some of the analyst action that we are looking at. First up, Wall Street weighing in on those disappointing CarMax results from yesterday. Evercore ISI and Wedbush both downgrade the online car retailer. Shares of CarMax had plunged to a 5-year low yesterday after a significant miss on earnings and sales. It appeared that tariffs really had a pull forward effect, and that has waned out. Next up, Warner Brothers Discovery, that gets cut at KeyBank. The analysts over there citing uncertainties surrounding that potential Paramount Skydance deal. They also say the valuation looks stretched and the downside risk is high. Shares down 0.6% this morning. But in the run-up to it, Warner Brothers Discovery has been on a tear since August. Shares up 53%. Finally, Tylenol maker Kenvue, that gets raised to a buy at Rothschild and Redbird. Shares have been down 20% this month on concerns over Trump's announcement that pregnant women shouldn't take acetaminophen, the active ingredient in Tylenol. The analyst, though, said that recent Health and Human Services proposals were less severe than feared, so those shares up 1.5%, Matt.
All right, so some of the upgrades and downgrades that we're seeing across the street. Coming up, the MSCI World Index is on pace to outperform the first time in almost a decade. It's truly monumental move, and we're going to talk about this with the chairman and CEO of MSCI next. We're happy to have Henry Fernandez here with us in the studio. This is Bloomberg Open Interest.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Well, S&P 500 returns have been solid this year. U.S. stocks have lagged other major stock markets. The S&P has underperformed benchmarks in Canada, Mexico, Brazil, Japan, and China. The MSCI World Index has advanced 15% this year and is on pace to outperform the S&P 500 for the first time since 2017. Joining us now is Henry Fernandez, Chairman and CEO of MSCI. Henry, thank you so much for joining. Yeah. And obviously your business is steeped daily in what these markets are doing. If you were told anyone that not just the U.S., but global equity markets would be hitting all-time highs, if you told someone that on April 2nd, I don't think they would have believed you. What do you just make of the overall health of markets today?
Well, for sure, they would not have believed it because a lot of people had been predicting a continuous strengthening of the dollar, for example. So a meaningful part of that outperformance of global markets is the weakness of the dollar, in addition to the local market rising. And across the world, a lot of markets were depressed. You know, we in the U.S. got used to this exuberant market, but in a lot of markets around the world, Europe, for example, China for a long time, even Japan, the markets were depressed. So you're now seeing a recovery and a catching up to the U.S., and on top of that, you have the currency.
So, I mean, your indexes are used by investors around the world as a benchmark, and I saw a stat this morning that I thought was pretty fascinating. Not only are European investors, or I should say foreign investors, heavily overweight U.S. stocks in their U.S. exposure, but in fact, of the $60 trillion in U.S. equities, almost 30% of that is held by foreign investors right now. So we have more foreign ownership of U.S. markets than we ever have. Why are they continuing to invest despite tariffs, despite President Trump? Is it maybe even because of those things?
Tech and AI.
I see.
And, you know, we are going through a major revolution, you know, in technology in the world, and there have been a lot of other market revolutions. You know, in the 1860s and 70s, railroads were, you know, the flavor of the day, and huge overcapacities was built in railroads, and then they crashed, and other people picked them up. So probably that's what we're going through here, is a massive investment.
Would you compare it to 1999 and 2000?
Probably, yeah. At this point, at some point, you know, all this investment, which is venture capital investing by definition, is not all going to pan out. So the companies that did good investments and benefit from are going to do well, but there will be a lot of them that won't, and therefore, you know, the markets are going to not be very kind to them at that time. But we're still going in that phase of discovery as to who are going to be the winners, who are going to be the losers. So since you don't know, you put it all across the market.
This is a market that's changed an incredible amount from the 90s, which is obvious, but I think one of the big glaring things that is often pointed out but forgotten is that the number of public companies since the 90s has shrunk by half. And there are other things that seem to be concerning about transparency. More companies are staying public, more are being taken private public. There are proposals from the president to allow companies not to report quarterly, but instead just do it twice a year. Your business is built on data and transparency. Is there a growing transparency problem right now?
In private markets, there is, for sure, because these are opaque markets, and that's the mission of MSCI right now. We're building what I call the MSCI of the private markets compared to public markets, which is you start with the data. You got to know what the fund is, what the fund does, you know, what are the companies, what do they invest in. Then you look at what is the benchmark of that fund relative to a market. And you say, what is the risk of that fund? What is the performance? So how does that compare to the public markets? How does that compare to other private market funds? So that's a major revolution that is taking place. We're leading that in creating that transparency in private credit, for example. But it's going to take time because, you know, what we have done in the public markets has been built for decades. In terms of the norms, the standards, the data, you know, the reports, the benchmarks, all of that, and we're trying to do that in a few years in the private market. So we're really busy, you know, doing that. But that should be an incredible facilitator of more capital, particularly individual investor capital, going into these markets.
So what's the breakdown look like in your business in terms of investment and revenue? Because you've got you know, a lot of shooting stars right now. You've got huge gains in foreign markets. You've got all of the AI and tech gains that you talked about. And then you've got this massive interest. I think 82% of fund managers want to be invested in private markets.
So we're very lucky that we have a lot of wind in our back in most markets. And therefore, we're catching all those trends in indexation, in risk management, in climate, in, you know, private markets and all of that. We're very fortunate that we have a high profitability in the company, about 60% EBITDA margins, and we allow
60%.
60%. It allows us to reinvest back into the business, and at the same time, you know, buy our shares back and be very generous with the capital with our shareholders. So we've developed. When I took the company public 18 years ago, it was $18 a share. We're $5.70 today, with a market cap of $45 billion, and we think that, you know, that's small compared to what we can be in the future.
In terms of parts of growing business, there's been a lot of buzz, or at least there was the beginning of this year, about, to your point, of growing private capital, but private capital ETFs. Apollo and State Street developed one together. And since then, it's gone a little bit quiet. I think they're putting a second one out there, but when you talk to clients who want you to develop indices that they can track to turn into ETFs, is there still a lot of clamoring for private capital ETFs, and how feasible and possible is that?
Well, the first step was to put this private capital into mutual funds, the interval funds, as they're called, which it allows for liquidity to be happening every so often, but it's not daily or it's not real time. So that's kind of been the first step. There's some, including others, that have tried to jump directly into the ETF market directly.
Do they do it too soon, do you think?
Yeah, it's hard because you need to, first of all, there's a mix, that, it's 85% fixed income, for example, public fixed income, and 15% private fixed income, private credit. The issue there is you cannot do that with that underlying liquidity of the private credit. So you can either have a market maker, give you that, or what we're working on is evaluated prices. So if you come up with evaluated prices in private credit, similarly to public fixed income, you're able to create a standard, well-trusted source of prices that people can value the NAV at, and you can trade the NAV. So that's, I think, the solution to that problem. In private credit, obviously, evaluated prices in real estate and in private equity may be more challenging, but that's the direction of travel.
Henry, great having you in here. Hope we can get you back soon. Henry Fernandez there is the CEO of MSCI. Let's dig in right now to President Trump's looming 100% tariff on drug manufacturers that they don't produce here in the U.S. Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli joins us now. And Sam, investors seem to shrug off this new announcement because a lot of drug makers already have started work on U.S. production facilities, right?
You got it, Matt. It's exactly what's happening here. At the end of the day, this is a 100% tariff that is written about in a short tweet or truth. I'm stuck with that tweet phrase. And I think the market realizes that most of these companies have already made their pledges, so we're looking good there. And in fact, there's no mention of most favored nation, so maybe we're not going to hear about that, although there's still room by the end of the month for that to happen.
Sam, only a minute here, but then who is at risk if all these U.S. manufacturers and even the likes of Novo Nordisk have started to try to build U.S. manufacturing?
Yeah, I mean, so obviously countries which are the base for a lot of these who've been used, they've been using before, such as Ireland and Switzerland, as a hub for manufacturing and shipping out. If they are going to be manufacturing everything in the U.S., so that takes a little bit of a hit. But of course, there's many other countries that you need to manufacture and ship to, and that's probably where they're going to be able to continue to do that.
All right, Sam, appreciate you jumping on with this story. Bloomberg Intelligence's Sam Fazeli, he covers pharma for us globally. Coming up in the next hour, Ethan Devitt joins us from Moneta on the possibility of a slower rate-cutting cycle.
Plus, we're going to hear from Egypt's foreign minister, who's going to be joining from the UN, and Fraser Yacht CEO. Talk about the demand for super yachts and how wonderful life is in Monaco. We're going to get all of that coming up next. You're watching Bloomberg Open Interest.
cidade estava sitiada.
Isso, ao começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. A mix of boos and cheers as a defiant Israeli Prime Minister Netanyahu took the podium to address a more than half-empty UN General Assembly today. After many delegates walked out, he blasted member nations who support Palestinian statehood.
There's a familiar saying, when the going gets tough, the tough get going. Well, for many countries here, when the going got tough, you caved.
Netanyahu said his message was being broadcast on loudspeakers into Gaza.
Lay down your arms. Let my people go. Free the hostages. All of them. The whole 48. Free the hostages now.
He held up a map of the region titled The Curse. Former FBI Director James Comey and President Trump traded barbs on social media after the Justice Department indicted Comey on charges of obstruction and making a false statement when he denied leaking information to the press during Senate testimony 5 years ago. CBS News Face the Nation's Margaret Brennan.
Comey says he has faith in the justice system in terms of how this would play out. In other words, an indictment is not a conviction, and he seems to be very confident that that won't happen.
In his Instagram post, Comey said, "Bring on the trial." On Truth Social, President Trump called Comey a bad cop. Defense Secretary Hegseth summoned hundreds of generals and admirals from around the world to a meeting in Virginia next week. The Pentagon hasn't said why. Correspondent Charlie Daggett.
A lot of questions here as to why Secretary is meeting them in person rather than on like a secured video conference as in the past. Aside from security considerations of having all that brass in one place at one time, it's going to cost a lot of money to fly them in from all over the world.
Meteorologist Craig Allen is keeping tabs on a hurricane that formed this morning in the Caribbean.
Umberto should stay away from land areas even into the weekend, and as the track continues to bend a little bit more to the north and then eventually to the northeast, staying in between the United States and Bermuda.
The number of babies born with syphilis is still rising. CBS's Michael George.
New CDC data shows cases of the sexually transmitted infection, which can be passed from mothers to babies, are up nearly 700% since 2015. The data also shows other sexually transmitted infections are declining in the U.S., with experts crediting greater awareness and prevention tools.
Syphilis in newborns has been linked to lifelong issues like hearing loss. The Dow is up 358. This is CBS News. Research proves cameras in cars and trucks are saving lives.
Backup cameras help drivers see small children. University of Texas research shows a big drop in deaths and serious injuries since those cameras were required on vehicles.
We are doing an excellent job of recognizing severe and dangerous issues related to car safety.
Author Dr. Jeanette Jolly says more children could be protected if backup cameras were also installed on older vehicles. Jeff Gilbert, CBS News, Detroit.
Britain's Prince William looks back in next week's episode of Eugene Levy's Apple series, The Reluctant Traveler.
I'd say 2024 was the hardest year I've ever had. You know, life is sent to test us as well, and being able to overcome that is what makes us who we are.
That year included his wife Kate Middleton's cancer diagnosis and chemotherapy treatment. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Also streaming live on YouTube. It's Scarlett Fu, Paul Sweeney, the Bloomberg Intelligence Program. A lot to do in the next couple of hours. We're going to check in with Joanne Shu at the University of Michigan. We had some of that data came out today. We're going to also have a simulcast with Bloomberg Television anchorperson Anne-Marie Hordern, speaking with the Egyptian Foreign Affairs Minister. Jeffrey Cleveland, he's a chief economist over there at Payton & Regal. We'll get his thoughts about some of this economic data we are seeing today and throughout the week. Ethan Ranganathan, she covers all the media stuff for Bloomberg Intelligence. She's got some new research on the streaming business. It's Netflix, it's Disney, but how about if you put Paramount and Warner Brothers together? That would be a competitor. So we got a lot coming up in the next couple of hours. But right now, let's kick it all off with John Tucker and our Bloomberg Business Flash.
All right, guys, this Bloomberg Business Flash brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. I'm going to say today it's all about inflation and inflation expectations. The major stock averages are higher. S&P 500 up 25 points. The Dow up 67 points. And right now the NASDAQ 119 points higher. Let's get right to the data that just crossed the University of Michigan. The headline, the sentiment indicator, 55.1, a little lower than last month, a little lower than expectations. Right to the inflation expectations, the one-year expectations coming in lower than expectations, 4.7. The expectations from economists surveyed by Bloomberg, 4.8, and then the 5-10-year inflation outlook coming at 3.7%. Again, that was a little lower than the expectations, and that is helping give a boost to stocks. Earlier, we saw the personal consumption expenditures price index. When you strip out food and energy, that grew at a slower pace last month. All of this gives a little more breathing room for Fed policy makers. And right now, you have 10 of the 11 major industry groups in the S&P 500. They are higher, and energy, a best performer as we see oil prices rise. West Texas, NYMEX up about 0.9%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul, happy Friday.
Happy Friday to you. And it feels like for the markets, this data was the green light to keep on adding to risk. All right, let's take a look at some of the stocks on the move here with the S&P 500 ending its recent slide, just a little bit of a slide, and bring in Bloomberg's Alexandra Semenova with our market drivers. Alexandra.
Hey guys, good morning. I've been watching shares of Oracle really closely as we get more updates on this closely watched TikTok deal with the U.S. in which it is supposed to be among a consortium of investors buying the company. The Trump administration said today that they expect a valuation of about $14 billion. That's actually well below what the expectations were, kind of disappointing investors. Investors say that a deal at that price would be a bargain for buyers, including Oracle and partner Silver Lake Management. And accordingly, the stock is down a little bit this morning, though I do have to say it has had a fantastic run this year. Obviously, we got that blowout earnings report where they really wowed investors with their guidance. And then also, of course, this involvement with TikTok. The stock is up about 74% this year.
Okay, what else you got for us here?
Also taking a look at shares of furniture retailers, which are taking a hit right now after President Trump announced that the U.S. will enact new tariffs, specifically on imported kitchen cabinets, on bathroom vanities, and other home products next week. RH is seeing its stock fall this morning. I see it down about 2.2%. Wayfair, another furniture retailer, also dropped. RH is one of the companies that's really been taking a hit from tariffs. Its CEO has been a critic of Trump's trade policy. It's had a really rough year. Basically, in a social media post on Thursday night, Trump said that these kinds of imported products have been flooding into the U.S. He said that a 50% tariff would go on cabinets, vanities, and associated products.
Yeah, you wonder if that's just kind of the initial shot, and of course everything's going to come down.
Everything gets walked back.
Yeah.
We saw that on the pharmaceuticals.
Yep.
If you have or thinking about building a plan here, you can be exempt.
Right, and so many companies are saying they've done just that.
We'll do it.
All right, let's talk about Boeing, which has been in the news this week.
Yeah, it is a bright spot today. The stock is up about 4.1% right now. The Federal Aviation Administration said that it will give it more leeway to perform some safety checks on its notorious 737 MAX plane prior to delivery. Obviously, they've struggled with safety issues after multiple crashes with that plane. The FAA will delegate more of its routine inspections to the plane maker, and they also asked for permission for more output on this plane. It's currently capped at about 38 a month, and they want to see it move to a rate of 42 by the end of this year. Investors are very happy with this announcement.
Yeah, that's what George Ferguson's been telling us. It's all about the free cash flow that's generated by those MAX 737s. So we appreciate that. Alex Semenova, thanks so much. Appreciate that. Alex Semenova, she does all the equity stuff for Bloomberg News. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. As John was reporting earlier, got some University of Michigan sentiment data here. I don't know, a little smidge weaker on the margin. I don't know if you make a big deal about it. I don't. Joanne Shu, she is Surveys of Consumers Director at the University of Michigan. Joanne, talk to us about some of the sentiment data you guys have reported today.
Essentially, sentiment edged down just a bit from last month. It's not a dramatic decrease, but overall consumers' views continue to be quite subdued about the future of the economy. We're seeing this for all index components and across multiple dimensions of the economy.
What about inflation expectations? Because that's a big question here as we're looking for inflation to stabilize, but it still remains fairly sticky above that 3% mark. Excuse me, the 2% mark.
Inflation expectations for the short run ticked down just a little bit but it still remains quite high, much higher than last year. For the long run, it ticked up just a little bit, lower than what we were seeing in April and May, but again, much higher than last year. We're seeing quite a bit of uncertainty over inflation. Consumers continue to be worried about tariffs, and this was before the announcement from yesterday of the extra tariffs that were being implemented. Consumers are still quite worried that tariffs are going to pass through to higher consumer prices in the future.
Joanne, we see the headline University of Michigan sentiment data came in at 55.1. Where would you like to see that? Where's a reading that would signify, hey, we're in good shape here?
We want to see several months of sustained improvements, and that's not what we've been seeing over the course of 2025. Over the course of this year, we've seen pretty dramatic declines, and then we've kind of been bouncing around in the 50s. This is not a strong reading, and for signs of confidence from consumers, we need to see an upward trend.
Very good. Joanne Shu, thank you so much. We appreciate that. Joanne Shu at the University of Michigan. So coming up, we're going to have a discussion. Anne-Marie Hordern, a Bloomberg television anchor with the Egypt Foreign Affairs Minister Badr Abdelati, talking about that part of the world. And it's been a United Nations week. It's been a busy week for world leaders here, even in New York City in particular.
Absolutely. I mean, we've seen people come into the Bloomberg office. We've, of course, held the Bloomberg Global Forum where we got to speak with heads of state. Lots of pension fund guys running around because, they have to make their case to these government officials and kind of hear what the pattern is, what the trend is in terms of raising money.
Yeah, absolutely. So, again, a busy week here in New York City with the United Nations General Assembly. A lot of news coming out of this week and a lot of government officials making their way. And we're going to talk to one right now. The Egyptian Foreign Affairs Minister Badr Abdelati speaking with Bloomberg television anchor Anne-Marie Hordern. Let's take a listen.
We welcome our viewers on television and radio for this important conversation as we've seen a ton of dialogue happen around this UN General Assembly when it comes to the changing geopolitical landscape. And I'm now joined by Egypt's Foreign Minister, Badr Abdelati. Minister, thank you so much for joining Bloomberg.
Thank you so much for hosting me.
You were part of one of the most significant meetings to take place at this UN with President Trump and other Arab leaders. What did the president tell you about how the U.S. sees the path going in terms of ending this war in Gaza?
Well, I mean, it was a very, very encouraging meeting. It was positive, to hear from President Trump his commitment as a president of peace to end this ugly war on Gaza, this Israeli aggression against innocent people from our point of view. So this is very important and encouraging, and also to talk about no annexation, to talk about developing Gaza where people will stay on their own land, and even those who left their homeland, they are entitled to return back. Those are very encouraging signals, of course, and messages.
Did everyone leave with a sense of unity about what the path is? And what is Egypt's role going to be in terms of the reconstruction?
Well, we have a unified Arab and Muslim position. We are in full support to the vision and the plan of President Trump to bring an end to this unjust war against innocent people in Gaza. For us, we have our plan. It's an Arab-Muslim plan for early recovery and reconstructions of Gaza, and it's endorsed by the international community, including European Union, Japan, Norway, most African countries. And what next will be, as soon as we have a ceasefire, then we will move ahead with hosting an international conference in Cairo.
When will that be?
Yeah, well, as soon as we have a ceasefire. So we are talking about 2, 3, maximum 4 weeks from having a ceasefire to host it. And we will have 3 events. One will be dedicated for private sector, for talking about security arrangement in Gaza, governance of Gaza, who will govern Gaza.
The former prime minister? Do you think he could be like the governor of this authority?
No. I mean, we are talking about Palestinian ownership. Of course, they have to govern themselves.
But what do you make of that idea that's being floated in the press?
Well, again, I'm talking about the Arab Islamic vision and the plan. We are talking about
security arrangement. We are training, providing training of Palestinian policemen. We are accepting deployment of international forces within specific parameters. And above all, the governance of Gaza will be entrusted to a Palestinian administrative committee consists of 15 persons, all technocrats, all from Gaza Strip, and they will run Gaza for a transitional period of time till we manage to empower the Palestinian Authority to ensure the unity between Gaza and the West Bank.
Following the strike from Israel on Doha, what is the dialogue right now in terms of getting the hostages out and the ceasefire you're talking about? What is Hamas's latest deal that they decided to put on the table? Are they even there?
Well, first of all, you know, whenever we are reaching the moment of truth to conclude a deal which securing the life of the hostages, you know, the Israelis are intervening to destroy all those efforts, and this happened 100 times.
What about Hamas also intervening and destroying efforts?
Hamas, they accepted, you know, the deal of Witkoff, the proposal of Witkoff on August 18th, and we had a deal and everything was perfect, but it was the Israelis who backed off. We said, no, we will not accept that. So, I mean, we need a political will. We need a seriousness from the Israeli side.
Just a few weeks ago at the Arab Summit, President Sisi called Israel an enemy.
No, this is not true at all.
I read the translation.
No.
The transcript.
Go to the original
So what did he say? How do you characterize this relationship?
He said that, you know, we have to work together in the area between, stretching from the Gulf till the ocean. We want peace. It's a strategic option. And, of course, we have to deal with all hostilities with any enemy without specifying. Of course, we have different enemies in the region. But for Israel is, we have a peace treaty with Israel, and we are honoring our commitment. And, of course, we have peaceful relationship with Israel. Of course, there are ups and downs because of the Israeli aggressions on Gaza, and that's is a main element of instability in our region. But at the end, we have peace with Israel, and we are honoring our commitment as long as Israel is honoring its commitment according to the peace treaty of 1979.
So it wasn't his intention to say Israel's an enemy, but do you think the 1979 peace treaty is at risk? There's been tons of acrimonious statements between the Israeli and Egyptian press.
Well, I mean, you can, of course, focus on the official discourse in Egypt. Of course, our discourse is focusing on Israel and a country with whom we have our peace treaty. Of course, the Israelis are spreading out allegations that there are military buildup in Sinai, and this is not true. This is nonsense. All movement of Egyptian troops or equipments in Sinai were conducted based upon an agreement with the Israelis during the period of the surge of terrorism in Sinai between 2011 till 2015. So everything was in full cooperation with them, with their consent.
But what do you say to those who think there's real chance of war between your two countries?
No, again, we have peace treaty. This is the main pillar of stability, of peace in our neighborhood, and we are fully committed to our peace treaty. Again, yesterday or the day before, President Sisi spoke openly, I mean, with government that peace is a strategic option for Egypt, and we are abiding by our commitments as long as the other side is, the Israelis are honoring their commitments.
You mentioned Sinai. For the Palestinian people, this is a real humanitarian crisis. If vulnerable people want to come into Sinai, should Egypt let them in?
Come on, you know, let us be serious. There is no what's so-called voluntary displacement or forced displacement. Displacement is displacement. The Israeli intention is to eradicate people from their homeland.
But I'm talking about the Palestinian people. If they want to flee on their own volition because they are nervous, should they not be allowed in?
If those will leave their own homeland, they will not be entitled to go back, and that would be the liquidation of the Palestinian cause, and we will not allow this to happen. If you are making life miserable, unbearable, if you are starving people, if you have a man-made famine and starvation, if you are killing people systematically on daily basis, this is not a voluntary displacement. You are pushing people out of their homeland, and this is not acceptable, is in clear violation to the Geneva Convention, to all norms. Why? There is no ethical or logical or legal basis for pushing people from their homeland. By making life miserable, you are pushing people outside their land.
Mr. Abdelati, thank you so much for your time, and I look forward to the conference Egypt will be holding after there is potentially some ceasefire. That was, of course, Egypt's foreign minister. I'll send things back to you.
All right, very good. That was Egypt's foreign minister of foreign affairs, Minister Badr Abdelati. Speaking with Bloomberg television anchor Anne-Marie Horde-Dern. All right, let's get a check back on those markets. We go to John Tucker for a Bloomberg Business Flash. John.
All right, we're mixed right now, the major averages. And the theme today seems to be inflation. We got a lot of indications that inflation had moderated, or at least not increasing, as some had feared. The S&P 500 right now, 11 points higher. That's up 0.2%, 66.16. The Dow Jones Industrial Average up 186 points right now. That's up 0.4%. NASDAQ 100, that's the outlier, the tech-heavy NASDAQ, 41 points lower right now. That is down about 0.2%. In the meantime, John Stolfus at Oppenheimer says, you know what, the current environment does point to more gains for stocks.
The overall effect, we think, is a broadening of the market rally that we have seen. It looks persistent. It still is led by tech, because that's where the earnings are, or perceived to be going forward at a stronger rate.
Earlier today, we got the personal consumption expenditures price index when you strip out food and energy. This is one of the preferred measures of inflation for the Federal Reserve policymakers. That grew at a slower pace last month. So again, giving some breathing room to the policymakers at the Fed. The more policy reactive two-year yield unchanged, 365 right now. The 10 unchanged at 417. And the $14 billion price tag proposed for TikTok's U.S. business, that is being valued relatively cheaply. So
huge. It's social media. It's massive, and it's being valued, I think, like just over 1.5 times sales.
So this presents a bargain for the suitors like Oracle at this point. So we'll see what happens. Also, they're partnering with Silver Lake Management among the possible beneficiaries. One of the stories we're following for you today on the Bloomberg. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Scarlett and Paul.
All right, we're going to dig into the outrage over the valuation of TikTok a little bit later on, but let's go from the micro to the macro and talk about the data that came out today. Jeffrey Cleveland is chief economist at Payden and Regal, and he joins us now from Los Angeles. And Jeffrey, reflect on the data we got today. Personal spending rising more than expected. Tame but sticky inflation, all in the context of that stronger than expected second quarter GDP read that we got yesterday. Is the market right to price in rate cuts in October and December?
We think so. We think we're still on track for rate cuts. The reason why is inflation. We expect inflation to moderate a bit through year end. So that core PCE figure that you mentioned this morning, for August, it was up just 0.2, which keeps us on track. We think by year end, core PCE on a year basis will be 2.6. So we'll moderate a bit from the current reading of 2.9. So I think that alone keeps the door open for rate cuts. And I think it's good news for markets because it would be rate cuts happening not because of some economic calamity, but because inflation continues to moderate. So more of your soft landing vibes rather than your recession vibes would be the story there. And I think, the consumer spending numbers this morning, then the data that we saw yesterday for Q2, we see a very resilient consumer despite all the shocks that have been thrown its way so far this year. So good news overall.
And Jeffrey, you economists actually got it on the nose here today on this PCE data. Pretty much everything came kind of right in line with expectations here. What is your broad takeaway about kind of the inflation environment?
Well, that won't happen again, probably, right? Economists getting it right. Yeah, so if you look at the data in a little more detail, Paul, you see that goods were a bit of a drag on the month. So maybe the tariff story has already played out. Maybe the tariffs are not feeding through into consumer prices as much. I think there's a few different stories you can tell there, but the worst fears or the big fears on tariff-driven inflation really haven't panned out. And then going forward, we're optimistic that we'll get help in two areas, which will help inflation moderate. So on non-housing services, those prices should continue to cool off along with the labor market. And then housing. Housing, has been a big contributor to core inflation the last few years. It's sticky metric in the government data, and we think that will continue to fade out over the next 12 months. We saw that. I think we're going to see that in the CPI, but also in the PCE. And so overall, that should help bring core inflation lower. On the next 6 to 12 month basis. So we're inflation doves, if you will.
Yet you look at what's going on when it comes to consumer sentiment, and there are signs of perhaps not everything as well. The latest University of Michigan sentiment declining to 55.1, and I know we're talking about really small amounts here, but consumers don't necessarily feel more encouraged as of late. How do you balance that with what we're seeing in the macro data?
Well, I'm not surprised given all the headlines that consumers have to face, right? So you've got everything from tariffs to potential layoffs, weakness in the labor market, all kinds of economic policy shifts, backtracking. So things of that nature, I think, weigh on the consumer. But we always say at Payden, watch what the consumer does, not what the consumer says. So consumer sentiment surveys are not that valuable for us. And I think that's played out through Q2 and data we've seen, and into August in consumer spending as well. The consumer continues to spend. Why might that be? Well, when we look at aggregate income growth, we always talk about that. It continues to grow in nominal terms, Scarlett, like at a 4 to 5% clip. So the bottom line is, if the consumer has income growth, the American consumer will find a way to spend. And that's been true despite all the shocks that I think are weighing on sentiment indicators.
Yeah, the consumer spends when we're not feeling good. The consumer spends when we're feeling good. We're just spending, right, Paul?
As long as they have jobs here. A red headline crossing the Bloomberg terminal. ByteDance to get about 50% of TikTok U.S. profit under Trump deal. That's interesting. We'll have more reporting on that, but that may explain why some of this valuation talk is making a little bit more sense here now. Jeffrey, one last thing here. The labor market, lots of different ways to look at it. How are you thinking about it?
I think the labor market has clearly softened. I mean, we look at the payroll survey to us. Bond market nerds is one of the most, obviously high frequency, but high quality data points that we can look at. So the fact that the 3-month average of non-farm payrolls has slowed to 29,000, that really gets our attention. It's a concern. Rarely do you slow, that much. And outside of a recession, it's happened a couple times, mid-60s and mid-1990s. So maybe this is a mid-1990s scenario, and we'll see things pick back up. Other similarities would be the tech investment that we are seeing. Our chart of the week this week, Paul, we looked at the tech as a share of growth, and it's about 40% of growth in the GDP accounts in the last 4 quarters. So that's keeping the story going despite our concerns on the labor market side.
Jeffrey, thanks so much. Always appreciate your analysis. Jeffrey Cleveland, Chief Economist for Payden and Regal out there in LA, joining us via that Zoom thing here. In the world of the big media companies, what's left of them? The latest deal kind of out there in the works, potentially in terms of just kind of in the zeitgeist, as Tom Keene would say, is Paramount and Warner Brothers to Discovery. Should those companies get together to compete better against Disney, Netflix, and maybe even some of the technology companies? Well, Geetha Ranganathan, she is our go-to voice on all things in the global media business. She's a senior media analyst at Bloomberg Intelligence. She's out with some research saying, hey, let's think about this streaming business. What would happen if you did put Paramount and Warner Brothers Discovery together? What would that mean from a streaming perspective? Geetha, what's your research show here?
Yeah, thanks so much, Paul. I think the combination obviously makes a ton of strategic sense, obviously, but also a lot of economic sense. And we ran some numbers, and what we're seeing is putting together those two businesses. I mean, Paramount is by definitely a subscale player in the streaming space. I would argue that maybe HBO Max is definitely in a better position, but again, you look at the number of subscribers, about 125 million. You put those two together, however, you do get 200 million subscribers, so they're already ahead of Disney. Still a little bit of a far cry from Netflix, but it's not just subscriber numbers that matter anymore, Paul. It's also the profitability. And Warner Brothers Discovery is actually already on this path. They've turned very profitable. And if you just run some of those numbers out, going out to about 2027, we find that the two businesses combined can generate about $8 billion in EBITDA, which would be almost double of what Disney would generate in that time frame. So really, I mean, it puts, I think, the combination puts, the streaming business definitely on steroids, if you will, makes a ton of sense.
Makes a ton of economic sense, a ton of business sense. Does it make sense for David Zaslav to be sold to Paramount?
I think so. I think ultimately it's obviously, Scarlett, it's going to come down to price. It's going to come down to a few different things. So remember, they do have a split that they were planning to do by the middle of 2026. What David Zaslav and the board really have to think now is if Paramount does come up with a bid, which is for the entire company, does it make sense to sell to them or wait, go ahead with the split and then really hope to kind of play up the value of those assets? So I think that is really the biggest question for the Discovery management team right now.
What do we know about the big investors in both of these companies? Do they want a deal to happen, Geetha? I mean, is this something that, because I agree with your research, it makes sense that there could be a real benefits here to putting these two companies together, which isn't always the case, particularly in media mergers.
Yeah, so it's surprising, Paul. I think everybody wants a deal, whether it's, the Paramount investors, whether it's the Warner Brothers Discovery investors. And if you just kind of look at the run up in the stock. So about 2 weeks ago, we got, this news piece suggesting that, Paramount was looking at Warner Brothers very seriously. Paramount stock, after that news broke, is up 30%. So obviously, people are kind of looking at Paramount, having some serious media ambitions. I think this really gives them strategic direction. This really kind of puts them on the media map. And of course, Warner Brothers Discovery is up over 60%, just as those kind of assets. I mean, these are undoubtedly, Paul, these are, and you will definitely agree with me, these are once in a generation assets. I mean, these are the crown jewels in the media space. So everybody obviously has to look at them, and Zaslav is absolutely going to leverage that the best he can.
All right, Geetha Ranganathan, thank you so much. Bloomberg Intelligence U.S. media analyst joining us from Princeton. And Paul, there's another story that I noticed about YouTube. TV subscribers may lose access to Comcast, NBC, Universal Networks. It's like they're the new cable operator.
Yeah, it feels like just like those negotiations they used to have and those disagreements they used to have between the programmers and the cable distributors, whether that's Comcast or Charter. Now the distributor is YouTube. It's the internet, and if it's the same kind of situation. If I'm, a programmer, I want to get paid as much as I can. If I'm the distributor, in this case YouTube, I want to pay as little as I can. So somewhere in the middle, hopefully there'll be a deal
and
there.
possible blackout for consumers.
Yep, that's what we always hear. Yep. So, all right, we'll stay on top of that news. Looking at the markets here, not a whole lot happening here. The S&P's up 4 points, the Dow's up 130 points, and the NASDAQ is down 69 points. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker of the Bloomberg News. And with this Bloomberg Business Flash, we're brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. A bit of a directionless market after 3 days of declines for the S&P 500. Right now, you have 9 of the 11 major industry groups in the S&P 500 pushing higher. The biggest drag is coming from information technology right now, and that is home to NVIDIA. Those shares are down just about 0.7%. Over 405 stocks higher, 94 lower in the index. Trading volume, it's about 1% higher than normal for this time of day. Meantime, Nadia Lovell at UBS says caution is warranted by investors in the near term.
Fair to say that the next few weeks is probably requires some level of caution and some prudent risk management. We've had a pretty strong rally, and that's not to say we sort of expect any major pullback, but we think that just near term, the balance of risk looks a little less compelling.
Latest inflation data seems to give the Fed just a little more breathing room at this point. The personal consumption expenditures price index, when you strip out volatile food and energy, rising 0.2% in August. Compare that with a 0.3% gain in July. Let me finish up with shares of Costco. Right now, they're down 2%. They reported mixed fourth quarter results. Love Costco for the 1 gallon bucket of peeled garlic. And the things you
How
can
long
do
does
with
it
that.
take for you to use that up?
Pretty quick. I have a great garlic chicken recipe.
Ah.
You're gonna put it in a Dutch oven and throw 40 cloves of garlic in with chicken.
40 cloves?
Yeah, with chicken thighs and a little nutmeg.
All right,
Great
we know what
recipe.
John Tucker's doing this weekend.
Yes.
I won't know what he's doing on Monday after eating all that garlic.
All right,
We
John
check the
Tucker.
markets for you all day long, right here on Bloomberg Scarlet.
I'm waiting to be invited over for dinner now.
Okay, done.
Let's talk about today's big take. Jeffrey Epstein, who needs no introduction, needed expert help, and Bloomberg News investigated some of his emails to determine who these people were and what kind of help they provided. And Max Abelson, who is one of our esteemed reporters here at Bloomberg News, he's a finance reporter. He wrote the big take for us. And Max, this is all the results of Bloomberg obtaining Jeffrey Epstein's personal emails, his Yahoo Mail account. And you guys sifted through everything and found a couple of consistent themes. And one of them was that a lot of prominent people helped him out.
Yeah, that's right. That's right. Now, I'll tell you all about that theme in our story. But first, I just want to give a shout out to, the team. I wrote this with a lot of people, and my colleagues Surya and Jason and Ava, our editor Lauren Eder and John Voskuil. I mean, as you can imagine, honestly, the truth is writing something of this kind of scale is not easy, and it's been really something working with these people. What we found when we looked in this cache of emails, we've already published some really great stories that have had real impact in the real world, including on the former UK ambassador to the US, and a really important story about Ghislaine Maxwell. What this story does is something different. And what it addresses is a really important time in Jeffrey Epstein's life. This is 2006, 2007, 2008, when investigators in Florida and federally are really closing in on him. And what our story describes in really new levels of detail, it kind of adds to the public record, is it shows who he turned to in to use a phrase from him and the philosopher William James, his hour of terror. And he turns to academics, and he turns to crisis counselors, and he turns to lawyers, and he gets a really remarkable array of advice and support.
I mean, some of the lawyers, names we all know, like Alan Dershowitz, but there were other heavy hitters in New York and in Washington, D.C., that even after part of his initial past was known, they continued to come to his defense.
Well, look, on the one hand, that's definitely how the law works, and people are allowed to get the best legal defense they want. I think as a journalist who covers money and power, what was meaningful to me about working on this story is it shows what money gets you, and it shows how power works. and you have someone like Ken Starr, whose report as the independent counsel got helped lead to Bill Clinton's impeachment. You have it's not simply a matter of Ken Starr representing Jeffrey Epstein. It's that our emails show, for example, how Epstein, essentially tells him what to say and how to say it, and then even sort of seems to try not to hurt his feelings. I don't want to put words in your beautiful mouth, he says at one point. I don't want to put words in your eloquent mouth. I don't want to put words in your eloquent mouth, he says, and then of course goes on to give him a numbered list.
So you begin the story, the article that you write, with different options for Jeffrey Epstein to say sorry because of what the feds have been chasing after him in Florida. And there are 3 different options, and he did pick one. Is it clear that he went forward with that? I mean, he picked the one where he really had to lay it on and say, this was terrible. It was a bad decision in every way.
Well, actually, really all he says about one of the 3 options is he says, third has promise. And,
okay.
And
he didn't commit to it then necessarily.
The third has promise. Well, what's powerful for me about this, and thanks for bringing it up, is that Jeffrey Epstein never issued a broad public apology to his victims, especially not in the way that these options envisioned. And what we found is that Mary Spaeth, who was a sought-after crisis strategist, she was the director of media relations for Ronald Reagan's White House.
Heavy hitter.
She sends him 3 options for an apology, and this is February 2008. We don't know why exactly, and we don't know what he was thinking, but it certainly is a few months before his jail sentence begins. One of them is quite meek and really it talks about being a kid and having to apologize when you're a child. The second one is very, very simple. He just offers his apology to the community. And then the third one is the one that really, really caught my eye. The third one begins with ideas from a philosopher. William James's work? He talks about the hour of terror and the hour of satiety. And he says that I've been forced to ask myself what's important. And he offers a public and heartfelt apology. That's the one Epstein writes back about. He says, third has promise.
Talk to us about Harvard. There's a relationship there between Mr. Epstein and Harvard as well.
It's really something, isn't it? I think that what's been well established in the public record is that Jeffrey Epstein had vivid, strong ties to academia, especially the Ivy League and especially Harvard. But what our reporting does, I think, is really show the depth of these relationships. And he's got people, he's got, the moment that really stands out to me, and I want to give a shout out to Lauren Etter, our editor, who loves this part. In fact, I think she might have found it. There's a neurologist named Mark Tramo who didn't respond to our request for comment. So on the day that the New York Post reports that Epstein is preparing a guilty plea, Tramo emails him and says, he emails Epstein's team, one of his assistants. He says, I read the newspapers this morning. Please remind Epstein, that boys from the Bronx, even if they end up at Harvard, have long memories, know all about cops, and stay true to their friends through thick and thin, no less peccadillos. And, it's just a real example of what was really going on behind the scenes and how people were really genuinely willing to offer their support. I want to give a quick shout out also to really think this is even later. This is May of 2008. There's a professor named Coughlin,
right?
And he says, guess what? I've decided to be dean of social sciences, he says. I think the phrase might be dean of social science at Harvard. And Epstein writes back and says, unfortunately, jail starts Monday. And Coughlin says, damn.
Okay, there you go. The story that just keeps on giving for Global Wall Street, for Washington, D.C. as well. Max Abelson, finance reporter for Bloomberg News, with the big take story on Jeffrey Epstein. You can read more of this story on the Bloomberg and at bloomberg.com/bigtake. We appreciate taking some of Max's time here. Looking at the markets here, the S&P's up 8 points, the Dow's up 125, and the NASDAQ is down 40 points.
Tim is Stephen, if I misspoke before.
Very good. This is Bloomberg.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. The business of sports. We turn to Randall Williams when we want to go there, because that is, and Scarlett Fu, of course. Randall Williams, U.S. sports business reporter for Bloomberg News. We got the Ryder Cup out there on the island, on the East End there, Randall. And I saw pictures. I mean, the hospitality tents are just massive. I mean, it's going to be a huge, huge event for the game of golf for Long Island. President Trump is on his way there now, and he's going to spend a few hours there this afternoon. This is big.
Yeah, golf in particular has been one of his favorite sports, and he enjoys golf courses in his off time, so it makes sense for him to show up. But sports in general have been a place for Trump to go and have a good time. He was at the Super Bowl earlier this year. He was at the U.S. Open, and now he's at the Ryder Cup.
Who else is going to be attending the Ryder Cup? Because, I mean, we're just talking off air about how Ryder Cup gets a lot of people excited because it's U.S. versus Europe, for instance. So people get all rah, rah, rah about it. But there's a lot of people who will be attending the event that have a lot, they're stakeholders when it comes to power and money.
I think obviously you have the PGA Tour, you have probably some live golfers as well. Lots of politicians. If Trump's going to be there, then I think naturally that he'll attract a crowd. But I think all of these sporting events also serve as meeting and networking time and things like that, and maybe even places where deals can be struck. So depends.
Yeah, I've been to a bunch of these things, and the hospitality tents get bigger and bigger and
more
bigger
expensive
every year. It's just extraordinary.
This is a public course, Paul, you were saying?
Yes. Yeah,
because I heard it's beautiful.
Oh, it's fantastic. It's and then they have a number of courses out there. The green, the red, and the black course is the best. And anybody can just go and pay your whatever county fee.
If you can't tell, he'd rather be there than here right now.
Well, on a Friday morning, maybe, yeah.
I also want to talk to you about the news we heard a couple days ago. The Patriots selling more private equity.
Yep.
Coming into the NFL. It's not a floodgate, but it's certainly almost a deal every couple of months we hear.
No, I think that's the perfect way of putting it. We had a couple deals at the end of last year with the Dolphins and Aries, and then the Bills and Arctos, and then the Bills and the Chargers and Arctos earlier this year. And then we have 6th Street and the Patriots who are selling 8% of the team. 6th Street will take 3%. There's another 5% going to another investor as well. And so, yes, you're right. Gradually, these things are happening. Before a deal's in a little over a year is very good.
Are there any teams that are adamantly not for sale that do not want to take on any outside investors?
I would say that the older the team, the less likely that they're going to be taking on private equity. Yep. And I mean, you look at the Giants, for example. The Giants just sold to the Koch family, and they could have taken on private equity dollars, but they just don't need it. And I think some families use it as an option, so they'll go to private equity and say, hey, how much are you willing to pay? And then they'll be like, okay, thanks. And then they'll go to somewhere else and be like, hey, I just had a conversation with so-and-so, and they're willing to pay this. What can you do to top it?
That's quite some price discovery there.
Exactly.
But I think it's a great source of liquidity for an owner.
It is.
Because these franchises, some make positive cash flow, but a lot don't.
Right.
So you're putting, not only did you buy it for $1 billion or something, but you're putting money back into it, not necessarily the NFL, but more in Major League Baseball. But boy, if somebody's going to give me a huge multiple
800
above
million,
one, I'll
500 million, 600 million.
Liquidity, and I still have control.
Exactly. And these are not control stakes. A lot of these investors will put money in and they'll go away for a very long time.
So they're completely silent, passive investors.
Completely silent.
They're not going to go in there and optimize and use their private equity turnaround skills.
Absolutely not. I mean, they're essentially writing a silent check and going away. Now, I don't know specifically where this money is going to go with the Patriots, but I mean, it could go anywhere. If Bob Kraft wants a yacht, if he wants to build a new house. That's what this money is being used for. He could also reinvest it into the Boston sports franchises that he owns there. And that's what this is being used for. Before private equity got involved, there were a lot of limited partners who were looking for control and being like, hey, if I want to buy 12% of this team, then I want to have a path to control. NFL owners were a little bit nervous about that. They didn't want to do that. And so private equity has opened up the floodgates a little bit.
Yeah, it's interesting. And where I think you see the opportunity now is, you were mentioning a couple days ago, is some of the second or third tier sports.
Lacrosse teams,
and things like that.
Pickleball teams.
Women's soccer. Even that women's soccer, I would say, is now priced out for a lot of people. Because those
sports are becoming a luxury event if they aren't already, especially in this city. I mean, you can't go to the U.S. Open, a Knicks game, without paying a hefty price for a good seat. So it doesn't surprise me.
Talk to us about the Baltimore Orioles, because they too have taken on a new investor here, and I've lost count of how many investors are in that club.
You and me both, and shout out to my colleague Aisha as well. She discovered this because Mark Ein, I believe that's how you pronounce his name, posted on Instagram and said, I'm now an owner. And so we called him, we reached out to the team, and after some deliberations, they did confirm that he was buying in. His stake hasn't been disclosed, but you're right. This is a very, very big ownership group, and hopefully they can lead the team to some wins.
He worked for Carlisle earlier in his career, and of course, David Rubenstein is the ownership group. He leads the ownership group that controls the Orioles.
Right, and an investor in the Orioles is Michael Bloomberg, the founder of Bloomberg LP and this radio station. So we want to point that out. But I guess the takeaway, which has been my entire career looking at this stuff, they never go down, the valuation of these sports franchises.
Has any gone down, Randall?
No, not in many years.
Wavering?
I think that things have slowed, but with the media deals getting bigger and bigger and the events becoming more grand, as long as the broadcasters are willing to pay and the teams are operating as functionally as they can be, then they've risen in valuations.
Been a great business. Randall Williams, thank you so much for joining us, U.S. sports business reporter for Bloomberg News. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence. starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning. Paul Sweeney and Scarlett Fu here in the Bloomberg Interactive Brokers studio. I got that in reverse. Interactive Brokers studio here at Bloomberg headquarters in Midtown Manhattan. There we go. We have a full jam-packed hour coming up for you here on Bloomberg Intelligence. We're going to talk about President Trump's pharma tariffs plan and how it may not affect as many drug makers as you might have thought. Sam Fazeli of Bloomberg Intelligence, who heads up our global industries and, of course, pharmaceuticals sector research, will be joining us on that. Mandeep Singh, our senior tech industry analyst for Bloomberg Intelligence, will be talking to us about TikTok's $14 billion price tag. That's an interesting one, and perhaps why some people think it's too low. And we'll talk a little bit about munis, particularly when it comes to public schools. Aaron Hudson, who's a Bloomberg Muni bond reporter, will be joining us there, and Shaheen Contractor, the BI's senior ESG strategist on the latest in ESG. Is there anything going on in ESG these days?
It is controversial, especially in the U.S. Outside the U.S., people still really keep ESG as a key focus of their investment.
Yeah, it feels like it's kind of dead, or at least publicly dead here in the U.S. Let's first go now to John Tucker for our Bloomberg Business Flash. John?
All right, guys, the major averages right now, they are mixed, with the Dow up 126 points, the S&P 500 5 points higher. The NASDAQ 100 right now, that's down 53 points. Among the best performers in the S&P 500, you have Intel and Boeing. Intel has approached Apple about securing an investment there, and federal regulators scaling back obstacles for Boeing to deliver some of its newly produced aircraft. That's a report in the Wall Street Journal. The inflation data that we got today, a little tamer than expected, so that is giving the Fed a little more wiggle room. Meantime, Victoria Fernandez at Cross America Global says the backdrop for investors, that does remain positive.
You look at expectations, earnings expectations are going higher for financials, for industrials, for tech. You've got margin expectations going higher, 14% margins for this quarter. So if those hold up, then you should continue to see an economy that holds up.
And President Trump posting on social media this morning, starting October 1st, this is next week, will be imposing 100% tariff on any branded or patented pharmaceutical product unless the company's building their pharmaceutical manufacturing plant in the U.S. It doesn't stop there. Imported heavy trucks subject to a 25% duty. Kitchen cabinets and bathroom vanities. It's like everything except the, well, it does include the kitchen sink, will be hit with a 50% charge, and upholstered furniture imports to be taxed at 30%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
JT, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Brokers studio in New York City. Gridlock, New York City. We are streaming live on YouTube as well, so check us out there. Go search Bloomberg Live Radio, and that's where you'll find us. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Nora Melinda. Nora, what are you looking at?
Looking at shares of Costco right now in trading, that's ticker COST. We are seeing shares falling as much as 4.1%. This is their worst day that we're seeing since June of this year. So we saw the company reported quarterly profit that was better than expectations, but it seems as though people are kind of viewing the report as overall very mixed. I mean, Truist is saying that while they are leading to a lot of the exclusive shopping hours and Instacart credit are leading toward a significant number of trade-ups, Costco's valuation makes it challenging to put fresh money to work. So we are seeing some pressure right now on the stock and trading today as people really digest those results that we saw.
Hot dog and a Coke, $2.50.
That hasn't changed, right?
And the pizza.
It's never changed. What's that?
The pizza, fantastic. I mean, I like to swing in there and get a slice.
Okay.
Not too bad.
Those are all loss leaders for Costco because they know everything else, the price point is at least $10.
Right.
Let's talk a little bit about pharma companies, starting with the biggest, Eli Lilly.
Yes, keeping eyes on Eli Lilly today. That's ticker LLY. And of course, this is after the news that we've been seeing regarding tariffs. This has been very topical as of late here. So we were looking at U.S. drug makers in particular because President Donald Trump said that he announced a plan to impose a 100% tariff on branded and patented drug imports. And so he did include exemptions for companies with U.S. manufacturing. So as you would expect, you are seeing a bit of a tailwind here for these U.S. Homegrown pharmaceutical companies, but it seems as though you guys will be digging into that a bit more. So what that will look like here. But we are seeing a bit of pop in shares here for Eli Lilly, up as much as 2% right now in trading.
All right, how about some of the home furnishings companies? They're also, I don't know where that came from. Why does he have a problem with the home furnishing?
I mean, more tariffs here. So
right.
looking at shares of furniture retailers, as you mentioned right now, RH is one of the names that I have in focus here. That's ticker RH. Makes it pretty easy for you there. Shares are down as much as 4% in trading today. And this is really just pressure that we're seeing here after Donald Trump announced that the U.S. will enact new tariffs on imported kitchen cabinets, bathroom vanities, and other home products next week. So, I mean, we do know that the CEO of RH has been a critic of Trump's trade policy. They are seeing the stock fall as much as 4%, as I'm saying today, that we're seeing here on this Friday. So lots to kind of keep an eye on as we're looking at the furniture retailers and where tariffs are really ricocheting into different sectors here.
Yeah, certainly bad news for most people because I can't think of that many pieces of furniture that are made on a large scale inside the U.S.
Yeah, I mean, we were just talking about the fact that so many furniture stores are down south, North Carolina, Virginia, but much of it, really a lot of the materials being imported here.
Well said. All right, Nora Melinda, thank you so much. And of course, for more conversations like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We got to talk pharma stocks, Paul, because Nora mentioned this a little bit earlier on. The president has planned to impose a 100% tariff on branded drug imports. He talked about this most favored nation status for U.S. consumers. Drug companies, of course, are up in arms, and they've been trying to find ways to get around it, to get an exemption. So let's bring in Sam Fazeli. He is Director of Research for Global Industries and Senior Pharmaceuticals Analyst for Bloomberg Intelligence. And Sam, the reporting that our colleagues over at Bloomberg News have done indicate that the drug makers are not all that concerned about this tariff plan for pharmaceutical companies because they have all made plans to invest big time in the U.S.
They have indeed. And, you know, Scarlett, this has been something that's been going on for since the announcement of we're going to punish you somehow. Tariffs, most favored nation, or whatever other mechanism that's been put forward, unless you bring your manufacturing here. So it's the same rhetoric, it's the same story. And some of the companies have pledged, we were just adding up, we just published the list of things that pharma companies have said, 50 billion here, 45 billion there, 60 billion there, numbers at least, and they look good on a piece of paper. And a lot of them already have manufacturing there. Some of them have started making new sites. Maybe they would have done it anyway because you need manufacturing for the new products that you have because they're slightly different, etc. But I think the reason you see pretty much everything's green on my screen from the large pharma land, except for Novo Nordisk, I think, you know, the top performer is Glaxo, which is the UK market is still open, actually. So I think it's because of that. It's because people know, well, actually, this isn't going to happen. 100% tariff is not going to happen because they've done what the president is looking for.
Sam, what is all this just generic? I mean, just all this talk about tariffs on pharmaceuticals, the restricted funding to American universities. In your circles, where people are working day in, day out, trying to develop new drugs, new therapies, what's the feeling in that community?
The feeling is thorough confusion. Because on the one hand, you want skilled workers in these skilled jobs in the US. On the other hand, you're not allowing them to come from overseas. I don't know how many hands I need here. On the other hand, I'm going to borrow your hand, Paul. We've got the situation where we have science that's being defunded to a degree. Now, we have to be careful there because there's particular pressure on certain types of research, certain types of science. But the National Science Foundation, the NIH, those are all the sources of these PhDs and biomedical engineering that are required to run these manufacturing facilities. They're being impacted. So what happens over the long run, if you can't bring the workers from overseas because of the H-1B visa issue, if you can't generate them internally, what happens in 5 or 10 years? Who's going to run these places? Therefore, confusion. So this, I'm trying to get my head around, is the US still for innovation or against innovation? I don't know what the answer to that is.
Seems like we're for innovation, but everyone here doing it has to be American. I don't know. That might be one interpretation of it.
But Scarlett, I buy that, and it has been the case. And you have some of the most innovative, some of the best people there, no question about it. But you still need the basic science and the funding to get them to that bachelor's degree, master's degree, PhD degree, to become the experts to continue to run these things. That's where I'm getting a bit confused. Maybe it's just me.
It's been explained to me by someone who runs a major university medical center that has a very large research capability, that it's roughly 2/3 of the funds come from the U.S. government and 1/3 comes from the university and other private sources. And that's kind of been in place for 80 years, that structure. And one could argue that structure has worked pretty well for humanity. Is there a belief that that's at risk?
I think there is. You know, you might want to listen to some of my podcasts recently. I did one with Elias Zerhouni on the Vanguards of Healthcare podcast. I did one with the CEO of Mark Foundation, who are the people who have either been involved in running the NIH, running R&D centers, that's Elias, or the Mark Foundation, who does finances very early stage translational cancer research. They are all seeing it happen around them. And of course, they are the sorts of people who can, to a degree, fill the gap, but you're dealing with billions of dollars. We need the philanthropy monies from the top 10 folks to come in to fill this gap that the NIH budget cut is leaving, the NSF budget cut is leaving. That's where I'm worried. And maybe unfairly, maybe it all comes out and people are still able to fund the research that leads to the innovations that we're looking for. My fingers are crossed. I hope that's the case.
All right, Sam Fazeli, always a pleasure speaking with you. Sam Fazeli is Bloomberg Intelligence's Director of Research for Global Industries and Senior Pharmaceuticals, talking a little bit about pharma and the search for talent, the need for talent in that sector here in the U.S. John Tucker pointed out a tweet from the president, not a tweet, a Truth Social post.
Okay.
Yeah, maybe it was also on X, where the president doubled down on his warning against Tylenol, telling pregnant women, don't use Tylenol unless absolutely necessary. Don't give Tylenol to your child for virtually any reason. Then he talked a little bit about breaking up the MMR vaccine into separate shots, which I think a lot of people have been doing already. You know, so that's kind of been consistent with what he's been saying. But this Tylenol story is still fascinating to me because it goes beyond what he tells Americans, but also how it resonates overseas.
Yeah, it's, I don't know. I think the science, from what I understand, the science is pretty clear, but some people have it in for Tylenol. I don't know. For me, it's always been the wonder drug for me. So, I mean, I don't care what
works for Paul Sweeney.
Yeah, it works for me. All right, let's go over to another interesting story today in the tech space. That's TikTok. It needs to be divested. The U.S. operations looks like there are some buyers out there. Now the question is, what are they going to pay for it? Mandeep Singh joins us. He's a senior tech analyst at Bloomberg Intelligence. Mandeep, I saw the reporting this morning from Bloomberg about a $14 billion valuation, and I was saying, what? Isn't it worth multiples of that? But then I see that there might be an arrangement where ByteDance is going to receive a lot of the profitability of the U.S. operation. What's the latest that you know? Oh, boy. See, Zoom. See, he's usually in studio.
It's that mute button.
Yeah.
Gotta be careful of that.
But he's a tech analyst.
Hopefully you can hear me
we got
now.
it.
So,
yeah, Mandeep.
Yeah. Sorry about that. So that profitability option is tied to the fact that, you know, ByteDance still has to run the operation. So what they have done is created two separate entities. One entity will house the data. It will control the content and the algorithm. So they are going to recreate the algorithm. and that other entity that ByteDance is responsible for will actually run the day-to-day operations. And, it will be responsible for showing the ads, any e-commerce that flows through TikTok. And so from that perspective, it makes sense that they will keep half of the profits, because guess what? A company like Oracle, yes, it can run the infrastructure, the app, but it doesn't have the expertise to, run the ad operations or do e-commerce. At the end of the day, it's more infrastructure than applications. And so from that perspective, it makes sense that, ByteDance is involved in running the operations.
And we've also learned today that ByteDance is expected to get about 50% of TikTok US's profit under this potential Trump deal. What do you make of that? This, again, is according to Bloomberg reporting. It has not been confirmed, and we all are waiting for things to be made official. Does that sound like a reasonable split?
I mean, think of it this way. Oracle was getting paid, let's say, TikTok US was generating about $10 billion in revenue. Oracle was getting paid $2 billion just for hosting the app and, storing the data. So it was a revenue generator, the TikTok contract for Oracle. Now that Oracle owns TikTok US, that revenue gets converted into a cost. So, and it could be at least $1 billion in cost. So from that perspective, the fact that Oracle went from $2 billion in revenue from TikTok to, having $1 billion extra in costs, it makes sense that they should get some sort of a deal when it comes to buying the asset. And so that's why that low price tag of $14 billion that everyone is surprised about, there's a reason for that. Because, if Oracle has to own this thing, they need to have some sort of incentive, because it's a $3 billion delta to their gross profit.
All right. So just to be clear here, what will these new investors, what will they be buying? And is what they're buying, is that $14 billion seem reasonable to you?
Yes. So my other minority investors, whether it's Silver Lake, and we still don't know all the minority investors who are involved here, but clearly, I imagine they're not responsible for the day-to-day operations. And if TikTok US was generating about $10 billion plus in ad and e-commerce revenue, that's why they want ByteDance to continue owning those operations, running those operations, because they don't want that 10 billion to go to, 5 billion over the next 6 months. And so that's why they are getting that 45 or 50% of profitability for TikTok US, even though they'll become a 20% owner of the TikTok US asset after the split.
All right. Very good. Mandeep Singh, Senior Tech Industry Analyst at Bloomberg Intelligence. I'll tell you what happened here. The bankers came up with a nice, clean, sleek deal. And then the lawyers got it.
It's always the lawyers.
And
spoken like a true former banker.
Yeah, I thought I was going to get a valuation of, $100 billion, and I'm getting 14. Thanks a lot.
Yeah, the lawyers had to look through everything, make sure everything's copacetic.
This structure's not going to work. It's not going to do it. I'm like,
let's
nice
add a couple
clean.
more pages.
Everybody gets paid. Story of my life. S&P up 9, Dow up 155, but the NASDAQ down 42. More coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News with this Bloomberg Business Flash. And we're brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Well, after 3 days of declines for the S&P 500, right now we're higher, but it has been bouncing between gains and losses today, kind of groping for direction at this point. And you can't keep the American consumer down. Among the data that we got today, personal spending rising in August by more than forecast. And then the Fed's preferred inflation gauge that came in at a slower pace. So it does give the FOMC a little more wiggle room when it comes to rates. Intel, one of the standouts today, those shares up 3.7%, jumping on a report of a plan to cut reliance on chips from abroad. And then you have Boeing shares. They're also higher today. That's higher because of a report that the Federal Aviation Administration will ease delivery rules on some of the 737s. Interesting one here, Fun shares. This is Six Flags. That is rising. Activist investor Land and Buildings Investment Management is urging the amusement park operator to consider a spin-off of its Fun REIT. This is a bid essentially to monetize the real estate holdings of Six Flags.
When was the last time you were at Six Flags Great Adventure, Jackson, New Jersey?
That was a couple of years ago.
Me
the
too.
Animal
Really?
Park. That's a lot of real estate, I got to tell you.
Yeah.
And the people ahead of me were feeding the giraffes Doritos. Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM-insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. We know that higher education has been tapping the muni bond market. They need cash. They need cash flow. That's been the case at the highest end, but the public school systems have also been doing this as well, Paul. And our Aaron Hudson, a muni bond reporter here at Bloomberg News, has been writing about that. So Aaron, welcome to Bloomberg Intelligence. Why are public schools facing more financial trouble right now? The president isn't targeting them like he's targeting the higher education sector of education, is he?
Well, so what the pressure that they're facing right now is it's kind of twofold, two main issues. There are multiple factors. The big one is that federal aid dollars that were tied to the pandemic have now ended. So that aid was really helping protect school budgets over the last couple of years. And now that aid was always temporary, but now that it's gone, they're really facing the rising costs that this inflationary environment is causing. So the cost to find teachers, to retain them, cost of materials. So that's a huge adjustment. Expenses are really, really rising. And then the other big factor right now is enrollment. So enrollment, due to the drop in the birth rate, just less kids in the country, that's been a persistent challenge. But since the pandemic, a lot of families made choices to move around. So some of that is lifestyle driven. But some of that is cost of living driven and just being priced out of certain areas. And that enrollment number is tied to per pupil funding. So the amount of money schools get is linked to number of kids.
Talk to us about Tom's River, New Jersey. I know it well. They put out great Little League baseball teams on a global scale, but they've got some problems, don't they, with their school district?
Yes, they have seen their credit score downgraded twice in 2 months. And what is going on there is the school district didn't want to raise property taxes. They wanted the state to give them additional funding. But the state is trying to sort of reallocate its funding. So they want to allocate more state funding to an underfunded district versus an overfunded district where property taxpayers could pay. So this was sort of a face-off between the district and the state. The district actually threatened to file for bankruptcy, so it got pretty tense. They did not do that. Instead, the state imposed the property tax hike, which is in the ballpark of about 15%. So because the state had to intervene to impose that budget and that tax hike, that led to this second downgrade.
I mean, and Toms River, this is in the Bloomberg reporting, Toms River, which is a big part down in the southern New Jersey shore. They have Toms River North, Toms River South High School. It's a big enrollment. It's the largest Republican-led town in the state.
Oh,
and
interesting.
The state is generally Democratic in New Jersey. But, you know, when you get out of the major cities of the North, very strong support of the Republican Party, Conservative Party, Toms River being one of those. So I don't know to what extent this became political.
Yeah, I mean, there's suburbs of New York City, and then there's the rest of the state when it comes down to it. So, Erin, the second downgrade for Toms River School District, what does that mean in terms of their borrowing costs?
Well, it definitely means that it will get higher for them. And it is, while what has gone on in Toms River, you know, is a very local story in many ways, it does kind of speak to this national, you know, and this bigger, broader trend that faces school districts, because if there is any change in the amount of funding that they get from the state, that can really impact their budgets. And so that, you know, it just speaks to this broader challenge. And there are these, you know, changes that, you know, could come at state levels due to a lot of the federal policies coming out of DC. So, you know, how that could directly or indirectly end up trickling down to school budgets.
Yeah, I mean, to that point, we know that food stamps, the Supplemental Nutrition Assistance Program, is something that at a federal level, the government is cutting back funding on, and so that ends up becoming the local school district's problem.
Right, yeah, because school districts receive reimbursement for the free or the reduced lunches that they provide to kids. So if the eligibility of getting those benefits suddenly changes, and then the school doesn't get that reimbursed money, do they front those costs? Is the state going to make up for it? Those become the questions. And if the state isn't able to make it up, what does the local government, the local
All right, so
to
kind of cover the shortfall, a public school debt issuance is at the highest point since 2020, I see in one of your stories. So that's what you're seeing in the municipal bond market. If I'm getting fewer funds from the federal government, I got to go out and get the money somewhere. So some of them are going out to the municipal bond market.
Yes, although there is a little bit of a nuance there, because when school districts are tapping the muni market, they are almost always doing it because they're doing a capital project of some kind. So when it comes to their operating budgets, that they really have to. That's the tricky part. We wrote several months ago about a school that was brand new in Texas that opened, but they didn't have the funds to hire the teachers to staff it. So. You know, that can be a little bit of the catch-22.
Well, then on the other side of the equation, you see some of these municipal bond stories about somewhere in Texas or Florida, they'll do a $20 million bond issue to create a football stadium for the high school team.
That's a priority in those communities.
I know, it is, but I just...
And actually, this all goes back to enrollment, because having the latest facility can help draw students in, and that can help your enrollment, which increases your state per pupil funding. So
okay,
it's
so
sort
there's
of
dorms,
this
there's
virtuous
fancy
cycle.
dorms, and then there's also big football stadiums, right?
Yes, exactly. But I mean, if you live in Community X, you go to Community X's high school, I thought, but I don't know.
Well, there's this increasing emphasis on school choice programs, which provides funding for families to go either to private school, alternative schools, and sometimes public school districts are kind of opening up so you don't have to be zoned to your neighborhood school. So that's just fueling this competition for students.
All right. I mean, I can't keep track. I mean, I'm just so glad I'm not in that business, because I would not know how to do it. Just trying to figure out how that all works. But we appreciate people who do understand that stuff, like Erin Hudson, Bloomberg Municipal Bond reporter, joining us here. It is UN Week here, General Assembly Week in New York. It's also Climate Week here in New
Why
York,
not just combine the two?
Put it all together, which means we need to talk to Shaheen Contractor, Senior ESG Strategist for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. Shaheen, a lot of focus this week on climate, as it tends to be during the United Nations, because Scarlett and I were at the Bloomberg Forum earlier this week, where climate change remains firmly on the front burner for, I would call it, rest of the world.
Yeah, everyone but the U.S.
Ex-U.S. But what does it mean for your world of ESG investing and thinking about some of those environmental issues when the U.S. president does appear in front of the UN General Assembly and effectively says climate change, transition to new energy, it's all, in his words, a hoax. What does that mean for your kind of a world out there?
So, Paul, I would say, just given it's Climate Week, this topic does remain front and center for most people. I think what's happening, and from the conversations we've had, is there's this shift from climate mitigation to almost adaptation, if that makes sense. So it's almost like, oh, we're going to not pretend like we're going to hit this 1.5 degree warming world. We're just going to need to adapt. So it's all about resilience. It's all about things like that. The one thing I would say that I think is surprising is that climate funds so far this year have actually seen outflows, while the clean energy index, which might be a surprise to people, has seen outperformance. So there's so much of it is riding right now in sentiment versus performance.
Right, politics, you could argue as well. What about funds that are going to continue to invest in those themes, but maybe don't want to advertise it to everyone? They don't want to brand themselves as ESG funds.
Yeah, so you're talking about the rebranding of ESG funds, where a lot of them are dropping ESG-related terms from the name. We've tracked about 700 funds that have done so, which is about 20% of the assets that we
pretty
track.
Telling.
I will say, though, that a lot of it is driven by the EU regulations, so not this, like, I don't want to be associated with the term anymore, which is a bit of it. But the EU put in place this rule where 80% of the assets of a fund has to meet stated E&S objectives, and funds are just choosing to move away from it or use alternate terminology rather than complying. So I've seen funds moving from, and Paul, you might find this interesting, but they changed the name from Climate Change Fund to Change Fund. It's like, what are you changing? Go figure.
Just general change.
Yeah.
So is there a way for the U.S. ESG community to kind of reverse this narrative here? Are there any efforts to say, hey, let's take a different tack. Let's not focus on the environment. Let's focus on profitability and return on investment and lead with that. This is good business. That also happens to maybe be good for, are there any movements there?
I think, if you ask me, that's always been our stand, and that's always been the case. I think there is a shift in conversation to a term called resiliency. And for a lot of people during Climate Week, it's resilient to, it's that same adaptation theme that I mentioned, where it's, companies that are helping maybe clean up after a storm, things like that. But then also, we've always thought of it as fundamentally, something that feeds into fundamental analysis and makes you more resilient to non-financial indicators or policy changes, et cetera.
All right. Shaheen Contractor, Senior ESG Strategist for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. And again, kind of this whole ESG seems to be just evolving. But what we heard Wednesday from
consistently
was the rest of the world is going along. If you'd like to come along, U.S., great. If not, then that's...
And you know what? In 3 years, it might change completely.
Yes, it might. So that's kind of the theme we picked up from the Bloomberg conference earlier this week at the Plaza Hotel. More coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors. The 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to Commonwealth.com to learn about their consultative support and their technology. After 3 days of declines, the S&P 500 pushing higher. You have 8 of the 11 major industry groups in the S&P 500. They are in the green, led by energy. This is oil prices are moving higher. And then consumer staples, the worst performer. That's home to Costco. The shares lower there after their earnings report. Right now, they're down about 2%. Best performing stock in the S&P 500. Right now, it is Ford. Those shares are up 5.7%. So this would be the highest since July of 2024. And I'm trying to find the exact reason for this. The best I can come up with, they're unveiling an electric pickup on a new universal EV platform, and it would only cost $30,000. So maybe that's it.
I think that's below average these days now.
That is way, way below average if you've priced a new car lately, especially a truck. Meantime, a big question hanging over the next earnings season. That's according to Cameron Dawson at New Edge Wealth.
As we go into the third quarter, do we start to see some of those tariff impacts start to hit earnings, where investors will look at the layout of tariffs and say, maybe this is more of an earnings negative thing than what we experienced just in the second quarter?
And a TikTok update. TikTok's Chinese parent company, ByteDance, they're going to get about half of the profit from the U.S. operation for the platform, even after it sells majority ownership to American investors. So according to our sources, at least, this is a part of the deal orchestrated by President Trump. And we check the markets. Well, let me do a market update. S&P 500, 14 points higher, 66.19 on the index. The Dow up 206 points. And the NASDAQ 100, that's down 20 points right now. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, John Tucker. On this Friday morning, we are looking at stocks on the move. Boeing is one of the big gainers here, up more than 4% right now. And there is a report that the company will regain more powers from regulators to conduct final safety checks. This is initially reported by the Wall Street Journal. The FAA has since come out and made it clear that this is the plan starting September 29th. So let's bring in George Ferguson. He is our go-to authority on aerospace. He's the senior aerospace, defense, and airlines analyst for Bloomberg Intelligence. George, it would appear that this is big news given the stock market reaction. Was it unexpected? Was it expected?
You know, I think it was expected, but I think you always breathe a sigh of relief when it actually happens, right? Boeing needs to have this cap lifted, the production cap lifted, in order for it to push to higher build rates next year. That's a big part of the turnaround strategy, right? That means building more airplanes, diffusing their high overhead costs over more built. That means better cash generation, better profitability. Everything hinges on them cranking up build rates. And so I think if you're an investor in the stock, you're, again, breathing a sigh of relief because this is one obstacle, maybe had a little bit of a difficult time sort of cuffing, and it seems like the FAA is comfortable. And I think it's a good sign. It means the FAA must see progress in quality and stability in builds. And so I think again, I think it's, if you're an investor, I think you breathe a sigh of relief when you see it.
Yeah, I'm calling it. I'm calling this thing has turned, George. I think they've finally gotten all the bad stuff behind them here. Hopefully that continues to play out. George, when they're making deliveries these days, how much is out of existing inventory versus coming right off the line?
Yeah, it bounces around month to month, but I think in the last month we saw 5 or 6 airplanes at least that we think came out of inventory. What we typically look at is we look at first flight date, and if there's a first flight date on the airplane that's prior to 2025, we're pretty sure it's coming out of inventory. So the majority are going through the factory, but again, they're getting rid of that, what they call the shadow factory, that inventory at a decent clip now. I'm hoping we hear an update during 3Q. It got a bit hard to keep track of how much inventory they had, but it seems like they're getting pretty depleted. They're running that inventory off pretty well, which would be another big positive for this company.
Well, speaking of positives, the company does report earnings on October 23rd, and these are the kinds of news events that lead to a productive earnings conference call where the management can point to all these signs of progress and talk about how they're going to move forward and build on this momentum. What are you looking for the company to say when it does hold its earnings call?
Yeah, so we would probably love to hear some targets for 2026 for build rates, for cash generation, for reduction of that shadow factory. I'm just not totally sure management's ready to give that out yet. Kelly Ortberg seems to play a little bit conservative, hold things back a little bit, but we'd love to hear what their expectations are. Right now, I think what you have in the marketplace is just a bunch of analyst views without company guidance to sort of tether some of those views on build rates. And so if you look at some of the EEB numbers on the Bloomberg terminal for Boeing, the spread is pretty wide in that. So we'd like to hear about that. We want to hear as well the defense business. Looks like it's turning around too. I think which just adds to some of the gains the company should be able to make in profitability. They won the F-47 program. We'd love to hear some commentary there too on how they're rolling off some of those fixed price contracts that have really clipped them. We think they've turned the corner there too, and defense ought to be profitable and cash generative going into 2026 too. So love commentary on that.
George, one of the headwinds you called out for Boeing over the last several years is the lack of enough skilled laborers to get these planes off the assembly line. It's a lot more complicated than building an automobile, you pointed out. And during the pandemic, a lot of high-skilled industries lost some of their high-skilled people, and that certainly includes the aerospace industry. What's the status of that as the industry looks to continue to rebuild?
I mean, I think it's improving, right? And I think one of the things you can look to is the job situation in the country, in the U.S., is definitely switched up from the world where there were more job opportunities than there were job seekers. We've turned that around to now there's more job seekers than opportunities. That's not so good for the workers, but it is good for the companies. I think it means more stability. You don't have people that join Boeing or, more importantly, join their suppliers and then have a bid away pretty quickly, get trained and leave, because training in aerospace takes a while. So you invest in a person, and to have them stick around for 6 months and leave means you never really get the productivity, and you even probably knock down some of the productivity of your existing workers to train them. So I think that's an indicator that their labor force is probably going to become more stable. And like I said, I think Boeing will offer a wage and a benefit package that pulls people into that business. Mm-hmm. There's a lot of people, I think, coming to these businesses, to aerospace, that hadn't done this work before because there was a lot of baby boomers that retired. The more concerning part is the supply chain and the backfill in the supply chain. And I think, again, this indicates that we're getting more stability. The FAA confidence indicates to me there's more stability in that supply chain. And given this change in sort of the labor supply demand situation, I think it bodes well for keeping those people and improving productivity in the business.
Just quickly here, George, Boeing's still having some issues with its St. Louis-based union, the machinists and aerospace workers union. I thought Boeing's labor issues were largely resolved.
Yeah, so this machinist union in St. Louis, they largely work on defense products. They're the smaller portion of the machinists. The machinists were some 36,000 large at Boeing, 30-some thousand of them were Pacific Northwest. They make the commercial product, which is super important right now for the turnaround. Not that you don't need the St. Louis union. You want them. But I think it seems like the company can hold out a little longer on that.
I see.
And try to make sure they get a decent contract, because defense is not firing on as many cylinders as commercial.
Got it. All right, George Ferguson, our senior aerospace, defense, and airlines analyst for Bloomberg Intelligence, joining us from Princeton, New Jersey. This is Bloomberg Intelligence on Bloomberg Radio. The S&P 500 up by 0.3%.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in Midtown Manhattan. We're also streaming live on YouTube. Head over to youtube.com and search Bloomberg Local Radio. That's where you'll find us. All right, let's get a little techie, a little geeky here. Microfluidic cooling. What is that? I have no idea, but our next guest does. And it's important to the AI story. What is important to the AI story these days? Brooke Sutherland, she's a Boston bureau chief and author of the Industrial Strength newsletters for Bloomberg News. She joins us from Boston. All right, Microsoft, microfluidic cooling. What is that, and why is the AI industry paying attention?
So what they've done basically is they've figured out a way to get coolant directly to the chips that power AI data centers. And so previously what was done is it was a cold plate, and you would essentially have, you know, the cold plate sitting on the chip and use that as a way to keep it cool, because as these work, they tend to throw off a lot of heat. And so in order to keep everything working, you have to cool it down. Think about if you've ever, you know, had your laptop sitting out in the sun too long and it gets overheated, it stops working. And so the idea is to find a way to cool things down, but to do so more effectively, more efficiently. And if you can cool the chip directly without having insulation or different things in between,
then you can actually conserve a lot of energy. You don't have to expend as much to get that cool down effect. And so this is, an exciting development, as AI data centers think about, how to reduce the impact that they have on the power grid, how to lower their energy requirements. It's still early stages. They're in the early stages of trying to figure out how they roll this out and what that looks like. But it could be a really big deal. And then also, it really had ripple effects throughout the industrial sector, which, of course, there are certain companies that make cooling systems for data centers.
So, I mean, that is a great point there, because I think what a lot of investors, we think AI, we think NVIDIA, maybe Microsoft, but then the marketplace and investors have said, hey, you got to have these data centers, so there's a data center play. And then people will tell us, hey, you got to cool these you have to power these data centers, so you buy utility stocks. Then you say they've got to cool these data centers. And that's kind of where we are here with Microsoft. So, I mean, this, in theory, could be I guess, a meaningful reduction in the cost of just running these centers, right?
I mean, that's the idea. And, I think data centers are cognizant of the fact that they're going to, become very unpopular if you start seeing energy bills go up in communities because the grid is trying to supply all this power to data centers and still keep the lights on in people's houses. And so you see, in every corner of this industry, people thinking about, okay, how can we do this more efficiently? How can we do it with less power? How can we, continue to expand without being a tax on consumers? And I think this is one step where you see that moving forward. But to your point, yes, AI is very big in the industrial sector right now. And you do tend to think of, NVIDIA and the chip manufacturers, but this has really been a growth driver for industrial companies. It's really, honestly, the only growth driver that we're really seeing right now. And in the industrial space, you really kind of have this divide between the companies that have technologies that play in the AI world. And that can be a range of things. That's generators, that's gas turbines, that's electrical equipment, that's cooling equipment. And then the companies that don't really sell to the AI sector. And so you're really seeing that split happen in the manufacturing world. But then, of course, that does lead to questions of, is there potentially an AI bubble? Is the industrial sector overly dependent on AI for growth going forward? And what happens if that doesn't end up being as robust as what's currently expected? So
You cover all the industrial space. You've done that for a long time. You know these companies well. One of the technologies out there, Brooke, that I think might be interesting from an energy perspective is those modular nuclear reactors. Can you tell us how that technology may evolve and may be part of the power solution for AI?
Sure. I mean, it's something that companies are very excited about. I think when you talk to companies, they say that this current challenge really means all of the above, that you're going to need every single power source in order to make all this feasible, because we're also trying to build a lot of factories, ideally in the future going forward. And in order to be able to do that and build all the data centers and do everything we want, we're going to need a lot more power. And so I think you've seen companies see this as an opportunity to push ahead on innovations. Now, most people will tell you that, small modular nuclear reactors, that's not a solution that's going to be ready right away. That's something that's, years down the road, but it is something that the industry is very excited about.
So in a more shorter term perspective, is it just a question of can the U.S. electric grid, is it robust enough today to support what may be the surging demand for power?
I mean, I think power is the governing constraint on data center expansion. I mean, I think that's the really big one, is you have to find a way to power all of this. Now, you have seen, a number of different companies really adding capacity, trying to ease this supply chain logjam and smooth the process. But that is the big one, is that companies are trying to figure out is how do you get enough power? And, again, it really affects everything. It's not, just sort of keeping the lights on. It's also how you actually run these data centers.
Yep. All right. That's going to be a big part of the story going forward for sure. Brooke Sutherland, thanks so much for joining us there. Brooke Sutherland, and she's a Boston bureau chief for Bloomberg News, and she's the author of the Industrial Strength newsletter. She's coming to us from our offices up there in Boston. Again, Microsoft coming up with some technology that may make it more efficient to cool these chips that are needed in these AI data centers, and that might be a reduction in cost. So there you go. We'll keep it on top of that. Just getting a quick check of the market here. The S&P, as we finished up this morning trading center, is up about 9 points here. And the Dow's up 169 points, but the NASDAQ is down 48 points. So kind of a mixed tape out there. We'll stay on top of that. For our listeners In the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up right now. Again, look at the bond space here. We've got the 10-year Treasury yielding 4.18%. That's pretty steady. I'm going to call out gold higher yet again. How about that? WTI crude oil, it's higher, about $66 a barrel. That does it for Bloomberg Intelligence. More coming up on Bloomberg Radio.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Peter King. President Trump says if the government stops working, it's not his fault.
The Democrats want to shut it down.
CBS's Willie James Inman is at the White House.
The president is blasting Democrats in terms of that potential government shutdown that we could see come next week. Of course, government funding runs out at the end of the month. That's what's happening here. And to kick the can down the road, Republicans proposed a continuing resolution to keep funding levels the same as they are until November 21st. That didn't succeed in the Senate, and the president is blaming Democrats.
Now, the president says he thinks the indictment of former FBI Director James Comey is only the beginning.
No, there'll be others. Look, that's my opinion.
Trump says the Biden administration weaponized the Justice Department, something Democrats say Trump is doing to punish his enemies. Comey faces charges of lying to Congress and obstruction of justice. He's due for arraignment October 9th in Virginia. Israeli Prime Minister Benjamin Netanyahu has taken his case for eliminating Hamas to the UN General Assembly.
The final remnants of Hamas are holed up in Gaza City. They vow to repeat the atrocities of October 7th again and again and again.
More on what he had to say from CBS's Linda Gradstein in Jerusalem.
There are still 48 Israeli hostages in Gaza, 20 of whom Israel believes are still alive. During his UN speech, Netanyahu read out all 20 names and, speaking in Hebrew, vowed to bring them all home. Ruby Chen, the father of Israeli-American hostage Itai Chen, whose body is still being held in Gaza, said Netanyahu's job is to get all 48 hostages home.
The Commerce Department says its personal consumption expenditures price index was up slightly in August from a year ago. CBS's Kelly O'Grady.
It only ticked up slightly from 2.6% to 2.7% annually. Sure, that is still moving away from the Fed's 2% target, but it does support their position to move to focus towards the labor market and cut interest rates like they did last week. But the investors that I'm talking to are saying, look, inflation is still stubborn or persistent. They don't like the direction that it's moving in, but at least it is not runaway as of now.
In London, a member of the Irish rap group Kneecap is out of jail.
I'm Vicky Barker in London. To the cheers of supporters, rapper Mo Carroll walked out of the London courtroom a free man after a judge threw out the terror-related charges against him on technical grounds.
We said we would face you in your court and we would win. Today we have.
The rapper had been charged for waving the flag of Hezbollah, banned here as a terrorist group.
And a correction, he was not jailed, but in legal trouble. This is CBS News. is your flight most likely to be canceled or delayed?
Colorado's Aspen-Pitkin Airport has just been named the most stressful airport in the country. It scores a 4.95 out of 10, with almost 9% of its flights canceled and average departure delays topping 45 minutes. A new ranking from the CBD company, Mood.com, ranks tiny Watertown International in upstate New York the second most stressful, with an overall score of 4.68 and an 8.8% flight cancellation rate. Other high-stress hubs, Maryland's Hagerstown Regional, Chippewa Valley Regional in Wisconsin, and Atlanta's Hartsfield-Jackson. Deborah Rodriguez, CBS News.
Major League Baseball goes into its last weekend of the regular season with the final wild card slot still up for grabs. The American League East and Central Division races are still undecided as well. Peter King, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Friday edition to cap another week of unprecedented news from the nation's capital, including now the indictment of a former FBI director. You can add another round of tariffs. We're going to walk you through all the latest coming up with Bloomberg's Mario Parker here in Washington. And we'll spend some time with Mark Niquette on today's data. President Trump says there is a deal to sell TikTok to U.S. interests. There we are. But it's not done yet, as we'll discuss with Matthew Schettenhelm at Bloomberg Intelligence. With analysis from our panel today, Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. So is Mario Parker. And we'll do this all after we take a look at Wall Street. Alexis Christophers has that for us at World Headquarters in New York. Alexis, how's it look?
It's looking mixed right now, Joe. Thanks very much. We check the markets all day long for you here at Bloomberg. Stocks trying to snap a three-day losing streak after a relatively tame inflation report. The Federal Reserve's preferred inflation gauge grew just slightly last month, keeping the Fed on track to cut rates 2 more times this year. Checking the markets for you, the Dow Industrials up by 164 points. The S&P 500 holding on with a gain of 13, but the NASDAQ Composite has since turned negative, now down about 35 points. The yield on the 10-year at 4.18%. We've got the 2-year yield at 3.65%. And WTI crude up about 2% to $66.20 a barrel. Mixed signals here on the state of the consumer. Personal spending rose a solid clip in August for a third month, but a University of Michigan survey finds consumer sentiment fell in September to a 4-month low. This is on concerns about higher prices and that softening job market. Joanne Shu is Director of Surveys at the University of Michigan. She was a guest on Bloomberg Intelligence.
Essentially, sentiment edged down just a bit from last month. It's not a dramatic decrease, but overall consumer views continue to be quite subdued about the future of the economy. We're seeing this for all index components and across multiple dimensions of the economy.
Joanne Shu on Bloomberg Intelligence. And Bloomberg's reporting that TikTok's Chinese parent company ByteDance will likely get about half of the profit from the platform's U.S. operation, even after it sells a majority ownership to American investors as part of a deal orchestrated by President Trump. ByteDance expected to receive a licensing fee on all revenue generated from making its algorithm available to the U.S. operating entity, which we now know will be headed by Oracle. Oracle, by the way, shares there down, under some pressure, down about 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophers. That's your Bloomberg Business Flash. Back over to Balance of Power now. Joe Matthew and Mario Parker today.
All right, Alexis, thank you so much. What a treat to have Alexis Christophers on Balance of Power on the Friday edition. Just so you know how old we are, I was last on the air with Alexis, I think, 20 years ago. And Alexis, it's really cool to have you at Bloomberg. Yeah, I'm Joe Matthew. It's great to have you as well on the Friday edition of Balance of Power here on Bloomberg Radio, satellite radio, channel 121. You want to see what Mario Parker looks like? Get to YouTube, search Bloomberg Business News Live, unless you're already watching us on Bloomberg Originals. We made it to the end of the week, and, you know, everybody's walking around every week these days. Well, happy Friday. How did we make it? And it's really, I hate to sound like a broken record, because we do find ourselves in, well, I guess uncharted territory is one of the cliches we can use, but an unprecedented turn once again from this administration, Mario, in the last 24 hours with the indictment of a former FBI director.
Yes, my late great-grandmother had a saying swimming in the head. And I think that's what we've experienced over this last week or so, particularly last night, just given this onslaught of news, which was, one of the big ones, as you allude to, Joe, was just the Comey indictment.
James Comey.
We know that the president had been agitating for this. He sent the Truth Social to address to Pam Bondi, the Attorney General, last weekend, asking to put pressure. He removed one of the attorneys from the Eastern District of Virginia.
That's all it took.
Replaced them with an aide and got exactly what he wanted.
Within like 3 days, 2 days or something. It's really amazing. The reaction, by the way, has been fascinating. Justice in America, says President Trump, rejoicing on Truth Social. He says one of the worst human beings this country has ever been exposed to is James Comey. He's been so bad for our country for so long now, at the beginning of being held responsible for his crimes against our nation. He's being accused of lying to Congress in this case.
Right, absolutely. During the Russia investigation, which Trump continues to really harp on, obviously one of the things that the president feels is that Russia didn't help him during that first term. It's something that he's personalized and something that he's blamed quote unquote the deep state, but also people like James Comey for trafficking in as well.
September of 2020 was when he testified on Capitol Hill about the FBI investigation into links, as Mario mentions, between the first Trump campaign and Russia. So that's the specific nut that the administration is going after here. His response, by the way, we will not live on our knees, and you shouldn't either. This is a video that was posted to Instagram. The arraignment is set for October 9th. There's no warrant for his arrest. This is a strange one.
No warrant for the arrest. One name on the indictment for the grand jury. The MAGA base that was agitating to see him in cuffs don't get to have that image as well. So it's a very strange one indeed.
Then this brings up a who's next, and the president was actually asked that as he was leaving town this morning. He didn't deliver a name, but he said, yeah, there's going to be more where that came from. We should note, by the way, the president to the Ryder Cup. Big day of golf for the president and his granddaughter, who got on the helicopter with them up to Bethpage Black. First day of competition by the PGA that kicked him out after January 6th.
And that's remarkable too, Joe. I mean, that's a great point. If we know anything about this president, we know that one of the passions, those things that are really close to his heart, is golf and PGA. We know that he was stung by that decision a few years ago in the aftermath of January 6th. We know that it's something that he's been agitating to have back, even going back to his trip to Scotland earlier this summer as well.
Yes, that's right. Couldn't be happier to have him. Keegan Bradley, deeply honored that Trump will be there to cheer on his squad. The European captain, Luke Donalds, the president's attendance just shows how big the Ryder Cup is. It's kind of like it never happened here. He called it a mark of respect, even though he's, of course, rooting for the home team here. President, upon arrival, he said, I heard the team's not doing so well. So when I heard that, I said, let's get on the plane. We have to fly and help them. We have 3 matches and tied in 1. So we'll get it done. He says, we'll get it done. So he's going to, just by being there, improve the chances for the U.S. Never been to Bethpage Black, but this could be a day. He's going to be all over TV now again, right?
Oh, absolutely.
I thought he'd be out there with the Big Bertha doing the opening drive. I thought he would get his hands around this thing somehow. I suppose he could yet.
Oh, that's the thing dreams are made of for Trump. He would love to be out there right now.
Exactly. You saw him at the FIFA match with the trophy. You couldn't get him off the stage.
The FIFA match, the Alabama football game as well.
Lives for this stuff.
Oh, he loves the entrance at UFC matches also.
Exactly. I'll meet you at the one at the White House. Mario, we've got to talk about tariffs, too. We got another round. Here's my question for you. In what way are kitchen cabinets and bathroom vanities tied to national security? I'm open-minded on this. What do you think?
I think the president is looking for a way. One feature of this administration is to essentially declare everything an emergency, to declare everything a national security threat. The president, this one's a bit tough to square, but from the president's point of view, the main lesson that he took out of 2020 and COVID was onshoring manufacturing.
That's right. pharmaceutical products as well. Unless the manufacturer's in the process of building here in the U.S., that includes a lot of these companies. Wall Street, again, though, doesn't seem bothered. The S&P is up 10 points, Dow's up, NASDAQ's down a little bit. It's not a thing. Mark Niquette, by the way, is with us. We want to add the voice of Mark Niquette with some important economic data that kind of comes together. We'll tie it all together with tariffs here. Knowing that in a former life, Mark was one of our national political correspondents, so we can do all of this. Mark, it's great to see you. The Real Economy Team Leader. We have the best titles in the news business. Mark, PCE, personal spending, UMISH. Are they all telling a different story today?
No, I think they're telling an incomplete story. I mean, essentially, we saw another good month of consumer spending. It's a third straight month of a solid spending clip. This despite the fact the economists have been watching for some pullback in consumer spending because prices have been increasing as President Trump's tariffs ripple through the economy. But we're still seeing pretty stubborn inflation as well. That despite the fact that companies generally are not passing along the additional costs from tariffs yet. We haven't seen a dramatic increase in the pass-through costs yet. I think economists at least are still expecting that to come. So we're kind of in this wait and see period now where we have consumers still spending, but concerns about whether that will continue because of a softening job market and increasing prices because of tariffs, and inflation holding at closer to the 3% level rather than the 2% level that the Federal Reserve prefers.
And Mark, can you tell us a little bit about this chasm that we're seeing within spending, right? Are there distinctions to be made between who is spending out there right now on the consumer side and who isn't?
Yeah, we're starting to see more spending at the upper end of the spectrum. High income earners spending more than lower income folks, and some evidence that lower income folks are pulling back on their spending, or at least being more judicious and seeking discounts and not spending as heavily as they may have in the past. So it's kind of setting up for a bifurcated spending pattern with the high income folks who stock market's doing well, they're doing well, continuing to spend, but the rest of the economy not.
Tariffs are now generating more than $30 billion a month in revenue for the government, to the point, Mark, where you said he might actually cut some checks for farmers so they can help survive this evolution we're going through with tariffs. How do we square another round here? Kitchen cabinets, 50%, 30% on unupholstered furniture, 25% on heavy trucks. We've only got a minute left, and I just want to tap the political side of your experience here for a moment. What's the psychological effect that these have on the consumer, who we might also call the voter?
Well, I think it has a bigger impact, frankly, on manufacturing, because the goal of these tariffs is, as Mario said, was to increase domestic manufacturing and reshoring of manufacturing operations. But by these tariffs, particularly on the inputs that manufacturers need, just discourages that activity. The National Association of Manufacturers calculates that only 16% of inputs that our manufacturers need can be produced domestically, or at least can be imported.
Sure.
So it sort of works counter to what Trump's trying to do.
Don't you miss being in the media pen at the Trump rallies, Mark? Your new life can't live up to that, can it?
It's not the same, for sure.
It's not. I know. Well, I'm glad you're with us today. Real Economy Team reporter Mark Niquette at Bloomberg. I'm Joe Matthew alongside Mario Parker. Thanks for coming along. It's Friday and it feels like it. Matt Schettenhelm on the way in as we turn to TikTok next.
I'm Alexis Christoforous on Wall Street, and stocks are trying to rebound after 3 days of losses. The market getting a little support here from a report on inflation that suggests the Federal Reserve may be able to continue cutting interest rates. The Fed's favorite inflation gauge today showing prices rose just marginally last month as consumers continue to spend. We have the Dow Industrials now near the best level of the day, up 243 points. Broader market also slightly higher with the S&P up 11. The NASDAQ composite is up about 16. We've got WTI crude up 1.5% to $65.94 a barrel, and spot gold up 0.6% now at $37.74 an ounce. Yields are higher with the 10-year at 4.19%, 2-year at 3.65%. Consumer sentiment fell in September to a 4-month low on growing concerns about the weakening job market and the impact of higher prices. That's according to the latest University of Michigan survey. And Turkish Airlines has announced plans to add 225 Boeing aircraft to its fleet. The company's in negotiations for engines and maintenance services. Turkish Airlines operates one of the world's largest flight networks. Shares of Boeing doing quite nicely, up about 4% right now. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's your Bloomberg Business Flash.
Alexis, thank you so much, and thank you for being with us here on the Friday edition of Balance of Power. I'm Joe Matthew, alongside Mario Parker in Washington as we try to make sense of what happened in the Oval Office involving TikTok last evening. We brought a lot of this to you live here on Bloomberg. Mario, presidents behind the Resolute desk, J.D. Vance, the vice president, Pam Bondi, the attorney general, Kash Patel, the head of the FBI, all standing behind him, along with the Treasury Secretary, to announce a TikTok deal.
Yes, absolutely. And the surprise that we got with J.D. Vance is giving us a valuation, saying that it's worth around $14 billion.
I thought it was going to be $40 billion. That's what we had heard, right?
Yes, no, absolutely.
I don't know, by the way, why J.D. Vance is putting valuation on the company, but we'll bring you into the Oval Office on this last evening. Here's the vice president.
The company will be valued around $14 billion. We actually think this is a good deal for investors, but ultimately the investors are going to make the determination about what they want to invest in and what they think is a proper value. The most important thing is that it does protect Americans' data security. It ensures TikTok is still accessible.
So we've got a deal. Until you read the analysis from Matt Schettenhelm. Now, look, we had a lot of questions last night, and we knew that this was not a done deal. I'm still not sure we've even heard from Beijing. The president said, though, that President Xi had approved this. But when you look at the analysis at Bloomberg Intelligence, here's the news. He's with us now, Matt Schettenhelm, BI, expert on TikTok. The most important line here, Matt, ByteDance would remain TikTok's owner? Hold on. I thought there was a law that said that that was not allowed.
Yeah, that's right. I mean, it looks like when you do a close reading of President Trump's executive order last night, when you look at what the joint venture is doing, it doesn't say anything about taking ownership over this app. It's playing a role in operations. Yep. And Trump talks up this qualified divestiture, but I'm not sure there's actually a divestiture at all here. I think ByteDance ultimately remains the owner of TikTok's U.S. operations and of the app. This joint venture is playing a pretty small role. ByteDance would only own, a fraction of that new joint venture, but the joint venture is not owning the app. The joint venture is, playing a role in operations only. So real questions, if anyone's willing to pursue them, which is another issue, about whether this follows the law or not.
And Matt, if there's concerns about ownership, if that's 1A, 1B is just about the secret sauce of TikTok and the algorithm, right?
That's right. So for a divestiture to be a qualified divestiture under the law, it not only has to have less than 20% ownership by ByteDance, but it also says that there can't be any operational relationship going forward between ByteDance and this new entity. The executive order last night was really vague about operations with respect to the algorithm going forward. It said that there was going to be some monitoring of that. Well, why do we need monitoring of it if it's completely handled by this new U.S. entity? And so real questions, okay, maybe there's a licensing of the algorithm, but what about the frequent updates of that algorithm? Sure. How is that going to play out? Is ByteDance involved at all in that, or is this all hands off, all handed over to the new joint venture?
Because it's not a static thing. thing. Is that the point? Like, if you license the current version of the algorithm, it'll soon be dated.
My understanding is that these social media companies are constantly tweaking these algorithms to optimize its performance for the business. So they might, get a copy of a license to use the algorithm once, but then is it free for all? The U.S. entity does everything? Is ByteDance going to be okay with that? We don't know from the executive order last night.
Fascinating.
And Matt, I guess the one question is, does any of this matter, right? We're not saying, President Trump is just kind of blown through this from day one.
Exactly right. Look, we're on our fourth or maybe fifth extension of the law now, and the law doesn't contemplate that, and yet no one has challenged President Trump on that. There is a cause of action in this statute where you can challenge any action under the law and bring a suit to the D.C. Circuit. No one's done that yet. Real question whether they could do it. I think they could do it now, but does anyone have the will and the desire to stand up to the administration and fight on this?
Are we correct in that we've not actually heard from Beijing on this? The president says President Xi approved this, but have we heard from the PRC?
I think that's my understanding, is that we're still waiting for confirmation on that as well. So we have the executive order last night. The executive order talks a lot about this framework agreement. But the framework agreement we also don't have. So the framework agreement talks about the execution of deals to make the framework agreement happen. We obviously don't have any of that. Those aren't executed. We don't have the framework agreement. We don't have China's say. A lot of loose ends here, and maybe that's why President Trump added a further extension to take this into January, because there's a lot of work that remains to be done to make this final, even if it is lawful.
And Oracle and other companies, Vice President J.D. Vance yesterday just mentioned that they already had this existing relationship. Does this mean that a deal could be done within this extra extension that's been granted, maybe?
I think it's possible. We've had very little progress all year long on this. This starts to look like progress towards, some sort of U.S. ownership. Oracle's involved. But does it track the letter of the law? And will anyone insist on that? I'm not sure.
Well, and that's the point of this conversation. Nobody here is weighing in on whether this deal is smart or is a good deal, whether it's an actual deal. That will maybe not so much that last part, because we want to know if it's an actual deal. But the fact is, there's a law on the books, and this was a bipartisan affair. The law is still on the books. This is technically an illegal operation at the moment, right? So they either have to repeal that law or alter this through legislation at some point, if the structure of the deal is what it looks like.
Well, President Trump is trying to follow the law in theory, and he's trying to say, look, the law allows for a qualified divestiture. That removes the ban. So if this meets the definition of a qualified divestiture, then we're okay. But the question is, if ByteDance retains ownership, if TikTok, the previous company we were concerned about, retains ownership of this app, does that qualify as a qualified divestiture? I think there's a real question there. The law does say the president gets to determine. So the president does have some leeway here, and that would come up in court. If you were challenged on it. Well, Congress said the president determines whether there's a qualified divestiture. But I'm not sure that lets him read up as down in the law. Congress still put guardrails around that determination by the president. And so I'm not sure that he can, if the law says control is less than 20% of ownership, and ByteDance has 100% of ownership, I'm not sure the president's determination will matter.
So this is going to court, though. It sounds like this is going to be bound up in court forever.
Someone needs to bring a suit to challenge
Unless they change the law.
Yeah, unless they change the law, or, it just fades away, because there is a statute of limitations on any action. And so if someone doesn't bring a suit within a confined number of days under the law, it's too late.
Wow.
So this could all just go away quietly if no one's willing to challenge it.
Incredible.
Who would be the parties that would theoretically challenge this? Would it be someone that's a China hawk, or?
It's a great question, and that's one of the hurdles. You need legal standing to bring a suit in court. You need to show you are injured by this action. So I think my first thought would be, one, TikTok's competitors in the U.S. could say, look, this arrangement doesn't act, this harms us because you're letting TikTok violate the law. TikTok users who say, look, this law was drafted to protect us from China's control. and you're kind of skipping past all the requirements in the law, and so we're not protected the way the law was supposed to protect us. I think those would be the top of the list in terms of parties who could bring a challenge, but you need will to do that. And it's hard to go against this administration right now, especially for the companies who need to do ongoing business with the administration.
This is great. Everyone's going to sound very smart at the cocktail parties tonight after listening to this conversation with Matt Schettenhelm. 20% is the magic number, right? That's the limit that the law would allow on ownership.
That's how it defines
What does
control.
it look like ByteDance has in this arrangement?
Well, ultimately, ByteDance is the 100%
So it's 100.
owner. The joint venture would limit itself to 20%. But what is that joint venture doing? It's just doing a small operational role. It's not actually owning the app.
Amazing.
At least that's how
What
it
do you think of the
seems.
valuation? I know you're getting this from the legal side, but how are we so far off on?
Well, I think it might go in large part to what we're talking about here. This is not a sale of this app. This is a sale of a house cleaning role, you know, and so I think with the valuations you were talking about was, hey, we're taking over this very lucrative business. Well, maybe that's not what this is. And so it sort of makes sense that, okay, ByteDance, I think we saw some reporting from earlier that ByteDance is going to retain a significant percentage of the revenue from this arrangement as well. And so, you know, real questions there.
And we use the word unprecedented a lot these days. How does the dynamic impact it at all when you have the president of the United States brokering the deal and then the vice president essentially coming out with valuations and also doing the same?
All of this is in uncharted territory. You know, from the very beginning, you know, the Congress passing this law by a 50-0 vote in some House committees, you don't see that. You don't see it, you know, the Supreme Court upholding it, and, you know, 9-0. The president's actively involved, delaying the law despite what it says. The whole thing is puzzling. So, you know, the story just keeps going on and on.
My God, as far as somebody who actually uses the app, if this goes through, they notice no difference, right? There'll be continuity worldwide, is what they said.
It's possible, and I think that those details aren't in this executive order. What happens with that algorithm, that secret sauce? How much, you know, is it going to change and be controlled by whom? We don't know exactly.
This was fascinating. By the way, just showing up on time, Senator Elizabeth Warren criticizing MGX TikTok deal struck by Trump. The headlines on the terminal, issuing a statement on the TikTok deal. There'll be a challenge coming. You just asked who, Mario. We may have just identified Senator Warren leading the charge on that, at least on Capitol Hill.
Yeah, no, absolutely. And I mean, that would be the folks who would
Not a
emerge.
huge
Absolutely.
shocker.
I mean, you're going to see China hawks who are upset about this. You could see Democrats start to raise concerns. Can you get Congress actually to defy Trump? I'm not sure.
Matt Schettenhelm, I trust him on this story more than anyone else, and now you know why. Find him on the terminal. Find him online, Bloomberg Intelligence, with a fascinating bit of analysis today, raising key questions here on Bloomberg. Thank you, Matt, as always. With Mario Parker, I'm Joe Matthew. This is Bloomberg.
It's 12:40 on Wall Street. I'm Alexis Christoforous. Stocks bouncing back from a three-day losing streak thanks in part to a tame inflation report. The Federal Reserve's preferred inflation gauge grew just slightly last month, keeping the Fed on track to cut rates 2 more times this year. The Dow Jones Industrial Average now at its best level of the day, up about 293 points. The S&P 500 adding 28. The NASDAQ up about 29. We've got the yield on the 10-year sitting at 4.18%. The 2-year yield at 3.65%. Quick check of commodities shows West Texas Intermediate crude up 1.5% to $65.94 a barrel, and we've got spot gold up 0.7% to $37.75 an ounce. Mixed signals today on the state of the consumer. Personal spending rose at a solid clip in August for a third month, but a University of Michigan survey finds consumer sentiment in September fell to a 4-month low. That's on concerns about higher prices and the weakening job market. President Trump will slap import taxes of 100% on pharmaceutical drugs, 50% on kitchen cabinets and bathroom vanities, 30% on upholstered furniture, 25% on heavy trucks, all starting October 1st. On his social media site, the president said foreign furniture and cabinet makers are flooding the U.S. with their products and that tariffs must be applied for, quote, national security reasons. And AT&T says mass 911 outages that swept across parts of Mississippi, Louisiana, and Alabama yesterday were caused by fiber cuts made by third parties. AT&T says despite reports to the contrary, the outages were never statewide and that service has since been fully restored. Shares of AT&T up now 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's your Business Bloomberg Flash.
Alexis, thank you so much, and great to have you along today on Balance of Power. I'm Joe Matthew alongside Mario Parker in Washington. It's the Friday edition, and yeah, I did need to check twice this morning. Welcome to the threshold of the weekend. James Comey is going to have a lot to think about this weekend. He's already making videos on Instagram, which we'll give you a taste of in a moment. The former FBI director has been indicted. This is something that President Trump got rolling last weekend after sacking the U.S. attorney in the Eastern Virginia district, replacing that individual with a call to the attorney general, who we referred to simply as Pam on Truth Social Sunday night, to follow up with charges against James Comey. Here's the president this morning on his way to the Ryder Cup.
It's not a list, but I think there'll be others. I mean, they're corrupt. These were corrupt, radical left Democrats, because Comey essentially was he's worse than a Democrat. They weaponized the Justice Department like nobody in history. What they've done is terrible. And so I hope there are others, because you can't let this happen to a country.
Mario, he was asked by a reporter there on his way to Marine One, who's next, having promised retribution against those who tried to work against him.
Yes, he said there's no list, but he hopes there's going to be others.
Yeah.
Right. So President Trump has this tick, right, where he does this in public comments. Mm-hmm. He knows that his aides are listening. I mean, again, you referenced Pam on Truth Social this past weekend as well. So there's a wink that, no, there isn't a list that I'm giving them, but they know my wishes, and I would like those to be taken.
He has said names in the Oval talking about this, right? Barack Obama, he said, is guilty of a years-long coup. I think Tulsi Gabbard put it that way. He's talked about the Clintons. Yes. There could be others in that circle.
Adam Schiff, Letitia James, obviously, he's our frequent names that he's dropped as well. And so the thinking is, I mean, again, we've used this word unprecedented. I wish we didn't have to have.
We need another word for it.
Exactly. But the fact remains is that he got what he wanted over the past 7 days. I mean, it's remarkable that he issued this on over the weekend and got it before this weekend.
It's amazing, so the reaction from James Comey on social media is pretty direct. Let's watch and listen.
My family and I have known for years that there are costs to standing up to Donald Trump, but we couldn't imagine ourselves living any other way. We will not live on our knees, and you shouldn't either. Somebody that I love dearly recently said that fear is the tool of a tyrant, and she's right. But I'm not afraid, and I hope you're not either. My heart is broken for the Department of Justice, but I have great confidence in the federal judicial system, and I'm innocent. So let's have a trial and keep the faith.
So let's have a trial, and a trial we shall have. We assembled our panel for their thoughts on all of this. Bloomberg Politics contributor Rick Davis, Republican strategist, partner at Stone Court Capital, is here alongside Bloomberg Politics contributor and Democratic analyst Jeannie Shanzano. She is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Jeannie, is this the historic moment it's being made out to be in the media?
I think so. I think it is one of many, I should say, moments. And, you know, it is just striking because right now, Joe, I am rereading that book, How Democracies Die. It's a great book published in 2018. And you look at chapter 4, the first thing is to capture the referees. The second thing is to enfeeble your opponents. And almost step by step, this is what is going on. We've seen it with Jimmy Kimmel. We've seen it with Lisa Cook. Bill Pulte out just this morning talking about Adam Schiff again. You mentioned Barack Obama, Letitia James. The list goes on and on. So it's not particularly about James Comey, but it is about this just attempt almost step by step to dismantle democratic institutions. You capture the referee by taking hold of the Justice Department. That breaks a norm we've had since Watergate. And then you go after your opponents in the way the president has. And it is a sobering moment for anybody who cares about democracy, regardless of which party you belong to.
And Rick, on the 2024 campaign trail, President Trump would often say, "I am your retribution." Mm-hmm. Many people would brush that off as hyperbolic, and yet we're here. What is the response, do you think, or the feeling on the part of Republicans that are watching this play out?
Yeah, Mario, I mean, you're exactly right. He declared his intentions all during the campaign. If you had any question about his intent, all you had to look back to was the 2016 campaign and similar admonitions about vanquishing his enemies while he's president. At that time, he didn't have the team to do it, right? He had people who had served in these capacities before who could resist a demand on his, Twitter account. You don't have that now. So the infrastructure is all Trump. Pam, go do this. Pam, go do that. So much for the independence of the Department of Justice. And I think it really has shocked Republicans. I think the raid on John Bolton's home was the first thing that I heard Republicans in the House and Senate starting to say, if he's going to do this to John Bolton, he can do it to anybody. And they're exactly right. I actually thought the Comey video that you just played, where, I refuse to be living on my knees, is going to resonate with a lot of Republicans, who have got those pads on quite a bit for the last 9 months.
Wow, Rick, do you see this as the Rubicon crossing moment that it's being made out to be in the media, or is there some pearl clutching here?
A little bit of both, but it is what it is. Donald Trump has said repeatedly throughout the last few years that he was going to go after the people that went after him. And that's exactly what he's doing. There's no doubt about it. And it is rocking the norms that used to keep Washington together. And so what will be the result? Well, maybe there's going to be a pushback on some of his nominees, especially to the Justice Department. Now he's had unfettered access to, putting people on the bench that have to clear Senate confirmation. Well, maybe that's going to slow down. And nobody really knows at this stage how all this is going to be accepted by the voters. Voters are not going to take it out on Donald Trump. They're going to take it out on you, Republicans running for re-election to Congress. If they're upset about this, you're the bearer of the bad news.
And to piggyback off of that, Jeannie, how do Democrats, particularly in this environment that we're in over the last 2 to 3 weeks or so, how does the party seize on this from a messaging standpoint to galvanize some of the voters and the base?
Yeah, they are not doing it very well, Mario. I will just say I was looking at some of, not to pick on Chuck Schumer, but he had an important message out yesterday after this happened about healthcare. I get that. You want to focus on kitchen table issues. But the reality is the Democratic Party has a problem in terms of a spokesperson, a leader, somebody to galvanize the party. And that has been a long-term problem, and it persists. I think what they've got to do now, which is what we see Schumer trying to do, is focus on taking back the House and reminding people that once they do that, if they're able, that all of those people who capitulated to Donald Trump will be investigated and they will exercise their power of oversight. But I think more important than that is, beyond any political party, is to educate people about what they are seeing, because we see so much of it. It's hard to put your finger on, well, what do I care about James Comey? You know, neither Democrats nor Republicans really like him anyways at this point. But the reality is, when you break these norms, when you deconsolidate, you do permanent damage to the country, and you do permanent damage to a democracy. And we've seen it over and over again in history. So what I would say is read, and understand that Donald Trump is going by a playbook that has been long written, and everybody who reads history knows it when they see it.
Rick, you've seen contempt cases come out of congressional testimony before. Is James Comey right to not be afraid?
Yeah, I think that that he is covered under lots of rules that govern administration officials giving testimony to Congress. The Inspector General of the FBI investigated this at the time, said they saw no violations. There was no affirmative decision by Congress at the time that he had lied to them. So at the end of the day, I mean, he's got a pretty good record to run on. And so that's the other thing. I mean, like, be careful what you ask for. If the president says, I want this man prosecuted, and it results in an acquittal, how's he looking now? And I just think that that's, and by the way, that could be at a very sensitive time at the beginning of, the second half of his term. And those are the kinds of things that start the blackbirds chirping that, all of a sudden now he's a lame duck.
Mario, I had to chuckle this morning when I look at the top of the playbook, the Politico tip sheet. They quote Donald Trump from his 2007 book, Think Big and Kick Ass in Business and in Life. Quote, when you are in business, you need to get even with people who screw you, he wrote. You need to screw them back 15 times harder, unquote. How does that work in politics?
Again, this environment that we found ourselves in the last 3 weeks or so is discordant, right? I mean, on the one hand, you have folks calling for unity and forgiveness, and then on the other hand, you have the president really leaning into these red meat issues. And with red meat issues, I think one of the things I would wonder is, at what point, especially given that he's in his second term, I mean, what's MAGA's appetite for this red meat, right? I mean, it was fun and games during Trump 1, during Trump 2, particularly with, as Rick and Jeannie know, with the House and Senate at stake. Just how much do voters have an appetite for some of the lawfare that may be dominating the news cycle over the next few months?
Well, it's pretty tasty for MAGA, right, Jeannie? There was a bit of celebration on social media last night.
Yeah, absolutely. I mean, I saw Lindsey Graham on Fox, and what was fascinating was he wasn't really talking about the testimony that's subject to these indictments. He was talking about something that a lot of Republicans talk about, a strong distaste for Comey and everything he did, or they believe he did, in the context of Russia. But that is not what he is being charged with, of course. And one of the ironies here, and we're seeing it from the White House messaging all week and today, is that they are going to defend this, saying that Donald Trump is restoring the Justice Department and restoring accountability to the Justice Department. And that's one of the ironies here, is when you dismantle, you always defend it by saying you are defending democracy. And that's precisely what we're seeing from the White House today.
Great panel. Rick and Jeannie will be back, of course, in our second hour, our Bloomberg Politics contributors together on a Friday. Rick Davis and Jeannie Shanzana. We're going to be looking at the New Jersey gubernatorial race with our panel in our second hour. And Mario, this has been a lot of fun this week. I want to thank you for spending some time with us here on the fastest show in politics.
Thank you so much for your hospitality.
Oh my God, of
Really
course.
appreciate it.
Our house is yours. Come back and see us again one of these days soon. He helps to run the bureau here, so he's got some other things to do as well. Watch for Mario not only here, but on the terminal and online. Keith Ellison, former congressman, and now Attorney General with us in our second hour.
From Washington, D.C., this is Balance of Power with Joe Matthew.
James Comey says he will fight the charges. Welcome to the Friday edition as the Department of Justice indicts the former FBI director, accusing him of lying to Congress about Russian collusion in the 2016 election. We're going to get the latest on this from Bloomberg's Laura Davison. We have heard from Comey since the indictment was filed, with insights this hour from Minnesota's Attorney General and former Democratic Congressman Keith Ellison. A conversation you won't want to miss. Analysis from our panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the hour. We've got a lot to cover. Beginning on Wall Street, Alexis Christoforous has her view on the markets right now in a Bloomberg Business Flash. Alexis, how's it look?
looking pretty good here, Joe. The Dow's on a tear, actually, as Wall Street tries to claw back some of the losses from the past 3 days. That's after the Federal Reserve's favorite inflation gauge showed while prices are still high, they barely budged in August. Investors betting that'll keep the Fed on track to cut interest rates even further. That same PCE price index showing personal spending rose more than expected, helped by spending on back-to-school items. I mentioned the Dow. It's up now 325 points. In the broader market, the S&P 500 gaining 32. The NASDAQ Composite now rallying by 64. The yield on the 10-year, 4.18%. We've got the 2-year at 3.64%. Shares of some big drug makers, including Eli Lilly, Merck, and Pfizer, all higher today after President Trump said he would place 100% import taxes on pharmaceuticals beginning October 1st, but those tariffs would not apply to companies building U.S. plants in the U.S. And the Wall Street Journal reporting that Boeing is regaining some authority from the FAA to perform some final safety checks on its 737 MAX aircraft prior to delivery. That's easing the plane maker's burden to get more of its profitable aircraft to customers. A quick check of Boeing shows it's up now 3.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flashback. Over to Joe and Balance of Power.
Appreciate that, Alexis. Great to have you on board today as we bring you political news from Washington and connect the dots to Wall Street. That's our charge here at Balance of Power on Bloomberg Radio, on satellite radio, channel 121, here on Bloomberg TV, of course, and on YouTube. Search Bloomberg Business News Live to find us on YouTube. With much to discuss today on the Friday edition. It has been a doozy of a week, and it just keeps coming. Last evening, the indictment of James Comey, the very latest out of this White House. And I'll let you know, the president has left town. He's up at the Ryder Cup. But on his way out, he was asked by reporters about this indictment of the former FBI director, who you know Donald Trump is not a fan of. He's now being accused of lying to Congress about Russian collusion in the 2016 election. The president was asked as he left the White House today, who's next? Let's listen.
It's not a list, but I think there'll be others. I mean, they're corrupt. These were corrupt, radical left Democrats. Because Comey essentially was he's worse than a Democrat. They weaponized the Justice Department like nobody in history. What they've done is terrible. And so I hope there are others, because you can't let this happen to a country.
We're not going to figure out likely who's next in this conversation, but Laura Davison is with us now, Bloomberg's Washington Deputy Bureau Chief, with more on this. Laura, this is a remarkable moment. We're hearing the word unprecedented, Rubicon crossing. How should we look at this?
This is really just a massive escalation over the past, several weeks. We heard Trump, just about a week ago, go to take to social media and tell Pam Bondi, hey, I want to see action on some of these cases. Through pressure, the prosecutor in the Eastern District of Virginia, steps aside. A new person who's a Trump loyalist goes into this role, and within a matter of a couple of days, we see this indictment come out. So there's a lot of questions because the two other names he mentioned that he wanted to see investigations into, Adam Schiff, a senator from California, as well as Letitia James of New York. The question is, are there going to be indictments coming for them in the next couple days or weeks?
What does the Department of Justice make of this? There are still some career officials at the DOJ who've never seen anything like this before.
Correct. This is, very unprecedented. There's been a feeling really going back, 50 years or so that the Justice Department, it's not the personal, prosecutorial arm of the president. They work for the government, and that there's sort of a little bit of church and state separation there, so to speak. That is not at all how Trump sees the Justice Department. And you see, career folks, longtime staff, across the Justice Department, either sort of, raising red flags or stepping aside. And it's, clearly Pam Bondi views her, primary loyalty to Trump rather than to the department itself.
There is not a warrant for his arrest, which is interesting. We're not going to see him in handcuffs, I guess, but there is an arraignment in October. Where does this go from there? He says he's going to fight.
He came up very quickly last night with a video saying, he's not afraid, go ahead, let's have a trial. It's very reminiscent of what he said, back in 2017 when Trump fired him originally. He said, Lordy, I hope there are tapes when they were talking about this conversation. So this is, Comey is not one to step down, in a fight, but it's not clear right now. The indictment was very short. It was not particularly specific. So some legal experts have speculated that, it's possible that this case could be dismissed, just that there's not enough evidence evidence there to move forward.
Interesting. And of course, you know, we're already waiting for an emergency Supreme Court ruling on the firing of Lisa Cook. He's keeping the courts awfully busy here. And I'm assuming that they expected that Comey would want to go to trial. So let's get the ball rolling, right?
Yes, I mean, and this is also, Trump's playbook here. He wants to keep, some of these battles in the spotlight. He wants to keep his base happy. This has been, a pretty good week for him in terms of getting some of these deals. TikTok done. He's at the Ryder Cup today. He's, a handful of boos, but also some cheers.
Is
there.
that true? Did you see him get there? I didn't see the arrival. He made it to the course.
He's there. He's
All right.
with his granddaughter,
Yes,
Kai Trump. She's sporting some her own fashion line today.
Some fashion line. She's 19 years old or something. Is this Don Jr.'s
This is John
child?
Jr.'s
Okay.
oldest daughter, but it's a real sort of split screen moment because on Capitol Hill, Hakeem Jeffries is up there talking about how we're hurtling towards a shutdown deadline, within a couple days.
Well, so let's talk about a couple of other things here. I mean, I already said this has been a doozy. I guess next week will be a real doozy when the government shuts down. Are we just qualifying this as inevitable now, where it's Friday, there's no deal, and no one's talking?
No one's talking. Congress has not been in session all week.
Yeah.
The Senate's not supposed to come back until Monday. They may not even start voting on things till Tuesday. Remember, the shutdown deadline is Tuesday into Wednesday at midnight. House is not scheduled to be back until Wednesday. So this is the key players are not even in place. Both sides are really dug in. Trump even kind of shrugged off the sort of the risk of a shutdown earlier today. Said if it shuts down, it shuts down. Both sides are really angling for a fight.
Well, that's for sure. I mean, the big question is going to be how long it stays closed at this point, right? How do you get it back open? And I know that's something that we'll be tossing around here. Democrats, though, at this point are united, right? You're not hearing about Democratic senators, say from Virginia or Maryland, who might quietly be prepared to vote yes next week.
You're starting to see a little bit of commentary. Chris Van Hollen came out and said, "Hey, look, we'd like to, kind of get some of these talks started." Tim Kaine as well.
Yeah.
And, you start to see that the door opening here. Klobuchar, was on a call with Amy Klobuchar of Minnesota was on a call with reporters this morning saying that she wanted, she said, "Look, we're not asking for all of our demands, but we are, we're willing to negotiate here." So you're starting to see a little bit of uneasiness. It's also we're 5 days out from a shutdown. This is about the time that the sides start to get a little bit serious, but there's a lot that they need to get through. And you've got Schumer and Jeffries who don't want to be seen as, just really caving in to Republicans as they did earlier this year and really took a beating from the base.
Well, we got the countdown clocks up. It's never good when that happens, and we'll just have to live through this together next week. And Wednesday is when we would be closed, presumably. I haven't even mentioned tariffs. I haven't mentioned TikTok. It's just a steady hose, a fire hose of news from this White House. TikTok deal, not really a deal. We were talking to Matt Schettenhelm at Bloomberg Intelligence. He says ByteDance still the primary owner. This runs afoul of the law.
This is, I think the thing that both markets, investors, and sort of even just, app users are asking of, what does this mean? The thing that Trump signed yesterday, that order, just really sort of keeps the process moving. It does not close the deal. It does not finalize the deal. One of the things that would really sort of shock people yesterday is when Vance came out and said, "Hey, look, we think that the valuation of TikTok is going to be about $14 billion."
Yeah.
That caused a lot of, confusion because folks
far cry.
were anticipating somewhere, 35, perhaps as high as $40 billion. This was all kind of more clarity was put around that today when, our tech team earlier reported that that ByteDance would still own about 50% get a 50% of the revenue share essentially from the company.
That's not how that's supposed to work.
This is not what people were expecting, and it means that there's just a lot of details of this already very complicated deal with dozens of investors involved that could be quite complicated.
Well, it's always a pleasure to spend some time here on a Friday with Laura Davison. Good luck this weekend. I hope it's not a working one. I just said that out loud. Our deputy bureau chief here in Washington, D.C. There's a lot more to talk about, by the way, involving electoral politics today as we're spending time here on Capitol Hill. A member of Congress is running for governor in New Jersey, and there's a big story about what's happening involving Oppo research into Mikey Sherrill, the Democratic representative from New Jersey. Washington Post now reporting that she and leading Democrats are calling for an investigation now, what they call a politically motivated leak of her unredacted military service records. This is a pretty big deal. The National Personnel Records Center improperly gave an ally of the Republican in this race, Jack Ciattarelli, unredacted personal information about Mikey Sherrill, including Social Security numbers, the whole bit. It's being called an egregious blunder, a technician's mistake, and we have big questions about what's going to happen next, which is why we assemble our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is, of course, our Republican strategist and partner at Stone Court Capital. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Just to start off here, Rick, as somebody who's run a lot of campaigns, and I'm just going to assume you've never dealt with any Oppo research, how unusual is this, and what should Mikey Sherrill do about it?
Yeah, look, I mean, Oppo research is a standard in the industry, right? Not only on your opponent, but also on your own candidate. One of the first things you do is you say, look, let's look at the records. I remember in 1999 with John McCain, we were pulling service records and things like that just to see what our opponents might find. And yet you have to have authorizations to get this stuff, right? That on a FOIA request, it's a very limited amount of information that the archives will give you on a military service record. And certainly better redactions than having your Social Security on every page that they turned over to the Citarelli campaign, basically. So this is a huge embarrassment for the agency that is charged with managing our national archives. And it's happened before. Don Bacon had his service records released to his opponent. I mean, like, they need to get their act together. Regardless of the requests that come in, we have to depend on these institutions to do their part of the job. And in this case, pretty clear failure.
Wow. The House Oversight Ranking Member, Robert Garcia, who may not have the power to make this happen, is demanding an investigation of what he calls illegal, likely politically motivated disclosure. This comes down to something that happened at the Naval Academy in 1994. Mikey Sherrill and a number of her classmates were not allowed to walk in the ceremony because of a big scandal. It was a cheating scandal going on here that involved a number of students. If this is, again, took place in 1992, the scandal itself, she would have walked in 94. 24 classmates were expelled. Jeannie, Sherrill says that she didn't walk because she did not turn in any of her classmates, that she, in fact, did not cheat on this test. What is the political implication of this disclosure?
Yeah, first of all, I don't know why you're assuming that Rick Davis hasn't done Oppo research, Joe. We both know he has.
I'm just, okay.
I know. I think number one, the timing of this could not be worse for her campaign. I mean, the latest Emerson, I think it was the Emerson poll, had them neck and neck. And of course, we all know that New Jersey has been moving a bit over to the more, I don't know what you want to call it, reddish, purplish side. So this is going to be a big loss for the Democrats if she doesn't retain this seat. And I think, certainly you hear the Democrats, you mentioned Garcia, Hakeem Jeffries, they want to get to the bottom of this. They want an investigation. They may get one. But the question is, was this something that was done by mistake, as they are saying, a technician, or was it truly done in order to undermine her and the campaign? Regardless, the information released is very personal, including Social Security numbers, phone numbers. I mean, the list goes on and on. So incredibly damaging and arguably a violation of the Privacy Act. So whoever did it may indeed be held accountable if they conduct this investigation.
Yeah. You mentioned the Emerson College poll, Jeannie. They did this with The Hill and Pix 11, 43 to 43. Mikey Sherrill, Jack Citarelli, 11% still undecided. Rick, what's going on in New Jersey? You buy these numbers?
Yeah, I think it's a relatively close race. Citarelli's a well-known candidate, run before, member of the legislature. And so I'm not surprised that it's close. Remember, it wasn't that long ago, we were electing, Chris Christie to 2 terms as governor of New Jersey. Republicans can compete statewide. It's not a blue state. But the bottom line on it is this will upset the apple cart, right? There'll be a discussion around this. And what is interesting is how Mikey Sherrill will handle it, because obviously it brings to attention not just this cheating scandal, but her service in the military, helicopter pilot, Patriot. It's quite a contrast with Cerelli. And so I think one of these things you have to always look at like, well, can this boomerang on us, right? I mean, like an attack on her time in the Naval Academy reminds everybody that, you know, she put public service first when she was, you know, 18 years old and served admirably in the military. So at the end of the day, I'm not putting much credibility into the outcome based on this controversy because, of course, the other thing is it looks like political manipulation, and Trump leaned in on it even in his comments. So at the end of the day, it's going to be a close race, and we're going to see whether or not the Democratic machine in New Jersey is able to get out the vote. I mean, it is interesting that, you know, basically the youth vote's going Democratic and the senior vote's going Republican, and the battle's in between.
Well, Rick makes a good point here, Jeannie. It reminds us that Mikey Sherrill has used her military service as a centerpiece of her candidacy here. And that's why this is a story to begin with. She did, we should note, go on to serve in the Navy for 9 years, as Rick mentioned, helicopter pilot. The Academy, the Naval Academy website lists her as a notable graduate. She received the Navy Achievement Medal for saving the life of a fellow shipmate while at the Academy, and the prestigious Distinguished Public Service Award in 2024. That's the Navy's highest civilian honor. So if you're advising her campaign today, Jeannie, do you tell her to get to the Academy right now, go to Annapolis, and film a new ad on campus?
Yeah, you might. And I have to say, I think she has done a good job already, because you read the quote. I mean, what she is telling voters is the only reason that I was kept out of the ceremony was because I refused to turn in my fellow classmates. In other words, I am not somebody who is going to go and, you know, tell who was involved. I will keep that to myself. And for many people, particularly in New Jersey, that is a very respectable reason to, you know, to do that. And so I think she has been trying already to turn this around. And she follows that by saying, to your point, I served 10 years, highest level of distinction and honor. So she is trying, and her campaign is trying to use this to her advantage. And she is no snitch, Joe Matthew, and that's what she wants people to know.
Said it.
So
you said it. So is that the bumper sticker? Is that the bumper sticker, Rick? You're running for governor of New Jersey. Hey, I'm no snitch.
Okay, let's just be totally clear with our listening and viewing audience. It is a violation of the Academy Ethics Code that if you are aware, you do not turn them in. So regardless of the situational ethics of my co-panelists, I don't think that's a particularly good campaign focus.
All right, we covered some good ground here. See, this was productive. We just figured the whole thing out, or at least what you can't do. Rick Davis, thank you. Jeannie Shanzano, thank you. Bloomberg Politics contributors, and the best we have here. Our conversation coming up with Keith Ellison right here on Bloomberg TV and radio.
It's 1:21 on Wall Street. I'm Alexis Christoforous. We check the markets all day long for you here at Bloomberg. And stocks are in rebound mode right now after 3 days of losses. That's after a new report showed core inflation held steady in August at 2.9%. The Federal Reserve's favorite barometer of inflation also showed personal spending rose more than expected despite elevated prices. Investors believe today's tame inflation report will help convince the Fed to continue lowering interest rates. We've got the Dow Industrials best level of the day, up 343 points. The S&P 500 adding 33. We've got the NASDAQ now climbing 64. Yields are mixed right now. The 10-year at 4.18%, while the 2-year down slightly at 3.64%. Consumers are worried about higher prices and the weakening job market. Those are the findings from the latest University of Michigan survey. Consumer Sentiment Index falling to a 4-month low in the month of September. And the tech consultancy company Accenture has laid out plans to lay off staff that are not able to reskill on artificial intelligence. That's as Accenture prioritizes its AI efforts. Shares of Accenture right now rallying 3 1/3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
Alexis, thank you so much. With us live from World Headquarters in New York. Alexis will have more on the Friday trade coming up just about 20 minutes from now on Balance of Power. Thanks for spending part of your Friday with us here on Bloomberg TV and radio. I'm Joe Matthew in Washington, reeling the city at large over the indictment of James Comey, the former FBI director, something we've been talking about quite a bit throughout the day here. He says he's not afraid. Bring the trial. And we have a great opportunity to tap the experience and insights of Keith Ellison. A perfect moment for this conversation. Of course, the former congressman, now attorney general in Minnesota, is in town for the Congressional Black Caucus Foundation events that we have told you about stretching across the week, and has just emerged from a fireside chat at the convention center where he was joined by several other Democratic attorneys general to talk about the rule of law in this country. Mr. Attorney General, it's great to have you on Bloomberg. Welcome back.
Great to be with you.
We've got some heavy stuff to talk about today.
Yeah.
And I'm wondering your thoughts just initially on this indictment. Have you investigated the case? Does the government have a case against him?
Apparently not. It looks like the career prosecutors didn't sign the indictment. It looks like this was obtained by the person who was simply put in there by Trump to get the indictment. And so it's not something that is a result of an investigation by trained prosecutors looking for the truth. It has all the hallmarks of just a vindictive prosecution. And I think that it appears to me that if you believe the people who actually dug into the case, that it's thin when it comes to evidence. And I think Mr. Comey has every reason to be confident.
Remarkable post on Truth Social by the president on Sunday evening.
Sure.
To Pam. You see this? Pam, we can't delay any longer. It's killing our reputation and credibility. They impeached me twice and indicted me 5 times over nothing. Justice must be served now. Some folks are seeing this as I hate to keep using the cliche, the Rubicon crossing moment for the Department of Justice. Is that the level of which you're viewing this?
It certainly feels that way. I mean, that particularly Truth Social post, it looks like pure revenge. It looks like we're simply using the Department of Justice as a weapon of revenge against political opponents. I mean, because I'm used to indictments that say, well, on this time and place, you committed this act which violated the criminal statute, not you did this to me, so I'm going to do something to you. This is simply not how we do justice in America. It is absurd. And, of course, it happens. And then within a few days, we see these indictments come out. Yeah. So, it does portend very, very, odd for the future. A lot of people, I think, are now thinking, okay, well, if you're going to do this to the head of the FBI when other career prosecutors have said that case lacks evidence and should be declined, who are you going to get next? Who is safe here? And because if the head of the FBI can't expect basic justice, then who really can in America? Very concerning.
He's mentioned a couple of names.
Yeah.
And was asked about this morning. They asked him on his way out of the White House, who's next, and do you have a list? Listen to what President Trump said just this morning.
Not a list, but I think there'll be others. I mean, they're corrupt. These were corrupt, radical left Democrats. Because Comey essentially he was worse than a Democrat. They weaponized the Justice Department, like nobody in history. What they've done is terrible. And so I hope there are others, because you can't let this happen to a country.
You can't let this happen to a country. Wouldn't want to be Letitia James right now. Wouldn't want to be Adam Schiff. Are those the next two?
Well, if you go by what he says, the bottom line here is that democratic countries don't operate this way. This is what happens in banana republics. This is what happens in countries where the rule of law is not observed, and that, essentially the government is an instrument of somebody who is all-powerful and can just direct it wherever they want to. But thank goodness in America we still have juries, we still have judges, we still have the rule of law, we have people who care about American justice. So I have faith in the American justice system. I would have hoped that there would be a no bill of indictment in this matter. But of course, everybody knows you can indict a ham sandwich. We've all heard that before. But I think that when this matter starts working in the real machinery of the criminal justice system and motions start getting filed, I have confidence that this matter is going to be dispatched in fairly short order.
It is somewhat ironic that the guy who threw the sandwich at the National Guard wasn't indicted.
Right.
But I'm just kidding around here. If these guys do go to trial, though, James Comey says, let's do this.
Yeah,
will they be vindicated?
From what I've seen, I think yes. But I am also disturbed by another story going around, which has to do with the head of Homeland Security, Mr. Tom Homan, who apparently, according to news reports, exchanged $50,000 with the promise of favors to get contracts. That matter is, of course, still alleged.
Yes, he says that they found nothing illegal, no wrongdoing. He didn't deny it, though, which was interesting.
Which is interesting, but apparently there's video, and I think the public should see it. It should be something that if you did nothing wrong, that there shouldn't be any problem with you releasing the videotape, and we can let other people be the judge of that. But I mean, the problem is you can't, on the one hand, say that we're going to just ignore this one because this person's a political ally, and we're going to go after these people because they're not. I mean, I'm not sure who the person was, but somebody said, to my friends anything, but to my enemies the law. And so this can't be the basis of an American democracy. We have to have a fair system. This is what we've all been raised to expect, but it's not what we're seeing right now, and it's deeply disturbing. And I tell you, as a lawyer, you swear an oath, to uphold the law. As a public official, you swear an oath. And these oaths are very important right now. I think that anybody who's going to carry a bar card in their pocket needs to go back and remind themselves what they said they would stood for.
Interesting. As we spent time with Minnesota's Attorney General Keith Ellison, I have to ask you about one of the other big stories just in the last 24 hours, this deal to sell TikTok to a group of U.S. investors. Now, we have to be careful with this because we actually haven't heard from the Chinese. The president says there is a deal, and if we take him at his word here, it would not fulfill the law that's on the books, as ByteDance apparently would still have a majority share. That aside, you're no stranger to TikTok. You just sued the company 2 months ago.
Sure did.
Over what?
Well, we sued them because we believe that the way that they operate is damaging to the health and mental and emotional health of children.
Yeah.
And we're concerned about a number of features. The filters, which we believe have a damaging psychological impact on children, leading to bulimia, self-issues, depression, things like that. Also, we're concerned about TikTok Live, where you can have a person go on there and perform live and then receive a tip, and TikTok gets part of the money. If they don't have proper age verification, you don't have to be very imaginative to wonder what somebody would give a tip to a young girl for. If you understand what I mean. It just seems like an invitation to abuse. And then on top of that, there's this endless stream where you can just go on and on and on. It'll capture your imagination, and you'll be stuck in there. And teachers, parents have talked about the damaging effect and how we've got to get a grip on it. So we know that they've designed their algorithm to be attractive, and we consider it to be like digital nicotine.
Yes, okay.
And so we're going to hold TikTok accountable, whoever owns it, know. So I've been asked.
So that can transfer ownership. That the lawsuit goes to who owns the company.
Might just, So
wow.
I don't know who we're going to be negotiating with.
You might be talking to Larry Ellison pretty soon.
Well, I'll tell cousin.
No relation.
Right. I'll tell cousin Larry he's got to clean up his act.
Well, you said something that's fascinating. You said like nicotine. Your lawsuit refers to addictive algorithms.
Right.
10 years in the future, are we going to look back at social media like we do cigarettes now, like we do cars without seatbelts? How do we ever let this happen?
I really do think so. I mean, look, as technology moves at a faster pace than our rules do, right? And there is a place for TikTok. We don't want to ban TikTok. We're not here to shut down TikTok. But just like any useful but susceptible to abuse thing, we need to put the right guardrails around it. And it would be better if the companies just did that.
Yeah.
I do know that there are rules that are applied to Chinese users of TikTok that don't apply here in the U.S. So we already kind of know the better way to use the tool, and that's what we have to move towards.
This is a fraught time for attorneys general on the state level.
We've been busy.
And boy, you have been, and we can talk about this in a lot of different ways, but I wanted the fireside chat that you held today.
Sure.
Focused in part on states' rights.
Yes.
Has the issue of states' rights turned from a conservative one to a democratic, liberal, progressive cause?
I think it has.
When did that happen? 6 months ago?
It turns out that the issue of states' rights, the 10th Amendment, is an important right, although it's not an absolute right. And so one of my great heroes, a man named Hubert H. Humphrey, who was the mayor of Minneapolis in the 1940s, went to the National Democratic Convention and said we have to walk out of the dark shadow of states' rights into the bright sunshine of human rights.
Okay.
And that, in many ways, brought forth the civil rights revolution that followed in the years after that, and that we're trying to hang on to right now. But nowadays, states' rights, many of Dem AGs are asserting the 10th Amendment, saying that, look, this is beyond the authority of the federal government to do. One case that we just saw recently, we had a favorable ruling in a lower court, was where the federal government said that if you want to receive federal emergency management assistance, that you have to have your state law enforcement essentially carry out federal immigration responsibilities. We said, no, we have precious state resources. We don't have to do that. And the court sided with us. And this is a debate that's recurring. It happens on a range of issues, that when the federal government conditionalizes aid to states, whether it be health care money or agricultural monies or whatever, in exchange for or conditionalizing something like getting rid of diversity, equity, inclusion, or ICE involvement, or it's a common and recurring theme, and we're relying on that 10th Amendment.
This is a big part of the story, and I'm really glad that you could join us to talk about it. Keith Ellison, in town for the CBC, Minnesota's Attorney General. Come see us again. I enjoyed the conversation.
You bet.
Very much.
Thank you very
Thanks for
much.
your insights. I'm Joe Matthew in Washington. This is Bloomberg.
It's 1:40 on Wall Street. I'm Alexis Christoforous. We check the markets for you all day long here at Bloomberg, and stocks are snapping a three-day losing streak after a relatively tame inflation report. The Federal Reserve's preferred inflation gauge growing just slightly last month, keeping the Fed on track to cut rates 2 more times this year. The Dow Industrials hanging out near their highs of the day, up now 358 points. We've got the S&P 500 up 36, and the NASDAQ Composite climbing 76 points. The yield on the 10-year 4.18%, the 2-year yield 3.64%, and we've got WTI crude up nearly 1% at 65.60 a barrel, gold at 37.82 an ounce. Mixed signals on the state of the consumer. Personal spending rose at a solid clip in August for a third month, but a University of Michigan survey finds consumer sentiment fell in September to a 4-month low. That's on concerns about higher prices and the weakening job market. Shares of furniture retailers on our radar today after President Trump promised to slap 50% tariffs on kitchen cabinets and bathroom vanities, 30% on upholstered furniture beginning October 1. Taking a check of Wayfair, it is up 0.7%. Williams-Sonoma stock down about 0.5%. Restoration Hardware taking it on the chin, down 3%. And shares of Boeing on the rise, leading the Dow higher, up 4% after the FAA said Boeing can sign off on some of its planes before they're handed over to customers. This change shows Boeing's winning more confidence from its regulators after those 2 fatal crashes. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
Alexis Christoforous, great to have you, Alexis. Thank you. She'll have another update on the markets coming up. Top of the hour, 2 p.m. Eastern time as we get things rolling on Bloomberg Business Week Daily. I'm Joe Matthew in Washington. Thanks for being with us here on Balance of Power. Fascinating conversation with the Attorney General from Minnesota. Make sure you subscribe to the podcast to hear our full dive with Keith Ellison. You can always find the conversation as well on YouTube. Important news, as we've told you, in the last 24 to 48 hours involving the war in Ukraine. First, the word from European nations. Leaders, of course, gathered this week for the United Nations General Assembly, and we've brought you conversations with the leaders of Latvia, Finland, Estonia, who have seen their airspace violated by Russia repeatedly, not only drones, but fighter aircraft. And so the message to Russia, the message through back channels to the Kremlin was, we're prepared to shoot you down next time this happens. The Kremlin responding. And by the way, Donald Trump, of course, endorsed that, as we told you, the idea of shooting them down as opposed to intercepting. Warnings that NATO countries would, in fact, be ready to do this. Getting quite the rebuke from the Kremlin. Spokesman Dmitry Peskov says this is another very significant escalation of tensions near our borders. We heard from the Germans this morning on Bloomberg. Germany's foreign minister, Johann Jadefuhl, had this to say about this idea.
NATO, Germany, our countries do not have any interest in escalation, but Russia perhaps wants to lead us into a trap, as you mentioned. But Russia has to know we are prepared for each and every situation.
He spoke with Vonnie Quinn, and it's a great pleasure to bring Melinda Herring back into the conversation, non-resident senior fellow at the Atlantic Council's Eurasia Center. A rare treat as well to be able to do this in person. Melinda, it's great to see you. Your thoughts on this particular development, and there have been a couple important ones this week. Is this an inflection point in the war, coming off of that post from Donald Trump in which he suggested Ukraine could actually win this?
In a word, yes.
Okay.
So in the last couple of weeks, we've seen NATO airspace be invaded by Russian drones and Russian fighter pilots.
Yeah.
And we see this in Hungary today. There's accusations in Hungary. But I'll go straight to the quote that you showed from Moscow. So Moscow is blaming, they're blaming the West, Joe, which is kind of amusing because they created the problem. They're saying that this is escalation and that it's unacceptable, but they're the ones that caused it, right?
Yeah.
This is typical. This is what they do over and over again.
Mm-hmm. We're no strangers to this. Our aircraft have been intercepting Russian bombers over Alaska for the last 40 years or something, right? What was the aim here, though? Was it an attempt to divide NATO, thinking that Viktor Orban wouldn't have any part of this conversation, or is it just Putin being Putin?
I think Putin feels like he can get away with it, and there's no consequences. So he's. I think this is NATO country number 4 that he's sent either drones or fighter pilots over in the last month. So we see him upping the ante, and he hasn't really faced any consequences other than the Estonians. The Estonians did escort those 4 Russian fighter jets out, and they called a meeting at NATO, and it was the first time the Estonians had ever done it.
Amazing. We talked to Estonia's foreign minister a couple of days ago from the UN, knowing the visceral emotion that Estonians feel, the memories they have of Russians rolling down the street and literally shooting their then parents or grandparents, the occupation that followed. They see that as being possible again, don't they?
Right, they do. History is alive. And history, I think in an American sense, we tend to think of history as this beautiful thing where it's constantly getting better. And that's not the Eastern European view of history. Right. The Eastern European view of history is dark, Joe, and it wasn't that long ago. And people have this lived memory. And you see the same thing in Poland, right? You see Radek Sikorski's message this week. And he's telling the Russians, we're going to shoot anything down that you fly over our airspace. So it's not even backroom deals, it is direct signals.
Yeah, we're saying it out loud. So is that the right move right now? What would happen if somebody shot down a MiG-31? What would Putin do?
Nothing.
Really?
Yes.
You're sure of that? Because so then it's not an escalation in this case. Well, it's a measured response.
This is a classic Russian textbook exercise. They are trying to scare us. They have a weak hand right now because Donald Trump has decided, for many good reasons, and I hope we'll get into that discussion, that he supports Ukraine. He is sick and tired of Vladimir Putin's lies. He tried for 6 months. He didn't make any progress on negotiations. And we saw this week that Trump is throwing in for Ukraine. So what happens? Dmitry Medvedev starts talking about using nuclear threats again. We're at Bloomberg. We can put this on a graph. Anytime the Russian hand is weaker, then they resort to escalation.
Is Medvedev already out there, or you're just remembering the last time?
It is a mathematical relationship. I'll draw it for you next time I come in.
Okay, very good. There's an equation here. Talk to us more about what motivated Donald Trump, because you know that the line in Washington is he's going to talk about or believe in the message that came from whoever talked to him last. He talked to President Zelensky that day that he sent that post. Did Zelensky somehow convince him of this, or were there other voices in his ear?
There were other voices. So President Zelensky is a masterful communicator, but it's not right to give him full credit. Okay. So we've talked a lot about Donald Trump, and Donald Trump is not ideological. He can swing back and forth, as you well know, and that drives many people crazy, and it makes it good to be an analyst in Washington, Joe. So to be serious for a minute, though, there are different voices within his administration. We see Keith Kellogg, General Keith Kellogg, and he's a hawk, and he has Vladimir Putin's number, and he is talking to President Trump regularly. And then we see J.D. Vance, and he has an opposing view, and he wants to make a deal, and he wants the war over as soon as possible. So we see these two camps, but there's more people, right? This is a complicated situation. It's been going on for months. The person we haven't talked about, and I think the most influential person, and we're starting to see more and more of her, yes, her influence, is Melania Trump.
How about that?
Melania Trump doesn't make much of herself in foreign policy matters. But
remember what she wrote about the children.
Right, right. Melania Trump knows what's going on. And we saw this earlier this year where she's talking to Donald Trump about the bombings. And we've seen a massive escalation of Russian bombing of civilian targets, of hospitals, schools, children, churches. Melania knows what's going on. And we saw Donald Trump reveal this. But there's more to it, Joe. Her two best friends are Ukrainian American.
Is that right?
Yeah.
This is fascinating. Look beyond the policymakers then, or the officials at the DOD. It's what he hears when he goes upstairs to the residence at night. I haven't heard that before.
It's a big piece. So we know that Donald Trump is also, he's not the most moral man, I think is the most polite way I can put it, but he does have a moral conscience. And I think that this issue of children resonates strongly with Melania. Melania is traditional. She's an Eastern European woman, and she's made a lot out of being a mother to Barron, and that's her priority. And she knows about this issue. More than 20,000 Ukrainian children have been abducted by Russia. That's right. And we saw her write about it, and she's talking to Trump about it. And I think that issue there is real resonance there with both of the Trumps.
President Zelensky talked about a weapons system that he asked President Trump for when they met. One, he said, that could help to end the war, that would put Kremlin officials in bomb shelters. Do we know what that is, what the ask was that he made?
We don't know what the system is, but I can tell you there are a couple of easy things that would end the war. Okay. If Washington said...
Easy things?
Let's do it, yes. I mean, bring some generals on here, and they'll tell you.
What do you have?
Long-range rockets. Okay. Long-range rockets will end this war. So you need to enable the Ukrainians to strike behind enemy lines and hit command and control centers. It's a matter of logistics. If the Ukrainians had the ability to hit, they need German Tauruses and they need long-range ATACMS. Okay, and they need the ability to hit anywhere they need the ability to hit into Russia.
Yeah. Producer James just put a story in front of me here from Axios. This is since we came to air. Zelensky asked President Trump during their meeting to provide Ukraine with Tomahawk missiles. Is that something we're prepared to do?
That would be a game changer.
That would be a game changer.
But, so we don't know. So, Joe, I'm encouraged by the news this week. Yeah. Trump has had a major change. It's a major about face. The Ukrainians have never had a better relationship with Trump than they do at this moment, right? But Donald Trump didn't commit to anything new. It's just a rhetorical change. And with Trump, it's always about the money. Is he going to commit to more appropriations in Congress? At this moment, there's no signs that Congress is going to be doing something more. Tomahawk missiles would be a game changer, but also turning off, there's restrictions on U.S. weapons. So when we give Kiev weapons, we give them rockets. We tell them you cannot strike into Russia. There are limitations. DOD needs to remove those limitations. If DOD would remove those limitations, Trump can pick up the phone and call Hegseth right now and say, let the Ukrainians strike into Russia and hit the enemy lines. That would be a game changer. But we also have to provide sufficient missiles as well.
He's promised to not target civilians, which of course Vladimir Putin has. And getting back to the conversation, the talk about children, what's the path for their return short of a formal armistice agreement?
So children are being returned right now, Joe. I just got back from Kiev, and there's an amazing, one of my heroes, his name is Mykola Kaleba, and he's the CEO of Save Ukraine, and his organization is a nonprofit based in Kiev, and they have helped save more than 600 children. And each path is different, but they're able to contact the children once they've been abducted, and working with relatives and very fearless people. This is the Underground Railroad of the modern century. And they're able to get these children home and rebuild their lives. I would love to bring Mykola in and have a chat with him.
You've introduced us to some truly fascinating people from Ukraine. Many of them have told us such tragic stories here. They've been very emotional conversations. How much time did you spend in a bomb shelter when you were there on this last visit?
So I was in Ukraine when General Kellogg was there, and we talk about the Kellogg shield, right?
So they know better.
So when General Kellogg comes to Kiev, it's not so bad. But I spent 2 of 4 nights in the bomb shelter when I was there last month.
2 of 4 nights. This is still their reality, which is why Zelensky says this about the Kremlin. We want them to know what it's like to be in a bomb shelter every night. Will he accomplish that? Will he get this weapons system he's asking for?
I don't know. So this is when we have to get into speculating about Trump's behavior.
Right, that's right. And there's not much productive to be done there. Short of the Tomahawks being delivered, though, what is the strategy for President Zelensky at the moment, short of trying to occupy Russian land and even the playing field? Militarily, what's his next step?
Okay, let's talk about the front lines. So the front lines are not bad right now. The Ukrainians are holding the line, and there's a Russian offensive, an ongoing Russian offensive. The Russians are not making very much progress. The Ukrainians don't have enough men. They need more material, and the Europeans have committed to delivering that. They could use a lot more material from America, so we're looking at Trump there to send more over. But so far, the lines are holding. The Russian offensive will start to peter out around Christmas time.
Right, we've got the seasonal factor here.
Right. We have mud, we have leaves. We've all become meteorologists, Joe. So at Christmas time, the Russians have to reduce their air, their ground cover, because the leaves have fallen and they won't be able to use their aviation systems.
No foliage.
Right.
Fascinating. This remains a war of attrition.
It remains a war of attrition, but the military experts expect this war to continue on. So the Kremlin wants to see what it can get, and it's going to continue. Mathematically, the Ukrainians could probably fight for another 18 months. There's a lot of ifs in there, but this war is going to continue.
Yeah. You know when you're going back?
December.
You want to go with me? Answer. I would love to go there with
Let's
you
go.
sometime. It would be remarkable to do it with Melinda Herring. Are you kidding? Thank you so much for the on-the-ground update, as it were, and your insights, as always. Melinda Herring with us live on Bloomberg. Business Week Daily's up next. I'll meet you on the late edition of Balance of Power at 5 p.m. Eastern here on Bloomberg TV.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon. Happy Friday, everybody. Yes, indeed. Bloomberg Business Week Daily. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters. It is, what a week, Friday, September 26th.
Yeah, the week, just so you know, Carol, the week's not over.
No, I know.
We're still getting headlines,
We
too.
are.
The latest, Sinclair is going to put Jimmy Kimmel back on the air tonight. The Wall Street Journal reporting that news. You'll recall that even after ABC brought him back earlier this week, there were still a couple large owners of stations, Nexstar and Sinclair, that had not put him back on. The Journal reporting that Sinclair putting Kimmel back on the air tonight.
All right, good to know. I'm just taking a quick check on Disney, just a hair higher, just trying to see if there's any reaction out of the owner of the ABC TV network. All right, folks, back to the markets we go. Stocks on track potentially for their first down week after we've seen 3 weeks of gains, although I should point out that we are definitely off our worst levels of the session. We're seeing some broad-based buying on this Friday. This is following an inflation print that kind of gives the Fed some breathing room.
Okay, well, we're going to check in on the U.S. economy as we remain data dependent. I've heard that phrase before. Michael McKee is going to be joining us in just a few minutes, not from New York, but from Washington, D.C., where he's been for a few days.
So he's on the road, man. All right, looking forward to it. He did a really important interview earlier today. Hey, we're also going to check in with the CEO of 1-800-Flowers.com on the cost of goods, labor, and so much more. Plus, we're going to get into the U.S. Justice Department. Are they allowed to do a president's bidding? We ask our reporter on that.
Also, Jeffrey Epstein's network of support and advice during his, quote, hour of terror. We have got the emails. Our team has been going through them. Max Abelson is going to be joining us a little later this hour.
Speaking of going through something, our Chris Rouser actually donned the electric stimulation bodysuit. So we're going to find out exactly what that was all about. And we've got the owner of the company that makes it joining us. That's happening
We
at
got a little bit of everything on the program
do.
today. We really do.
That's Bloomberg Business Week Daily in a nutshell. All right, let's get a check on the trade on this Friday. For a check on that and your top business stories, here's Alexis Christopher. She is in for Charlie Pellet. Hey.
Hey, guys. Happy Friday to you. We check the markets all day long here at Bloomberg. And right now, it looks like stocks are snapping a 3-day losing streak after the Federal Reserve's preferred inflation gauge grew just slightly last month, keeping the Fed on track to cut rates 2 more times this year. The Dow Jones Industrial Average near its best level of the session, up 343. The S&P 500 up 34. We've got the NASDAQ climbing nearly 78. Yields are mixed. The 10-year yield at 4.18%, the 2-year at 3.64%. We've got WTI crude up nearly 1% now at $65.58 a barrel, and gold sitting at $37.82 an ounce. Boeing, by the way, leading the advance for the Dow Jones Industrial Average, up about 4% now after the FAA said the aircraft maker will be able to sign off on some of its 737 MAX and 787 Dreamliner planes before they're handed over to customers. Proof here that Boeing is winning confidence from regulators after years of safety and manufacturing crises. A University of Michigan survey finds consumer sentiment fell in September to a 4-month low on concerns about higher prices and a weakening job market. And Bloomberg is reporting that TikTok's Chinese parent company ByteDance will likely get about half the profit from the platform's U.S. operation, even after it sells a majority ownership to American investors, which we know includes Oracle. This is, of course, part of a deal orchestrated by President Trump. Shares of Oracle down about 2 1/3% right now. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flashback. Over to Carol and Tim.
All right, Alexis, thank you so much. Alexis Christopher's in for Charlie Pellet on the markets today. Hey, listen, folks, we did get a key inflation gauge. It came out earlier this morning. It grew at a slower pace last month. We also got some data on a resilient U.S. consumer. We also saw incomes growing, and yet U.S. consumer sentiment fell in the month of September to a 4-month low on growing concerns about the impact of high prices on personal finances. Richmond Fed President Thomas Barkin spoke with Bloomberg TV and Radio international economics correspondent and policy correspondent Michael McKee before this morning's batch of U.S. economic reports, and he talked about the Fed's dual mandate and keeping an eye on all the data as it continues to come in.
It's a low hiring environment,
but the labor supply is also short. And you have to be very attentive to that balance because it could get out of balance, right? Similarly, on the inflation side, you do have these cost pressures and 4.5 years of inflation over target. On the other hand, you're not seeing that show up in spikes in inflation in the real-time numbers. We are seeing what seems to be a productivity boom. And so I think you have to be very attentive to how little we know about how each of our mandate variables is going to play out. And so, you know, I feel like very adaptive is the way to think about it, and that's part of why I'm not being prescriptive into, oh, it's this many cuts over this period of time, because I think we're going to see and learn a lot as we go here.
Adaptive and attentive sounds like data dependent. That is Richmond Fed President Thomas Barkin earlier this morning on Bloomberg with Bloomberg TV and Radio international economics and policy correspondent Michael McKee. Mike joining us from D.C. along with Elizabeth Renter, senior economist at the personal finance company NerdWallet. We'll get to her in just a moment. But Mike, I do want to start with you. This morning's data, drop of U.S. data, and what you heard from Fed President Barkin, does it all kind of mesh with what we got in the latest Fed decision and commentary?
Maybe not. And that's the situation that Tom was describing is we came out of the Fed meeting thinking that they were going to do a rate cut in October, and there was a good chance of another one in December. And then over the last 4 or 5 days, we've gotten a number of data points that suggest that the economy may be rebounding from a summer low, maybe stronger than we thought. Second quarter growth was revised up, and today we got better than expected spending numbers from consumers. So at this point, it's really hard to say what's going to happen. The one thing we know from today's PCE report is that inflation is not going down. It didn't get any worse, but it is still closer to 3% than the Fed's 2% target. So it just kind of means that those who are in the middle for the Fed, they're probably going to be waiting till much closer to October 29th to make any kind of decision.
Mike, is there a shoe to drop when it comes to inflation as a result of tariffs? Because we did have so many companies pull forward goods purchases before tariffs hit. And we just haven't seen it show up. We're going to start hearing from companies in the middle of next month for their latest earnings report, but we're not seeing the spikes in inflation like he was talking about to you.
Well, we have seen some. We've seen prices go up for some goods, and there are expectations that we'll continue to see that. It depends, as you mentioned, on inventories and how fast those are worked down, and then supply chain adjustments. It's very hard to say exactly when things are going to hit, but the economists do expect, and the Fed does expect, to see inflation rise over the next couple of months. Then the question is, does it go down again, or does it keep going up because maybe the president is continuing to put on additional tariffs? The one thing that we can probably intuit is that Americans are not happy. The consumer sentiment numbers went down because of inflation. And even though it doesn't have a lot to do with the president's tariffs, gasoline prices have gone up, meat prices have gone up, turkey prices have gone up. They're for different reasons, but when you go to the grocery store, it's all just inflation to you.
Yep. I don't do a lot of the shopping in my house. My husband tends to do it.
You've got people to do that.
No, my people are my husband and my daughter. But man, they brought some steaks, and I was like, "How much did they cost?" When they told me, I was like, "Whoa, Elizabeth, come on in on this," because we are continuing to get data points. How does that cross with what we did get from the Fed and your view on where the economy is and what needs to be done in terms of monetary policy?
Well, I think largely what's been said is accurate. You know, the Fed is trying to keep their eye on the ball. We're all trying to keep our eye on the ball, but there's a lot of balls in the air right now, and some of them are flying in completely different directions. So it's really hard to suss out where things are headed. When it comes to inflation, yes, it ticked up just slightly, but it's not showing real acceleration right now. To your point, consumers are feeling a bit of a burn, more than that headline number would have you believe. You know, food inflation rose last month according to today's data, and that's something we all interact with on a weekly, if not daily basis. We see that number, and so that's definitely playing into consumer sentiment. Also, we're more exposed to all of this talk about the economy, right? We're all talking a lot about when inflation is going to pick back up, the impact of tariffs, and so that's in the back of consumers' heads as well. So they anticipate a lot of potentially bad bad stuff happening. As of yet, we haven't seen it translate into reduced spending from a big picture. Overall, I'd say this week we got some more of those mixed messages, though, right? Consumer spending is strong despite weak sentiment. The economy continues to grow according to the GDP figures. I say if there's some good news out of this week, in addition to the consumer spending, is that the initial claims came down, the unemployment claims. So that's a bright spot, I suppose, on the recent past labor market.
You know, I'm thinking of a conversation that Tim and I had yesterday with the CFO of a firm, right? And we talked to the CEO just a couple of weeks ago, and they're saying they're pretty busy. There's a lot of activity on their platform. We were thinking, well, wait a minute, how does this mesh with maybe a slowdown in consumer, or concerns about the consumer? And our own Stuart Paul kind of weighing in that, well, what's happening is people are buying, but they're buying and taking longer to pay for things, and that's why they're making use of that platform.
Like essentially, if he sees a service such as that being used, then it could be a sign about the way the consumer is feeling. Elizabeth, I want to go to you on next week and the non-farm payrolls print that we're expecting a week from now. We'll be sitting here talking about that number. 50,000 is the number of jobs that economists surveyed by Bloomberg expect to be added to the economy. How is the labor market in your view?
The labor market is hanging in there. I think the big question next week is not only what we're going to see in the jobs data, but if we're going to see the jobs data. I
saw that story, right? If there's a shutdown, the BLS would delay the next U.S. jobs report.
Right, and this is crucial data for monetary policy, as you all know. I mean, ideally, if there is a shutdown, it will be brief, as recent ones have been, and the Fed will still have that data in hand before their next meeting. Regardless of when we get it, I anticipate that data is going to show, weaker job growth as we've seen over the past several months. But I do believe the unemployment rate is going to remain relatively steady. The break-even rate, or the number of jobs we have to add each month in order for the unemployment rate to remain steady, is decreasing. And that's because the labor force is decreasing, right? We know we're not getting as many immigrants right now, and some immigrants that were already here, already working, maybe leaving the workforce. The magnitude of that, a little uncertain, but I do believe that's going to help hold that unemployment rate where it is.
Mike, saving 30 seconds for you, because I think we have to bring up Fed Governor Lisa Cook. This case before the Supreme Court. President Trump wants the Supreme Court to, I guess, give him the okay to fire her. She's fighting it as well. Just quickly, what do we know? What might we get in terms of news either today or potentially over the weekend?
Well, a decision could come any time by the court, and they have tended to move quickly in these Trump firing officials cases, except that in this case, there are a lot of amici filings, friends of the court filings, that the justices may want to wade through. And also, we've seen in a couple of controversial cases that some justices want to dissent. And so that takes some time to write. So we don't exactly know when we are going to get this decision. If the court allows her to stay in the job, then we kind of lose the headlines for a year or so while it goes through lower courts. And if they fire her, then, of course, we'll be back here immediately talking with you about what happens next to the Fed.
Right. And we talk about whether or not we have an independent Fed anymore. All right, Mike McKee, thank you so much there in D.C. Bloomberg's Mike McKee, along with Elizabeth Renter, senior economist at NerdWallet. We're going to stay on the economy to a view from the C-suite when it comes to the cost of goods, the cost of labor, what the consumer is up to. With us right now is Adolfo Villagomez. He is CEO of 1-800-Flowers.com. He joins us in our Bloomberg studio. Welcome, welcome. How are you?
All good. Thanks for having me.
Well, it's good to have you here. We just talked a lot about inflation, what consumers are up to. What's your perspective on this? What are you seeing? Is things pricey, your supply chain pricey? And I'm just curious about what consumers are up to.
Well, a couple of things. So number one, I think the consumers are being selective. When they see innovation or values, even they are buying ahead of the holidays. Q2 is going to be, well, our Q2, Q4 for the calendar year.
So they're placing orders, you mean on the platform, but don't deliver to, or what?
Yes, we're already selling products, baskets ahead. I mean, the best sellers are already selling, and at some point they are going to sold out. So we're seeing some good initial demand. Now, remember, these are higher end products, so we're somewhat protected from inflation in that way. But we're already selling products at this point. We haven't delivered them, but we're already taking orders for the holidays.
But have your costs gone up?
Well,
I mean, I'm thinking about flowers, chocolates, like where they're coming from.
Flowers come from the U.S. We know
Correct. So there are some imports, and some of the cost has gone up. Now, we also have a lot of products that are grown in the United States, our pears, peaches. So it's a combination of factors. I think the merchandising organization is doing a great job managing the inputs. You increase prices where you can. You go after units where you can. What the team is working on is how do you grow gross margin dollars. So you play with the assortment structure and try to do the best you can with the consumer.
How economically sensitive is your business? I mean, I imagine if people are feeling good, they're going to buy from you. But if they're feeling a little iffy, they're not going to. You must see that in real time.
We see that in real time. And remember, we have very different business. So I'm going to go to the two extremes. On one side, you have Harry and David, famous for our baskets and the holidays.
Yeah, we'll talk about the pears at some point. But
I mean, I need to bring
everybody knows
next
about
time.
the pears.
They are delicious.
Everybody's gotten a box of them, right?
I mean,
So
they are
good.
delicious. We all love them. So those are selling, and I think our most loyal customers, the ones that buy every year, we are already seeing the orders. So that is actually going well. Then you go into the other segment or another one of our businesses, personalization mall, which is lower price points, things that are personalized, like thinking of you, your name. There, the customer is a little bit more picky, and the market is a little bit more competitive. So that's where you're seeing the impact of inflation. Our units decline, but as I said, the merchandising organization is trying to balance that. So it all depends on really the need of the product and what is driving the consumer.
So I want to ask you, because I was thinking about your business, and we are Bloomberg, we have a lot of data. Your stock is down about 41% year to date. Nearly 75% of the float is short. So the street's pretty negative on the outlook. You don't have a lot of Wall Street coverage. It's a very small market cap company. Recent earnings showed a fourth quarter adjusted loss of 69 cents a share. Street was expecting about a loss of about half that. When you look at year over year comparisons, net revenues down nearly 7% from the year before. I don't have to tell you. You know the metrics. You were brought in May, so you are working on setting this company for the future. You come from Home Depot. How do you grow the business beyond e-commerce?
So,
which is, I know, an initiative, a major initiative.
I'm happy you ask. It's a multi-year transformation. Initially, it's about stabilizing the EBITDA of the business. My focus is on cash and EBITDA. And I think we're starting to turn the corner. I'm very optimistic about the business. As we do that, you are planting seeds to grow into other channels. We have great products. We want to show these products to the customer wherever they buy. So now we have our assortment in Amazon, Walmart. We are testing physical stores. We are going on Uber Eats, the delivery service providers. We're trying to expand our channels. That is going really well. I'm very optimistic.
Which one's going really well? Really, really well, among those that you just laid out?
I mean, all numbers are actually good because they went from zero to something.
Nothing, right.
So, but it's actually starting to grow. I mean, we have 100,000 SKUs. Actually, the highest challenge is to choose where you start.
Very briefly before you go, is there interest from private equity right now? Market cap of around $300 million seems to be like it could be a target. I've talked to investors all the time. There is interest on investing in the company, and they are paying a lot of attention about how the transformation is going. Like private equity investors are interested? Like
private equity, hedge fund, anybody with money that is looking
like taking it private?
I haven't engaged in those discussions.
Okay.
This is right now investment.
But Adolfo, would it have been easier to do the turnaround if you were a private entity?
I don't think so. I think I have all the support of the board and the chairman, and things are going well, so I don't think so.
Stay in touch. Let us know how things are going.
Sounds good. Thank you.
Really appreciate it. Adolfo Villagomez, who's CEO of 1-800-Flowers.com. Coming up next, the Comey indictment and Jeffrey Epstein's network. That when we continue on this Friday.
It's 2:21 on Wall Street. I'm Alexis Christoforous. Stocks bouncing back from a three-day losing streak, thanks in part to a tame inflation report. The Federal Reserve's preferred inflation gauge grew just slightly last month, keeping the Fed on track to cut rates 2 more times this year. The Dow Industrials climbing 360 points. The S&P 500 up 31. The Nasdaq up 76. The yield on the 10-year 4.18%, while the 2-year yield is at 3.64. Packer is the biggest winner in the S&P 500, up about 5% after President Trump announced a 25% tariff on imported heavy trucks. The tariff aims to protect U.S. truck makers like Packer from foreign competition. By the way, U.S. truck sales declined last month to a 4-year low. And we're watching shares of drug makers after President Trump promised to slap import taxes of 100% on pharmaceutical drugs unless the companies build manufacturing plants in the U.S. Right now, shares of Eli Lilly up more than 1%. Same for Merck. Pfizer up 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
All right, Alexis, thank you so much. Well, former FBI Director James Comey has been charged with lying to Congress and obstruction related to testimony he gave in 2020, accelerating President Trump's push for legal action against his perceived political enemies. Now, after the indictment, Comey said in a video on Instagram that he is not afraid. His lawyer, too, Tim, has come out with a statement.
Yeah, his lawyer said Jim Comey denies the charges filed in their entirety. We look forward to vindicating him in the courtroom. I want to bring in Bloomberg News Justice Department reporter Chris Strome. He joins us from Washington, D.C. Chris, a relatively short indictment. What exactly is James Comey alleged to have done?
Well, the process here is highly unusual. The charges are highly unusual. There's 2 charges against Comey. It's for lying and obstructing a congressional proceeding related to testimony he gave in September of 2020, which was just about 5 years ago, which was right up against the statute of limitations for DOJ to go get these charges.
So I got to say, all of us are, I think, doing a deep dive to try and remember. I can't even remember what happened on Monday, so to think about what happened in 5 years ago. Although, when you start doing it, you're like, oh, yeah.
I think Monday was the Tylenol press conference. Okay?
It was.
That's how I remember.
Well done, well done.
Thank you.
So, but Chris, take us back there and what it is that he is charged with lying about.
Yeah, so during the hearing, it was before the Senate Judiciary Committee, he was asked about a situation in which his deputy, Andrew McCabe, had leaked information to the Wall Street Journal about Hillary Clinton. And Comey was asked if he stood by previous testimony he had given that he didn't authorize the leak. And he said he did. Now, the Justice Department is trying to say that Comey wasn't telling the truth because he was involved in authorizing the leak. And it goes back actually to 2016 when there was a dispute between Comey and his deputy, Andrew McCabe, regarding the leak. McCabe had said that Comey approved of the leak after the Wall Street Journal reported on it. And Comey said he had no memory of that. The Justice Department Inspector General looked into this and issued a report that found that Comey was telling the truth and McCabe was lying about it. And so essentially, Comey was reiterating that he had no knowledge of the leak. But the Justice Department is trying to say, well, Andrew McCabe said you did have knowledge of the leak. And so therefore, we are going to charge you with lying. Now, the Justice Department might have some additional information, but this has been well investigated. And to our knowledge, there's no new information that would prove Comey was lying.
So it raises the question, and back to what Patrick Fitzgerald, the lawyer for James Comey, said. He denies the charges filed, and we look forward to vindicating him in the courtroom. Does it make it to a courtroom?
It's hard to know at this point. Comey is going to have an initial appearance on October 9th. I'm sure that his lawyers are going to move to dismiss the charges before they ever go to trial. Getting charges dismissed is very difficult, so it's probably more likely that they will end up going to trial. I would expect Comey and his lawyers to call for a quick trial because they believe the facts are on their side and that Comey can get acquitted.
What about a history lesson for everybody, a civics lesson for everybody? I mean, do presidential powers extend to something like this and using the Justice Department to maybe go after presidential foes?
Well, this has been one of the raging debates under the Trump administration, both the first Trump administration, but definitely under the second administration. How far do Trump's powers go as president? Now, Trump will say that he controls the Justice Department, that he can order prosecutions, that he is the chief law enforcement officer. Historically, the Justice Department has maintained independence from the White House and from the president. But that's largely based on norms and traditional practices. There's no law or regulation that says the president can't interfere in prosecutions.
Yeah, I guess I would say some presidential historians would also suggest that maybe you Google the Watergate, like at this point, right? Like,
well, that time you had a lot of pushback from Republican senators who made their way to the White House, and we haven't heard that this time around.
Right. So, like, we'll see, right? We'll just have to, I guess, kind of wait and see how this plays out. Interesting story. Another one certainly on our mind. Chris, thank you so much for running through it for us. Chris Strom, he's Justice Department reporter, joining us from Washington, D.C.
We're certainly watching what will come next of this. In the meantime, we continue to piece together the life of Jeffrey Epstein. Bloomberg News has gone through more than 18,000 emails from Epstein's personal Yahoo account that was obtained by Bloomberg News. That cache revealing, Carol, a sweeping array of details about not just his public life, but his private life as well.
Exactly. We want to get into it. It is today's Bloomberg Big Take. Bloomberg News finance reporter Max Abelson, part of the team who wrote it. He's here in studio. Max, so good to have you here. Another incredible read. It is among our most read stories on the Bloomberg. First of all, step back. We've been covering this, right? These emails. Remind everybody the emails that Bloomberg got access to and what you guys have been going through.
Yeah, that's right. It's been one of the highlights of my 20 years in journalism to be a part of this team with Surya Matu and Jason Leopold and Ava Benny Morris and many others. So, Epstein, who remains so profoundly central to the public imagination and yet such a profound enigma, Bloomberg News obtained thousands, more than 10,000, more than 18,000 emails. And I want to be clear, these are private emails. These aren't things that have been recycled through. It's not things everyone knows about. This is new stuff, and it's from a private email address. Actually, for example, there was one email where someone says, "Listen, I need to talk to you about something private. What email would be good?" And he writes back and says, "This one," to give you a sense of what we're talking about here. And my colleagues, including Harry Wilson and others, did some really remarkable reporting on Peter Mendelsohn, who lost his job as the UK ambassador to the United States.
Exactly.
In the wake of their story. And Ava Benny Morrison and Jason Leopold have done, and others have done great work on Ghislaine Maxwell and really carefully showing that her relationship to Epstein was just much deeper and their partnership was much closer than either had admitted. And what this story, which I wrote with this wonderful team, what this story is about is, in some ways, I hope, not the usual. Epstein is, of course, in some ways a story about sex and sex crimes. But I think what you'll find is that what this story is about is about what I cover. It's really a story about money and a story about power and a story about connections. And that's how we talked about it with our editors, including Lauren Eder.
And it's can I just pop in that there's a bunch of people pictures, and I'll be honest with you, I think when we both look, I didn't recognize most of them.
Well, that's what I think was so notable about this. I mean, there are certainly the names that have been associated with Epstein for years, like Alan Dershowitz, for example. Right. And there's new information, new emails from there, and a conversation that your team had with him about that. But there's also a name that I'd never seen before. Mary Spaeth, somebody who's a crisis strategist. She was director of media relations at one time for the White House under Ronald Reagan. Yep. What role did she serve?
Well, thanks for that question, because I think what's special about the piece, and I hope viewers and listeners check it out, I think what makes it a valuable piece of journalism, especially at this moment when Epstein is really in the news and is all of a sudden has gone from being a an exclamation point to a real question mark. I think there are a lot of questions about what's going to happen now over the next few days and weeks and months with Epstein and his files. What our story is about and why Mary Spaeth comes up is that it's about the depth and the breadth of his relationships. And, it is not a story about Republicans versus a story about Democrats. It's a story about powerful people. And it's a story about different kinds of power. It's a story about academics and researchers, people who make it into high elite echelons of the intellectual life. It's about people who offer, like Mary Spaeth offers, a basically strategy for people who are in trouble, crisis strategy, public relations. And it's a story about counselors and lawyers. And to answer your question about Mary, there was a point, believe it or not, where investigators are closing in on Jeffrey Epstein. This is early 2008. He's about to go to jail for it's like about a year. It's a little bit longer than a year.
Right.
And after that, he's a free man for a very long time, I think about a decade, until the 2019 charge, sex trafficking. And then he dies. He's found dead in prison or jail right after that. But back in 2008, investigators are circling. Epstein's in trouble. And what do we find in these emails? But these draft apology options, where she sends him 3 different kinds of apologies. One is one's very meek. Talks about his memories of being a kid. It's actually, I found it very deep. I imagine, all of us remember being kids and having to apologize. Second one is very short. It's really terse. The third one, it's the word we use is elegiac, and it is. He cites William James. I'm hoping it's the first Bloomberg News story that calls out William James, 19th century American philosopher. Talks about the hour of terror and the hour of satiety. How about that word? And he talks about the American dream. Talks about the American dream and its substantial rewards. And he says this is a public and heartfelt apology.
I just want to say Spaeth's firm was hired through a lawyer to provide communications options for Mr. Epstein and his legal team. She said in response to questions for the story, she said, quote, "I ultimately terminated the engagement because of my discomfort with it."
That's right. That's right. Thanks for saying that. I think it's really important out of fairness that we add things like that. And she also said, because of confidentiality and privilege, she can't comment further. But, we don't know what was going on here. I want to be clear with our viewers. Right. For all we know, Epstein was really very close to saying sorry. But he did not. He did not in the sense of giving a broad apology, certainly to his victims. And I want to be clear, the U.S. Department of Justice says there are more than 1,000 of them. More than 1,000 of them. And Epstein did not give a heartfelt William James quoting apology as far as we know. But our story shows what it could have potentially sounded like if he had.
It's why we say there are so many questions still out there. And you guys, by going through these emails, maybe there's not direct conclusions, but you start to piece together, kind of a little bit more of the life around Jeffrey Epstein. Yeah. Max, thank you as always. Max Abelson, he's finance reporter at Bloomberg News. This is The Big Take. Check it out on the Bloomberg.
It is 2:40 on Wall Street. I'm Alexis Christoforous. Stocks bouncing back from a 3-day losing streak thanks in part to that tame inflation report. The Federal Reserve's preferred inflation gauge grew just slightly last month, keeping the Fed on track to cut rates 2 more times this year. The Dow now at its best level of the session, up 386 points. The S&P 500 climbing 39. The NASDAQ Composite now up a little better than 100 points. Yields are mixed. The 10-year yield at 4.18%, 2-year at 3.64%. Breaking business news crossing the Bloomberg terminal right now. Electronic Arts reportedly near a roughly $50 billion deal to go private. Shares of Electronic Arts right now up 1.6% on that news. The tech consultancy company Accenture has laid out plans to lay off staff that are not able to reskill on artificial intelligence. That's as Accenture prioritizes its AI efforts. Shares of Accenture up 3.6%. We're also watching shares of furniture makers and retailers after President Trump promised to slap 50% tariffs on kitchen cabinets and bathroom vanities, 30% on upholstered furniture. This would be happening beginning October 1st. Trump writing on his social media site that foreign manufacturers of furniture and cabinetry were flooding the U.S. with their products and that tariffs must be applied for, quote, national security reasons. You see there, Wayfair up better than 1%. Williams-Sonoma Restoration Hardware coming under a little bit of pressure. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
All right, Alexis, thank you so much. Well, it's the jolt that tickles your muscles, and suited up in the Catalyst Gen 4, you might look a bit like one of the Avengers. It's pretty cool. It is all part of looking and feeling your best, as Bloomberg Pursuits editor Chris Rausser writes about in the new issue of Bloomberg Business Week, with pursuits devoted to the pursuit of wellness. Here with more is Chris Rausser, along with Brendan Kennedy, the CEO of Monty Mare. It's the owner of Catalyst, and they both are here in our studio. Welcome, welcome. A great Friday story. First of all, I got to start with you, Chris. How did this come on your radar? I mean, I know you are always kind of the king when it comes to things that you can try to feel better, to look better.
Yeah, I'm a fitness person. I'm a wellness person. I'll try anything once. If you ask me to do a form of exercise with you, I will do it. So I have done everything: solid core, physique 57, Zumba, you name it. I've done it. Hot yoga, hotter yoga. And
something in a chair yoga?
Yes. There was briefly a Pilates studio in Manhattan called Shays 23 because you did all the exercises in a chair. Okay. And it was on 23rd Street.
All right.
So at the beginning of the year, I just was thinking about how overwhelming wellness has gotten. There's endless podcasts. The Manosphere podcasts are just like telling you so many different things every week to do. There's businesses where you can spend like $7,000 a month, where you go and you get, go get tested for all this stuff every month. And you get AI to tell you what to eat and what to exercise. It just feels very overwhelming. And I thought, okay, what's the response to that? What is my response to that? I want to cheat. I want a cheat code. I want an easy way out. I want a hack. And so we got the whole Pursuits team together to go out and do research and figure out what are like the hot wellness hacks right now that makes it easier for you. Because at the end of the day, what you really need to do is exercise, you need to sleep, you need to talk to people, and you need to eat well. That's basically all you need to do. So like, what are the things that can sort of hack your way into doing those more easily? And so as I was doing my research, I discovered the Catalyst suit, which is an EMS suit. It's a stim suit like physical therapists use after you get an injury. They kind of zap your muscles with electricity, and it encourages your muscles to work harder. More of it tenses up, and then it heals stronger. And so that technology is now a suit that you can wear, and you can do workouts, and it like supercharges your workouts.
Okay, I know the guy who owns the company is sitting right here, but I'm still going to put you on the spot, Chris, because I see technology like this, and I'm like, does it actually work?
I have to tell you, it actually works.
You're not just saying that because Brandon is sitting here.
You can't see my bulging muscles through my blazer.
But you're serious.
But it really totally works. I did it for 6 months after having a pair of injuries. I had foot surgery. You guys remember I fractured my elbow.
I do.
I was like out of the gym for months. I felt kind of bummed about it. And it really got me back going. You really see results. It helped my posture. I lost weight, gained muscle.
All right, so Brendan, come on in. You are the owner of Catalyst. Talk to us about this device, kind of how it came to be, and tell us a little bit about the business.
Yeah, so I
joined EMS about 4 years ago, and I was a little skeptical at first too. My wife had used it about 7 years ago.
EMS is electrical muscle stimulation.
Exactly, and just like a doctor or a physical therapist will put stim on you to heal a muscle, it's the same type of technology, and doctors have been using it for 60 years. If you go to Europe, there are EMS studios where there's thousands of them where people will go in and work out. I went in skeptically and tried it about 4 years ago during COVID, and it's amazing. For me, it compresses time. I can get a 2-hour workout that would normally take me 2 hours in a gym. I can do it in 20 minutes, and it's a whole body workout. It hits the little muscles in your back that you might miss in the gym or skip leg day. It's your whole body, 26 pads at once. And it stimulates your muscle, just like your brain sends a signal to your muscle to contract. The suit sends the same the same signals, and it hits 90% of your muscles. And so it's amazing, and it works. It's efficient, it's fast, it's safe, and it compresses time for me.
So you were a client.
I was a
and
client.
Then you became an investor. And now you're the owner.
Yes, it's something I'm really passionate about. I use it 3 days a week, so 20 minutes each time, basically an hour a week. A little prep, a little cleanup, but compared to changing and driving to a gym and working out for 2 hours, I can do it in 20 minutes. I can do it at home. I travel with it. It's spectacular.
All right, so what does it cost?
So the suit retails for $3,000. There's an app. And there's trainers on the app, so you pick. I want to focus on strength. I want to focus on cardio.
Yeah.
Maybe I'm going to focus on my lower legs or my abs. I'm 50 years old. I've worked out in gyms for 40 years. This is the first. I've done Ironman. I've done marathons. I've done every kind of fitness activity you can do. I'm very active. This is the first time I've had abs at 53. Right? It's never happened before. And it's all because of the suit. I can turn up the abs. And hit those muscles. $3,000. You follow a trainer on the app, and that person leads you through a 20-minute workout.
People might know you from your days in cannabis, medical cannabis specifically. You were one of the co-founders of Tilray. You led the company. It's publicly traded now. You're no longer involved in cannabis. What was the process that got you to buying Catalyst? And talk a little bit about the challenges the company's had before you came on board and what you're trying to do now to get it away from those challenges.
Absolutely. So I think cannabis, I started in cannabis back in 2011, so 14 years ago. And back then, people thought it was crazy, right? Like, what is he doing? He went to Yale. He has an MBA. Why is he going into cannabis? And he's throwing away his whole career. But I could see the future, right? I could see what was going to happen. I knew that country after country was going to legalize, and U.S. states were going to legalize. And so I saw the opportunity. I saw what was going to happen. I see the same thing in EMS. If you go to Europe, there's these studios everywhere with people working out in suits. And I think 5 years from now, everyone in the U.S. will be familiar with EMS. They'll either have a suit or they'll go to a gym and work out in that suit because it's the future of fitness.
Well, Chris, I mean, you do cover so much about wellness and fitness. We talk about it with you all the time. I mean, how do you slot this in? What are you hearing kind of from maybe the industry about maybe, is this kind of a next wave?
Yeah, I mean, this is definitely, we've done stories about EMS suits before. Plastic surgeons in New York City offer it. There's some startups that offer sort of similar things where you go to a studio. For me, this really fit into my normal system of going to Barry's boot camp. I'm a big Barry's person, and doing my normal weight lifts. And then I added this in, 2 or 3 times a week, 20 minutes. And that's where I really supercharged everything else that I did. And especially on a day when, like Brendan said, if you're too busy or you're traveling or whatever, you can just kind of toss it in. And although I have not taken it on a plane before, so I brought it with me. So this is what it looks like.
Is it heavy?
Quite big. It's not really.
So for those listening on radio, Chris is holding up the vest portion, but there's also that sort of, there's another portion.
So it goes all the way down.
Yes,
that's
it
for
goes
your
around your legs and your chest.
Vest and legs.
Okay,
Okay,
there's
vest and
arms.
legs.
There are armbands that go with it, and you have to get it wet for the stim pads to really work.
But you have to do that with a heart rate monitor too. It's kind of the same thing, right?
Exactly.
Okay.
Very similar.
So, Brent, what do you see as your market? Is it a case of selling directly to consumers? Is it about setting up places like the Peloton model to some extent where you could go and actually get on a Peloton and be at a physical location? I mean, Peloton kind of went back and forth. Like, what's the model in terms of growing this business?
So right now, there are thousands of consumers that own the suit and they work out at their homes or at the office or in their hotel rooms while they're traveling, and they work out with the app. There are also maybe 200 to 300 studios in the U.S. that use a suit. Many of them use the Catalyst suit. And so you can go to an EMS studio if you're mostly in a big city and try it. And so they use the Catalyst suit. And so it's both supplying to studios, and we're seeing more and more of those open, and then also to consumers.
What's the moat that you have here? Because if this is big in Europe, you're doing it here in the U.S., people might catch on, they might see that it's working. Copycats could come in. What separates you? How do you protect the brand?
I think there's two moats. I think the first moat is oddly, an EMS suit is regulated like a toaster in Europe, and so manufacturers can just make them and sell them.
Yeah.
Here it's regulated by the FDA, and so this suit is FDA cleared. And so we went through the FDA process in order to sell it to consumers. That's one moat. I think the second moat is the content. There's hundreds of workouts online that you can engage in. The app actually is what sends the impulses to the suit.
That's what zaps you.
And so
the app zaps you.
Yes, and so the app does it.
Wait, can I use this in my family to get them to do other things? Just saying. No, forgive me. Go ahead.
No, I think it's the content and the FDA clearance are really the two moats.
What about competition or just the wellness world at large? Like, it feels like, we go through these fads and waves and trends.
Yeah, you don't want this to end up in the same pile as the ThighMaster.
I think that...
Hey,
that
everybody should have a ThighMaster. No, I'm just kidding. No, but how do you make sure? Like,
I think strength is important no matter what you do, right? And so I use my suit 3 days a week, 20 minutes. I run. And so I have cardio. You can, work out on a treadmill wearing the suit. People do that. But I think strength will always be there. Strength will always be important. It fixes your posture. Bone density for a lot of people is really important. People on GLP-1 drugs lose strength. And so this suit helps people of different demographics and ages.
Very quickly, you can work out while you're wearing the suit and also wear the suit independently while you're not working out, or you're always working out while you wear it?
There are people that do freestyle workouts, which means the suit is charging, impulsing, and they're folding laundry or doing the dishes or walking on a treadmill.
I think you and I need these. You still doing it real quickly?
Yes. Yeah. Oh, yeah. I'm in.
I got to tell you, I go to a doctor and they say it's all about strength and getting your muscles and building muscle strength. So it totally makes sense. Gentlemen, thank you so much. Really appreciate it. Brendan Kennedy, Chief Executive Officer of Monty Mayer, the owner of Catalyst, joining us here in studio, along with our own Chris Rouser. He's editor of Bloomberg Pursuits. You can check out and read more about Chris's experience. It was a really fun read. It's in the new issue of Bloomberg Business Week in the Pursuit section.
I'm in.
I know you are.
Chris, I don't know if this is the type of thing where, like, we share a suit.
Share a suit.
I don't think it works like that.
It has to be sized to you, but actually, like, you and I, we could maybe do it. We could try it.
Cool. It's pretty cool.
I love the idea.
Yeah, I'm like you, Chris. I'll try any workout class once.
Can I get one for my face? Like to tighten up the muscles?
No,
for
I don't think you would want that.
Speak for yourself, Chris.
It's intense. It buzzes you to your bones. Like,
Does it
really, like, you get used to it, but it really is a lot. It can be really.
Are you going to stick with it?
Yes. Yeah.
Okay.
I'm going to keep doing it. I think. Yeah.
All right. Well, we'll keep you accountable.
Okay. Please do.
I love it. I love it. Chris Rouser, thank you so much. I'm Carol Masser, along with Tim Stanovic. Let's get to some stocks on the move on this Friday. Bloomberg News equities reporter Alexandra Semenova in the house.